I will have products which are segregated products. So I will have a portion of that money lying in pure fixed income instruments. Those could be debt mutual funds, for example. They could be post office schemes. They could be bank deposits, etc. And then I will have on the other side pure growth assets.
Yeah.
Or the other option is that you choose a mix of that vehicle
Hybrid
and say
schemes.
that let's use some hybrid schemes. Let's try to combine them together. I just want to keep it simple. As I age, I'm thinking about succession. I'm trying to figure out, operational simplicity. A lot of those things.
So you basically start with the problem first. You identify how much you need, and then based on where you are at, you determine the instrument. So that's well described, and then also the experience that you are willing to have. Sometimes if you have the choice, you can make that. If you don't have the choice, then you may be forced to take a certain amount of risk because you want to take care of a certain number of years and you don't want to run out of funds. But a few points, right? One, a lot of people have used the NPS, and so when they're reaching or will reach in the next 5 years or 7 years or 10 years a period of retirement, they have the choice to either extend that NPS, they have a choice to do a systematic withdrawal of that NPS to the extent of the tax saving amount or 80%, whichever. Is that something that they should consider doing? Because it's kind of like your SWP or systematic withdrawal plan from a mutual fund.
Absolutely. I think the NPS has now created a whole bunch of alternatives for investors to think about how they want to withdraw from the NPS and also when they want to withdraw. So again, with the NPS as well, I think the starting point needs to be to figure out what's the kind of mix I want to have. And I think one of the things that we keep telling investors is that what worked for you till you turned 55 or 60 may not work for you after you turn 60 and are retired. Let's say, for example, the PPF. It's a great instrument to create capital for yourself. But when you need cash flow, the PPF account is not designed for cash flow. It's designed for giving you lump sums of money. In the same way, the NPS is different when you're accumulating. And therefore, you could be aggressive accumulating, saying, I need more equity and all of that. Gives you lots of flexibility. But when you get to withdrawal, you could decide that I need to, first of all, reduce my mix of equity and debt, my mix of equity and increased debt, because I want to manage the risk on the volatility side. And then I decide whether I want to withdraw a fixed amount of money, I want to withdraw a fixed number of units, or do I want to just go like the NPS used to be earlier, saying I will withdraw a lot of the money and put a portion of that into an annuity to just give me a fixed rate, because I want to cover for longevity risk as well. Because one of the things that gets underestimated is how long you could end up living. And we see that with investors all the time. They talk about longevity in terms of what they would like their longevity to be. So they say, we don't want to live past 70 or we don't want to live past 75. But that's not in their control. You could be living to 80, 85, 90. And that's where an annuity comes in to the extent that it can. It's not inflation adjusting very often. It's not tax efficient, but it comes there and gives you that protection. So really, I think the NPS plus the mutual fund SWP plus the deposit plus the postal schemes will all probably combine together to do what it has to do.
It's not just one. But what if you have the option? So for example, in the NPS, you can withdraw 60% and you can put it in a hybrid fund, maybe even a multi-asset fund or a conservative hybrid fund, which is even more conservative than the multi-asset one would think, to say that I want to do a systematic withdrawal plan from this one. Is that something that is a better option to consider?
So it's certainly an option to consider, because what ends up happening is it gives you a lot of flexibility. Because one of the things around an SWP and retirement is that your needs for cash flow can also keep changing. There can be years in which you find that you're spending much lesser. And then there can be years in which you find that you're spending much more. And the SWP's advantage as a concept is that it allows you to increase and decrease this amount depending on how your life stage is changing. Typically in your first 10 years of retirement, you could actually find your expenses move up. And then they start to slow down because you're sort of getting older,
doing as many
you're not
things.
doing the same things which require money, etc. So I would say that, these options exist. I think what the NPS does for you is it gives you a very simple structure where you don't have to make too many decisions and you can get that withdrawal. With a mutual fund structure, it gives you a lot more flexibility, but it also means that you have to make a lot more decisions, saying that, okay, so which hybrid fund do I go to?
The paradox of choice.
Absolutely. Conservative, if I go to conservative, should I go to one which allows 10% withdrawal per year without an exit load? Should I go to 30%? Should I go to 3 of these funds? I think the only thing which we think is reasonably clear is doing SWPs from products which have a lot more equity is normally not a good idea.
Okay.
And I think that sometimes gets missed by people because the way it gets talked about is that as your rate of return, as your equity exposure increases, automatically your rate of return is going to go up.
That's not necessarily true.
It's not necessarily true because the volatility along the way is where the damage will happen in a withdrawal model.
It's true in the very long term, generally, and even that is not guaranteed because take for example a situation where you started investing for 10 years in 2010 and then you culminated at the COVID low when you needed the money. Effectively, your return would not have been as much as somebody who waited another year when the market bounced back. It's a prime example of
this. Absolutely.
Right?
And I think the risk comes actually from the fact that you're forced to withdraw.
Yeah.
I think what happens in your income generating years is that, okay, so I had the choice to not withdraw in 2020 or 21 or 22 because I had my income coming in from other places. In this particular case, I don't have that choice. And because I don't have that choice, the need for me to be a little bit more conservative is important. So what may have worked very well for you in your up to 60 journey, for example, was a balanced advantage fund has, 30 to 80% in equity, average, say 50, 55% works well because I'm not withdrawing from that. But when I retire and I start withdrawing, then suddenly that 30% is probably safer for me than the 55 or 60% otherwise.
Should a senior citizen have a small cap fund?
So again, I think, there are generally held views that you should have or you should not have something. Our belief is that it depends on whether you are actually likely to exhaust your capital during your lifetime or not. And I think there are 2 sets of people clearly. One set of people who will probably never exhaust the kind of wealth that they have. And another set of people who will probably struggle to ensure that money remains there if they go through their entire lifespan. I think for people who are probably going to have more than what they need, they have to think that this money is actually 20, 30, 40, 50-year money. And therefore, those sets of investors can go to small caps. But they need to bucket it right. They need to put it there saying this is actually what I would call generational wealth transfer. Sure. This is not going to get used in my lifetime. And therefore, I'll not panic when it goes down because I'm aware that this is generational wealth transfer that I'm doing. Another set of people who are likely to run out of money may find that going into small caps on a specific basis may be very uncomfortable, again because of volatility. But maybe if they went to a diversified fund, a flexi cap fund, where the fund manager had choice, decided what he wanted to do, found where things were attractive, that combination of different market caps could probably manage the volatility for them and avoid panic. I think the challenge in this life stage is that no one likes to see their capital go down and they actually have time to look at their portfolio literally every day.
That is true.
And because they see it every day, they're constantly worried or very happy about their portfolio.
The other thing that I've seen a lot is that there is this constant fixation on how much tax they pay. And so oftentimes that becomes the determining factor of a choice of instrument to invest in or whether to go for one thing or the other. Is that something that you found as well? 1, 2, is that something that they should consider in the first place?
So I think it's definitely important. And I think the advantage that has happened over the last few years is most instruments have choices in terms of what you wish to use and get a more tax efficient outcome. Let's say if you wanted to go for pure fixed income oriented products, earlier on the only way that you could sort of help yourself would be to say that if I bought something at some point in the past, I'm going to be able to get that break, otherwise there isn't. Now you have this category of income plus arbitrage funds, for example, where you can actually use those, hold for 2 years and get long-term capital gains benefit.
12.5%.
12.5%, that's right. So I think there's a whole bunch of instruments which are now available. You look at REITs as an example. They give you cash flow, not that they aren't volatile. They are going to be slaves to interest rates and how interest rates move, etc. But you get the advantage clearly that you can actually go to an instrument of that kind. You can create a cash flow for yourself. You get equity like taxation for a large portion of what you withdraw from there. And therefore, I think tax is an important consideration. But I think it can't be the only choice. I think somehow the thought that tax will be my only determinant on where to go to is where the damage happens.
So quite a bit of food for thought, actually. And of course, like anything else in personal finance, there's no one-size-fit-all solution. And so therefore, I'd invite all of you to write in and tell us what your experience is and whether this conversation helped you along the way of making those choices. Vishal, thanks so much for taking the time today. Absolute pleasure.
My pleasure. Thank you for having me over.
That brings us to the end of this edition of MoneyWise. Thanks so much for tuning in. This is NDTV Profit.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi.
Sneakers are supposed to be white, Sneakers are supposed to be either with a whoosh or a couple of lines.
Yeah, of course.
They're supposed to be a certain way,
Yeah.
which if you walked in an international airport, you'd fit right in.
Yeah,
And you're saying there's no need to think like that anymore.
of course. Embroidery on a sneaker or just representing local art forms, for example, right? On sneakers, Hindi, for example, right? Nobody thought it would, you can make an aspirational brand out of it because, English is cool, Hindi is not cool.
It starts off with your co-founder getting this idea. You are at that time in Bain, you're a consultant. You've come back from the US, kicked off your, I don't know, Adidas or Nike or whatever you were wearing at that time, and decided to go feet forward.
Arjun and I met at an alum meetup. Arjun had come back from Australia. He lived there for quite a few years. I was in the US for a bit, and then I got back, and then we both had similar observations about the lack of Indian brands representing India globally.
Was this an easy sell?
Retail partners saying no, we don't want to keep expensive Indian brands, we only keep Western brands. Large section of people still think or still have some apprehension, which is fair, We have built average products for 100-150 years as a country, right? Things that will break after 5 uses. Now suddenly if you go to people and be like, we are different, why would they trust you? It's like having 10 bad breakups and being like, the 11th guy is going to be good. You'll be like, no bro.
Ramesh, thank you for coming in.
Thank you. Lovely to be here. Thank you for having me.
Yeah. Tell me about the name first, Gully Lab.
It was pretty simple actually. We wanted to build a brand to the streets. Streets gave us Gully. That was very easy. And we sat down to basically write down all the brand values, what kind of a brand we were building. So one word that kept popping up was experimental. We wanted to be experimental. We wanted to try out things. And experiment led us to laboratory. Laboratory led us to labs. That's how it became Gully Labs, because the vision was never to make only a sneaker brand. It was to build a brand that can sort of encapsulate all cultural elements, everything that is Indian, everything that Indians don't find cool, but are actually cool. And how do we extend beyond sneakers? So we wanted to build a whole universe, which is why Gully Labs gave us that sort of leverage.
Nothing to do with the movie.
Nothing to do with the movie. Yeah, no, nothing to do with the movie.
You hesitated.
I did not want to lie. I was like, let me think if we ever discussed it. I was like, no.
Yeah, get that cool kind of vibe to it. No.
Yeah, no. A lot of people ask us if it came from Gully Gang or Gully Boy, but it was just, Gully just directly came from streets, because street wear as a conversation was so topical when we were starting out in 2022.
You talked about adding elements that Indians do not find cool but are cool. What do you mean?
Like, we realized India was not cool for most Indians, right? A lot of Indian maximalism that, we talk about, that is, very rooted in India, was disappearing, is still disappearing to a certain extent. And, we're all moving towards a more minimal aesthetic, be it sort of Indian embroidery patterns, be it, just taking pride in local Indian things. So we were like, what we find cool as Indians and other people don't find cool, we want to package it and give it back to Indians in a more elevated manner, because India is fundamentally cool in the way we live, in the things we see around us. And then we came up with a tagline that says representing the Indian dream, because sadly, the Indian dream for the longest time was to not be in India. It was to, get a degree from the US, settle in the US. So we were like, we want to represent a dream that is truly Indian, that is to be here to build for the country, to take pride in things, but also be aspirational. You should not look at India as a country that just manufactures stuff. It is a factory, which is not bad. We make a lot of things for the world, but we have our own identity, which is also very cool.
So let me understand by example the point you make about Indian maximalism and minimalism. Sneakers are supposed to be white. Sneakers are supposed to be either with a whoosh or a couple of lines.
So, yeah, of course.
They're supposed to be a certain way, which if you walked in an international airport, you'd fit right in.
Yeah.
And you're saying there's no need to think like that anymore.
Of course. embroidery on a sneaker or just representing local art forms, for example, right? On sneakers, Hindi, for example, right? Hindi as a text, Hindi as a font, being put on apparel, footwear, Converse, again, anecdotal evidence was nobody thought it would, you can make an aspirational brand out of it because, English is cool, Hindi is not cool. This is a common narrative that we see, which is why, the big Gully Labs branding at the back, a lot of people question that. But it was visually, it was to break that narrative that, this is a damn cool product. Beyond coolness as well, it is a very well made product and it's selling at a certain price point because it is great. And we have Gully written in Hindi at the back because we want to break that mental barrier that Hindi is also cool. You can wear something that has Hindi at the back, and then we extended that to Malayalam, to Bengali, to to other Indic fonts. So that is one example.
So let's talk about the beginning of this journey. You of course it starts off with your co-founder getting this idea. You are at that time in Bain. You're a consultant. You've come back from the US, kicked off your I don't know, Adidas or Nike or whatever you were wearing at that time, and decided to go feet forward into this idea. Why? What's happening at that time?
So Arjun and I met at an alum meetup.
Which school were you guys?
We went to NSIT. It's an engineering college in Delhi. We both went there, and then we met at an alum meetup, which was a Diwali party. This is in 22. Arjun had come back from Australia. He lived there for quite a few years. I was in the US for a bit, and then I got back, and then we both had similar observations about the lack of Indian brands representing India globally, right? When you go to a New York, when you go to a Sydney, when you go to like London as well, you find a lot of niche local brands that talk about niche subcultures, just, doing it really well, right? ALD just talks about New York's subculture, New York as a culture, right? And they've built they're minting millions of dollars just talking about that. And New York's culture is 250 years old. India as a country has so much heritage to talk about, and nobody could actually package it into a nice brand and talk about yoga. Yoga is a brand now. Yoga is a premium lifestyle outside of India, and yoga is premium. People doing yoga paying more money than people going to a gym. How do you take that yoga mindset, be rooted in your own space, and build a global brand out of it? That was the vision, and we resonated with just two guys, talking about our observations, and then we ended up following through.
And the consultant in you said, this is a great idea.
I was like, this is, it was not as much the consultant in me, it was like a 26-year-old guy back then who was like, I can always move to the US, get an MBA, live there, but I will not be 26, 27 again, quitting everything, just trying to do something that I feel passionate about. And that I feel rooted in. So let me try. What is the worst that can happen?
It was an easy decision to make and to implement.
I don't advise. I am not the right person to sort of seek advice on this from, because my risk appetite is generally high.
Like you've just done a 30 crore turnover.
Yeah.
You have a valuation of about 150 crores. You raise money on Shark Tank.
No, it all makes sense when things work out.
Yeah.
Right. So I don't want to.
Celebrity participants in your book. Your investors are very well known people, co-founders of great brands. So it did work out.
No, of course it did. It did. Of course, I'm very grateful for all of that. But back then, the decision was not as logical as it was driven by passion, is what I'm trying to say. If you're doing it, you also need to weigh out options. For me, it was an easy decision. It was a risk reward.
You didn't really like your job, no?
No, I like my job, but I was like, I can always do it. There's nothing stopping me from going back to Bain. I can be back in Bain at 35. I can be back in Bain at 40. I can go get an MBA at whatever age. But this is when I want to just do whatever I feel like doing in life, right? My parents are not like, I have no pressure of any sorts, I like doing it, I will do it.
And parents were okay?
Parents were okay. Parents were like, just don't go bankrupt or crazy, that's all. They were like, do whatever you feel like.
Did you give yourself time limit till, let me see how this works, and then if it doesn't, then I go back and call up my boss at Bain and say, hey, let's rethink? Honest answers only.
I had a soft sort of time ticker in my head, which was when I want to start drawing money. you know, to live at least a sustainable life. Can I start drawing some salary from Gully Labs that will help me sort of sustain myself? Because the worst kind of decisions are made in financial distress, right? You know, if the company can take its own journey, but if the founders are not, they are going bankrupt, then you're more likely to make desperate calls. So I was like, in the next 8 to 10, 12 months, which was again like coming from how much money I had saved up, etc. I was like, in the next 8 to 10, 12 months, if I can find a sustainable source of income in this model, then I think we will be able to grow it.
So this is 8 to 10 to 12 months after you started?
So when we met in 22, between that and us launching, we were still working. We were like, you know, doing our jobs and coming back and, you know, spending time on Gully Labs. We were working harder than usual, but, you know, as it should be. But we quit, both of us, we quit our jobs officially after Gully Labs launched, which was in August of 23. And November 23, like, I put down my papers, and November 23 onwards, I was jobless, right? So between that time and the next 12 months is when, you know, I thought, you know, I want to like be very practical about it as well.
So I need to get a salary at least by 2025.
Yes.
Did that happen?
Yeah, it happened much sooner. It, like, you know, we raised our friends and family round in the next 3 months. So it started like in the next 4 or 5 months basically.
What did the initial pitches look like? It's lived its life cycle on social media, on Instagram, on WhatsApp groups. That's where you took orders from. That's where you connected with founders. You connected with investors. You've connected with customers. So what was that journey like, and why that direction and that approach for something which is a product that you should sell mass in stores?
Yeah. One is because we wanted to start small very intentionally. We wanted to experiment with price points, product quality, designs as well. You know, embroidery, like I said, was not seen on sneakers like that before. So we were like, if we don't have revenue pressure at the start, we will be able to take smaller calls and do smaller quantities. So we found a small manufacturer. She was very kind to, like, you know, give us like 30, 50, 60 pairs in each colorway. So that speed or that sort of model helped us start really, really small and experiment. And then with time, over the next 2 to 3 months, by December, we had seeded ourselves in nice, interesting communities with creators, with, like, you know, tastemakers of different spaces. And, you know, we were also very lucky that a couple of content pieces from 2 very generous creators, it sort of blew up.
Did you have to pay for it?
No.
Yeah.
Because we did not have money. So we were like, I will give you a pair each. If you like it, feel free to make content on it, because it will then be more authentic, right? So let me give you a pair. And we gave them a pair each in September, October-ish, and the reels went out in December. And they went out in quick succession, and both went pretty viral. So we caught up on the internet overnight, and, you know, we sold out of the first batch. We were not prepared for such a moment, so we spent the next 30 days replenishing.
So viral marketing, digital, so content-led marketing on digital platforms actually works. It worked in your case.
It worked in our case, yes, because what working as a definition also is very different. We were small, so for us selling out 150 pairs, it worked, right? But at a larger scale, like right now, if you tell me that, you know, 100, 150 pairs sold out overnight, it is not a great outcome for us, because we've grown in scale.
How many pairs are you manufacturing a day or selling a day?
We are manufacturing close to 15 to 16,000 pairs a month, not a day, a month. And we're
15
selling
to 16,000 a month.
Yes, we have our own factory in Noida as well. So yeah, that is how many pairs we are manufacturing. Our sell-through is roughly between like 60 to 75% a month.
Okay.
Yeah.
Okay. So, and are you still handcrafted?
Yeah.
Because that was the USP, right?
Yeah.
I mean, I don't know how you handcrafting 15, 16,000 pairs a month.
Yeah. We handcraft 60% of the shoe is handcrafted, I would say. It is hard to handcraft the whole sort of shoe. Like, you know, attaching the sole, etc., requires a machine.
That's the shoe you're wearing that you're showing us?
Of course, it's.
Okay.
I'm always repping Gully Labs. So the stitch here is this stitch as well. The running stitch is all hand done. A lot of the these parts that come together, they're assembled on a table, stitched with a sewing machine, but there's a lot of handwork that goes into it. So we still intentionally handcrafted, but it does not let us compromise on speed at all. It is a very well established model. And we found a way to now scale it. So
You also need the kind of talent who can create those designs and actually do it by hand. How do you differentiate from everything out there?
for us at this stage, we want to differentiate ourselves by product design very, very intentionally, and the story and the narrative that goes behind it. You can always copy a product. I don't think it's the hardest thing to do, but to build it from the ground up with the kind of narrative that we sort of put into it. Like this shoe, for example, was inspired by India's first beauty pageant. Her name was Indrani Rahman. She represented India in Bharatnatyam, Odissi, did a sold-out show in New York. So this actually has a detachable ghungru at the back. I am not wearing it. I took it off, but this shoe is one of our best sellers globally. So these kind of concepts, just like we have a design research team that goes deep into the archives.
How big is that team?
That team has 3 people, but that is their full-time job, to just go deep into the archives, take out this information, go into history, and from that literature, how do you translate that into design elements, and how does that broadly go onto a product and the whole experience, which includes packaging, which includes unboxing and stuff like that. So it's a whole process. It does not happen by accident. It is very intentional, and that's how we've structurally built the company. So to be able to replicate that sort of vision or that sort of design identity is not like, you can always make the shoe after I've made it, but I can always make a better shoe in the next iteration. So
who's buying your shoes and what are they buying them for? Are these are not sports shoes, right? You don't wear these to the gym, you don't wear them for a run, you don't even wear them for a walk.
No, you can wear it to the gym. Like these are flat shoes, so you can actually wear it and lift it in the, lift weights in the gym. But these are all like experience seekers. Like that's how I like to categorize my customers.
Experience seekers.
Yeah, that's how we like to call our customers. These are people who, there is obviously a first layer of tastemakers who get excited by just Indian design and who want to try out new things. These are people who would, go for a theater on a weekend in Bombay. These kind of people who like to experience new things just because they like the process of experiencing, right? And now the second tier of customers obviously buy the product when they find value for money, because the kind of materials we use, the kind of sort of detail that goes into a shoe, if you were to go out and look for an Italian brand that makes a handcrafted leather shoe with that kind of detail, you will not get it for less than $250, $300. And we're selling like really high quality leather shoes for 7K, 7K.
But you're more expensive than other indie brands.
Yeah.
And there would actually be global brands, and some of them would be available in that price point.
Of course.
So why should I pay that much for your shoe versus, say, any of the other large global brands?
Because again, if I were to compare, let's say an Air Force One, which sells for 10K, versus let's say a Calico White that we have that sells for 8990. When you hold the two shoes in your hand, there'll be a Calico White is one of our best sellers, right? The kind of leather that we use, the kind of embroidery detail that goes on the side, and the product quality by itself is largely differentiated and way better than what you get at that price point. And to add to the narrative, to add to the purchase, the whole narrative of where it came from, what it buys, it just allows for more conversations. So whether you're a sneakerhead that cares about the narrative or a product buyer that just cares about the value for money, you will still have like a direct choice. There is still a segment of people who would be like, no, I want to buy a Nike because it's a Nike. We will also get there, over the course of time.
Was this an easy sell when you first went to founder, when you went to investors, when you were pitching your story, when you were trying to raise money? Was this easy? Did everyone buy it? Give us some examples of what your experiences were then.
I think a lot of people did write us off at the start, especially, when we just launched, saying that, people will not buy an expensive brand in this country because nobody had seen, like Mokobara had done it really well. Besides Mokobara, nobody had sold like expensive Indian products.
And they are one of the investors.
They're one of the investors as well. Besides Mokobara, nobody was able to do it. People had their apprehensions, but we were very clear on the vision, and we would only have conversations on product and the vision. And we were very intentional.
What was one of the most ego-bruising experiences you've had? Did you get a lot of no's?
We did not. Let me try and recall. No, not. I don't think anything was ego bruising as such, because I was, both Arjun and I, we never approached anything with like, a lot of ego. We were confident of what we were building. Some things were disheartening, of course, retail partners saying, no, we don't want to keep expensive Indian brands, we only keep Western brands. Indian retailers saying that to us was very disappointing, but that was not ego bruising at all. Investor conversations were never ego bruising, because I understand what they're looking for. Some people want to invest in brands that will get to a certain scale in a certain amount of time. So it was a very practical conversation. We never took it personally. It's like,
do you think that bias is still there somewhere, that can an Indian company and an Indian brand actually make world-class sneakers?
I think it is there. It's pretty much there. A lot of that barrier has been broken. But I think a large section of people still think or still have some apprehensions, which is fair, They will make opinions on what they've seen. We have built average products for 100, 150 years as a country, right? Things that will break after 5 uses, things that will not stand for a lot of time, because all the high quality products were being exported. So you can't blame the people, you have to blame what we've done. There's so much bad karma that we've accumulated. Now suddenly if you go to people and be like, we are different, why will they trust you? It's like having 10 bad breakups and being like, the 11th guy is going to be good. You'll be like, no bro. Like, why are you different? So it's literally that. So, it's like, I never blame customers or people. We have that side of self-awareness that, we've made subpar products for so long that people don't trust us, whether it's mobile phones, whether it's, gadgets, whatever. Tata is doing such a fantastic job now with its cars, but they spent so much time. They had the whole JLR they imbibed it, learned from their design process, and then people were like, oh wow, Tata and Jaguar Land Rover are one company, and then they had the whole journey, and now Tata is like, people are comparing it to, oh now this is a world-class car. But besides that, we've done bad work as a country.
That's an astonishing amount of self-awareness that you're displaying, and it's a fact. It's in every category. The sense is that anything imported, anything globally made, is amazing, and if it's Indian made, there would have been corners that are cut. Do you think that that's a manufacturing default in the way Indian businesses think? In the way Indian businessmen think?
I think it's
a feature, or is it a bug?
No, it's a feature. I think people have intentionally baked that into their manufacturing.
Because you have to sell for lesser.
You have to, because you are always cutting on costs and on prices, and as a result, you're cutting on costs, right? So, people have mostly built products for price-conscious Indian buyers, but now with an emerging set of value-conscious buyers who are happy to spend, but they want to derive so much value from it. We never built so much. We never built products at that scale for folks who were looking to do that.
What have been some of the weird and strange experiences in your journey? I mean, I read recently you had one employee who came and scammed you completely.
It just blew out of proportion.
Yeah. What was all that about?
It was actually this young kid. It was also funny now that I look back at it. This guy came in, got access to Shopify, and just ordered. Really respect the guy for also keeping his friends in mind. He just did not order for himself. Also ordered for his 10 other friends in different sizes. So
he ordered what? So he ordered at
shoes,
100% free shoes.
Yeah, because he had access to creating orders, etc. Because he was in the customer success team, so he applied 100% discount to a lot of orders, and just started ordering stuff for his friends and himself. Very selfless, but also very risky. Eventually got caught, and it just Arjun tweeted on. Arjun posted a tweet, and then everybody picked it up. It was more funny than weird to me.
And he came back and he sued you. He came back and he said,
I think
"Oh,
that was also not like completely true. He was like, there were conversations that he was like, I'm going through so much. Everybody is
I need my free shoes."
I know. I think that never happened, the whole suing thing.
What next? You have obviously made a mark, and now others have also started doing it on design. Interesting to have a shoe with a gungru on it or Hindi font on it and some of your collections. But now, if you have to compete on a world-class level with some of the best shoes in the world, and you talk to sneakerheads and they'll be like, but this shoe is actually really good, and this model is really good, and you look at the ergonomics of it and blah blah. Is that the next aim?
I think product improvement obviously is a very solid aim. It is a continuous process that we have to work on. On sneakers, yes, that is one journey that is non-stop. We have to keep upgrading the quality, and then we want to expand horizontally. We want to experiment with apparel as well. Now that Gully Labs gives us that leverage that we can go beyond shoes. We are launching a Lota-shaped tumbler. in a few days.
What is this
I
Lota
just
shape?
really
Tumbler is Lota.
No,
So
it's like
you're doing a Lota shaped Lota.
Lota-shaped Lota, yes. It is like everybody who's carrying a Stanley Cup thought Stanley Cup was cool for some reason, right?
I'm sorry to say, it's definitely cooler than a Lota.
Have you not exactly? See, you think India is not cool for Indians.
I did not say that. You're putting words in my mouth.
No.
So are you saying instead of this glass, I should sit at my
No,
desk
but
with a Lota?
but Lota has a specific image in your head, no?
Correct.
Like
And a specific
use case, exactly.
Use case in popular thought.
But when you go back into the archives again, Lota is one of the best ergonomically designed products. You don't have to hold it from a certain angle, right? Kabhi jhootha nahi karna hota. It's like immense use case of Lota, and you go back 500 years, forget what's happening with Lota these days. Go back 100, 500 years, people would like make Lota out of gold, and it would be used in coats and stuff. But we let go of that sort of heritage of design. How do we bring it back into a tumbler? It is inspired by Lota. It is not literally a Lota that you have to carry around. But, I will send you the first. I will literally send you the first sample, and then I'll ask for your opinion.
Please do, and I will sit and do my show with the
with
Lota.
Please, I would love that.
Okay. Something we were talking about earlier, and why should Indians who are sneakerheads, who are connoisseurs, and there are enough Indians who have disposable income now, why should they do your shoes instead of any other global brand? And I think I read a mention somewhere that Indians have particular kind of feet. Yeah. And that is why. So what's wrong with Indian feet?
There's nothing wrong with Indian feet. I think Indians, we typically have broader feet.
Chaude pair
hota hai. So then we also design shoes for broad feet. So the new collection that we launched, both the new collections that we've launched, we've intentionally widened the sort of last and how the shoe fits as well. So we take care of, again, design consideration. When I talk about design, it just does not, we don't confine ourselves to surface CMF only. It just goes into product functionality, how you wear it, what it is used for, and so on. So yeah, to answer your question, I think our product at any level is far superior. I will not talk about the design, the narrative, etc. I think people can see it for themselves, and whoever cares, whoever wants to be attached or associated with a narrative can obviously see how that flows through into design.
Such an exciting journey. Thank you so much, Animesh, for coming in today, sharing your story, and good luck with everything.
Thank you. Thanks for having me.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत? फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड? 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where...
Uncertainty over peace deal deepens as both US and Iran drag their feet to sign on the dotted line. US President Trump says his administration was only semi-negotiating with Tehran, while Iran denies holding any negotiations with Washington. Crude marks a third consecutive session of gains as uncertainty persists over efforts to reopen the Strait of Hormuz. Iran says over the weekend that talks with Oman on establishing a shipping route were nearing an agreement, but warned that any arrangement would not lead to an immediate reopening of the Hormuz. US futures slip on Monday after 2 weeks of gains as oil prices extend their advance on fading hopes for a deal to reopen the Strait of Hormuz, keeping inflation risks and the interest rate outlook in focus. Despite closing lower on Friday, benchmarks logged their second consecutive weekly gaining streak. The Wall Street likely to trade with a positive bias today, supported by resilient domestic fundamentals and earnings reactions. Good morning, you're watching Markets Today with me, Shreyansi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very, very quick look also at the handover coming in from Tehran and Washington, and some key commentary that's really come out in the last couple of days as well over the weekend. The Strait of Hormuz really remains at the center of the Iran-US standoff right now. You do have Tehran linking its reopening to concessions from Washington, and Iran's foreign minister saying that there are no direct talks at the moment, with messages only moving through intermediaries. Some bit of indication coming in terms of optimism when it comes to those diplomatic interventions as well, especially with Oman, and that's something that's coming in as a message from Iran as well. But Tehran is demanding, among other things, to really end the naval blockade, while US President Trump is saying that the US is only semi-negotiating and is going to be waiting for some of that economic pressure to really be building in at the moment. So that's really the key commentary coming in, at least on the geopolitical front. But that being said, let's also quickly talk about what the markets were up to, at least on Friday, and what the picture looks like for some of the futures contracts as well. But first things first, let's talk about US markets. And largely, it looks like a decent bit of handover coming in, starting this week as well, because, you know, as you can see on your screens, about a 1.5% uptick coming in for Nasdaq on Friday, S&P 500, Dow Jones also decent shape that you saw coming in. When you talk about US futures, largely trading close to the flat line right now. Just one hint of positivity that you're seeing in when you talk about the US futures picture as well. So largely, that's the kind of update that you have coming in. As you can see, Dow Jones, S&P 500, a little bit of a negative bias that you can see right now. Nasdaq is holding up quite resilient there, but close to the flat line nonetheless. Let's also quickly talk about Asian markets as well. and seem to be mirroring Wall Street's Friday's performance as well right now. So across the board, you can see gains coming in and about 2% uptick coming in for Japan's Nikkei. Hang Seng in good shape with that 0.6% uptick and 0.5% uptick for Shanghai as well. But that said and done, quickly talking about the uptick, that's not such good news for the markets. Now, when you talk about crude prices, you've seen some uptick also coming in there as well. So 1.5% uptick for Brent and WTI as well about 1% higher as we speak. So largely, that's what you're looking at in terms of, the handover coming in for crude as well. But, let's take a very, very quick break at the moment and we'll come back with some more details and some more stocks for you to track.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point.
Welcome back. Thank you so much for staying tuned in. Well, as promised, it's time now to get you the handover and some of the cues that you've been waiting for as well. Let's talk about the F&O cues first up. In terms of what to be expecting as well, Puneet, and it's quite the interesting setup yet again. Oil prices still gaining some ground right now.
Well, Monday morning geopolitical landscape as well as the atmosphere is something that we're used to by now. But as you look at the implied open, that continues to be the other factor that we're watching out for. Largely flattish at this point of time, but we ended the last week, especially because of gas, and we spoke about it on Friday in the closing show as well. Just a tad below that 24,600 mark, but overall a week that you'd want to start off a little rocky and hopefully end it a little bit more smoother. So this week, as we go into the last leg of earnings, you're seeing most of the reactions come through on the benchmarks as well. The Bank Nifty also will be in focus today on the back of earnings reactions coming in from SBI as well as what happened in the analyst meet. So continue to monitor the Bank Nifty today. 57,700, 58,200 are important levels to watch out for this particular index. But for the benchmarks as a whole, you will see, of course, the crude as well as the geopolitical landscape have an impact yet again. What we have seen by foreign investors is that it started off the last week with some buying, then saw some momentum waning off, which came back yet again. So overall, the cues for this week are largely positive, at least in terms of what's happened in the last week for the FI in the cash markets. The index long also starting to inch up a little bit at this point of time from that high single digit to low double digit kind of range, but it's only been a week, so we'll hope for a better trend to be formed in the next couple of weeks at this point of time also. What's also interesting is that the put call ratio has slipped below 1, and that's largely because of what you've seen at 24,600 as well as 25,000, the call open interest being built in, but not so much on the put open interest. So you might start to see some positions on the put side also build into and starting from today. But in terms of the stock specific action, seen some on in terms of the gainer, specifically on Compton Greaves, where you saw shorts being built up after this quarterly results. Lupin was another such candidate, while for Sona, that momentum has just continued over the last few weeks, and that's still visible on the F&O side of things. For the open interest losers though, you highlighted Bajaj Finsa, which was under pressure, so all longs being unwinded. Bajaj Finance was also under pressure, not propping it up on the list, but this was on the back of that NBFC as well as that regulatory impact that came through. Divi Slabs starting to see just some longs being unwinded, and Bharat Forge saw some covering of shorts. This counter will be in focus on the back of results today, but overall, that is the picture for the F&O side of things. It's a decent kind of a handover from the last week, so hopefully a good week to build on the longs into.
Absolutely, and let's see how that really pans out for us as well, Puneet. But let's also quickly talk about Ola Electric and some key concerns really emerging when you talk about the results and growth hurdles that are very much clear when you look at the Q1.
Well, most certainly, while we had some anticipation of what the results might be, because of the volume number, so now that has recovered to over 40,000 units in this particular quarter. Compared to quarter 4, it was just absolutely a whitewash. But despite that, you've seen a year-on-year decline of 45% in terms of revenues, as well as the losses, which have reduced on a YY basis, but continue to have a bearing on this particular counter. Net loss also at 336 crores is slightly elevated. It has, been bettered from the last year as well, but you look at the concerns, and there are 4 key ones that we're tracking at this point of time. One is on the gross margins. They were down by almost 800 basis points actually at this point of time, 816 to 30.3, and the management has flagged off concerns around this, maintaining that there could be 1 to 2 quarters of raw material volatility more. The other factor that the average selling prices have actually gone down materially, even on a quarter-on-quarter basis. So at 114,000 units, 114,000 rupees per unit, it has come down from 131,000. And the management has mentioned that this is largely because of product mix, so they are anticipating to get back to that 130,000 mark. Free cash flow is negative at 350 odd crores. That's another big concern for the company in this quarter. That despite the QIP-led funds that they had in hands, and hence this has been negative for the last 9 quarters. And finally, on the sell side as well, there's not going to be too much revenue contribution that the company has highlighted both in quarter 2 as well as in quarter 3, and hence they will be leaning heavily on the auto side. I want to talk about the market share that has also dipped for the company right now, because it was around 5% in quarter 4, improved to 8.3. But then again, in the month of July, you've seen some pressure, and it dipped to 6.9 because of competitive pressure. Now, this is an interesting aspect, and if we can show the cell part and the energy business, this is the one I'm talking about, because the auditor of the company has flagged off this particular transaction of 57 crores, the provision that the company had made towards the battery PLI aspect. Now, this provision was already made. The company has actually reversed that in this particular quarter, and that has benefited the bottom line. Now, hence, why this at this point of time? Because they still have to achieve a lot of benefits, a lot of investment targets to achieve this, and hence slightly more questions on this aspect. But brokerages continue to be, some of them continue to be bearish, and Kotak Securities is one of them. They have a target of 20 rupees per share, where they've highlighted that volume scale remains the critical hurdle for Ola Electric, and hence 1 quarter, while justified, you are seeing some pressure in the month of July. They've also highlighted that the EBITDA margins were below the expectations, and that was largely led by the average selling prices being lower. And despite the QIP, the free cash flow poses another challenge for the company, and they feel that if the current volume trajectory actually does not improve from here, they will be required to raise capital again. Another concerns at this current valuations. Similar concerns from Citi as well. They have a target price of 26, but they mention that a weaker volume as well as lower gross margin has been offset by cost control, at least in this quarter, but highlight that the volumes remain sluggish and the average selling price is weak and the competition is escalating. Finally, they have highlighted that there was a positive impact of the dealership model shift, but it's uncertain, and they feel that Ola looks actually comparatively much more weaker compared to its other peers, and hence these are some of the challenges that even the results highlight, the brokerages highlight, and hence it's a stock to watch in trade today.
No, absolutely, and a lot really hinges on volume recovery, a lot hinges on margin recovery as well. Thank you so much, Puneet, for joining us with that update also coming in when it comes to something like Anola Electric. Let's also hear out from the management as well in terms of the commentary coming in when they talk about the margin recovery and the path that they're mapping out for it going forward.
So while we wait, I just want to underline some of the comments Deepak said. It's been an important quarter, Q1. Margins were steady, still industry leading above 30%, despite the commodities upswing. And we do forecast margins to be in this range as over the next quarter or two, commodities come down and margins will further improve again. I think the highlight of this quarter was obviously the top line recovery, strong top line recovery, as well as operating cost reduction. And I think Deepak highlighted it in his comments, but almost on 2x volumes, Q4 versus Q1 sequentially, our OPEX has actually come down meaningfully.
All right, then there you go. So that's margin recovery, and that trajectory seems to be all mapped out. But let's also talk about Titan. And in fact, when you talk about the growth as well, it's a strong set of numbers that you're looking at, especially the jewelry growth, margin expansion. That's why you're seeing some strength coming in, also prompting brokerages to raise target prices, maintain their bullish ratings. In fact, Mahima is joining in with some more details. First, Mahima, let's talk about the key fine print here when you talk about the Q1 set.
Right, so for Titan, Q1 has been very strong, has beaten street estimates by quite a large amount. In terms of the jewelry growth also, that's come in very strong at the 38% mark, ex-bullion of course. And studded growth has remained very strong with improving buyer trends as well. They've reported jewelry margins were boosted by one-offs from custom duty, inventory gains and MTM gains as well. But at normalized rate, jewelry margins stand at 10.9%. Broadly, in the guided range. The 11% of course was the guided rate, but it's coming at 10.9%. CaratLane saw revenue growth and sharp margin expansion as well, and the mass remains a turnaround opportunity, while the broader international business is now moving towards profitability. Now, in terms of where revenue goes, overall, has seen a growth of 29%, EBITDA growth of 58%, margins at 13.5%, and net profit at growth of 63%. In terms of the segmental performance on a consolidated basis, jewelry saw a growth of 42.6%, watches a 21% growth, similarly eye care also a 21% growth, and emerging business has seen an 18% growth. In terms of commentary from the segmental performance, jewelry, plain and studded jewelry grew in mid-30s, double-digit buyer growth and higher ticket sizes has aided the growth that we've seen in the top line. In terms of international jewelry business, the revenue also surged 136%, so good growth coming in from the international business as well. Watches, largely the growth was led by analog watches. For eye care, premiumization and multi-pair propositions have supported the growth. For emerging business, Taneira remained broadly flat, but skin and earth has done very well for the company, and the segment continued to, of course, to still make a loss of around 39 odd crores. Management is confident of double-digit growth. It expects to sustain double-digit jewelry growth even if gold prices, inflation moderates from here on. So this is the overall view of how things have fared for Titan this quarter.
Absolutely, and thank you so much, Mahima, for getting us that entire update. So it seems like a decent set of numbers when you talk about the brokerage verdict, also quite bullish and upbeat when you talk about brokerages as well. But speaking of brokerages, let's talk about another beat, and let's also talk about another bullish set of commentary coming in. When you talk about brokerages, it's actually one of the big banks. You're talking about SBI. That's beat some of the estimates for the first quarter. And when you talk about the brokerage view as well, looking like it's quite healthy. In fact, Shivam is joining in with just the answer to that as well. Shivam, let's take a closer look at what the brokerages then have to say.
Well, starting with first few key highlights of the quarter one earnings. So the quarter one earnings, the numbers have been ahead of its estimates. In terms of net interest income too, we have seen a healthy growth of around 15%. If we talk about the credit growth, that was mainly led by the agri segment and the SME loan segment. In terms of provisions, we have seen a sharp rise, which is mainly on a seasonal basis, and that has risen by around 27% on quarter basis. In terms of profitability, it was mainly led by the improving operating efficiency, and we have also seen improvements in asset quality on GNPA and NNPA basis. In terms of margins, that were also seen an improvement, and which was mainly led by due to lower cost of deposits. In terms of the brokerages, starting with the JP Morgan, they have maintained overweight rating with a target price of around 1280, and they have said that the numbers were ahead of estimates, and the NIM expansion that has remained a positive thing for the bank, as we are seeing pressure in NIM trajectory across the industry. In terms of credit cost, that has remained lower, and the asset quality has also remained benign, which is adding more to the positive outlook for the bank. Second one is the Citi that has maintained a buy rating with a target price of 1300, and that too has said that the quarter for the bank has remained strong, and in terms of margins too, that has remained pretty strong. In terms of income, the cost efficiency and loan growth, all of the metrics has improved. In terms of domestic margins, that has rebounded around 7 basis point on quarter basis to 3%, and management has reiterated its the target to 3% NIM by FY27 end. In terms of advances, that has accelerated around 19%, which was mainly led by retail, SME and agri loan, while the OPEX has remained tightly controlled. Third one is the Bernstein. The brokerage has maintained a market perform rating with a target price of around 1300, and has stated that the margins is improving on supporting a net interest income, and loan growth has also remained robust around 19% on YY basis. In terms of asset quality, that too has remained stable, and despite there has been a seasonal rise in the slippages that we have seen, and fee income, that too has remained strong with controlled OPEX, which has supported the return on asset improvement this quarter.
Thanks, Shivam, for joining us with that update also coming in. So there you go. It's actually a bunch of brokerages that have hiked the target price when you talk about something like an SBI. But speaking of hiking target prices, let's also take a closer look at some of the commentary coming in on something like a Hindalco as well, because brokerages seem to be quite bullish when it comes to that one as well. They do see the growth projects remaining on track. In fact, Parth is joining in with some more details in terms of what the brokerage view looks like. But Parth, the key highlight is that it remains bullish across the board, and you do have hikes coming in across the board as well in terms of brokerages.
Absolutely, and there are 4 very interesting brokerage notes on Hindalco, starting with JP Morgan. They have maintained an overweight rating post the Q1 results, and they have hiked their target price to 1205 versus 1190 per share earlier. They believe that the Hindalco's growth prospects remain on track, and the phase 1 aluminium smelter is expected to commission by December 2027, which will give FY29 even more boost in volumes. Their captive coal mines will see 1.5 MT volumes in FY28, which will give them cost savings and adding to the bottom line as well. On the net debt to EBITDA ratio, it has moved slightly higher quarter on quarter to 1.95 times versus 1.83 times. This was mainly led by Novelis, and also management has guided that FY27 will be capex heavy both for Novelis and India as well. So this net debt to EBITDA will remain stable in the coming quarters, but will see a decline from the 4th quarter onwards. Now coming to Jefferies, they have maintained a hold rating as well. They have also raised their target price to 1100 versus 1075 rupees per share. They said that the EBITDA beat estimates by around 20%, driven by sharp recovery in Novelis and a strong India business performance as well. India EBITDA saw a growth of 26% quarter on quarter, thanks to the higher aluminium and sulfuric acid realizations. Now coming to HSBC, they have maintained a buy rating as well, target price of 1430 rupees per share. They believe that Novelis earnings will improve more as we see restart of operations in Oswego, while insurance and working capital release will do that deleveraging for them. And lastly, UBS has maintained a buy rating as well, target price of 1325 rupees per share. They believe that Novelis adjusted EBITDA per ton came well ahead of estimates, while upstream aluminium EBITDA saw a growth of 81% year on year as well. Novelis deleveraging will be the key catalyst, with $300 to $400 million working capital release expected, and leverages target to be 4x by FY27. So these are the top 4 brokerages.
Absolutely. Thank you so much, Parth, for joining us with that entire update. Also coming in with that, we're completely out of time on this edition of the show. Thank you so much for tuning in. But as we do that, let's also listen in to the word coming in from Cyril Shroff of Cyril Amarchand Mangaldas.
How you have seen this relationship of trust evolve and grow between a general counsel and their board?
Thank you very much, Nimit. So this relationship has changed dramatically in the last 2-3 decades, from being just a solver of problems after the problem has happened, to being actually part of the design of the ideas, thoughts and business initiatives in the boardroom and in business, that transition has been intense. And we are seeing today the arrival of the modern General Counsel, or CLOs as they sometimes are known. So I've seen the journey as being a very interesting transition. It has transformed, and I think we now need to step into the next level of leadership development. And that is why we created this academy.
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. you're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open from the Suzlon studios here at NDTV Profit, and it promises to be an interesting week. I wonder, Alex, if we should look at it extremely negatively or slightly positively when Trump says that he's only half negotiating with Iran. His plan is to, just let their coffers dry up.
I don't know how positive that is, because it indicates to me that there's only so much that the US can do. Ultimately, a negotiation has to be with two parties. In this case, there are three. And we said this at the start of the conflict, there are three in this tango.
Yeah.
Israel has not been mentioned as much in the recent past, but let's face it, they're a major part.
They've completely stayed under the radar.
But having said that, what is happening in Lebanon is a clear factor in what Iran is pushing for, and Iran has not come to the table. According to their own statements, they have not come to the table.
Yeah, so I'm back after a week.
Welcome back.
And the only reason I mentioned that is I was trying to look at whether the needle has moved even a millimeter on what's happening in the Strait of Hormuz. And
it hasn't.
No, it hasn't. I think it's been 2 steps forward and 2 steps back.
Yeah, maybe just that the only difference is, are the markets now getting used to this? Simply because, one, there are markets, but two, look at what's happening globally. The S&P 500 has risen in 13 of the last 17 sessions.
Yeah.
This is while the conflict is on. And a really important thing that a lot of people watch out for, Berkshire Hathaway. The great man Warren Buffett was a net buyer of equities in Q2. Berkshire Hathaway deployed $19.8 billion in net purchases after sitting on cash for a really long time. So are the slides turning on that front remains to be seen.
Yeah.
But no, Tamanna.
Is he seeing something, or was it just finally time?
Yeah, remains to be seen.
He's sitting on a lot of cash,
Yeah,
right?
so
Finally deploying.
Eventually had to deploy it. Now's a good time as any, I
Maybe,
suppose.
yeah.
Okay, so much to unpack. Let's just tell you what's happened globally over the weekend as well. US markets closed with gains on Friday's trade as jobs data came in weaker than expected. Now, you'd wonder why that's a good thing. It is because from an equities perspective, because it's raised hopes of a delayed rate cut from the Federal Reserve. Just pull up the indices and where they ended in Friday's trade in the US markets, and all in the green. The Nasdaq up over 1%. Futures a little more jittery because so much happening, right? Iran comes and says, no, we're not really negotiating. Trump says we're half negotiating. Pretty much flat on US futures. Jobs data, I mentioned jobs data. I'm referring to non-farm payroll data. It shrank by 23,000 jobs in July. What was expected was an increase of 83,000 jobs. Unemployment rate has slipped to 4.1% versus 4.2%. As a result, bond yields fell. After that weak jobs data, the 10-year was at 4.67%. Now let's talk about oil. Oil prices have remained elevated as Trump says he's only half negotiating with Iran, as per comment he gave Axios. So Brent right now a little sub $85. Asia, let's pull up Asian markets this morning, and it was a bit of a mixed bag at start, but going strong now, 2% up on the Nikkei. India is looking completely flat. And if I pull up the India implied for you, you'll see nothing much moving there, just about 6 points up. But it's been a decent week last week, so maybe just building on that. Seth Freeman, Senior Managing Director at Glass Trackner Advisory and Capital Group, joining us now. Seth is joining us from San Francisco, if I'm not mistaken. Seth, very good morning to you from where we are sitting here all the way in Mumbai. Just want to get a sense whether US markets, at least on the equity side, are deprioritizing what's happening in the Strait of Hormuz at any point.
Well, I don't know whether traders are just getting fatigued. Well, it's very hard to read what's going on. If you remember, there was a deadline last Friday, multiple deadlines over the last months, but another deadline last week. It's going to blow the country into smithereens. And now he says he's being patient. So I think it's very difficult for traders to understand what's going on.
Okay. Seth, the other question is, and we've seen what gold has done over the last week. I think the jobs data that came out on Friday was another shot in the arm for gold. Is this an asset class that you think increasingly global investors will turn to heading forward?
I don't know that investors will move necessarily into gold, but since gold doesn't pay any current returns, any idea that interest rates or the cost of holding gold is lower is certainly helpful for the gold market.
Okay. So Seth, net, are you constructive equities right now? Is it difficult to call that right now amidst all that's happening? Or are you buying into some other asset class right now?
Well, the interesting thing is, despite all this noise, we're seeing the indices reaching new highs, close to new highs. So again, equities are supposed to be future oriented about, earnings in the future, dividends in the future. And so apparently a majority of traders think that equities are going to continue to do well. It also seemed that there was a little bit of a reduction in the panic about AI and even chips towards the end of last week. And treasury bonds in particular, are also troublesome. 10-year bonds reached a 19-year high last week, and the Treasury Secretary Bessent has to perform some mechanisms there and pouring some support into Japan. So you usually don't see equities and bonds move the same way, but we've had some of that this summer.
Yeah, it's very interesting. Seth, always a pleasure speaking with you. Thanks so much for taking the time.
Thank you.
All right, let's talk about what happened in equities last week. It was an eventful week. It was a week of learnings. The Nifty 50 gained about 0.8% in that week of learnings. The new cash system resulted in a 200-point gain at the close on Monday, and everybody had their jaws on the floor. And then over the course of the week, you came to terms with it, and the fact is that the gap at the end started narrowing. It was pretty narrow at the end on Friday. The Nifty 50 ended 203.4 points below Monday's close. Very interesting, isn't it? The broader markets outperformed the benchmarks last week. You had the mid-cap index that gained 1%. The small-cap index rose as much as 2.4%. So the broader markets outperformed. But towards the latter half of last week, you had muted trade for the broader market. So are there signs of fatigue? It's possible, and we'll talk about that in more detail. Foreign institutional investors, interestingly, were net buyers in 3 out of 5 sessions, and on Friday, they net bought equity worth 480 crore rupees. Domestic institutions net buying also to the extent of 236 crore rupees. On Friday, the Nifty 50 declined about 0.3%. The Bajaj twins were the worst performers, losing ground after the RBI's norms on revolving credit, and also the fact that they gained quite considerably after Bajaj Finance results. Trent, ICICI Bank were the other big losers, and TCS, Hindalco, Grasim, M&M were the top gainers on the Nifty 50. The broader markets outperformed once again, but the gains were capped. They were muted. The mid-cap index rising as much as 0.2% at the end, and the small-cap index ending flat. Auto, IT, defense, and PSU banks were the top sectoral gainers. So it was an interesting week all told. I think, Neeraj, by the end of the week, we got more of an understanding of the cash system than we did at the start. We're still waiting for that dust to settle, though.
You will say the same thing next Monday as well.
Yeah, I was just wondering, Ken, if we do a straw poll, have you got more of an understanding of the cash system 1 week later?
I mean, certainly compared with Monday.
I wonder what people will say. Actually, let's put that question to everyone who's tuning in right now. Have you understood more of the cash system than you had a week ago, and how do you think it's going to go? Tell us, we're listening.
Yeah. I'd be curious for that.
But it's interesting because it's happening in a lot of major markets across the world. Teething issues right now, hopefully they'll settle. Let's see. But technicals notwithstanding, the fundamental setup does look solid, right? And even if pullbacks were to happen, and we've been talking about it all through last week, that settle yourself for a pullback if it were to happen, because we've had a fairly heady move, at least at the mid end of the market. Remember, the small cap 100 was at all-time highs last week. Think of it, right? Nifty IT is now up nearly 22.5% from the July lows, and therefore that index may consolidate as well. You never know. The sector though, which is now starting to stand out, spoken about chemicals, pharmaceuticals all through and through, but infrastructure, and look at the kind of ordering activity that is happening and which may aid some of the quality names. Think about this. In the last 7 days alone, Larsen & Toubro has won orders over 40,000 crores. This is serious ordering activity that's happening, and sure, L&T is a different kettle of fish, and therefore it probably gets a lion's share of new order flow, but of course it's happening across the board as well. So quality names in that bucket or that cohort might actually stand out to gain as well. Keep an eye out for these names. And as we do every Monday, just a very brief thing on the earnings. We'll, of course, at some point of time bring about the Goldman view on earnings as well. But as I look at earnings thus far, for about a third of the market-wide release that has happened, 18% growth in revenues, 25% growth in profit after tax. It is the best performance thus far in the last 8 quarters at least, and which is why we've been saying that the fundamental setup is strong. You can't fault the fundamental setup and India Inc.'s delivery in these times. Now, if crude were to go back to 95, whatever, then it's a separate thing. But otherwise, the fundamental setup is rock solid.
State Bank of India, Titan.
Yeah.
So large companies have done well. So completely, the foundation is solid. Now, here are some of the factors you should look out for. Despite trading in a narrow range following an initial gap-up opening, Indian benchmark equity indices have retained a positive short to medium-term bias. Immediate structure remains bullish as long as 24,400 holds. Upsides remain open above 24,400 to 24,500. A break above 24,850, that momentum can then accelerate towards 25,200 to 25,400. Below 24,400, a correction towards 24,200 to 24,000 becomes possible. 23,850 is the major short-term or larger support. Medium-term remains 22,000 to 26,500. A decisive break above 26,500 could eventually target 28,000 to 30,000, but don't hold your breath waiting for that breakout. Now, avoid chasing within the 24,400 to 24,850 range. A better signal will come from a sustained breakout above 24,850. So remember that. For the Bank Nifty, broader bullish structure remains intact unless the Bank Nifty falls below 50,000. The Bank Nifty has strong support around 57,500 to 57,350. A sustained move above 58,500 could take it to 59,000 to 60,000 to 65,000. Below 57,350, the downside could extend towards 56,600. So that's pretty much the setup and the factors to watch. But let me go across to Puneet for the F&O setup this morning.
Well, thank you for that, and good morning to all three of you. We've seen last week, started off the volatility with cash as well as the global factors, but we just ended a tad below the 24,600 mark, discussed that at length in the closing show on Friday as well. So while we would have started with a lot of volatility in that sense, ended at least very closer to that psychological 24,600 mark. And there has been a key support. We've breached that in the past a few times as well, but important to start off this week very close to that level as well. For the Bank Nifty also, big earning reactions from SBI will be one. The results came during market hours, but the analyst con call as the brokerages continue to be upbeat. So the PSU banking index as well as the Nifty Bank will be in focus today on the back of that. 57,700 is another important level. So is 58,200 on the upside. And then we've not breached that 58,800 in a while. So continue to monitor this as we get into the last leg of the earnings season for Q1. What we have seen in the cash market is though some buying on Friday, but overall the momentum has largely been in the green for the month of August, at least till now in the cash markets. There has been some build-up of positions also on the index long side, and hence It has inched up to the low double digits now. And even the put call ratio, you're not seeing too much action on the put side of things, because on the open interest distribution, you've seen some buying on, and that has continued through the last week on 24,600 for the calls, also on 25,000 as a level. But you've not seen any positions yet being built up on the put side below that 24,600 mark all the way down to 24,100. So those red candlesticks for now have disappeared. But if they are being built on into this week, will be something to watch. Finally, for stock-specific action, lot of reactions coming through, especially on the back of results. So Crompton Greaves was one where there was some build-up of shorts. So now BLW, the momentum continues on the long side for the last 3 weeks, and that's visible on the charts too. And for LTM, again, a build-up, a second run yet again for this particular counter. If it works out and doesn't fizzle out, will be something to watch. For the other stock-specific actions, you saw, in terms of Bajaj Finserv as well as Finance were down on Friday, and that was visible on the F&O side of things too. Bharat Forge will be in focus today on the back of earnings that will come during market hours. And Divi's Lab, the longs have just unwinded for the first time since reporting good results. So there are a lot of reactions coming through here, but for the benchmarks, it's a good start for the week, closer to that 24,600 mark. And if you build onto that, will be a key story this week.
Okay, another key story or set of key stories is going to be result reactions, because that's still the actual tangible impact that you're seeing on stock prices. So I'm starting my watch list off with Anant Raj. On the face of it, good set of numbers. Revenues up 6.6% at 631 crores. EBITDA up 21.7% at 183 crores. Margins have improved from 25.4 to 29%. And profits have improved about 19%. But you need to scratch under the surface and look at these numbers in a slightly more comprehensive way, because the core revenue grew just 6.5%. Other income nearly doubled year on year. Depreciation more than doubled year on year to 16.21 crores, mainly led by their data center capex. And employee costs were up 77%. That's hiring ahead of their cloud and data center revenue ramp. The costs have been front-loaded before the data center business starts contributing revenue. 690 crore QIP money is still sitting with them, and only 60 crores have been deployed this quarter. But on balance, with all of these factors, looking at the numbers, it's a thumbs up. Not so, and not quite for Ola Electric. Net losses at 336 crores versus losses of 428 crores, so at least that has narrowed slightly. Revenue down 45% from 828 to 455 crores. This is the pain point. EBITDA loss has gone from 237 crores to 165 crores, and other income has also gone down from 68 crores to 29 crores. Kotak has maintained a sell with a target price of 20 rupees. They're saying volume scale remains the critical hurdle. The Q1 FY27 adjusted EBITDA margin was below expectations due to lower average selling price. Sequential volume recovery, but volume trajectory needs to scale up further. Despite the QIP, free cash flow outflows poses another challenge. If current volume trajectory does not improve, the company will be required to raise capital. So, thumbs down on Ola. On delivery as well. Now, again, this is something that you need to look at below the surface, because the commentary has been positive. But I'm just looking at the numbers first. Net profit down about 65%. Revenues were up about 28% odd at 2,931 crores. EBITDA was down 4.5%, and margins have gone down 6.5 to 4.8%. They've reappointed Sahil Barua as MD and CEO for 5 years. There is also a COO appointment which has been made. But JP Morgan has maintained an overweight, though they've cut the target price to 590. They're saying in Q1, transitory costs weighed on earnings. Outlook remains solid. They believe margins have bottomed in Q1 and should see a sharp recovery in H2. However, margin delivery will be key to improved investor confidence. Taking one more note, on delivery, the Morgan Stanley has maintained an equal weight and cut the target price to 500 from 510. They're saying good top line, but margins missed. Cost pressures have led to a margin miss in Q1, and the management expects to recoup this over coming quarters and have a similar outlook for FY27 margins as earlier. Elevated management team members to take on greater responsibilities as well. So it's about actual execution as far as delivery is concerned, I would say the verdict is still out.
Very interesting stocks. I picked Titan, and I'm pretty sure that if I hadn't picked before you, you would have wanted to take a look at this. I think this is probably the earnings of the day, right? You were expecting it to be a good set of numbers because of the quarterly updates came through, and it's not disappointed. Take a look at some of these numbers, right? It's a jewelry revenue growth was strong at 38% ex bullion, with EBITDA and EBIT growth also robust. You had the studded growth that remained strong with improved buyer trends. Interestingly, the reported jewelry margins were boosted by one-offs and custom duty, as well as inventory gains and mark-to-market gains as well. So bear in mind that EBITDA margin was higher than it ordinarily would have been. The normalized jewelry margin was at close to 11%, which was broadly in line with expectations, or the guidance actually. CaratLane saw strong revenue growth and sharp margin expansion, and Damas, which is their international business, remains a turnaround opportunity with a broader international business moving towards profitability. Some of those key numbers: 63% increase in net profit. Now, you already knew that the revenue number would be strong based on the quarterly update, but the EBITDA has increased as much as 58%, which is strong. The margins coming in at 13.5%. The jewelry business revenue is up as much as 30% to over 19,000 crore rupees, and the jewelry business EBIT is up as much as 68%. I've picked just one of the various notes on Titan, and it is City. It has the biggest increase in the target price, which is why I picked it. They've maintained a buy and they've raised their target price to 5,700 from 5,075. By far and away the most optimistic target price of the lot. They say it's a strong Q1. Jewelry revenue and EBITDA have grown 38 and 33% respectively, excluding bullions and one-offs. They also say that the near-term growth remains healthy, though some softness in plain gold jewelry has emerged in late July. The mix improvement from moderating gold coin growth and accelerated studded jewelry could drive further margin upside going forward as well. So all looking good for Titan. We'll have the management for you later on the show. Hitachi Energy, second stock on my list. Robust order inflow, strong order execution stands out. Order growth of 26.1% year on year, revenue growth of 69% or thereabouts. They also got their first BESS order that was positive. In fact, they're sitting on the highest ever order backlog of over 32,200 crore rupees, and the export segment accounting for a third of that all stands them in good stead. PAT growth of 123%. You can't complain about that number. Adjusted EBITDA margins rose as much as 550 basis points to 16%, and that was led by operating leverage. So all told, very good set of numbers. Watch out for it in trade today. And finally, Care Ratings. In a quarter that saw lower bond issuances, they've actually still managed to have a pretty decent set of numbers. Corporate bond issuances dropping as much as 29% in that quarter, obviously because you had yields that spiked on account of the geopolitical risk that was being factored in, though commercial paper issuances did go up. Bank credit, and this is actually an interesting talking point for the rest of the financial space as well, rose to as much as 18.6% versus 9.5% last year. And credit growth to large corporates within that rose as much as 16.6% versus 2% last year. So all told, a good set of numbers that also gives you indicators on what the corporate books of large banks are going to look like going forward.
I mean, the gentleman who will come at 8:30 will say that was never in doubt.
That is true.
But yeah, okay. The three stocks on my list. The first one is Keynes, and remember, it's been the eye of a storm for the last couple of quarters now, and their numbers as they came out just marking what they did. So the revenue grew at about 40% for Keynes, and the operating profit margins at about 15.5 or 15.6% beat estimates. The core EMS growth was very strong at 66%, so you can't fault the company for that. But the highest interest numbers as well as the depreciation and amortization offset the operating performance, and the negative operating cash flow of 260 crores. Working capital days rose from 163 to 122 crores, and smart metering has an issue out here for Keynes. So It'll be interesting to see how they tackle that issue. Puneet was telling me that seems to be a bugbear right now. So very likely that because the stock has fallen quite a bit, I don't know how much, but it's not a result that will please the street too much to my mind. Now, Kotak has come out with a note. They've maintained a reduce. They've raised the target price to 3550 from 3280. Amongst things that Kotak says, they say it's a weak Q1 pack, down 25% versus estimates despite that revenue growth. Higher inventory amidst supply chain and commodity pressures could weigh in on near-term margins as per Kotak. And the OSAT and PCB businesses are expected to start contributing from second half, providing future growth levers. So they've just upped the target price a little bit. JP Morgan, on the other hand, they've maintained neutral. So they haven't been like Kotak. But while Kotak has raised price, JP Morgan has cut the target price to 3600, 3700. They say it's a strong beat. But the smart meter revenue declining 9% as the companies prioritize cash conversion is something that Goldman seems to like. JP Morgan seems to like, excuse me. And they, of course, say that the OSAT and PCB ramp-up has been delayed due to equipment and logistic issues. It's a small number at the first year, but it's something that the street was looking forward to. So my guess is that the street isn't able to decide pretty much what to do with gains after the fall that has happened. These Q1 numbers don't deliver anything special. Really surprised if the stock reacts very, very positively. Keep that in mind. Apollo Micro is the other one, wherein if you look at the revenue number optically, it looks blowout, right? 88% revenue growth is stuff that dreams are made of, but operating margins came off to 21.4 versus 30.6%. Net profit up, therefore, only 45% at 26.9 versus 18.5 crores. There's a record order book of 1700 crores plus new prototype and prime rolls and the Premier Explosives deal, all of that, which augurs well for Apollo. But the numbers, trailing 12 months, 124 times, estimated forward multiples, 82 times for FY27, 54 times for FY28. At these multiples, you can't put a foot wrong. The margin decline for this quarter would mean that the street will believe that the stock has put a foot wrong. So maybe the stock reacts negatively today. And I know the insurance data came out in Friday during market hours, but just wanted to mark the comparisons. LIC, the July data, they've delivered a stronger monthly new business premium growth in July thanks to group business momentum. That number was up 23% for LIC versus 16% increase recorded by all the private insurers. Even on the APE side, LIC's APE was 10% versus 9% for private insurers. For a stock which has gotten beaten down because of the block deal, the numbers that are coming out after that are looking promising. So let's see if there is further upsides for LIC in the session today. And then, guys, a clutch of other small cap names, mid cap names that have come out in numbers. I'm sure we'll discuss all of those.
Typical Monday morning in result season, where you have everything bunched up. So
and the last week at that.
So what we're going to do is, we may not be able to talk about every stock, but you will see it on all different parts of your screen. And the easiest thing to do is if you want to go to our website and see everything together. But I just want to spend a few seconds talking about this MDR clarification which came on UPI payments, because that became a huge talking point all of last week. So I think this is important, that there's going to be no charge for users. Consumers making a payment will not face, not just P2P, consumers making a payment will not face any transaction charges. It is at least what they've come and said. So P2P is free, all person-to-person transactions will be free, so you guys can happily transfer some money to me if you wish to. On
right away. Come, let's do that right now. How much? 3 rupees?
I was thinking, let's test it with 1 rupee.
Oh God.
I was being more generous.
Look at these guys. Look at these guys. But there will be nominal MDR for merchants above a certain threshold, which is not half bad. I think that might still continue to be a positive for the likes of MobiKwik and a Paytm. To some extent.
There should be a business case for this at some point of time. Glad it's not happening at the cost of consumers, because that adaptation is great.
But actually, so here's the thing, right? In a short update, think about it from an economic standpoint, and what the RBI governor said during the press conference is that somebody pays. Somebody pays. So ultimately, the government at this moment, or the infrastructure is bearing the cost. It will ultimately go to the taxpayer's pocket right now.
You know, I would say yes to that if we were in a country and a world where that somebody pays is extended to everything else that the government 100%. Picks up as well. It's only when it comes to certain segments of society that the cost has to eventually be borne. It's not that massive a number for the government if you compare it to their budget.
Also the purpose that it serves.
And the purpose that it serves. I mean, the fact that people have gone off cash in such a huge numbers.
Financialization.
I think it's amazing. So I think it'll be step by step. It still needs to clear all levels of parliament. So
No, I mean,
that's there as well.
It's a use case globally, right? People are astounded when they come here and they look at the kind of transactions that take place. Oh, you want something? All right.
Yeah.
But as usual, it's going to be if you are buying anything above 2,000, above a lakh, above 5,000. At higher levels, now you have MDR charges. But those are the people that you want not to go and pull out cash and use, or use some sort of cash. So I don't know. It's going to be trickier, I think. Very quick break. Markets are looking flat as per the implied open, but the conversations here are nothing but flat, at nothing close to flat. So all of the excitement continues on the other side. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आपने ना बहुत? फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड? एक हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC.
Welcome back. You're watching India Market Open. We've already talked about a number of stocks that could react in trade today. At the benchmark level, though, it's expected to be a flat start. But that is the large cap benchmark. What is the outlook for the broader markets, which has so far been outperforming the benchmark Nifty 50? We were speaking about the fact that there might just be a little bit of fatigue creeping in. That's not just me saying it. I'm joined by Kush Bora and Parag Thakkar, and the person who has an opinion on the fatigue in the broader markets is standing in a space where he's going to describe this with data. Kush, what are you picking up? Good morning, first of all.
First up, a very good morning, guys. Opinion is the right word. Let me better that. Observation. And you know what they say about observing without analyzing? I'll come to that in just a second. Let's start with what's happening in this mid space. Of course, we've seen a very sharp run up in the small and the mid cap segment. The indices have run up. So I decided to take a closer look under the hood. And here's what I found. Let's first see what the run up was like. So from the from the various perspectives in terms of time horizons, let's just focus on the last one. Since the West Asia bottom, Nifty has gone up 10%, mid cap 120. And small cap about 30, 31. You can't make this up, 10, 20, 30, right? So we know there's already been a very healthy run up. Now, if you move to the next slide, please. What caught my attention was the divergences. Now, you know I'm a big fan of RSI divergences. We've spoken about these multiple times. On the daily front, nothing yet. All good. But look at the weekly and the monthly setup. You're starting to see RSI divergences, which means that the indices are going on and hitting fresh highs, but the RSI is not, which means the momentum is waning. And mind you, this is on the weekly and the monthly setup. So whatever happens after might take some time, perhaps weeks or a month or two to play out. What would that be? We'll discuss in a bit. Moving on to the next one. Not only the divergences, we looked at the market breadth and see what happened. Since July, and then of course now comparing that to what happened in August, at the peak from Nifty Midcap 100, 79 stocks were above the 20-day moving average, 76 from the small cap 100. But look what happened in August. That's up until Friday. 54 stocks, only 54 stocks above the 20-day moving average and 64. This is when the indices actually moved higher. So we're starting to see divergences in the market breadth as well. Where the indices are going higher, stocks are cooling off. If you can move on to the next one, please. I also did a ratio analysis where when you compare Nifty to the mid cap 100 and the small cap 100, what does it look like? Basically, what this means in a very simple way is that the pace of the mid and the small cap run has significantly outpaced the run on the Nifty. And for Nifty mid cap, we are at decadal lows. And for Nifty small cap 100, we are lowest since 2017. By the way, what's happened here also is that in May, the ratio was at 0.38. Now it's gone 0.39, also a point of divergence. And finally, some other observations for which I could not really get data, but they matter nonetheless. Stock prices are unsustainable at the high point of the day. But to be very honest, this was my starting point. Or अगर simple dealing language में बताऊं, ऊपर के भाव में माल छोड़ रहे हैं, right? Markets are not able to sustain, or at least the stocks are not able to sustain the day high price. This is what my starting point was. Along with this, there have been days when the market breadth has been weak, but the small and the mid-cap indices have actually gone higher. So there were some divergences which were very apparent. And since we love fundamental analysis so much, I've got a hint of that as well. The P ratios for the mid 100 and small cap 100 are above their 500, 5-year averages. Parth from the NDTV profit team was kind enough to share some data with me, which is every time, and this is for Nifty small cap 250. The PE ratio goes above 32, we've had a pullback. Anywhere from 10 to about 25% over the 5 to 10 months. Right now, the PE ratio for small cap 250 is 34, significantly above 32. So, like I said, what is the, what do you say when the observation, or rather, what is it when you observe without analyzing too much? Just to paraphrase J. Krishnamurti, the spiritual leader, when you observe without analyzing, that's the highest form of wisdom. Now, ladies and gentlemen, in your wisdom, what is the conclusion that we can make out of whatever we just discussed from the data perspective?
My conclusion is that Kush is a natural on the video wall. So we'll start with that. I'm glad you enjoyed that, Kush. But yes, we'll take that talking point forward to welcome back to the table.
The conclusion, just the last bit.
No, we'll have to move on.
Fair enough.
Okay, but Parag bhai, welcome. You can give a view on Kush's points if you wish, and then talk about some of the crackerjack results we've seen over the weekend.
So basically, I tend to agree with Kush in the sense that if I see my portfolio also, out of the top 10 holdings, only one is small cap right now. 9 are large caps. So it has just happened. I have not thought so much like what Kush has done, but it has just happened like that because I was seeing more value in large caps because of the FII selling which was continuing from last, 3-4 years.
But sorry, Parag, but just for context, you're saying at this moment out of 10, one is small cap. What was the positioning last year?
So there might be 3-4 small caps at some point, definitely. But now it is more tilted towards large caps. And look at the results. Yeah. Look at the results. SBI, starting from ICICI, Ultratech, JSW Steel.
What has been most exciting for you?
No, I think all good results. So one very good trend which has been set in this quarter is that whatever you want to, suppose if you want to buy something on dips, for example, SBI rallied in going into the result, right, from 1000 to 1100. So suppose if you don't want to buy today because it has rallied, okay, and some people don't like to buy when, although at this 1100 rupees also, it is just 1.1 time book and just 7 PE, by the way, on FY28. Okay, with 14-15% growth, best asset quality, core PPOP was a big number. Core PPOP was up 20% YOY. So I would say that for a bank which is a 50 lakh crore book, you have a credit cost of 0.27%. So I can go on and on. Sorry. So SBI, LIC kind of things, right? So I'm saying that in every sector, you are seeing clear leaders. So you as a fund manager...
What are you making of SBI results since it came on
Excellent
Friday?
result. Nothing. Again, I would congratulate Mrs. Sethi and the entire team. So what a delivery. 7 bips QOQ NIM expansion on the domestic side. 18.5% loan book growth. Asset quality credit cost only 0.27%. So everything, full marks, And CASA growth was also 9%. That is how the cost of funds have moderated. That is why they were able to grow the NIM. They have not focused too much on corporates very intelligently. Corporate growth was sequentially same. It was so they are more focused on higher yielding segments, retail, SME, MSME, agri mainly gold. So I would say that
not concerned about slippages at all.
No, slippage is seasonal. Q1 is always higher slippages.
7,000 crore.
So last year, if you compare YOY slippages, it was down 12%. The net profit growth of 10%. Was just down due to last year there was a big treasury income.
Yeah, and the guidances look good too.
Yeah, 14 to 15% loan book growth, 3% NIM, domestic.
Yeah, I think viewers, at some point of time, people need to also realize that paisa size se nahi banta hai, numbers se banta hai. So it's not necessary that you have to make money and you'll be able to make money only in small caps. You will make money where the numbers delivery is happening.
Yes.
And therefore, I'm sure both of my guests are not saying that all small caps will come off. But as a space, that tide might just cool off a little bit. And if there is great delivery, numbers delivery in the large cap space, there might be merit to look at it because you could make money there as well. And frankly, the last 2 weeks is proof of that, right? A lot of large caps have moved up quite substantially. Think of Bajaj Finance doing that. Think of some of the others doing that. You can buy in the derivative space and pick it up on a levered basis if you are competent enough. So bear that in mind. A lot of very good results, by the way. It'll be interesting to see what Hindalco does because the brokerage commentary has been pretty solid there and it rallied after the numbers as well. So keep that at the back of your mind. But we need to just take a quick detour because there is a small cap space or a small cap or a mid cap stock which is making all the right noises. Deccan Gold. It's stepping up its growth plans after reporting a decent operational momentum in Q1. The board has approved 137 crore raise with a fresh fundraise to accelerate the next expansion plan. I think they've also got some success in one of their global ventures. Hanuma Prasad Modali, Managing Director of Deccan Gold, joins in right now to talk about this. Mr. Modali, thanks so much for joining in. First, a quick mention. Why this fundraise at this juncture, part one? And part two, you've gone around meeting, as in the management has gone around meeting a lot of high-profile investors in Mumbai. I mean, you've declared it as well. Who are the subscribers to this 137 crore fundraise? And any marquee names which have subscribed at this 194, 195 level that you're doing this fundraise at?
Yeah, morning. Thanks for having me on the show. The first fund, the raise of 137 crores, it's because apart from our 2 gold projects which have now come into the production, we also have pipeline of projects like the critical mineral projects and also a gold project in Finland that would require this kind of money immediately to develop the resources. So that's where we wanted this money, and we have raised, and subject to approval of the shareholders, we are raising this 137 crores. And coming to our next point, yes, we did meet many top fund houses, institutional investors, etc. in Mumbai. But in this round, I must say that it's primarily HNIs, and also I wish to add the top management also contributed to this fundraise. I think some of these fund houses would wait for one or two other quarters of numbers. I think that's when they would like to come, I believe. But at this stage, it is HNIs and the management which is contributing to this 137 crores.
So, Mudali, good morning. Tamanna here. Just wanted to understand the numbers this quarter. Year on year looking good, but quarterly numbers have shown a bit of a slide. Anything that you can add there? Revenues, in fact, have come down quite significantly. Losses have widened as well, and you've swung to losses in Q1. So, what have been the factors there?
I think the most significant part of our revenue or the profit is from the Jonagiri, the gold project in India. That has, in fact, ramped up, and finally we have become producers from the explorers. I think that's a big step for us. And in this quarter also, the Jonagiri project has produced about 90 kilos of gold, which is a kind of strike rate of a kilo per day, which is a significant achievement in itself. And we have booked a profit by selling part of the gold which has been produced. Apart from that, we have built a large inventory as well in that project. So the next quarter numbers would be significantly different from what it is. But at this point in time, I think the losses, etc., they are all really a kind of book entries because there is a lot of capital that is going into Kyrgyzstan project. Also, at least in the June quarter, a lot of money has gone into Kyrgyzstan project, which has come into the production now. So next quarter, you would have a significant increase in terms of revenue as well as the profitability.
So this 94% drop in revenue you're saying is because of investments made in the Kyrgyzstan project. Have I understood that correctly?
Yes, exactly.
Okay.
And it is in the final stages, and within a month or so, we are getting into the full-scale production. Actually, we started producing Dorebar last week itself.
Okay. Mr. Modali, just want to confirm, therefore, so we're already in August, so therefore, in this quarter itself, you'll be producing something from the Kyrgyz mine, right? I'm just trying to understand in the second quarter, what is the kind of strike rate or run rate that you expect for the company as a whole with regard to gold production, and where can you ramp that up to by the fourth quarter?
In terms of gold production, the Jonagiri project would reach more than 100 kilos this quarter, and Kyrgyzstan project also starts producing about roughly around 20 to 30 kilos in this quarter. And going forward, the Kyrgyzstan obviously will increase. Like every quarter, we are targeting about 100 kilos. So I think a lot of growth comes from Kyrgyzstan from next quarter onwards. So we may be looking at around 200 kilos of overall gold production, in which we'll have at least 50% of it with us.
No, I didn't. Oh, okay. So 200 kilos overall, and you will have a 50% share. Is that the right? And this is for the company as a whole. This is all of the mines put together.
Yes.
So basically, 100 kilos of gold is what you will be able to book on your own by the fourth quarter. Is that correct?
Yes.
And what is the peak, Mr. Modali, that you anticipate? Do you expect to hit that in FY28?
I think FY28 will produce around 300 kilos of gold in Kyrgyzstan and around 600 kilos of gold in Jonagiri. So that's likely close to about a ton of gold, and in which, again, we'll have 40 to 50%.
450 kilograms of gold is what you will book expected in FY28, right?
Yeah.
And depending on the gold prices, which at this juncture are about $4,300 per troy ounce, you would effectively book that entire market value, correct?
Yeah, I mean, the Kyrgyzstan one, obviously it consolidates in our book, whereas in Jonagiri, it's our associate company. So let me put it in this way, as a PAT margin from both the projects, we'd be expecting around 200 crores in the current financial year, which could increase to around 300 crores next financial year.
To wrap it up, therefore, what do you do in FY27? What do you do in FY28? Revenue, EBITDA, bottom line, based on current assessment.
As I said, the bottom line, I think I'm more comfortable with it. The bottom line for FY27 would be around 200 crores, which could increase to 300 crores in the FY28.
Okay, so 200 crores profit after tax in FY27, 300 crores profit after tax in FY28, as things stand. They could change, of course, but for now, these are the numbers.
Yeah.
Great. All the best for that, Mr. Budali. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.
That's Deccan Gold Mines. A lot of HNI interest out there. Let's see what the stock does because of this and otherwise today. Okay, let's move on. And you know, the big talking point for the last couple of months, of course, has been the FCNRB numbers and the inflows as well. And we've spoken to SBI even during the policy day on the same. Now, what's happened as a further update to that is that the RBI has eased the PSL norms for banks, giving banks more exemptions regards to the FCNRB deposits. Are you confused about what this means? Well, let's get in Piyush to try and simplify this. Piyush, tell us what this means for banks.
Absolutely. So RBI has been consistently trying to, give as much comfort, regulatory comfort to banks when it comes to FCNRB deposits. As we are aware, when it announced the FCNRB deposit scheme, first it removed the SLR and CRR requirements that banks are, asked to keep for deposits. So FCNRB deposits were exempt from that. Then after that, RBI gave further relief, saying that banks can issue SLBC, essentially bank guarantees against FCNRB deposits. So for that, further gave clarity to banks that yes, we can lend against such deposits as well. Now on Friday, the RBI has given the third and final, regulatory comfort. It has essentially said that banks need not make, these FCNRB deposits will be exempt from PSL targets. Essentially, they will be exempt from ANBC, which is adjusted net bank credit facility. Banks have to keep a certain portion of these deposits into ANBC, which is essentially priority sector lending. So FCNRB deposits will not be required to have PSL targets. This move will boost USD inflows and all, and fresh FCNRB deposits and NRE term deposits which are raised between June to September will be exempted from this ANBC and PSL requirement. So this is a third major relief that the RBI has given on the FCNRB front.
Just a quick follow-up. So just the thought that you were going to mop up more than was previously anticipated, right? 85, 90 billion dollars. So why was something like this required at this moment?
Alex, bankers have been in constant touch with RBI with regard to, we were speaking with Mr. Sethi, SBI chairman, on Friday, and there he mentioned how in the earlier phase, when 2013, when this FCNRB scheme was launched, people were uncertain about whether they can issue advances, SLBC against such deposits. So RBI proactively came in and clarified that. Now we are seeing handsome inflows coming in, and in last week's MPC policy as well, the governor had mentioned how they don't want to cap the deadline, neither do they want to extend the deadline. So we are aware this FCNRB facility is available till September, and in order to boost the most USD inflows, and it also helps India's BOP position, Alex. So cumulatively, all these steps are being taken to give as much comfort as possible to banks to raise FCNRB deposits.
Remove the roadblocks in advance and signal that this is something that we're going to see. Kush, you want to quickly talk about your index outlook and your stocks this morning?
The index outlook is actually fairly easy. We've been in that range of 24,400 to 24,800. In fact, this 24,560, 600 zone is very important because it was September 2025 and February 2026 lows, a rounding bottom support, which is now acting as a resistance, right? Also, FIIs have again just marginally but increased their index short position from 86 to about 87%. So unless we break out, of the range 24,400 to 24,800, I think the index could just meander and just, be in this consolidation mode. We need to see a breakout above this. Now, as far as stock specific action goes, all three of them on the long side, Monday weekly pick. Bell rise. We've discussed this in the past. The stock, after a fair degree of consolidation, is again on the move, on the higher side. So for targets of 258 and 268, this time with the stop loss at 238, you can consider a long position. Emcure Pharma also makes the cut, by the way. 2055, 2135, these are your targets. 1915 is where you keep that stop loss. And Sudarshan Chemicals, a less discussed name, but you're making good moves on the charts. So 1190, 1235 are your targets. 1095 is where you keep that stop loss.
Okay. Well, so those are some ideas to keep an eye out for. What else are we picking up from the dealing rooms, or effectively Somit is picking up from his dealing room sources? Let's get him in for what is being heard on the street. Somit, good morning. And what are you picking up?
Good morning, Neeraj. A lot of stock-specific action. Firstly, it's on BSE and MCX. A pair trade is what dealing rooms are indicating their clients. They're indicating their clients or recommending their clients to buy MCX and sell BSE. When it comes to Grasim, there are buy flows on the large HNI and the PMS desk, and dealers expecting strong Q1 numbers here. For GMBC, there are buy flows on the large HNI and the PMS desk at lower levels. The stock was trading lower, but there are some buy flows coming in is what dealing rooms are indicating. For 361 and delivery, there's a buzz of a potential block deal that could happen in both the counters. And lastly, when it comes to Paramount Communications, there are buy flows on the PMS desk. Dealers are expecting some positive news flow here related to some order win, large order win that could come in for the company. So keep an eye out for Paramount Communications as well.
Okay, all right. So that's all the khabar, but there's khabar here, there's analysis, and of course there's targets. Let's talk a bit about results that we've seen coming over the weekend. You talked about SBI. What is the call right now? Because as you mentioned, Parag bhai, SBI already ran up even before the results.
Yeah, so it can consolidate a bit. See, on every good result it happens, right? Stock rallies before the result, then it consolidates. It gives a little bit of 3 to 4% downtick also sometimes. And then, but it is good result is a good result. You cannot deny it. So after ultimately long only investors will come and buy the stock. And that to a stock like SBI, right, which is trading at so low valuation. If you see this quarter EPS standalone was 23 rupees. So it is very easy to imagine that they can do 95 rupees in FY28. Right, subsidiary value is 350 per share. By the way, people are not including NSE valuation of SBI's stake value of NSE. That itself is 37,000 crores. And so 350 rupees is subsidiary value. So out of 1100, if you remove 350, it comes to 750. And their book value will be 700. So it is a cheap stock, doing very well, excellent work done by management. And so it has to go eventually.
So the bottom line is, last week LIC was a table thumping buy.
SBI is a table thumping buy.
It's still at this level.
Yeah, at this value also. So then, with one caveat, where I'm saying, as we discussed, going into the result, stock was up, say 9-10%.
Yeah.
It might correct 2-2.5%. So if you're not too much worried about today's gain, then you should buy the stock.
Okay.
Where is your AI avatar thumping that table? वो नहीं कर रहा, आप कर दो.
So I think SBI, LIC, all these government institutions which are giants and which are real representatives of Indian economy are doing phenomenally well. That's a great news. I would thumb the table for India.
Wow.
Karo.
Surely.
There you go.
Okay. What about Titan?
So Titan, again, superb numbers, outstanding delivery. It is just that valuations. Like in SBI, you have a valuation comfort. In Titan, if suppose after you buy, if there is one bad quarter, then you will see a big downtake.
So, but the trends seem to be positive now,
Yes,
Parag
yes.
bhai. If you talk about the mix shifting to studded, if you talk about international, possibly once that turns around, it could lead to a tailwind.
Absolutely. So basically, Alex, it is just my own problem, right? That I cannot buy at 75 times trailing or 54 times FY28 earnings. And after things have gone so well for the company, I cannot buy. Otherwise, nobody can question Titan's performance.
And in some sense, for a stock which was at 37, 3800, went down all the way to 3200, it just shows that quality comes back and delivers how? 4941 right now for a Titan, doing pretty solid for itself. I wonder if there is a trade here, Kushpura.
No, have to concur with Parag bhai on this one. It's already run up quite a bit. It's a buy on declines kind of a setup. So closer to about 4700, 4750 thereabouts makes a good entry point. Not at the current juncture.
Okay. Well, we'll get in. Let's talk about the other set of results as well, which have been interesting, because there are conflicting points at play to discuss about Keynes. Strong revenue growth, a beat on EBITDA, but
cash conversion seems to be still a challenge. Receivables, debt remain key concerns. Before we get in the management, let's get in Puneet with the key takeaways of the results. Puneet, good morning.
Well, good morning, Neeraj, and thank you for that. As you rightly mentioned, 40% growth in revenues, 30% growth in EBITDA has been very strong. Profits were down 24%, and the key reasons that, gross margin was impacted by 680 basis points. There has been a major increase in the employee expenses up by 44%. That's point number one. The other factor that the other income has come down because QIP proceeds are now being deployed, but the net debt has actually gone up from 200 to 800 crores on a quarter-on-quarter basis. The net working capital also has inched up to 163 days versus 122 and is important because the management had guided for the next 3 quarters post quarter 4 for this number to come at a reasonable level. So that will be question number one. And importantly, on the smart metering side, now the receivables from this business has inched up from almost 1100 crores to 1311 crores at the end of quarter 1. Now, importantly, and the big question being, is there a review for this particular business now in fray, and is divestment or removing a part of the smart metering business a key question? Because 65% of the smart metering business is EMS, which is performing well. The rest 35% is where operation and maintenance and serviceability is a key issue. So the big question will be on the factor if smart metering is being looked at as a divestment candidate for now.
Okay. Well, let's get in Mr. N. Muthukumar, who is the Managing Director of Keynes Technology, on the conversation. Thanks so much, Mr. Muthukumar, for joining in. We want to talk to you about so much around the smart metering business, receivables, etc. But have to start with the fact that the EMS business has delivered growth. You've done what, if I'm not wrong, core EMS at 66% and overall revenue at 40%. Are these numbers, Mr. Muthukumar, that you believe can sustain for the rest of the year?
Okay, happy morning and thanks for taking me to the call. Yes, if you ask us whether the core EMS business is sustainable, we have took a very conscious decision of degrowing in the metering business where our receivables is at a risk, and we have grown EMS business to the core. During the last earnings call, I have clearly told that we missed some revenues of the last quarter, and that has really come in handy for this quarter to grow up. So I would still say doubling the market growth. I think the last quarter, the market seems to be grown about 15 to 16%. We should have been at 30%, but the other growth has come from the backlog that we could not do it in the quarter 1. So I'm pretty confident about doubling the market growth. We'll continue to grow and Keynes will continue to deliver to his strategic customers.
40-50% revenue growth entirely possible. Would you be able to do that? I'm presuming that's what you mean. And I'm asking if you think you'll be able to do that at the current margins that you've done, because your operating margins have beaten estimates. So you reckon that 15.5, 16% EBITDA margin is possible to deliver while doing that kind of growth that you spoke about?
I again come back to my point, 40 to 45% of growth in this quarter is due to some backlog orders which I could not deliver it in the last quarter of last financial years. But we are still committing for doubling the market growth.
Give me a number, Mr. Muthukumar. Doubling the market growth leaves some bit of uncertainty. Would you grow at 40%? Would you grow slightly lower?
Yeah, I think currently looks like with the current market situation, 35 to 40% is possible.
Perfect. Thank you so much for that. Would you do that with the margins at 15 to 16% is the next question that I have.
The commodity prices across the industries is taking a tight beating with forward booking. We will continue to strive for this, but we will not compromise on our balance sheet. I'm just making it very clear that we will continue to focus on our receivables. We'll continue to focus on our debt cash flow situation, and that is going to be our key.
Mr. Muthukumar, good morning. Tamanna here. Your NWC days, your net working capital days have gone up to 163 from 122. Do you believe that this will sustain? And you just mentioned in your previous reply that you're going to focus on cash flows continuing smoothly. How do you aim for this to happen?
If you look at my net working capital, there are two major reasons for it. One is I've increased my inventory by about 177 crores and my receivables has gone up by 90 crores. Inventory is a strategic decision. You know, the prices of components are going up. The PCB availability is very, very critical. And only because we took a conscious decision of increasing the inventory, we could be able to achieve this type of growth. We are pretty confident of bringing it down. In terms of receivable, like what your analyst earlier said, 70% of our receivables has to come from smart metering business, which definitely needs a revamp in the business model. What we are running with is, we took a conscious decision of degrowing the metering business last quarter. When compared to the previous year, we are degrown by about 12%. We may even keep the metering business at check on terms of the growth to ensure that our receivables coming back in full. We will continue to focus on EMS business, but our smart metering growth will be purely depends on the receivables. With these two actions from the management, I'm pretty confident that we will come back as we are committed by third and fourth quarter. We'll come back to the normalcy.
What are you going to do with the smart metering business? Any plans to maybe sell part of it, diversify, etc.? Or you're going to curtail?
I think Keynes is going to be one of the key players who has got a distinct advantage of making the meters, installing the meters, and at the same time doing the services for about 8 years with software. So, but we understand the pressures on working capital. The management is already working on models of different models to ensure that we spin off a part of the company as an SPV so that we don't have this much of impact. We are working with bankers, we are working with some investors to make it happen, and we will come back to you soon on this.
What is the kind of timeline you see for this SPV that you're looking at? You said you're speaking to bankers, etc. Are you speaking to any strategic partners as well?
We are working on strategic partners as we communicated during our last earnings call. The timing is on February earnings call. We will be coming out with a positive news on this.
Okay. I heard you say in response to Tamanna's question, Mr. Muthukumar, that you will come back strongly in quarter 3 and quarter 4. I was trying to understand if that is in reference to the receivables, if it's reference to working capital. What is it in reference to?
I am purely talking about the balance sheet numbers, which is on working capital. Both in terms of inventory and receivables, we continue to focus, and we will bring that into the systems. I know that it will be challenging when we are growing at a faster rate, more than the market 3 times to 4 times, and keep the receivables in check. But as you all know, if you look at my receivable status, it's purely on the metering business. My EMS business is staying strong today, even today. Even in terms of a standalone EMS business, our balance sheet is pretty good. It's only because of the metering business, which is where we have taken a decision to little degrow till we get into the alternate business model. That's the reason I said we are pretty confident on that.
One last question from mine, Mr. Muthukumar. When does the crisscross happen between you reducing your smart metering business consciously in order to take care of the receivables? When does it? What are the targets that you set for the receivables part on the smart metering business? And is this only a Keynes issue, or do you think that's an industry issue, the receivables in the smart metering business?
I don't want to comment on about any competition, but if you see the smart metering,
but you would know business, if you are an outlier, sir, or
absolutely.
Is it?
It's an industry. It's a business
Perfect.
of an OpEx
Thank
model.
you so much for that.
It's a business model, and Keynes will come out strongly. Thank you very much.
No, I have a question.
Wait, you haven't answered my question, sir.
Please. Go ahead.
Answer my first question, which is that since you're consciously reducing the business, but you're trying to up the receivables, when does the cross happen? When do you think the receivables come off for the smart metering side? Which quarter?
I think by third quarter end, when we are going to make these results, and if I'm going to make my revenue from this is going to come down, I think I will start dropping the numbers of receivable. Like last quarter, it has moved from 1100 to 1300. In the second quarter results, it will continue to be there, but from the third quarter, it will start dropping down.
I have a couple of more for you, Mr. Muthukumar, and I want to at this point say thank you for taking all of our questions. I think it's great that investors are getting all of these answers from you. We're doing it on their behalf. So just a couple of things. You have mentioned in your commentary that FY27 is going to be a challenging year. Earlier in your conversation, you've talked about PCB prices, etc. When you say challenging year, what is the impact that you see on your margins, and where are the key pain points?
See, at this point of time, the entire electronic industry, component industry is at a shortage. The prices of components are going up. The availability of PCB is a challenge. And today, PCB's order booking is happening where we need to pay an advance to get it. That's the situation. Maybe industry looks like going towards after post-COVID situation, what has happened. Having said that, we have clearly identified strategy. You know that we have a pass-through with our customers. When I say pass through with the customers, there's going to be a delay in agreeing on the price increase and at the same time going back to the customer. So in a short term, maybe in a quarter, it will come down, but it will be an accumulated, we'll be again bringing it back. What I said challenging here is we have to keep our growth intact, at the same time ensure that the balance sheet to get the receivables on. That is what I said challenging. But the team in Keynes is quite capable of doing this. The customers have a high level of trust for us. So we are pretty confident that we'll be able to come out. As I said again, look at the business of the EMS business. The analyst made it very, very clear. 75% of my revenue comes from the PCB business, where the receivables is only at 28% or there. Whereas my revenue from the metering business is only 25% to 30%, whereas the receivables is 75%. That is where we are working on to make sure that how we
Explain that well, sir. You've explained that well, that this is a situation that you're going to fix. You have the path to fix it. I just have one point on your OSAT and PCB units, because you've pushed forward their operational timelines, right, by about a quarter. Do you see this now opening in Q3 or being operational in Q3, or do you expect further delays?
I'm very, very happy to say that our product's validation is almost complete. The reliability test has come and our results have been quite positive. And as committed, both in terms of OSAT and PCB, our revenues will start from next quarter. And whatever the earnings direction that we given, we are on track.
Okay. Mr. Muthukumar, thank you so much for taking all of our questions and our extended questions. We wish you a very good morning. That was the Keynes Technology Management speaking to us about the results gone by. The numbers, at least the first stock price looking a little muted at 8% down. Before I get to the big brokerage call of the morning, I'm actually going to take a quick view from Parag Thakkar. You've seen the numbers, you've heard the management. There seems to be a bit of a mixed view. He's saying, give us time, we're fixing the smart metering problem. What is your take?
So my view is very simple, that it is also trading at 75 times trailing earnings. So it is not that cheap. That I would ignore this as a business issue, and hence I would like for them to deliver operating cash flows, strong operating cash flow before I decide to buy. If there is no operating cash flow, I don't want to own that business.
Yeah, I mean, fair call. Okay, let's try, and that's I think that's why the street is also punishing the stock today. What else? I mean, just look at what the stock movers have done. So Titan should come up on your screen, SBI should come up on your screen, Hindalco should come up on your screen. All of these are large caps which have delivered numbers or positive commentary. Titan is flattish right now. Hindalco, another 0.5%, nothing too dramatic. Had a 25-30 rupee uptick on Friday itself, so kind of consolidating. Should bring up SBI and see what that is doing in the session today as well. Well, about 1% higher for the big boy. Okay, Hitachi Energy is in focus. Nomura has turned bullish on the company, initiating a buy call. Hiral Johnson, more details on the same. Hiral, good morning.
Good morning, Neeraj. So it's an interesting note, and the target price is what we should look at. 40,030 is what they're looking at in terms of Hitachi, and the note is actually highlighting a massive structural transformation in terms of the transmission sector in India, where they're forecasting almost a 10 lakh crore transmission investment cycle that will actually span between FY26 to FY36. Now, between this, what they're saying is there is a confluence of multiple structural themes that will result in robust growth prospects when it comes to Hitachi Energy. The export and cost optimization is what will support the profitability expansion for this company, and they're estimating almost 38% revenue, 48% EBITDA, and 45% profit CAGR over FY26 to 29. In fact, they're expecting Hitachi to win 2 domestic HDVC projects over FY26 and 29, and HDVC is high voltage direct current setups. Now, why this is positive is because all of these projects become pretty much margin accretive for the company, so you will see growth coming in there as well. And the aggressive capacity scaling is what they're betting big on. Hitachi is actively doubling its capex and constructing a massive greenfield power transformation plant in Vadodara, and this will actually ease the past bottlenecks as well. So overall, good amount of positives that are being cited over the next 4 to 5 years, and that's the reason why Nomura has initiated coverage.
Okay, let me see what's happening with the stock actually. Nomura has initiated coverage, but what is Hitachi Energy doing this morning? Okay, not bad, about 7.5% up in the pre-open session. Overall, markets are completely flat. Nothing exciting really happening. I would say some action, if at all, in the Nifty IT, but it's individual stocks that you need to look at. We told you about Keynes Tech. Look at Delivery. 3.5% down right now, and even though they have said that the next quarter is going to be better, the second half is going to be better, the fact is that the numbers as they are have not looked great, and that was on our watch list as well. Inox Wind, another company that has reported, and the street has not liked the numbers too much. Ola Electric Mobility about 3% down as well. So you're seeing result reactions coming in quick and fast. Hitachi Energy actually one of the top gainers, and here was talking about the big brokerage call of the day. Some of the media names are doing okay. PVR, Inox, Z looking interesting this morning, so is Vodafone. But otherwise, it's a fairly muted market. Right now, apart from the large caps, Parag Thakkar, anything that you are finding interesting in the mid cap or the small cap space? Because I know the SBI Titans, and I'm assuming Hindalcos are all up there. But in the broader markets as well?
In broader markets, I'll not talk about names due to compliance things. But the theme which is going to work, of course, it has worked partially, is auto components. This increasing content per vehicle theme continues. If you see auto components numbers, various companies, phenomenal numbers. Again, first of all, underlying auto industry is doing well, and to add on to it, the content per vehicle story is playing out beautifully in auto components. So as a theme in mid cap and small caps, auto component looks interesting.
What about on the charts, Keynes Tech and Delivery? Any views? Hitachi Energy? He's just nodding.
No.
Use your words.
Keynes completely avoid. Okay? If anything you want to pick up in this sector, pick up PGEL and perhaps Sirma with a tight stop loss. But PGEL is the more preferred one. Keynes avoid. Delivery, I would look at lower levels. Not today, but I would definitely look at lower levels on Delivery.
Delivery, lower levels pe. Kush Bora, your top call for the morning today then?
Yeah, on a day when I said be cautious on the small caps, I have 3 names to pick from, spoiled for choice.
But ek naam de dijiye.
Yeah, I'll go with the weekly pick, Bellrise, 258, 268 targets, about 238 stop loss.
Okay, Bellrise is Kush Bora's top call for the day today. Maybe the stock doesn't come up now, but remember, that's his top call for the day today. The markets are starting off though, and the question really is, can we show some, in wake of the fact that crude prices have gone up, can we show some spunk today? Let's wait and watch. For now though, it's a flat start, but the breadth is looking impressive, very interesting. Banks about 1/3%, I believe, led by SBI. I wonder if IT after that 22.5%, 23% up move already is consolidating. No, it's actually doing more. So pretty good going out there too. I wonder what is down. We'll get to that in a moment. The small cap index should come up on your screen once though, just to see what the broader end is doing. Flattish, interesting market breadth though then. Okay, let's pull up the heat map. This is much desirable, even if the index is flat, that the breadth is looking positive. What is dragging the index lower? I mean, what is the winner is SBI and ICICI Bank. Ultratech and Hindalco starts off lower. So some bit of profit booking at the top maybe. Maybe people were waiting that the brokerages will come out with a cat of the bag and bring out some very high target prices. That hasn't quite happened. You know, the conversation, and you will hear the management as well, is okay. I mean, it's good, nothing dramatic. Okay, not too many other losers. What's gaining? Tech Mahindra up 1.38%. ICICI Bank another percent, Titan in the green, SBI marginally in the green, Infosys in the green as well. Some bit of uptick to ONGC courtesy what crude prices have done. So some large banks, select large IT and SBI in particular and Titan kind of hold out on the gaining side. On the losing side, amongst the heavyweights, the one that is pulling off is Bharti Airtel, down about 1%, and that might be putting some bit of pressure on the index, which is actually absolutely flat. Tamata.
Yeah. Let's pull up Nifty contributors actually and see if there's any action or indication there on what is working and what is not. On the losing side, it's Reliance Industries and Bharti Airtel. Those are the heavyweights, which is really why this is an even Stevens market. Titan doing okay. Titan, SBI have all really come out and performed. It's ICICI Bank which is contributing with 23 points on the gaining side. Let's pull up the small cap and the mid cap indices for you this morning, and also India VIX. That's an important factor as well. Mid cap is also flat. We saw the small cap is also flat, and if you're looking at it, the advanced decline ratios are now matching up. So it's going to be a very narrow range of trade that you're seeing today. This is an important one, right? A half
baked negotiation or a semi-baked negotiation between the US and Iran is not really enthusing markets, about 6% up right now. I want to pull up the sectoral indices for you very quickly, and let's see what's moving there. More greens and reds, but the range is so narrow. Maybe it's a mix of things, including the street waiting and watching what's happening with cash, right? People are trying to understand what it's going to look like and whether there's going to be some volatility, or maybe most of the action and volatility is now in the second half. Nifty Media is doing okay. We told you PVRG, some of those stocks were fine. Nifty Pharma is okay. And oil and gas stocks about 0.25% down in the red. So nothing much happening there, completely actionless. What you have to look at is individual stocks and what they're doing. So that's what we're going to do next. And a whole set of numbers and earnings have been reported. Let's look at them quickly. We're starting with Hitachi Energy. It was also a big brokerage call of the morning, about 6% up. Raymond Realty about 9% down, not that great. PDS completely flat. Dynamatic Tech is also another one that we're looking at. Let's look at Dynamatic Tech. Let's look at Quality Power, Sky Gold, all of them moving smartly. Sky Gold about 11% up right now. Anant Raj was on our watch list as well. Let's look at Lumax. So both are positive. Apollo Micro, not that great. Again, another stock on our watch list. Keynes, we had an extensive conversation with the management. They're saying things will improve, but not yet. Jamna Auto, another one which should be in focus. Actually, the numbers on the face of it looked okay, but 14% down. There's also a stock that has run up a fair bit. I want to look at Ola Electric, Studs, Ramco Cement, a whole host of other ones that have actually reported. Ramco is 3% up and Afcons is down. Ola Electric now about 4.5% down. Oswal Pumps, another stock which is seeing a bit of a hit, 6.5% down this morning. Just I'll round up with HBL Engineering and Delivery. Delivery is flat to negative. HBL Engineering is the one which is seeing a bit of a hit. So overall, if I just look at results, Alex, some of the heavyweights may be making up, but in the broader markets, it's truly a mixed bag.
It is indeed, and you've highlighted quite a few of the big movers. In fact, just a couple more outside of what you've mentioned. Akums is doing well, up about 3.5% or so. Interestingly, Ramco Cements, I didn't think that was the best set of numbers, but the stock is up about 3.3% or thereabouts. Hero MotoCorp continues to gain ground. The stock is up as much as 3% or thereabouts and looking good this morning. Emcure Pharma, Gland Pharma, Oil India all gaining over 2%. So there's a fair bit of strength in the broader markets as well. If I look at the 500 stocks of the Nifty 500, then it's a roughly even split between the gainers and losers, and there are quite a few to speak of there as well. But let me ask you about a stock that Parag Bhai has said he likes a lot, and it has gained since we spoke about it, which is PVR Inox. Okay, and of course it's doing well on account of various factors fundamentally. On the charts though, what's the view? Because the stock is up and about in trade today as well.
Yeah, in fact, when Tamanna asked Parag Bhai just before markets opened, anything from the non-large cap space, I almost thought Parag Bhai said PVR अच्छा लग रहा है करके, but no, actually अच्छा लग रहा है, technically भी अच्छा लग रहा है, and I'll give you a couple of reasons for that. A major falling trend line resistance has been taken out, and that was actually at significantly lower levels of about 1050. From there on, also the stock's gaining ground. Right now, the stock is in a long-term falling channel, and the resistance comes at 1200. So maybe once that is taken out, you will see reversals from a long-term perspective as well. So there's definitely momentum. If I had, I would continue to ride it, but I'd be more inclined to buy this closer to December when Doomsday comes out. Avengers. RDJ.
Ah, okay. Interesting. Oh, yeah. He's playing
Dr. Doom.
He's playing Dr. Doom. That's very interesting. It'll be interesting to find out what the storyline is for this new Avengers movie. Let us know what you think. And who are your Avengers stocks? Let us know about that. That's an interesting question, isn't it? Okay. Hitachi Energy India is reacting to numbers and one of the top gainers in that earnings pack. It's up as much as 6.3%. Parag Bhai, did you look at the numbers by any chance?
Yeah. So numbers were very strong.
They were. And that order book of 32,000 crore rupees.
So in this pack, I would say that Siemens Energy and Hitachi Energy, those two numbers stood out. I saw margin pressure in, say, Thermax, in ABB.
Thermax for good reason. They've described why.
So there were 2-3 capital goods where we saw margin pressure. Cummins, in fact, we saw margin pressure. But here in Hitachi and Siemens, we have not seen those kind of pressure, and the order book keeps growing. So people who like earning momentum will chase these stocks. I am not of that kind, so I will not chase this stocks.
So, but okay,
because the PE multiple is just too high.
Okay, but let me ask you about the replicability of its earnings, right? On the one hand, like you said, the margins were better than expected, and so that was strong. The mix and the operating leverage is coming through both pretty well, right? In that order book, about a third of their order book is export. The revenues also on an ongoing basis, significant chunk is export. So going forward, it seems like they will be able to maintain that trajectory.
In near term, there is no headwind which I can look at. Because if you have an export, because that's what happened with Siemens Energy also. They also have export revenue. So that rupee depreciation cushioned their margins. But I would say that, I would not just like to play it because of the P multiple.
Okay, so then let me ask you about what Neeraj was pointing out today, which is Larsen & Toubro, and the fact that over the last week it has gotten a massive chunk of orders.
Absolutely. Yes.
So therefore, if
so L&T is a safe place to go in cap good space, in my view, given the multiples which it has.
But it's not a table thumping buy.
It's not a native, because anyway, just generally, I don't have that much liking for cap good space as a whole.
Why is that?
No, because it is just an order book business, right? First of all, inherently, for example, even in the case of L&T, inherently the margins are low, right? They have managed the balance sheet very well. They have improved the ROEs, and that is a good work done by the management. But generally, as a business, it's not a repeat business, right? Once you install a transformer, now the cycle has to just keep continuing, right? That's why I don't want to pay very high PE multiple for cap good businesses.
Fair call. Maybe what we'll do is tomorrow try and take a take on the infrastructure businesses as well. Again, there will be order book numbers, and therefore nothing dramatic about it. Just that sizable bulging order books could take revenues higher and therefore maybe pat higher at a point of time in the future. But on that note, we'll have to call it a day right now with our two experts at least. Parag Bhai, Kush Bora, thank you so much, gentlemen, for joining in today. Kudos, Kush, on a lovely wall piece today, and food for thought, viewers.
And more to come, hopefully.
More to come. But more than the delivery, the content. And I think there's food for thought here, that do you want to take a look at some of the oversized small cap bets that you have? Maybe, just maybe. There might be caution out there, so keep that at the back of your mind. Okay. Talk about large cap names, and well, in this space, it doesn't get bigger than Mazagon Dock, right? Started FY27 on a strong note, beat estimates with a jump, 20% jump in profits, EBITDA growth looking solid too, good order book to submarine and frigate programs giving that support. Before we get the management in, Parth joins in with some details about the numbers and setting up the conversation for us. Parth, good morning.
Good morning, Neeraj. Mazdoc reported a very strong set of Q1 numbers which beat the estimates very comfortably. Net profit saw a growth of over 21% year on year. This was mainly because of stronger execution and higher margins that the company enjoyed during this quarter on their projects, while revenue also saw a growth of around 12% year on year. Now, the biggest positive thing about Mazdoc is that they have a very strong balance sheet. Their consolidated net worth has grown from 8,270 crores in the same quarter last year to over 10,500 crores, and despite being in a capital intensive sector, they are debt free and they have a consistent track record of profitability over the last 20 years. And lastly, on their future outlook, they have a very healthy order book of over 18,000 crores with a very long term opportunity pipeline of 1.8 lakh crores. Their order book is mainly skewed towards submarines and destroyer programs, while the management is guiding very strong deliveries in the coming quarters of the year.
Thanks, Parth. Let's get in Mr. Biju George, Director Operations at Mazagon Dock Shipbuilders with us. Thank you so much, Mr. George, for joining in. Really appreciate your time. This is Neeraj Shah here. Good morning.
Very good morning to you. Yeah.
Thank you. How would you describe the start of the year? There is a beat, but there is also a sequential decline, which came as a surprise to people simply because your order book is looking rock solid and there are new orders in the play as well.
Yeah, so quarter to quarter, as you rightly pointed out, it's a sequential issue because normally Q4 of the previous year becomes loaded, and Q1 of the current year slightly it gets eased out. So we intend to have the same performance in the coming quarters as well. At the same time, I would like to tell you that we are right now in a transition because the major order book, big ticket orders we have already executed. And now we are waiting for major order to strike, which are at the advanced stage. We are expecting to sign a very big order. And in the meanwhile, right now we are building 28 ships. We are executing 6 ONGC platforms. We are doing 1 submarine refit, and that's the current situation.
And Mr. George, just the question on that order book, right? Because I would love to know what's the timeline for inflows of that Project 75L, conventional submarines, or the Kalvari class boats, etc. Because one would want to know that while you're sitting on an impressive book, how do you rebuild that order book even further with these newer projects coming on stream? What are the timelines?
Yeah. So we have this 18,000, approximately 18,000 crores, which needs to be liquidated in the next 3 years, that is by 2029. And so as that order book gets tapered, very shortly we are expecting the new orders to fill up the gap, and we'll be up again on the revenue.
So actually, that is my question. What is that very shortly timeline like, sir? Does it happen in FY27?
Yes, that's exactly our expectation. P75I, it's at a very advanced stage. It is waiting for the government nod, and we'll be participating in the P17 B frigate program as well. So these are the 2 big ticket orders. We are the forerunners. We are the chief contenders for this program. So we are expecting that to translate into a solid order book.
Hi, sir. This is Alex joining in as well, and good morning to you, Mr. George. I do want to ask about the margins, and they've improved pretty sharply during the quarter. Wondering what are the drivers, and is this the trajectory or the expectation for the rest of the financial year, or can you not project that?
Particularly this quarter, the margins have gone up because we have completed the deliveries of all the 4 ships in the P17A series, and so some of the that is one of the reasons why the profits have gone up, because we have to apportion a large chunk of our funds for fulfilling guarantee obligations. So the guarantee obligations will get tapered as the ships are getting delivered and as times goes by. So that is how they profit. At the same time, the industry average, we are more than that, but in the current year we will be able to almost perform at the same level. That's the expectation.
George, a couple of aspects. So already your order book stands at over 18,000 crore rupees. I'm just wondering, and these are part of major programs that the defense services have, or rather the Navy has ordered from you, right? So I'm just wondering, how long will the delivery pipeline of these be something that you will continue to book? That's one. And so beyond this, how much can you bid for in the next year to 2, and how much will that add to your order book?
Yeah, so there are 2 aspects to your question. One, what are we going to do with the current order book when it will get liquidated? As I told that this 18,000 crores will be getting liquidated in the next 3 years, out of which 43% is pertaining to the 17 Alpha program, which will get liquidated in the next 1 to 1.5 years, because our guarantee obligations on those projects will get completed. So right now we do not know what would be the expenditure to fulfill those guarantee obligations. Once that is getting crystallized, that will get liquidated. So as far as the future orders are concerned, as I said, we are looking for 1 order which is about to be signed. It's waiting for government nod, and it's at an advanced stage. But for the other big ticket order, maybe within this financial year itself, it can crystallize, because the RFP is already out for 17 round.
Mr. George, very good morning to you. This is Tamanna here.
Yes, very good morning.
Thank you. Just want to understand, you answered a short while ago that part of the reasons that we've seen good margins this quarter is because of the delivery timelines. I think there were a couple of orders that were delivered this quarter. Do you expect that pace to continue in the next couple of quarters as well? Is there any visibility you can give us for the current quarter, that's Q2 and Q3?
Yeah, so as I said, the 18,000 crores, out of that, the 43% of that, approximately 7,000 crores will have to be liquidated in the next 1 to 1.5 years.
Yeah, that's a timeline of 1 to 1.5 years. Anything that you can give me over the next 2 quarters?
Next 2 quarters, that I'm right now unable to predict or forecast how it is going to pan out. But half of that definitely will get released in the next 2 quarters.
So about half of that. Okay, so that gives us a ballpark figure. That's fine. Just want to understand the strategy that you're seeing, sir, because submarine and frigates is, of course, the speciality. The order book is skewed in that direction as well. You talked about a new order you're inking. Is it in the same line? Are you focusing on submarine and frigates, or are you looking strategically at expanding too?
Yeah, so we have right now we will have a judicious mix of high value, long gestation projects as well as low value, low gestation projects. So this will continue because the 28 ships we are building are of low value, high volumes. But whereas the 75I and the frigate program which we are envisaging is going to be high value and long gestation. For example, the 75I program would be spread over 13 years.
Okay. Sir, I'm guessing we spoke a little bit about the Colombo dockyard piece, which is consolidated as well. Just wondering, how is that pie of the puzzle going to contribute to revenue, margins, or capacity? Also, I'm just trying to think, what would be the plan to utilize MDL's concurrent capacities as well?
So, Colombo dockyard, if you see at the time of we taking over the controlling stakes, it was in the red. So, this is the first quarter in which the consolidation has taken place. And it's heartening to note that they have made profit this particular quarter. And there are signs of turnaround. And Colombo Dockyard's niche capability and our capabilities are different. They are particularly into commercial ship building as well as commercial ship repairs. In fact, 50% of their revenue is garnered from ship repairs. So the current geopolitical scenario is a favorable win for them to proceed ahead and have more revenues and more profit. And in terms of numbers, it's not going to greatly alter our top line and bottom line because the absolute values are not very huge when compared to our revenues and profits.
Got it. Okay. We will leave it at that, sir. Thank you so much for taking the time out and being with us. All the best for the order flows and great execution.
Yes. Yeah, thank you so much for your time.
The pleasure is ours. Thank you so much for joining in. Well, Mazagon Dock and a lot of these stocks, once the order flows start coming in, you never know how they do. For now, I think executing the current order flows, some have blown hot, some have blown cold. It'll be interesting to see what happens next.
They call this a Z-shaped order booking system, right? So there could be a significant lull in the duration because it's so long gestation. Ultimately, when you're building a frigate, it's going to take a long time to put it together.
Yeah. But this company has a profitability track record of 20 years.
Yeah, it does.
So that also has to be kept in mind. So, okay.
Insane valuations, Tamanna. I mean, I'm looking at
sane or insane?
Sane.
Yes,
because
exactly.
Some of the other defense names on what? I mean, 500, 600 crore revenues, knocking in on the market caps northwards of 6,000-7,000 crores. This is a lot sane.
Yeah. Let's see what the stock has done in the last 1 year. Mazga, if we can pull up for the last 1 year and see how that stock has performed overall. Today, about 0.63% down, but has been pretty flat in the last 1 year as well, just about a 5% difference. What's definitely not flat this morning is Hitachi Energy, Ramco, Siemens. I mean, these are some of those stocks that are really moving. Their results have been seen quite favorably by the markets and are looking interesting this morning. Now, I wonder if Keynes has recovered and shown some extent of improvement from where it had opened. Actually, look at that recovery. Almost quite at the positive mark. And, you know, if you need to just go back and say what we talked about with the management, he's talking about his smart metering business as a problem and that's going to be fixed. It was essentially the big central message out of that chat with Keynes Technology was give us some time. We're fixing the issue on our balance sheet where our receivables are too much from one part of the business which need not be that high, which is their smart metering business. All right, let me go across to Sumit Sarkar joining us at this point. NSE September rejig may see BSE enter the Nifty 50 and Wipro exit with implementation slated for 30th September. Sumit, we've talked about one. Are there any other contenders for a fresh entry into the NSE? What are we expecting?
Well, multiple stocks remain in focus. Now, this is as per Nuvama alternative note, and they are expecting BSE to enter into the Nifty 50 stock, and Wipro will be moving out. Now, these changes are expected to be announced post-market today, and this will be effective from the 30th of September. Now, because of BSE's inclusion, we could see an inflow of close to $741 million, while Wipro's exclusion could lead to an outflow of close to $246 million as per Nuvama alternative. Now, when it comes to Nifty Next 50, multiple changes are expected there, 6 inclusions and 6 exclusions. Given the fact that Wipro is moving out of Nifty 50, it will be included into the Nifty Next 50, and because of that, it could see an inflow of close to $95 million. But apart from that, there is Vedanta Aluminium, BHEL, Polycab, Hitachi Energy, Vodafone Idea, which could get included into the Nifty Next 50, because of which there could be inflows of anywhere between $70 to $114 million. And on the exclusion side, we have Mazgaon Dock, Lodha, Shree Cement, United Spirits, REC and Indian Hotels, and because of this there could be outflow of anywhere between $35 to $124 million. So keep an eye out for these stocks. The announcement is expected to come in today post market.
It was expected to be a strong set of numbers from Titan based on the quarterly update that was shared not too long back. And the thing is, it's come in slightly better than expected in certain metrics. And let's talk about some of that with Ashok Sonthalia, who's the Chief Financial Officer of Titan Company, joining in right now. Ashok, thanks so much for taking the time and for speaking to us. Good morning to you. Let me start with that margin performance because it was better than everybody had penciled in. There was an element of mark-to-market and inventory gain. So how much of that, in your opinion, was on account of that? And does that get reversed in the second quarter itself?
So thank you very much, Alex. Good morning to you and all of your viewers. We had in the month of May custom duty increase from 6% to 15%. So that always have an impact on the existing inventory, which have been paid at the earlier custom duty rate. So that has a significant upside in the books of accounts, and that's not reversing. That has been, the inventory has been sold, and it is likely to come in quarter 2 as well. And the other one was, of course, because we were procuring, and when custom duty changed, there was differences between international and Indian market. So some accounting MTM gains happened on the inventory valuation. They are likely to reverse. So roughly 230 basis point margin benefit from custom duty and roughly 75-80 basis point from the MTM. That 75-80 basis point is likely to reverse over the next 2 quarters.
Interesting. Some aspect of the margin performance in the jewelry business, which adjusted, I think, stands at about 10.9%, was on account of the improvement in the studded mix, Mr. Sonthalia. So therefore, heading forward, if we're looking at this kind of a mix going forward as well, what is the expectation on margin? 1. Two, does the company internally expect that the studded mix will go up in this year itself?
So 2-3 things on this. When you look at YOY basis, the product mix actually did not improve. On quarter basis, yes, it did improve. Some of the things which are happening, like lower caratage jewelry of gold, particularly in diamond 14 carat and 18 carat, are being very well accepted, and they are now becoming a sizable part of the jewelry sale, and that has a positive impact on the margin. So studded natural diamond, sales with our exciting launches at a very, very attractive price points all across are doing very well. The buyer growth in studded jewelry have been pretty encouraging. And this was the quarter where gold jewelry and diamond jewelry almost grew in tandem, 34-35%. Earlier, always in some of the previous quarters, you would see while studded jewelry is growing, but they were lagging behind compared to gold jewelry growth rate. So all this put together gives paints a very attractive or encouraging picture for coming quarters. Quarter 2 is particularly when we celebrate a festival of diamond every year, and that's going on, and we find customers are kind of liking that very much and coming and buying it.
Very interesting. I do want to ask about whether or not more exchange of gold is taking place, Mr. Sonthalia, because during the quarter itself, you had the Prime Minister's exhortation to say, hey, you know what, don't go out and buy gold. But I think evident from your numbers, people have gone out and done that. I guess they are exchanging old gold. Is that taking place?
Yes, we have been promoting in a big way exchange while we have been doing it all along, but we have been promoting it in a big way from quarter 3 of the last year, and particularly in the month of May when the Prime Minister request came in. Of course, there was a little bit hesitancy observed in the customer, and then they were kind of gravitating towards exchanging more gold, but it has not significantly moved up. Our effort has been there because that's in the interest of everyone, the consumer, country, current account deficit. So if we can reduce imported gold through exchange program, that would be good for everyone. But it has come up, it is inching up, but not substantially different from say quarter 4 or quarter 3.
And what does that number stand at, Mr. Sonthalia?
So, if the sales side we see roughly, I think 45-50% of our sales have element of some kind of exchange.
Understood. One of the kickers going forward on that profitability metric or fulcrum is going to be the international and specifically Damas. So when does that materially start contributing? Does that happen in this financial year itself? And what is the kind of trajectory that you expect there?
So Damas has been going through since our acquisition some sort of restructuring. They had a very vast retail network, but part of it was focused on some of the Southeast Asian catchment, and those are getting converted into Tanishq format, and they are doing well because Tanishq is certainly a stronger brand as far as Southeast Asians are concerned. And Damas is now focusing on Arab population, Arab customer, and some of the expat customers. Current situation of GCC at this point of time is very, very difficult, where footfalls are low, the investment, so ticket sizes are kind of dropped a bit. I'm very hopeful, and we think that war situation will very soon resolved, and after that Damas should kind of start doing well. But I would still say this full year almost, because a lot of tourist population also contribute. I'm not sure that tourists are going to return so soon, but 2027 should be a brighter year for them.
Okay, that's an interest. What are the internal expectations on gold, Mr. Sonthalia? Because last week itself, we've seen a 5-7% rise in the international markets, yields coming off to a certain extent. Do you have something in mind for the end of the year?
No, we refrain from, projecting gold. We are largely hedged company on the gold prices. So we focus on what we do nicely. We convert gold to jewelry and kind
No,
of.
no, I was just curious. I was curious about whether you had an opinion. But having said that, what is your understanding of the outside of jewelry businesses? Because these businesses are growing, eye care, your watches business, around that 20% mark. Is that the steady state for this full year and in the foreseeable future?
You see, I believe watches, analog watches are doing extremely well on product innovation, very, very exciting products coming out of Titan Stable. And people are, earlier, say our core was up to 25,000, but now 25,000 to 1 lakh rupees, lot more Titan watches are there. They are above 1 lakh also, but 25 to 1 lakh, many products, and people are actually appreciating that. A lot of international brand, our Helios channel, which does the license in some international brand, that channel is doing extremely well. So I am quite hopeful that high teen to 20% growth rate for watch analog business is certainly possible and maintainable. Eye care had made certain changes. They have been at it for last 4-5 quarters, and that started showing results. We are pretty hopefully strong high teen to 20-25% growth rate coming there also.
Okay, and overall, Mr. Sontalia, I know that the expectation is very comfortably for a double-digit growth, but that's a pretty wide range. Is it likely to be the level of growth that we saw in the first quarter maintainable across the financial year?
No. I think we would be pitching it not that high, because if you think quarter 3, quarter 4 was a very, very strong base last year. Gold prices still quarter 1 were still 59% higher than quarter 1 last year. But as we are moving ahead, now that differential is going to come down very, very significantly. And gold prices do impact the growth rate, because the ticket size goes up a little. So we don't know exact how the gold prices would behave, but certainly quarter 1 should not be extrapolated for the full year.
Okay, so low, but how much lower, Mr. Sontalia? High teen, 20% possible?
Should be possible. We have always been saying, Alex, that if you think about where our guidance is more clearer, that in 3 to 4 years time horizon, if you see 15 to 18%, even can go up to 20%, that's the range. 15 to 20% is the range where we should be comfortably placed. We have also, disclosed our ambition in last annual analyst day, which we just did in June, that FY30 ambitions we shared, and they were certainly putting us on doubling the revenue in 4 years.
Well, that's a large cap stock doing really well for itself. Titan post its numbers. Let's move on. And PSB's posted a strong quarter 1, driven by NI growth, improving asset quality by PSB's PSU banks, SBI, PNB, Union Bank, Indian Bank, all of them. Great earnings, right? Even if there could have been a one-off in a Bank of Baroda maybe. Let's break it down. Piyush is here with the details of the same. Piyush.
That's right. Top PSU banks have reported a robust set of numbers in Q1 FY27. If we look at the NII growth, it has been, after a long period, it has come in the double digit. If we see SBI's NII grew 14%, Indian Bank's NII grew at the pace of 17%, BOB's NII was up 10%, PNB 2%, and the profit after tax also across banks has grown quite sharply in the range of 10 to 213%. Now, Bank of Baroda was an outlier in Q1 because we are aware that the bank had made around 5,600 odd crore of provision for the settlement that it agreed with in the NMC case. So that is where the bank's profit has gone down quite sharply by 72 odd %. But other banks have reported strong, robust growth in the net profit in Q1. If we look at margins as well across banks, except for Bank of Baroda, the margins have grown by around by 3 to 16 basis points if we see on a quarter-on-quarter basis. So quite a sharp rise in margins as well. The net NPA across banks has been, coming down by around 1%, and BOB again in this case is an outlier. It has seen net NPA rising 5 bips Q on Q. If we look at the advances and deposit growth, after a long time banks have touched higher teens growth. SBI in fact recorded 19% YOY growth in its advances and has targeted 14 to 15% sort of a loan growth for the full financial year. Now this bank, growing at the pace of 14 to 15% at a base of 60 lakh crore rupees. So we can imagine the extent of credit appetite that is there according to the bank's management. And except for BOB, top PSBs have performed extremely well in Q1, both in terms of margins, asset quality and business growth as well.
Right. Thank you, Piyush, for that. It's an interesting set of numbers that have come in. The question is going to be how sustainable they're going to be in the coming quarters as well, and whether you will be seeing a further upside in the remainder of FY27. But moving on, Paras Defense, which has reported a strong set of earnings on a year-on-year basis. However, on a sequential basis, there have been a couple of concerns as well, because you talk about the revenue that has seen a drop, and that's actually reflecting execution as well as billing seasonality. Your profits have actually fallen faster than your EBITDA, and this is on the back of a sharp other income drop that has come in as well, and your employee costs have gone up. But to decode this for us and to help us understand what's in store and what's actually happened this time around, Amit Mahajan, Director at Paras Defense and Space Technologies, joins in. Amit, welcome to the show. Always a pleasure to speak to you. We're just talking about that strong number that has come in on a year-on-year basis. Sequentially, yes, we are seeing a dip. If you could just help us understand, how are you reading into the first quarter, and does this actually lay the grounds for how FY27 is going to look like?
Yes, the quarter one has shown good results. The good revenue jump, the maintainability of the EBITDA and the PAT levels slightly increased. So there is a positive impact there as well. So it's been a very, very good quarter for us, and it's just an indicator. It's a good foundation stone for what's coming in store. I don't see a sequential dip here. It is the first quarter. So you can't compare it with any other quarter. A defense company cannot be compared on a quarter-to-quarter basis. But if you ask me, as a quarter one, this is a good quarter and gives a good foundation for upcoming quarters to come.
Okay, so you're saying this lays the foundation, and does that reflect in the order book as well, because you're nearly at almost 1,000 odd crores now. Now, the optics segment has grown 62%. Defense engineering, modest growth. So there is a divergence between the two segments that you operate in as well, Amit. What will lead to this growth that you're talking about in FY27?
So overall, at the end of the year, we expect there will be slight increase on the optics and optronic systems business. I don't see a significant increase there, but there will be a slight increase on optics and optronic systems. When it comes to defense engineering, it's going very, very strong. And, we are involved into very many programs, because of which, there will be, as more and more programs get announced, our defense engineering business as well as the revenues will start swelling. So they will go hand in hand. What we saw from the last year, we don't expect drastic change between about 45% or between 45 to 50% of optics and the remaining of defense engineering.
Okay, so that's what the segmental division will look like. Amit, in terms of margins, now, in spite of the cost of materials that have increased is what I'm seeing, and the historical imported raw material, because of which you have a lot of outgoes that happen. You're talking about optical grade glass, you're talking about electronics chip. That's actually outpacing your foreign inflows as well. Now, to add to this, there is a 10% plus rupee depreciation, which probably will affect your forward-looking margins. So, a culmination of this, what will your margins continue to look like? Because you have somewhere negated this negative aspect and delivered on that front this quarter.
See, you rightly mentioned what is happening is the reason why we don't drastically get impacted by the raw material. I'm not saying the raw material prices haven't gone up. They have gone up for us as well. But our raw material influence of the raw material pricing on our total pricing of our product is limited. Because of which what happens is the value add that we are doing on a particular raw material is so huge that a significant increase in raw material also will have a very, very small impact on our profitability. This is as far as that is concerned. Now, mitigation of import and foreign exchange rise, what we are seeing over a period of time is the export opportunities are lining up really well, and our export we are expecting to do much better than what we did last year. So this becomes a natural hedge for us, that we are importing certain materials, raw material content which we are importing is shrinking slowly and steadily, but there is a finite amount to that, and our export increasing. So there is a natural hedge because of which we don't see an impact on our profitability so much.
Okay. So that's with regards to margins, and taking the 6,200 crore semiconductor venture into consideration, Amit, what's the outlook looking like? Because that is something which is going to need a lot of capex. And seeing your current balance sheet, if you can help us give us more clarity on the funding plan as well.
That's a great question. Paras wanted to get into semiconductors for the first reason being it should be able to cater to defense and space requirements, and that is a big portion of self-reliance in technology when it comes to defense and space, where even today the detectors and the sensors are still there are a handful of companies across the world. We wanted to bring that first to the country, such that our indigenous content in the sector that we dwell in, that is defense and space, increases, and maybe we come very, very close to 80, 90 or higher percentage of indigenization. This is one reason where we started off. Now, all this journey is so beautifully supported by the Indian government, the state government. The reason for us to further delve into this and further explore this opportunity was hand-holding that both the state and the central government give. Now, with that, what happens is the amount of investment that a company wishes to get into semiconductors comes down to a very manageable figure. Plus, what we are going to do is we are not going to be looking at huge investments. We are looking at doing advanced packaging, 2.5D, 3D kind of chips. And these chips will be high value, low volume. So our investments also will be in a phased manner. We are already having a partner from the United States, and we are looking at more advanced partnerships from the Western world, where we not only become a formidable semiconductor manufacturer of high value chips, but we can also then subsequently, as the business grows, we expand this same facility into a large-scale semiconductor manufacturing. So that's the roadmap. It's a completely different ball game. It's a completely different tech, and Paras will tread very, very cautiously and very calculatively when it comes to this, because we want to make sure that we are bringing a solid value to our country.
Okay, so in terms of the value that you will bring in on the semiconductor side, Amit, do you think you will be able to overshoot your guidance in terms of FY27, or you still stay with what you've actually quoted?
See, you have to also put it in mind, although I'm talking to you about semiconductor is not going to start revenues anytime in this year or next year. So I will still maintain 30%, 35%, 40% is a good trajectory to look at. Anything that we are trying to do today will add only more and more value to all the guidance that we are giving.
Okay, the value addition from semiconductors only after the next 2 to 3 years is the key. Thank you so much for joining in, Amit. Always a pleasure to speak to you. But we'll quickly slip into a short break. On the other side, we'll be in conversation with Gautam Maini, MD Engineering Business segment at Raymond, to discuss the quarter gone by and the outlook going ahead. Please stay tuned to NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best election coverage of the year, West Bengal election coverage. Best podcast show of the year, NDTV Control All Defense. Best primetime anchor of the year, Syed Suhail. Best female anchor of the year, Vasudha Venugopal. Best on-ground coverage of the year, Operation Sindoor coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
All right, welcome back. We're going to be speaking with Raymond in just a second, but I'm going to take a minute to cut across to the Prime Minister. He's interacting with the Commonwealth champions, and India had a rich haul this year at the Commonwealth Games. He's interacting and congratulating the athletes. Let's listen in.
बहुत मुश्किल से मैं ये 4 साल फेस किया था, तो वो सब जब पोडियम में जब मैं खड़ी थी सर, और हमारी जो फ्लैग ऊपर जाते हैं और हमारे नेशनल एंथम जब बजते हैं तो सर हम रुक नहीं सकते सर, अपना आप आंसू निकलते हैं। वो
बहुत बहुत बढ़िया। आपके इस अचीवमेंट को सिर्फ आपका अचीवमेंट मानता हूं, ऐसा नहीं है। ये आपका विजय आने वाली पीढ़ियों के लिए बहुत बड़ी प्रेरणा बन जाता है।
सब डर रहे थे हमसे कि इंडिया के साथ फाइट आ गई, अब तो हम पहली फाइट ही हार जाएंगे, हमारा मेडल भी नहीं आएगा।
यानी मान के चलते हैं।
हाँ सर।
क्या हुआ, वो रेस्टोरेंट वाले से झगड़ा कर रही थी?
हम लोगों का तो इतना अच्छा परफॉर्मेंस था, लास्ट डे था और सब जीत के गए थे और पूरा इंडिया के लोग थे, तो थोड़ा सा मुझे बुरा लग रहा था। तो मैंने उनको अच्छे से बोला, रिक्वेस्ट किया था सर, फिर उन्होंने मान भी लिया, अभी चेंज भी हो गया सर।
इस विजय की परिस्थिति, खुशी, आनंद अपने साथियों के साथ और गेम पूरे हो चुके हैं, तो एक हंसी मजाक मस्ती का मूड, ऐसे समय उस मैप पर नजर जाना।
Okay, so all of those highlights on our YouTube channel, and of course we'll show you those visuals on our screen as well. Let's talk about Raymond in focus after its Q1 results. Company is aiming at a big capacity push of over 1,000 crores. But to understand the roadmap going forward and the company's action plan post Q1, we're joined by Gautam Maini. He's a managing director of the engineering business of Raymond. Mr. Maini, very good morning to you, and thank you for speaking with us. Take us through the Q1. You've had a top line of about 605 crores, an expansion in your EBITDA margins and your profitability. Is this coming from aerospace and defense or precision tech? Which has been the bigger contributor, and what is the sort of revenue split there?
Well, I think it's come from both. I think both have made substantial strides. The revenue has really, the strong increase in revenue has come from the aerospace and defense sector, where revenue grew by 40.4% to 123 crores, while EBITDA increased to 26 crores. On the automotive side, which is the precision technology side, the revenue grew by 11.5% to 444 crores, but the EBITDA grew sharply by 45.5% to 61 crores. So while one of the businesses made a huge stride in revenue, the other balanced it out with EBITDA. So overall, both revenue and EBITDA grew substantially in both of the subsidiaries of the Raymond Limited.
What are the consolidated margin, figures that you're seeing continuing through the rest of the financial year with both pieces? Do you see them performing as they are?
Yes, I think there is a strong momentum. There would be some slight, headwinds in terms of the costs of tooling costs and some labor costs. But I think the operational leverages that are coming due to increase in revenue should hopefully over the period sort them out. So yes, both our estimates are ahead of what we had said earlier, and we hope that we can keep the same momentum for the next quarter as well.
So many, Alex here. I'm wondering about this capex push that is underway. 1,000 crore rupees split between the two business lines, 510 crore in aerospace and defense and 430 crore in the rest. You're targeting production start by the end of 2027. Can you give us a sense of the ramp up of production from that point on?
Well, we've started leveling the land, and we've started work on about 77 acres of land that we have, an hour and a half from the Bangalore airport, which is really strategic for all aerospace companies. We are working with several of our customers. We have a very large customer base, both in the precision technology as well as the aerospace. We're talking about concepts like factory in factory with them to see how we can scale. So there's a lot happening at this point in time. And I think over the next quarter and 2 quarters, a lot of the plans will start to get finalized. So as we are looking at a huge pipeline in both of the businesses, we're trying our best to make sure that we can align with a high growth rate once we are there. Obviously, in the beginning, it will take time because you have customer approvals, you have, a lot of work to be done. But then I would say from about March of 2028, we would start to ramp up. So I would say in FY29, you will start to see higher numbers coming in because of the Andhra facility being scaled up.
So just trying to get a sense of how much higher, right? Because as things stand right now, you have an aerospace order book that stands at close to 6,000 crore rupees. And I'm guessing the trajectory for the automotive businesses and precision is also something that will ramp up quite dramatically. So when you say that FY29, you will see a meaningful increase based on that increased capacity, what is the blue sky scenario here?
Well, I don't want to give you numbers out there, but
no, just so that I can envision what the company is building towards.
Well, definitely higher than where we are today. So I'm hoping that
that's a given, Mr. Mani.
Yeah, so it has to be higher than where we are today. But I think over the coming quarters, we will really start to fructify as the contracts start to get finalized. We are increasing business on a daily basis right now in terms of order book. We are also making over 1 new part a day. So I think things are going in the right direction. And I think we need to build it, step by step. However, when we move there, we're going to go significantly up the value chain because we're going to integrate a lot of things that we haven't done so far. So for instance, heat treatment, surface treatments, value stream map, bring efficiencies, cut throughput time. So there's a lot of AI, digitization, robotics, automation, autonomous, lot of things to build a real world-class facility. I mean, that's our goal, is to have a benchmark ultimately, and therefore, grow with that as well. So we're not just going to look at, only growing on the sales numbers, but we're also going to set up benchmarks in the industry on various areas, which will then be a solid footing for us in the future. So we're going to create the next 5 years out there and not just a revenue or a quarter-on-quarter EBITDA.
Gautam, good morning, Neeraj here. Almost all of your peer sets that we talk to, whether in the aerospace or the precision manufacturing space, are talking the same language, but are giving some targets around where they want their ROCs to be like from where they are right now over a 3-5 year period, where the gross block could be like, and in your case, it'll be impressive because you are on 1,000 crore expansion plan, if I'm not wrong, and where the EBITDA margins could scale up, because I heard you say in your previous answer that your high value orders will come into play, and I presume that would mean that margins will go up. Can you lay out any such groundwork? I know you'll do well quarter on quarter. I know your sights are set higher. Some guidance, some idea about where will you be on these parameters, whether 2 years out, 3 years out, or 5 years out?
Good. Okay. So if I look at it, our wish is that we continue to have a balanced ROC. So if you look at our businesses, we try our best to make sure that our ROCs will settle down in the range of 25%. When you invest on very heavy things like on engines, we are particularly on engines, right? There, the cost of machines is extremely high. So your ROCs tend to go down, but then we also balance it out with less critical products or products from aerostructures or products from, let's say, fuel and oil and hydraulics. So when you balance that out, you can achieve this. And I think that's the goal, is to look at a 25% ROC long term. In terms of an EBITDA, in terms of aerospace, long term should be the 25% range. We are a couple of percentage short right now because we're doing a lot of new product development. And since we write off all our R&D expenses, it doesn't reflect accurately, but the long term should settle at 25% EBITDA on the aerospace side. On the automotive side, I would say a long-term EBITDA of 15% and an ROC of 20% would be a very good benchmark for us to do. But more importantly is to make sure that we can utilize and grow at a faster pace once we have all the new facilities in place. So yes, like everybody else, I think the atmosphere is positive. The China Plus One is playing in our favor. The demand is huge. The aerospace is an execution game, not a marketing game. The markets are practically there and available. The number of suppliers are fewer. So I think the biggest challenge is to make sure that your basics are right, your execution is in place, your quality, your delivery across the world happens just in time, because today we find that we have certain backlogs, and even if we exceed our revenue targets, we still find ourselves in backlogs. That's because if the rest of the supply chain doesn't come up in line with your deliveries, the customers divert those deliveries to you. So that's your opportunity, which you have to go out there and grab.
Yeah. Fascinating insights there, Gautam, many. I hope to speak with you again soon, but we will leave it at it for now. Raymond stock close to the high point of the day, even as we've been having that conversation. Take a look at the intraday chart before we get into our next chat, which is with Sanjeev Prasad. Kotak Institutional Equities is seeing earnings perform despite macro uncertainties. To speak more on this, we welcome the MD and co-head of Kotak Institutional Equities, Sanjeev Prasad, on the show. Sanjeev, great to have you here. Thank you so much for joining in today. Just let me start with how you're looking at Q1 so far. The reactions, if I had to look at it, a range, seem to range from giddy optimism to cautious positive approach. Where on that rainbow are you?
One, two numbers have been actually pretty decent. So if you look at, for example, the Nifty 50 index, most of the companies reported, I think 4 companies not reported. The YOY growth is about 18% in terms of net profit, which is pretty handsome, I would say, even though some of it is because of the common sectors. But even if you exclude that, even otherwise, without the oil and gas sector also, it's about 50% YOY growth. More important versus the expectation, both for the Nifty 50 index and also excluding the oil and gas sector, the net profits are about 7% higher versus the expectation. So that seems like a pretty decent outcome, I would say. Even if I look at EBITDA level without the banks, that is, YOY growth is about 16.5% for the company that reported, about 3% higher than expectations. So very good set of numbers. If I go across the coverage universe, we have about 325 stocks in the coverage. There the numbers have been even better actually, because the oil and gas company reported very strong numbers, in particular the OMCs. So if I look at over there, the net profit of the KI universe is about 20% higher than expectations. If you exclude the OMC, it's about 10% higher. So net, the numbers are very strong. More important, underlying trends are also turning out to be pretty decent across sectors, I would say, with reasonably positive trends in both consumption and investment.
Hi, morning, Alex here. You described the fact that earnings have been resilient in the face of uncertain macros, and that seems to be the one big threat going forward as well. But even as things stand right now, Sanjeev, with the resuscitation of the conflict, $85 to the barrel approximately is where Brent is at. And the RBI itself estimates for the full year at $95. So if things stay the same, then things are good for the Indian equity market and for corporate India?
Actually, $85 is not a bad outcome compared to what we're looking at, let's say 3 months back, right? We're looking at 120 kind of a number. So 85 from a macro perspective is not a bad outcome given all the uncertainty out there. The hope is things can resolve over the next few weeks and oil prices start to normalize with improved flows in the second half of the current financial year. Even if we take $85 a barrel crude price for the entire year, which is our base case estimate, even in that case, things are pretty manageable for the macro, I would say. We are looking at about 1.5% current account deficit as a percent of GDP. That's about $60 billion. Now, in the normal course of event, that would be a very big number. But thankfully, because of increased capital flows based on the measures taken by the government and RBI, BOP position would actually be pretty decent. In fact, we are estimating somewhere about $120 billion of capital flows between increased debt flows, FCNRB flows, and ECB inflows. Possibly looking at $60-70 billion of BOP surplus, which compares to about -25 for the previous financial year. So it's a big delta. The rupee has, looks like fallen to well below its fundamental level. So hopefully the rupee becomes a lot more stable, which in turn result in some more excitement around Indian equity story, which have been so far completely ignored by the foreigners.
Sanjeev, good afternoon to you, maybe Neeraj here. But all your writings over the last 24 months, you exactly haven't been gung-ho. I'm not saying you are right now, but my question is, with the points that you're making, that earnings are looking okay, maybe the rupee be a bit stable, FI ownership is underwhelming in India. Do you sense in conversations that people are now trying to consider opening a position in India, foreigners that is, which they would have ignored for the last 18 or 24 odd months? Are you sensing that?
Yeah, absolutely. You can see that in the flows also, right? If you look at the flows, starting from June second half, we already seen about roughly about $5 billion come into the equity market from foreigners. And based on a conversation with a wide variety of investors over the last 1 month or so, I would say there are three categories of foreign investors as of now. One were the typical gem funds. They're still not very gung-ho on India. But having said that, they have reduced their big underweight positions somewhat, I would say. In some cases from very large underweight to somewhat underweight, in some cases from somewhat underweight to neutral. Nobody has gone to a situation where they are massively overweight or anything like that. In fact, out of my interactions in the last 1 month, only one person I found who was going to overweight position. I'm talking about at least 100 interactions among various set of foreign investors. The second class investors have been who have not sort of obliged to be in India. These are international funds, no obligation to be in India, but they have also taken some position in India in certain stocks, and in this case, mostly in, I would say, hard asset plays, airports, ports, real estate being the three areas where at least some investors have taken some positive liking to based on the long-term story over there. And the third sector where we are still seeing decent interest is I would say the consumer tech, fintech companies and newer listings with very distinct business models, very strong growth. At least their interest levels are fairly high. In the usual traditional sectors where the foreigners used to deploy the bulk of the money, which would be, let's say, banks and even the private banks, consumer names, IT services, interest levels are fairly lukewarm, I would say. In fact, IT is downright negative, I would say.
Okay, if IT is prime negative, where are the positives in your view, Sanjeev? Are you looking at the broader markets for alpha coming in? Are you looking at some of the results and getting enthused by what's happening in BFSI?
If you look at the market as a whole, it's a tricky one in a sense. We can only see value in the financial names at this point in time, and there will be a few names here and there where there's value. But broadly speaking, banks are looking reasonably valued in the context of really strong credit growth. You look at credit growth for the month of June, that has gone to 19%, driven by very strong growth in both industry and retail. Right? So clearly something is happening in the economy, consumption, investment demand, both looking fairly resilient despite all the negative macro headwinds. On top of that, asset quality is very, very reasonable, I would say, but no signs of stress in broad parts of the lending space. And concern has been largely on NIMs, which seem to be stabilizing now, I would say. So at least the lenders are looking pretty decent with strong credit growth, decent credit quality, and maybe NIMs stabilizing. So that part looks fine. The challenge is, the excitement which we see is more in the manufacturing space, and I would say the long-term consumer discretionary sectors. The challenge over there is valuations are very high. I mean, the growth rates would be phenomenal over here, no question about that, if India pushes for more of domestic manufacturing on the one side and increased spending on the other side would lead to sharp pickup in discretionary spending over the next 3-5 years. So that's where most of the excitement is in terms of, finding ideas. But of course, valuations on the higher side over there. So we'll have to wait and see the right price to look at these names again.
Sanjeev, so therefore, the opportunities in hard assets going forward as well, and on the balance tilted towards the large cap, one would assume, because again, in the past, we've seen if there is to be a material shift in FI allocation, it has to be through incremental passive flows into the country rather than active allocation by portfolio managers globally.
Yes and no, I don't know. But if interest levels start to come back, the assumption it will go into the large cap names. But honestly, based on my discount investor, they are struggling to find a lot of excitement in the large cap names. As I said, consumer names, valuations are very high for the kind of growth they're delivering. I don't think foreign investors are that keen to revisit the traditional consumer staple, especially names. IT has its own set of challenges, and at least people in the US are very, very negative. US, Hong Kong, I would say. So if money has to come back in the large caps, I assume it's in the lenders, but some of the private banks also have their own set of challenges, right? So people are getting a bit disillusioned in terms of where to really deploy money, even if they have, scope to put some money in India. Interestingly, we are seeing a lot of interest among the mid caps and small caps, even among foreign investors. I mean, these are people who have looked at India for some time, and they have done a fair amount of work, I would say, in the mid cap and small cap names, particularly in manufacturing. There seems to be a huge amount of interest, I would say. Of course, we can't deploy a lot of money over there. And the market caps are still not very high, but at least people are trying to find a lot of decent names, high growth names over there, despite the at least optically high valuations in the short term.
Sanjeev, thank you so much for joining us live this morning. They're speaking from Singapore, the MD and co-head of Kotak Institutional Equities, with, I think, a slightly more positive view on the markets, but not completely convinced on the large caps performing. And IT was a clear call. That
23% ऊपर है from the lows.
Yeah, but he was not too excited about IT. Okay, a quick look at the markets before we wrap up this morning's edition of India Market Open. Just want to do a quick check on the Nifty. Well, it's same, not really different, completely flat and oscillating in that very, very narrow range. All the action is stock specific, which is why you should stick around for the next show, which talks about your portfolio. Ask Profit coming up next. But before that, from Neeraj, Alex and I and everyone who put the show together, thank you so much for watching.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
GIFT City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at GIFT City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts
Good morning, you're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyansi Singh. First up, let's take a look at the top headlines. Bitcoin above $65,000 on regulatory optimism. India's crypto market could nearly quadruple, report says. France pushes bill to share crypto tax data. Japan creates dedicated crypto and stablecoin division. Time now to take a look at those headlines with a deeper dive as well. You do have Bitcoin that climbed back above that $65,000 level, and it's largely on regulatory optimism. US spot Bitcoin ETFs pulled in about $853 million in their strongest week since mid-April, that too. So this really highlights institutional support that is getting added in the crypto industry. Let's also talk about IMARC projecting India's crypto market that's going to be expanding from $3.61 billion in 2026 to $14.21 billion by 2034 as well. So it's delivering an 18.7% staggering CAGR as well, with roughly 119 million users and the top-ranking global glassroots adoption that you're looking at. Growth is really being fueled by massive smartphone penetration. Other than that, you do have seamless UPI on-ramps, a young digital demographic that you're looking at, expanding reach as well into Tier 2 and 3 cities. Let's move on and talk about France, that is also set to tighten crypto tax reporting with a bill to share digital asset data. And that's going to be shared with 48 countries. The move is going to be bringing in the global CARF framework into French law, enabling automatic exchange of user and transaction data. That includes tax IDs, residence details, and transaction values as well. So really raising the bar for crypto tax transparency. Let's move on lastly and talk about Japan, that has officially created a dedicated crypto and stablecoin division as well under its financial services agency. The new structure includes separate focus areas for exchange monitoring, innovation, and digital assets as well. This, in fact, is showing that sovereign support for crypto users in Japan is something that's in focus. Let's move on, and before we wrap, here's a very quick check on changes to crypto prices over the last 24 hours as well. So gains across the board. When you talk about Bitcoin, Ethereum, Solana, and Tron, up anywhere between about 0.4% to 1.2%, as you can see on your screens. Let's move on and take a look at the crypto strategy for the day. Lastly, here's what to keep in mind today. So the market sentiment, it's neutral, with just a slight bullish tilt that you're looking at, given the kind of gains that we've seen for some of the crypto assets as well. When you talk about US Senate, that has pushed procedural vote on Clarity Act for September, so that's something that you're looking at. And retail interest and volumes are also likely to increase, so that's also something that you're definitely keeping a track of. And lastly, when you talk about the Bitcoin resistance range, it's anywhere between $66,000 to $68,000. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole. The team is available to provide guidance and help users make informed decisions. And that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Start by asking you what you said in the con call. You've indicated that revenue growth is likely to be significantly ahead of your initial FY27 guidance. Is there a number to it that you can give us? Any range as to how much of growth can you do beyond your guidance, and how much of that is going to be split between volume versus price?
No, so I think, we'd given a guidance when we began the year of a double-digit revenue growth and a double-digit profit growth.
Yeah.
Clearly Q1, we've significantly over-delivered than compared to the guidance, a 19% top line and a 14% EBITDA growth. So it's a strong Q1. Again, Q1 came on massive volatility. Commodity prices were all over the place, went up with volatility. So there were situations in terms of pricing, availabilities, which we kind of navigated to deliver the shape. So we're quite confident in terms of the year as we've now entering Q2. I think most of the pricing is behind us. So I don't see sequential kind of price growth come through. Some bit of the commodity gains will kind of come our way in another, I would say in another 4 to 5 months. And the lag end of the year, we may not kind of get the benefit of some of the currency gains also. I think that looks like pretty much the shape in terms of price growth. We've always called out that our strategy is about delivering revenue growth driven by volume growth. And it's been a laser sharp focus for us right for the last few years. And that will remain, I would say, the focus area to kind of deliver in the next few quarters also. So yes, I think the idea would be to kind of inch up compared to the forecast on all lines. Need to see how things kind of span out basically on costs.
Right. So what I'm trying to understand here, Asif, is that this quarter you've done growth anywhere between 18 to 19%, right? But can we think of this that this growth could be beyond that 20% for FY27 as a whole? Is that understanding correct?
No, I think it's Q1 from a revenue growth has been really exceptional. I mean, 19% has been a very, very strong growth. And as I said, some bit of it comes on the top of currencies, etc. The constant currency growth was 14%. I think that's a better number to actually look at. But 14% growth is a good growth on the back of a 9% volume growth. So I think that's the shape which we're quite happy with.
All right, I tried my luck, Asif, there, but the volume growth is the other aspect, because this time the India volume growth stood at around 7% in Q1, and you've said that this could see an increase of another 100 basis points. That's around 8% is what you're going to do. What are going to be the key levers, especially because there is weaker rural demand on account of El Nino that has impacted the overall demand in the rural area. So what levers do you think will aid to that volume growth?
No, so I think if you have to look at the context of under which we deliver the 7%, there was volatility, there were availability issues.
Correct.
There was also a little bit of a seasonality impact. I think we delivered this growth in spite of all those challenges, and some of the challenges will kind of fall back as we go along. And I think that's giving us the confidence that we should be able to kind of inch up a bit.
All right. You expect gross margins in India to normalize in second half as high cost inventory gets consumed, because overall in terms of your margins outlook, what is the stance that you have for FY27?
Sure. So I think, when we have this kind of cost volatility, it's important to kind of actually focus on absolutes than margins. And that's what we would do in the short term. So I would wait for the commodity costs and the global situation to settle down and then kind of relook at the margin structure. But at this stage, it's more about ensuring that we deliver a superior performance both on top line and bottom line in absolutes, rather than kind of be too worried in terms of how percentages are falling in place.
Got it. In terms of household insecticides, that has been impacted due to El Nino. Do you expect this to recover in the second half of FY27?
I think so, because we've seen in this category, it's normally a quarterly kind of seasonality. On a year basis, things normalize. So, if a quarter goes not as good, the next quarter kind of picks up. On a year basis, normally things are more stable, because these are like within quarter seasonality, rains coming in earlier, or rains getting delayed, and hence the season starting late means the season could extend later. So we normally see that happen. So I think I would also hope that things kind of get equalized on an annualized basis.
Okay. In terms of the newer growth engines, they now contribute almost 17% of your standalone sales, and they continue to scale very rapidly. In the next 2 to 3 years, do you think that the scale can go to 30% of your overall business?
I think so. I think we would want a third of our portfolio to come from our growth engines. It's getting very fast. We are also kind of, while the sizable growth products are kind of growing fast, we're also incubating quite a few new growth engines. They also start coming to a size. It starts kind of then materially impacting. And, like example is what we've launched now as Godrej Riz. In a few more quarters, that's likely to kind of become sizable. So I think, we're doing our best in terms of expanding our TAM and kind of entering into high growth categories.
Got it. Very interesting. In the next 2 to 3 years, you expect 1/3 of your business to come from these newer growth engines. Very interesting. Got it. The other aspect is with regards to your international business, because Africa and Indonesia have done very well this quarter. There's been recovery in Indonesia. Africa business has done a very strong growth. What is the outlook overall for the international business going forward in FY27? This I'm asking because of the geopolitical disruptions that we've seen could probably continue in the rest of the year.
Sure. No, so I think let me start off with Indonesia. Indonesia, we had flagged off towards the end of last year, saying that it's taken us a year in terms of, I would say, consolidating our performance, and the macros and other issues have been challenging there. But we have spoken about early green shoots and talked about the turnaround happening through the year. So we have seen a very solid recovery coming through. A little bit of the base is supportive. So I wouldn't kind of say that we've gone into a double-digit kind of growth momentum on volumes in Indonesia. But we are quite confident that we should be able to maintain a high single-digit volume in Indonesia. When it comes to Africa, I think we've had really a solid performance, 17% volume, close to 150 top line, bottom line's been 140. So very, very strong delivery. Again, it's been an all-round performance across categories, across countries. So that gives us a lot of confidence because we've fixed the core. We've structurally now growing it profitably and we're expanding it to new categories. So we're quite confident that we should see a sustained high performance from Africa in the quarters to come.
Hello and welcome back to NDTV Profit. Of course, that was the management of GCPL, and stocks down almost 2%. It's been a difficult year for the company as a whole, but it's important to get that conversation in, as well as what the management also felt at this point of time in terms of the results. But let me welcome in our guest now as well. Gaurav Sharma is the Associate VP and Head of Research at Globe Capital. Saurabh Jain, Equity Head Research at SMC Global Security, joining in as well. Gentlemen, both of you, thank you for joining in and patiently waiting by. I want to ask you first, Saurabh, of what you made of GCPL as well, because you've seen the results, stocks also down, and it's been down almost 17% this year. Is it a good time to look at the counter now? How are you looking at it?
Good morning. See, I mean, the company has disappointed on the margin fronts, and if you see all the FMCG pack, all the companies are seeing some kind of a different direction. If you see Marico is talking about the expansion in the margins. Their volume growth is good. Nestle is doing phenomenally well. Britannia is doing also good. But in case of GCPL, I think there are a lot of cost with respect to the commodity and fuel inflation, which is because of which the company is struggling. It is still not clear whether they'll be able to improve on the margin side or not, and that is what the market is reacting to. I think there is no point in chipping when the stock is in the correction mode for so long. I think there are many other good opportunities in the FMCG pack.
Got it. Let's also pull up what Hindalco is doing as well. That was the other counter that continued to be in focus today on the back of results. Now, there were multiple key things to watch out for as well, Saurabh, in this particular result. In terms of Hindalco, because the revenue as well as the EBITDA, all of those have hit an all-time high. Stocks not reacting too much in this start of the year. We saw the Oswego part of the business affected. A quick 30-second view from you also on Hindalco. How are you looking at this counter?
Metal counters, especially non-ferrous, have done phenomenally well this year. If you look at the valuations have got re-rated in 2026, especially when the crude rose, and thereby it also fueled metals like aluminium to soar new highs. And I think that is what has already been reflected in the prices. The earnings was a surprise, but largely it was in the prices, and that is why the stock is trading in a range. That is my take. From the long-term perspective, we are still bullish on the non-ferrous pack.
But let's also, it's important to get the management view as well. So let me welcome in Satish Pai. He's the Managing Director of Hindalco Industries, is now joining in. And sir, thank you so much for joining in today. Let me start off with, what we've seen, record quarterly consolidated revenues, which is up 32%. EBITDA is also up almost 73%, as well as PAT at almost 7,000 odd crores. It's not a bad place to be, right? How are you looking at the results, sir?
Yeah, it's a great place to be, but I always remember Andy Grove's comment, only the paranoid survive. So I try to keep that in mind.
Also, if I get into specific, Mr. Pai, in Q4, your Indian aluminum upstream delivered an EBITDA margin of almost 44%. Given the commissioning of the Chakla mine and the Bandha mine as well, what is the trajectory for alumina cost optimization as well as the upstream EBITDA per ton in FY27? Additionally, are you seeing any pressure on domestic aluminum realizations from the rising Chinese surplus exports, and how is that factored into your FY27 volume guidance?
So I think the key fundamentals of the aluminium business, one is you have to keep your costs under control. So I think in Q1, because of the West Asia crisis, our costs went up in rupee terms by about 4%, but the rupee depreciated. So in the dollar terms, we were flat. The LME went up substantially to, the average was 35.57. So as a result of a stable cost of production, plants all operating at full capacity, there was a great fall through from that higher LME, which is why we got the 55% margins on EBITDA, $2,300 per ton of EBITDA. So the upstream business is that way fairly simple. If you can keep your plants running, costs under control, then as the price of aluminium goes up, you get a good fall through.
But also, Mr. Pai, the coal mine ramp up, provides a structural cost tailwind as well. Now, Chakla is expected to deliver its first coal in Q4 of FY27, Bandha in FY28. So, how do you look at that particular aspect?
So, I think that our coal mines coming on stream. So, Chakla will come on stream in Q4 of this year. Bandha, the box cut has been done, but because of the high overburden, the coal will actually start to come in June of 27. So I think that these coal mines coming in, what it does is that it gives a complete stability to our cost curve, because otherwise today we are dependent on auctions of coal where the prices can go up and down. And the other thing is because Bandha is only 20 kilometers from Mahan, all our inventory level, carrying costs, all those also come under control. So I think that we are already in the first quartile of the cost curve. And really what our own coal mines do is cement our position in that first quartile of the cost curve. So that's what the coal mines mean for us. Now, your second question on what is the outlook for LME, I think that, Q1 was very high. I think for the rest of the year, I see LME between $3,200 to $3,400 per ton.
Also, Mr. Pai, in terms of the cost of production, that was higher by almost 2.5% in Q4. Where do you expect that to be in the near term? What led to the rise of this in this particular quarter?
We already declared that Q1 was 4% in rupee terms higher than Q4.
Got it. And also on the copper division as well, you are doubling capacity. Your investor presentation outlines plans to double the capacity in the copper business over the medium term, with recycling project also commissioning in the first half of this financial year. Could you provide an update on the commissioning timeline and the expected revenue EBITDA contribution from this recycling venture? What's the outlook for sulfuric acid realization, which is a byproduct as well as a key profitability driver?
Yeah, I think that, look, the copper recycling plant gets commissioned in October of this year. So you will have 50 KT of more copper coming in with a very high double-digit IRR margin. So it's highly accretive to our results. The copper smelter, we have not yet broken ground because we are waiting for the EC. So that's still 3 years out. If you look at the sulfuric acid prices, that's because sulfur prices are high because of the West Asia crisis. I think that, once the West Asia crisis get over, oil refineries start sulfur production from there again, you will see a correction in the sulfuric acid prices, because today it's running at 15 to 16,000 rupees per ton, which is extremely high. Normally 4,000-5,000 rupees is the normal price for sulfuric acid.
But just a follow-up, Mr. Pai, do you feel that the copper EBITDA might take a sharp hit if the sulfuric acid prices come off?
So it depends on when that happens, because you see there are many moving parts in the copper EBITDA. One is TCRC. The other is the premiums you get from copper downstream. The third thing is the precious metal sales that happen. And then fourth is the sulfuric acid. So if sulfuric acid prices go down, it depends on what happens to the other three variables, whether TCRCs improve or not. So it's a difficult question to answer because it's a 4-variable equation.
Oh, got that, Mr. Pai. Also, one question just on the capex for India as well as the prioritization for the balance sheet, because you have guided the India operation capex in the range of 10 to 12,000 odd crores for this year. Could you break this down between maintenance, the expansion, as well as between Chakla, Bandha, the copper smelter, and the sustainability RE ventures? Given that the elevated capex, what is the leverage ratio also, if you can highlight that you're comfortable with?
Yeah, I think that our stated goal is to get Novelis down to about 2.5 from the 4.5. And I think that we have already said by Q4, Novelis will be below 4. I think the Bay Minette is the large capex in Novelis, after which their focus is on ramping up Bay Minette and getting the leverage down. So the capex plans going forward is largely an India capex. And I think that in India, our net debt to EBITDA is negative. So I think we are fairly comfortable proceeding with our capex plans in India because our cash flow generation is strong. And we see that from a brownfield type of perspective, increasing our upstream capacity is very lucrative for us.
And just one final question as well, Mr. Pai. The operating profitability has almost doubled in the last 5 years. Will the next doubling happen in the same time or a shorter time? How do you look at it?
So I think, look, these are high. We are in a where the commodity prices have such a big impact on our margins. So I think what I'm fairly confident is take a downstream business like Novelis. I think that they are going to steadily improve because the scrap spreads are good. More volumes from Bay Minette are coming in. The Oswego fire impact is gone. So what I'm fairly clear is that over the next 2 to 3 years, the Novelis trajectory is going to be steadily on the upward side. I think the India trajectory is good. I mean, you're going to see, depending on commodity prices, a little bit of variation. But as you said, we have been consistently showing a CAGR of about 18% on our EBITDA earnings over the last 5 years. So I think that, overall, both businesses, Novelis and the Hindalco India, are on a steady growth stage.
Got it. Well, Mr. Pai, we'll leave it at that. Thank you so much for joining in, giving us your view about the result as well as what you're looking out forward as well. But that was the management of Hindalco. Gaurav, very good morning to you. A very quick view. Actually, I can take the next question itself on Vikram Solar because Ravi, who's from Hyderabad, has actually bought this at 195. And thank you for patiently waiting by. His question being what he should do with his 300 units now. He's currently in the loss. How are you looking at this?
Hi, morning, Pratik. Stock is not looking good, Vikram Solar. It is better to exit the position.
We'll take a very short break, come back with a lot more stock-related queries on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connecting this growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell.
Hold.
Buy.
Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters.
Welcome back. You're watching Ask Profit right here on NDTV Profit. We still have Saurabh Jain with us. Let me welcome in Ajit Mishra. He's the SVP Research at Religare Broking. Ajit, very good morning to you. But, viewers, we couldn't do the rapid fire round in the last half an hour, so we'll carry it forward here, do two in this edition, and Ajit also gets a chance this time around to get two of them. So let me first start with the first question on Hitachi Energy. This one's from Ellen Parquet. He bought this Saurabh at 6,900 rupees. So very attractive levels, bought way back in March of 2024, asking if he should book some profits now or continue to hold.
See, in my opinion, the results were very good, and actually the results surprised the market. There was a good amount of growth in the revenue. There is a good amount of growth in the order book and as well as in the production. The stock has got re-rated, and in my opinion, it is a hold.
Next query is for you, Ajit. It's on LIC Housing Finance. Manju from Punjab is holding 300 shares, bought at a price of 548. Should buy more at the current levels or continue to hold?
Good morning, Sumit. So hold is the recommendation. Overall look sideways to negative as of now. Damage has already been done. Use recovery to reduce.
SBFC is the other one, Ajit. A viewer, Akshay, is holding shares at 94. Wants to know what he should do for the next 3 to 4 months. It's close to the current market price. What's your view?
Look sideways to me, better to exit.
Right, the next query is on Cochin Shipyard. It's for you, Ajit. Vijay from Chennai wants to know the short-term target on Cochin Shipyard.
Seeing recovery 1650, 1700 target zone, 1450 stop.
Prajwal's holding on to Rementry at 130, Saurabh. He wants to know a 3-year view on this counter. Should he continue to hold?
It's a hold.
Next query is on the next query is on Electronic Marts India. It's for you, Ajit. Siva from Amravati is holding 5,000 shares, bought at a price of 154. Can hold for 3 months or book loss.
It's a hold. Use recovery to reduce.
The next one coming in, it's on Gujarat Energy, which was of course Gujarat Gas earlier. Sasi from Andhra Pradesh wants to know if it's a good buy for the next 2 years. Has been volatile, Saurabh. What would be your opinion?
Yes, you can buy.
The next query is on Ola Electric. It's for you, Saurabh. Ram from Hyderabad is holding around 40,000 shares, bought at a price of 40. What's the view for FY27 and can he hold the counter till 2030?
Operational view remains negative. Better to get out.
Ray is holding on to MRPL at 180. Wants to know, Saurabh, if it's a good time to buy more at this counter. At this juncture, would you recommend that?
Do not recommend to buy more.
Next query is for you, Ajit. It's on Sundaram Fastener. Ayer wants to know whether should he hold this counter or is it a good time to buy?
Sharp move witness. Better to book some profit and trail a stop loss at 1040 for the remaining position.
Next one's on Bajaj Housing. Sudhakar actually bought it probably in this correction because his buying price is 76. Saurabh, should he continue to hold his 220 shares?
You can hold.
The next query is for you, Ajit. It's on Shilpa Medicare. Sumana from Delhi Dubai is holding 130 shares of Shilpa Medicare, bought at a price she hasn't mentioned, but can she hold the counter for the next 1 month?
Momentum is intact. Trail stop loss at 725 and hold.
LIC Housing as well, Ajit. Our viewer is holding shares at 590 and this is Satyan. Wants to know if it's a good time to continue holding or should he switch out?
As I have recommended earlier, use recovery to reduce around 525. In the interim, maintain a stop at 490.
The next query is for you, Saurabh. It's on Siemens India. Zakir from Dubai is holding 100 shares, bought at a price of 2,900. Should he hold or sell?
It's a portfolio stock. Keep on holding.
Nazara Tech bought by Rohit at 349. Ajit wants a short-term view on what he should do with this counter now.
Seeing reversal, hold 340 trailing stop now and gradually 380, 400 target zone.
The next query is for you, Saurabh. It's on PFC. Subrata Mukherjee from Kolkata wants to know whether is it an opportunity to buy this counter.
Lot many opportunities in the banking space. Go for ICICI Bank.
And the last question for the rapid fire, it's on Sky Gold. Ajit, Abdul wants to know a 3 to 6 month view, a target as well as a stop loss that you can recommend.
So already at record high, keep on trailing your stop on rise. 675 is the immediate base. Book at least partial profit, Abdul, and use dip to add more.
Use dip to add more, and I think the stock buzzing today, of course, on the back of good results, but that was, the last question of the rapid fire. Let's now come back to your normal stock related queries. You can also viewers call us on the landline number for your stock related queries to speak to our guest as well. But the next question coming through, and we took one on Hitachi. We have another one on GE Vernova in a similar pair. Sugunakar, who's a regular viewer of the show, wants to know if it's a good time to buy this counter now, Saurabh. Again, the valuation questions come through yet again. Which side of the story are you betting on?
I think valuations are expensive. If you want to buy, go for long term, and buy in a staggered manner.
The next one coming through, and this one is from Umesh, who's 22 years old from Bangalore. He's a regular viewer as well. So thanks so much for joining in, Umesh, on a daily basis. He's bought into ITC Saurabh at almost 307 odd. Currently sitting on a loss and learning a harder lesson yet again, Saurabh, because we've seen the regulations come through. This year has largely been a whitewash. How are you looking at this counter now? Is there more downside, or is this largely expected to be the bottom? How are you looking at it?
I think in the best case scenario, stock will oscillate in a range only. It will be difficult for him to make money because of the operational concerns. Better if you get any opportunity, get out.
Right. Next is a caller query coming in from Bangalore. Rajesh, you can go ahead and ask your query.
Yes, sir. Good morning. I'm holding around 50 shares of Nuvama Wealth Management at a price of 1,300. Should I hold it or may book my profit? It's been more than a year now.
And you can continue to hold this for long term?
Yes, yes.
Okay, Saurabh, any view on Nuvama Wealth?
I think the company is posting good set of numbers, good set of growth. Largely, it is a kind of a wealth creation stock. If you are there for the long term, keep on holding.
Got that view. But the next one's from Siva, who's from Amravati. He wants to know about Rain Industries. Has been holding this counter at 190 odd. Ajit, question being what he should do for the next 3 to 6 months. He's currently in good gains and he has 5,000 odd shares. So very good gains right now. Should he book partially? What would be the strategy, Ajit?
So definitely, Puneet, partial profit taking definitely recommended because the way it has moved up from 100 to 252, and that's the basically area. The last time also the stock witnessed sharp resistance. So again, after retesting that area, we are seeing some profit taking. So partial profit taking at current levels, and then we have a base around 195 zone. So that will be the trailing stop loss area. So with that, you can continue to stay put for the remaining position.
Right. Yet another caller query coming in from Chennai. Kunal, you can go ahead and ask your query.
Yeah, good morning.
Good morning.
I would like to know if it's the right time to enter Mazagon dock for a short to medium term 1 to 3 month perspective.
Okay. Ajit, good time to enter Mazagon dock from 1 to 3 years perspective? 1 to 3 months perspective?
So Sumit, in fact, we are seeing decisive recovery and at least some sign of reversal also in some of these defense name. And Majgaon has also reclaimed its major averages. So yes, he can enter fresh. 2350 is the immediate base. Gradually, the stock can inch toward 2750, 2800 mark, the first area of resistance, and then towards 3000 plus.
Got it. The next one's from Narayani, who's from Coimbatore, wants to know and holding on to actually Grasim as well as Tube Investments India. Wants to know actually, Saurabh, if both those counters are good enough to continue holding. She's trying to reduce the number of holdings in her portfolio. So that's the rationale that she's given. If either of them are good in terms of long-term bets, Saurabh?
I think both stocks are fundamentally phenomenally good. And if you want to reduce the number of stocks in your portfolio, do not reduce the stocks which are giving you alpha in your portfolio. And these are the stocks which are creating alpha for you. I think better let her go those stocks which are not performing well in the at this point in time.
The next query is from Ram from Chennai. He wants to know a fundamental view on Restaurant Brands Asia. He's been holding 3,500 shares, bought at a price of 75 for the last couple of years. Should he continue to hold this counter, Saurabh?
I think better to get off from the stock.
Well, the next one, and sort of sticking with you, because Ramana from Hyderabad has a couple of counters, NMDC as well as Bank of Maharashtra. I think you've spoken about the latter in the past, but either of those that you still like, Saurabh, for the long term?
From the long-term perspective, yes, I do like Bank of Maharashtra. And with respect to NMDC, there will be volatility. As of now, I think today they have announced they have reduced the prices of lump iron ore and all. So maybe you can see some pressure in the short term, but overall NMDC looks also good.
Next is a caller query coming in from Mumbai. Ramesh, you can go ahead and ask your query.
Yeah, I'm holding 1,000 shares of Pace Digit. At the rate of 191, I purchased it. Can you tell me for a 6-month view?
Okay, Ajit, any view on Pace Digitech?
So Sumit, based on the available price information, it looks weak to me, considering that the stock has recently slipped to its major averages. Though the volume has reduced, in the pace of decline has also reduced substantially, but the tone looks negative. So I would rather suggest to use any recovery to reduce. 190.95 will be the area where it's going to face resistance first in case of rebound, and 170 is the immediate base. So with stop at 170, you can continue to hold and use recovery to reduce its position.
Got your view, Ajit. But the next one, and this one's on JBM Auto. Let's look at the 1-year chart of this counter as well, because Anil Nair actually bought these at good levels of 480. So he's currently sitting in good gains. Of course, his question being if he still should continue to hold on to this counter. How are you looking at this, Saurabh? Because we've seen bus capacity, especially on the EV side, added across the player by the legacy makers. Do you think JBM still continues to have that merit? And looking at the buying price also, what would be the advice that you would give Anil Nair right now?
I think from the highs, the stock has already corrected and now consolidating. If you look at the numbers, the numbers are looking quite okay. And given the fact that that this area looks quite promising, I think from the long-term perspective, it makes sense to me.
Okay, the next is again a caller query coming in from Hyderabad. Sai, you can go ahead and ask your query.
Hello. Yeah, I'm
yes,
having query regarding IDBI bank for 2 years.
Okay.
And this is the only bank in my portfolio, and it is 20% of my portfolio actually. So is it good to hold for 2 years, or should I shift to some other bank like HDFC or some other bank, or is this good for 2 years? Yeah.
Okay. Saurabh, any view on IDBI Bank?
I think it is not the best of the lot. I think still, the government is finding buyer for this, and which is not happening, and that is what is bearing on the stock price also. I think there are many opportunities in the banking space. Maybe you can switch your money to maybe Bank of Maharashtra or Indian Bank.
Got that view, Saurabh. But the next one, and this one's from Maqsood, who's from Hyderabad, wants to know about Okla India, not a fairly recent listing, but has been listed for the last 12 to 18 months. He's holding shares at 575, and the stock's been in that range for a while now, Saurabh. Should he continue to hold? How are you looking at this counter, and is it largely comparable within that FMCG play? And if there's a better play, what would you recommend?
Will not be able to comment on it.
Anything on the charts, Ajit?
Puneet, like you rightly mentioned, limited data, but the way the stock is gradually drifting towards its record low, that clearly gives us a signal that the underperformance is likely to continue in the near future. So if the view is short term, I would definitely recommend to exit. And within this space, Marico and Britannia, they looks relatively better.
Next query is from Ronak Jain from Udaipur. It's on City Union Bank. He's holding around 17,000 shares, bought at a price of 200 rupees. He wants to know the view for the next 3 to 6 months on this, Ajit.
So Samit, volatile swings, but overall trend is still positive, means 200 is the base area. So with that as a stop, you can continue to stay put. In the next leg, 235, 240 will be the next area of resistance, and then record high levels. So keep on trailing your stop losses on rise. So let's say once it reaches to 230, 235, he can trail a stop loss to 220 and hold his position.
220 is a level that Ajit is looking at. The other one, Ajit, is on Siemens Energy as well. And I think we're covering the whole gambit essentially of this space. Bhavishu is from Uttar Pradesh, wants to know about this counter, asking if it will go above that 4,000 odd mark. I don't know if he's bought it, but wants to know about the future of this counter. Ajit, how are you looking at it?
So post results, we have seen a very sharp uptake with strong volume. So possibly, yes, we are inching towards the record high levels, which is 3,900 plus. So he can continue to maintain his position. 3,450 is the immediate base, the recent gap up candle low, and upside 3,900, 3,950 first, and then probably his desired level.
Well, the next question, and next caller actually from Goa now. Anand is dialing in for a stock related query. Anand, very good morning. Welcome to the show. What's your query?
Yeah, good morning. I am holding TVS Motor Company 10 numbers. This is my portfolio stock. Average price is 3,000 approximately. Okay. And I want to know, I want to add more, but is this the right level to add more, or should I wait for correction, or should I book partial profit and re-enter at a later stage? I just wanted your opinion and suggestion.
And Anand, this is a fundamental pick, and did you buy this in the recent correction which went to 3,000?
Yeah, no, I'm holding it since last almost 1 year. I've been accumulating it slowly. Okay. So, and I can hold it for next 3 to 5 years. It is a portfolio stock.
Well, Anand, it's a good one, good price to buy it at as well. But Saurabh, I think post that 3,000 mark, it's just seen a massive run up, and across the board, it has a good portfolio. Would you recommend Anand to just continue to ride the wave, and if it's a good time to add more as well?
The company is clocking good sales numbers, and on the operational side, the numbers are quite phenomenal, and that is why the stock got re-rated. In my opinion, the valuations are stretched. It would be a good strategy to take some money off the table and maybe wait for the broader correction in the market to re-enter again.
Right. The next caller query is from Bangalore. Akash, you can go ahead and ask your query.
Hi, good morning. My query is on Indian hotels. I have 100 shares at a 700 rupee price point. I want to know, are these the right levels? Should I add more or should I hold on for a dip to add more?
And this is for long term, I believe.
18 to 24 months, medium term perspective.
Okay. Saurabh, for the next couple of years, should he buy more of Indian hotels, continue to hold his shares?
The management is quite confident of the future business, and still the demand and supply scenario is in the favor of hoteliers. The average revenue per user per room is still growing, and they are clogging 14-15% kind of a growth. So, in my opinion, yes, he can accumulate for the long term.
Got it. Saurabh, the next one's from Sundar, who's from Madurai. Wants to know about Raymond Realty. Actually, he's sitting 16% profits right now, Saurabh. And asking if it's a good time to exit. It's the only counter in his portfolio which is from the real estate space. What would your recommendation be if you like anything else from the real estate space too?
I think he can take money off the table, and if he wishes to re-enter in this space, I think Phoenix made a mix of retail and developer is a good option to switch money.
Got it. Well, the next question coming through, and this one, it's on HEG. Ankur Agarwal from Ghaziabad is holding shares at almost 518. Again, it's sitting on decent gains, Saurabh, and asking if it's a good time to exit or should he continue to hold for the long term. What would your opinion be?
I think the way the metal prices are surging, the way these steel companies are making good money and the industry is picking up, it makes sense to hold HEG because it is anyway, the electrodes will be more in use going forward. So in my opinion, it is a hold.
Got it. The next one coming through, and this one's on JK Tyre. Our viewer wants to know if it's a good time to enter the stock right now. Ajit, we've seen actually the results come and go by, nothing too much to write about. But on the technicals, is it a similar picture? Is it a good time to enter?
So in line with what we are seeing with the other oil impacted stocks and sectors, Puneet, I feel this kind of volatile swings might continue. So until we decisively cross and sustain above 420 mark, one should refrain from any fresh buying in JK Tyres for the short-term perspective.
Got it. Well, let's now start the second round of the rapid fire. Ajit as well as Saurabh, drill. First one, it's coming on SBI funds. Moneydeep has actually bought her at 575. Saurabh, how did you look at the quarter one results and what would be your opinion on the stock now?
I think they have maintained their position in the AMC's business, and in my sense, it is a hold.
The next query is for you, Saurabh. It's on Aarti Industries. Shyam has few shares bought at a price of 475. Should he hold or sell?
I think it is a hold.
The next one's on Sandur Manganese. Venkata was bought these shares at 217. Ajit wants to know about this counter, if she can still continue to hold. She has a 9 to 12 month view.
That's a hold.
Next query is for you, Ajit. It's on Suzlon. Surat is holding few shares, 5,000 shares bought at a price of 53. Should he hold or sell?
Reduce and re-enter around 42, 43 or above 53 mark.
The next one's on Bellrise. Venkatrami actually bought at 144, so sitting on stellar gains here, Saurabh. Continue to hold this counter. Wants to know if it's a good time to add more as well.
Do not add more or consider booking 25% of profits.
Next query is for you, Saurabh. It's on Jain Resource. Yogesh from Gurgaon wants to know whether is it a good time to buy Jain Resource for the next 3 to 5 years.
Is the word.
Ajit, next one on Pix Transmission, smaller counter, but Dilip has bought these shares at 1834. He wants to know about his 15 shares. Stocks flying today. Should he continue to hold or book out?
Maintain a trailing stop at 1815 and hold.
Next query is for you, Saurabh. It's on GE Shipping. Ram from Hyderabad is holding 260 shares, bought at a price of 1,560. Should he hold, book loss?
It's a hold.
Saurabh, on Astra as well, Sai Ram has bought these shares at elevated levels, almost 1,700 rupees per share. We've just seen the company call off the chemical business demerger too. Should he still continue to hold? Is it a good time to add more?
Wait for one more quarter earnings and then decide.
The next query is for you, Saurabh. It's on BSC. Akshat is holding 30 shares, bought at a price of 803. Should he continue to hold this counter?
Looks to be quite expensive. Better take money off the table.
Ajit on Bank of Baroda bought at 252 by a viewer Sai. He's asking a short-term outlook.
Recovery likely, but upside capped. So maintain a stop at 245 and around 260 book profit.
Next query is for you, Saurabh. It's on Bajaj Housing Finance. Gland is holding 690 shares, bought at a price of 133. Should he hold or exit?
It's a hold.
Jay from Tirupur actually wants to enter into the FMCG space, Saurabh. Between Dabur and Imami is his question, which is a better pick, or if you like something else?
Consider looking at Britannia, Nestle, Marigold.
The next query is for you, Ajit. It's on Hindustan Zinc. Kirti from Bangalore wants to know whether it's a good time to buy this counter.
Fresh buying, wait for a dip around 580 a dip is recommended.
Got it. The next one is on Olectra Green Tech, Ajit. Harsha from Hyderabad wants to enter this counter now for the short term. Would you recommend that?
Yeah, can buy with stop at 1300 and 1550 target zone.
The next query is for you, Saurabh. It's on Amara Raja. Prakash from Vijayawada is holding 600 shares. He hasn't mentioned the price, but he wants to know whether should he buy more at the current levels.
Do not buy more, keep on holding.
The next one is on steel strip wheels. Again, a smaller counter, Ajit, not discuss it too much, but Sunita is holding shares at 250 odd rupees and asking an outlook as well as a target for the near term.
Steel strip.
Yes.
Actually, it's not SSWL, okay?
Yes.
So, trading at the record highs, Puneet, book at least partial and maintain a trailing stop at 293.
The next query is on HBL Engineering. It's for you, Ajit. Siddharth from Noida is holding 70 shares, bought at a price of 700. Can he hold this for the next 3 months?
Better to reduce consolidation and negative trend likely.
Sushant from Bengaluru is holding 500 shares of Polo Micro at 197 Saurabh, so he's sitting on good gains. I think the street is disappointed a bit with the Q1 results. What is your opinion?
I think it is a hold.
The next query is for you, Ajit. It's on KP Energy. Girdhar from Hyderabad has bought 200 shares at a price of 352. Should he hold or average?
Don't average. Use recovery to reduce. Overall trend is down. Intermediate stop at 290.
Got it. And the last question for today is from Danny from Kerala. Wants a fresh entry into Medi Assist for the long term, Saurabh. Would you recommend that?
It is a good buy for long term.
Goodbye, got it. Well, that was the last question as mentioned, but Ajit as well as Saurabh, thank you so much and for helping us solve a lot of queries over the 2 rapid fires as well as in the middle. So appreciate your input for helping us solve almost 57 queries today in a very short span. But viewers, out of time on this edition of Ask Profit, thank you so much for watching. We'll see you at 2 p.m. for Ask Profit, the afternoon edition, and stay tuned for a lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Hello and welcome to KYC, a show where we decode the most interesting companies. And let's see if you can guess which company is on our radar. Good morning, I'm Hiral Dadia. First up, to understand this one, it was incorporated in the year 1904 and it was actually that time known as the Kumbakonam Bank Limited. Any guesses on that one? I'll give you more cues. The stock itself is up 21% from March lows, okay? That's the second one that you have. And third, this is a bank which is based out of Tamil Nadu. Again, a South India-based bank. The company has actually delivered a steady Q1 set of numbers as well. So, and that's been the trend that we've seen with regards to where the BFSI space goes this time around. And it is beneficiary of the textile boom from Tripur as well, which is in Tamil Nadu. Now, you know, this sector has been like a lackluster one, but it has seen, you know, an uptrend because of this. So that's the cues that you have to guess which the company is. And I'm going to take you through what we are actually talking about. In terms of the bank that we're talking about today, overall, we're talking of a bank which is City Union Bank. That's what we're looking at. Now, if you see in terms of City Union Bank as well, that's the company we are looking at. Apart from this, if you see in terms of other aspects in terms of what this bank is actually all about. If you have to talk about City Union Bank, we'll quickly take you through the graphics as we speak. First up, if you see in terms of the net interest margin outcome, the key question is it actually bottoming out? And what is the trend likely looking like? Is that going to continue? Secondly, we've seen lower fee income in the first quarter. So what's the outlook ahead with regards to where the lower fee income goes? The slippages and the ECL impact. And we're talking about the ECL impact is mainly on the back of the credit cost ahead and the guidance in terms of FY27. So these are the key questions that we have as well. Secondly, the benefit in business from the FTAs and especially the Tripur region and the textile sector is what benefits, and hence this bank benefits. And you're talking about the FCNR deposit mobilization as well. What is that going to look like in the second quarter? Because that's where the bunch will come in. September is the deadline that the RBI has given. Apart from that, what are their views in terms of the high risk exposure that they have with regards to loans to MSMEs and gold loans? The reason we're talking about gold loans over here is because the kind of fluctuations that have happened in terms of gold prices in the recent past on the back of the West Asia crisis, and the MSME growth guidance and the branch expansion plans, because that will tell you how deep are they able to actually come in as well. So these are the key questions what we're talking about in terms of where City Union Bank goes. But moving on, if you have to look at the other angles in terms of City Union Bank, and overall if you have to look at you know, what are the key factors and parameters that we're looking at. Incorporated in the year, we've already spoken about this. It's called the Kumbakonam Bank in the past. Now the names have changed. It opened its first branch in Madras in November 1965. Apart from this, if you have to look at this, you know, about this, it's a scheduled commercial bank regulated by the Reserve Bank of India. Let's move on to the next slide. 1,000 branches across 71 states and 3 union territories is what you're seeing. And they've mobilized close to 150 crore worth of deposits under RBI's FCNRB. Now, this is as per the latest data that has come in. If you talk about the gross net performing assets, it's lower and it is better as well. So that is the abbreviation, but let's see where it stands. If you talk about net NII, that's net interest income. To give you context, higher the NII, better is the performance of the bank. If you talk about the ROE and ROA, these are the return ratios. So the return on equity and return on asset, again, higher both of these metrics, it is better in terms of performance to gauge, you know, what investors are getting. And again, higher the better in terms of net interest margin. So if you see a number which is higher on your screens, understand that the bank has been performing well because your net interest margins are improving. Likewise for CASA as well, that's your current accounts savings account kind of ratio, and that's the reason why it's called CASA. Moving on in terms of the other things that we're watching out for, the core, you know, pre-operating profit has been beat, and this is only on the back of a better NII as well as lower operating cost. Secondly, there has been no material change in the core profitability, and they're seeing the core ROA at around 1.5%. So that's what you're talking of. In the first quarter, the guidance is of growing 2 to 3% above the system. That is what they have maintained, and this is what the guidance has been given in the first quarter. The fee miss amid lower processing fees is what actually was the key negative, and that was actually driven by the loan offtake, which was very slow. Secondly, the management has maintained FY27 ROA guidance of 1.55% plus. So 1.5 was the current, 1.55 or above that is what they're indicating. They're actually targeting an exit ROA of 1.6 to 1.65 by FY28. What this means is that at the end of the fourth quarter, this is what they're looking at, but not for FY27 as a whole. Now, let's quickly look at their advances as well. Now, in terms of advances, almost 40% is to MSMEs, which is then followed by close to commercial real estate, which is at around 16, agriculture, I beg your pardon, which is close to around 16%. Then your non-agri gold loans holds around 14% in terms of your advances, and the remainder follows, but maximum goes to MSMEs. That's what your Q1 FY27 looks like. Now, what may work? Now, analysts are absolutely bullish when it comes to City Union Bank. What they have indicated also in terms of what may work for a City Union Bank, let's look at the other aspects in terms of the graphics. Now, asset quality has been improving, so that could be one of the factors to consider. The EU agreement, that will benefit the businesses from Tripur, because Tripur is concentrating on textiles and they do get majority of their business from the textile sector. Net interest margin guidance at 3.65 to 3.7. This is what they're looking at over the next few quarters, and it's the gold loan business that will aid that kind of a net interest margin as well. MSME growth is projected to exceed the system growth by almost 2 to 3%, and that is a chunk of their advances. So that is a key. And they are seeing a one-time ECL impact this time around. We already spoke about how this will look like. But let's understand, what may not work. This is exactly one of the points that may not work on this. In terms of other aspects, valuations are slightly expensive. So that is something that we will have to take with a pinch of salt in terms of where the bank goes. So we're talking about ECL, we're talking about valuations. The exposure to MSME and gold loans, though, if there is any default happening on the MSME front, you see a direct impact here, and hence there is a negative side to it as well. Likewise, with regards to gold because of the fluctuation in terms of pricing. Any economic downturn risk, because this is what will affect gold prices as well and the propensity as well. So these are the factors that you should be considering. But let's actually understand what are the other factors that you're looking at in terms of City Union Bank. Because a lot of positives that we've already seen, and the rating is going to be interesting. Income statement, balance sheet, operational parameters and return ratios is what you're looking at. Shareholding patterns, street credentials, valuations and the analyst take. This is what we'll be talking about as well. Let's look at the income statement first. There you go. Net interest income, good growth from 752 crores is actually managed to go to 820 there. But if you see in terms of profitability, it's 315. It's seen a growth, but it's not that substantial. 315 going up to around 343 odd crores in the first quarter of FY27. But it's a thumbs up on this one. If you see in terms of the balance sheet as well, your deposits, again, from 0.7 lakh crores, it's improved to 0.8. Likewise, your advances have also improved to an extent from 0.76 lakh crores to almost a 0.7 lakh crores. So a thumbs up in terms of the stability that they will have seen. Let's look at the operational parameters. Let's see what, after this, we'll be looking at the operational parameters as well. In terms of the operational parameters, what we're actually watching out for is the net interest margins and the asset quality. Now, your net interest margins from a 3.5% have actually come down to 3.4%. So that's a little bit iffy. Asset quality has improved quite a bit. Your gross has gone down from 2.2 to 1.7. Net NPS from 0.8 to 0.6. So asset quality improving, net interest margins a mild deterioration, though there is stability in Q4 and Q1, and hence we've given it a neutral rating as well. So that's with regards to where the operational parameters go. But let's look at the next matrix and see, what are the factors that we're looking at. Return ratios, a thumbs up. The reason being is, has been able to maintain an ROA of 1.5%, and the commentary with regards to the exit number is very strong. Likewise, in terms of ROE, in fact, that has improved substantially from a 12.6% in FY25 to a 14.2% in FY27. That's what the estimate is looking like. But even FY26 has seen a good amount of improvement. So the return ratios have been very strong. Let's look at the shareholding now. FIs, you can see a 19% from a 28%. And I think that's the negative here. If you look at the DIIs, they've actually improved. In March 2025, the DIIs were actually sitting at 33%. They've actually now gone up to 45%. And your public shareholding has also gone down from a 39% to a 36%. These two factors are concerning. This is a positive, and hence a neutral rating is what we're looking at. But now look at the street credentials. What is the street actually giving it? What are the kind of returns that we've seen from a City Union Bank? If you see in terms of the street credentials, from March lows, that's what we've been talking about since the beginning, it's a 21% uptick that has come in there. But from 2026 highs, the stock has corrected 12%. In the last 1 year, you've seen returns of 40%. 5 years, 80%. I mean, not spectacular returns, but not given negative returns as well to an extent, and hence we've given it a neutral rating. Let's look at the valuations here. Now, in terms of valuations, the 5-year peak has been 1.96 times, and we're talking about the price to book. If you talk about the 5-year average, 1.4 times. Current, 1.7 times, which is telling you it is expensive as compared to your 5-year average, but very close to your 5-year peak as well, and hence a neutral rating in terms of where the price to book value goes, and the valuation comes in a neutral. Let's look at the analyst take on this one, because you have 34 analysts who are tracking a City Union Bank. 82% have a buy rating, 9% have a sell, 9% have a hold. So your sell and a hold is very equal. Your 12-month target is a 264 rupees per share. The 12-month target and the 82% buy actually warranted for a thumbs up, and hence we've given it a thumbs up as well in terms of the analyst view. But moving on, let's quickly look at the final rating that we have from the 8 parameters that we've been tracking as well. If you have to look at the 8 parameters, income statement, balance sheet, return ratios is a thumbs up. Operational parameters is a neutral rating, as we mentioned as well. Let's look at the others. The other 4, if you have to look at them, shareholding, street credentials, valuations, neutral. Your analyst take is a thumbs up. You know what is interesting is there is no thumbs down in any of the parameters, which is also a positive. Your final rating, let's pull up that one on the screens. Your KYC rating stands at 6 on 8. That's what we're talking about in terms of where, the overall rating goes. But I think it's now time to actually discuss how the quarter has been, what is in store going ahead. We have the management, Vijay Anand Ramamurthy, MD and CEO at City Union Bank, joins in. Mr. Ramamurthy, welcome to the show, and always a pleasure to speak to you as well. Help us understand the net interest margins. Is the outlook looking like going ahead? Because it seems that it's bottoming out now. So is the trend likely to continue?
Yeah, the numbers were quite good. We have been growing year on year at 25% on loans and 21-22% on advances. Looks like we did NIM of 3.78 to be precise last quarter, while we will slightly come down, but overall for the year we are looking somewhere between 3.7 to 3.75. That's a number which we are looking out for the year. We don't see a big drop in NIM for sure. We should be around 3.7 to 3.75.
Okay. So that's with regards to where the net interest margins go. What do you make of the lower fee income in the first quarter? Just help us understand what was the reason for this underperformance, and what's the outlook looking like going ahead?
We had suit recovery slightly drop for Q1, but nevertheless, I think Q2, Q3, Q4, we will achieve the numbers of whatever the other income which we have planned internally. Normally, Q1 income is always slightly lesser in terms of suit recovery and other incomes, which we should stabilize it in Q2, Q3. Should not be an issue for us.
Okay. Mr. Ramamurthy, talk to us about the slippages in this quarter and the ECL impact that has had on the credit costs, and what is the outlook looking like going ahead?
Yeah, I think slippages has been quite good. If you see our recovery continues to outlast the slippages. We have been doing more recovery than the slippages. Looks like we will continue for this quarter as well. I think we have been doing this for the last 10 quarters. Even for this quarter, we will continue to do that. And continuously for the second quarter, our SMA2 numbers have been less than 1%. And our overall SMA 012 is hovering between 3.6 to 3.8. That's been a very, very positive sign for us. I think looks like the portfolio quality is well holding, and we will continue to get the result out of this. That's one piece. And as far as slippages for the year is concerned, I think we should be somewhere between 700 to 750 crores, and there are no changes in the numbers what we have been getting.
Okay. The question, Mr. Ramamurthy, then what investors want to watch out for is what happens to the return ratios, right? They have remained stable. In fact, some of them have improved as well in the first quarter. So do you think you will be able to maintain that in FY27, or will it be better? What's the guidance looking like?
So we should have exit ROA of 1.65%. That's the number which we are looking at for the year. Exit ROA for the year is 1.65. Our cost to income will come down. If you see the last quarter, we closed around 45. Even after the hike which we have given on July 31st, and with the considerable amount of IT spending which we are doing it for AI and Center of Excellence which we have created, I think we should exit cost to income at 47%. And our ROE should be somewhere between 15 to 15.5. That's the number we are looking at. So ROA of 1.65, ROE of 15 to 15.5, and cost to income of 47. I think our growth should be 2-3% more than the credit growth. And our deposits, have been quite granular. Our 50% of the deposits are retail deposits. We continue to get the benefit out of this. Deposit growth will also be quite stable.
Strong return ratios as well. The other thing I want to talk to you about is with the kind of dependence that you have on the textile sector. Now, all of the FTAs that are being signed will somewhere benefit indirectly, I would say, because of Tirupur. What are the business benefits that you're looking at on the back of the FTAs that the bank would actually see?
I think I did mention this in the call. Tirupur has been quite fabulous. We have been to Tirupur, and the FTA agreement which we have signed with Europe, I think it should create a lot of demands. We could see that demand as well coming up. We did meet some of the big textile CEOs. I think they are very, very positive, and this is also visible in the requirement what they have asked for. I think it's going to be a good season for us.
Okay, good season for you. So when you expect the benefits to start coming in from Tirupur then?
I think growth has been quite stable. If you see last 2 quarters, including Q1, last Q4, we have been growing around 25%. I think 2-3% above the industry growth. I think that growth should continue. And if any other businesses comes, we should surpass the 3% as well. Additional business, which we have been doing it for the last 2 quarters.
Okay. Mr. Ramamurthy, the other question I have apart from businesses in terms of the FCNR deposit mobilization, because that is something which has been spoken about quite a lot. We've already, as a nation, hit the mark that we had to. But if you have to look at it from a CUB perspective, what is that mobilization looking like ahead for in terms of the second quarter? Because we know September is the deadline.
Yeah, we did give a pretty decent interest rate as well. We are around 7.1% as we speak on FCNR. We had a pretty good Q1. We expect the same performance to happen in Q2. This is without the leverage, by the way. So without the leverage, we are doing this. I hope the same trend will continue in Q2 as well. That's a number which we have got from the team.
Okay. The other question I have for you is in terms of the MSME portfolio, the gold portfolio, all of these are high risk and the exposure that you have is also pretty strong, right? What's the outlook looking like, and are you seeing any slippages or any concerns on that front? Because gold price is absolutely fluctuating and inflation, if that persists or inches higher, it becomes a problem when you talk about the repayment cycles of MSMEs.
I think gold loan is something which we are around 31% as we speak. We expect it to be stabilized around 32% of our overall book. And as we speak today, the average LTV on gold loans is around 62-63%. I think we are pretty decent in what we are. And predominantly, this is a branch distribution. And hence, we don't see much our operational risk has been quite managed well. We don't pretty see much in this gold loans. As far as MSME is concerned, we have an industry-wise exposure, and we continue to maintain the industry-wise exposure. As we speak, I think our portfolio quality speaks all about it. As of now, the data is very, very positive. And when we meet the customers, I think that's also a very good sign. Overall, we don't see as of today much worry about these two sectors, what we are into, MSME as well as gold loans. And our retail is also picked up well. We have been doing good on retail secured. Our loan against property and home loans has been doing pretty decently, and most of it through the branch distribution, as you know, because our overall third-party business is not more than 1 to 2% of our bank's book. So considering that we have 1,000 distribution centers, which are 1,000 branches predominantly, I think with branches meeting the customer, understanding the business and taking it forward, we are quite confident of the book what we are creating.
So then that takes me to my next question. What are your branch expansion plans? Because that's what everything relies on.
We did take these branches in the first month of this year. So we have already touched 1,000. I think we will open another 5-6 branches maximum this year, not more than that. We wanted to stabilize these branches, ensure that we start serving the customer properly and get a maximum out of it before we really do the expansion. Hopefully, we will do the expansion only next year. So as of now, we might exit this year at 1,005 branches, not more than that.
Okay, so 1,005 branches is what you're looking at. What's the industry guidance, Mr. Ramamurthy, for the banking industry, and which are the sectors which are probably doing well that are aiding the sector as a whole?
I think 2-3% more. I think textiles is something which we are very, very positive. We are also quite positive on paper, where predominantly it's in Kange, Belt and Palladam near Coimbatore. We are also quite positive on automobile, which is happening in Sriperumbudur, which is a border of Chennai. So automobile is good, textiles are good, paper is good, cotton is doing very well. Cotton is one thing which we are, and I think the same trend looks continuing. Pharma is something which we have quite a decent exposure in, other than Tamil Nadu. That's also pretty decent. And in terms of Balotra, we are quite doing pretty decently in other businesses as well where we are present. So I think predominantly these industries continue to do very well for us. And we have the cap for whatever the industries which we are operating, as I said before. So we would like to cap at the risk level concentration risk on each space.
Got it. I think everything looks pretty strong from here on. But thank you so much, Mr. Ramamurthy, for joining in. Always a pleasure to speak to you as well. In fact, that's all, folks, on this edition of Know Your Company. Lots more lined up on NDTV Profit. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best on-ground coverage of the year. Operation Sindoor coverage. NDTV, the network of impact.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Benchmarks started the week on a strong footing with the Nifty hovering close to 24,600 mark. The Nifty Realty IT lead the gains while PSU Bank, Oil and Gas are on the back foot. Shares of Titan surge after a strong June quarter performance. Brokerages remain positive, pointing to robust jewelry growth, while healthy margins as well as a favorable earnings outlook are other key positives. Paytm stocks jumps after Bernstein raises its target price to 2,200 rupees per share, above the company's IPO price of 2,150. The brokerage has factored in the new merchant discount rate regime expecting to lift payment margins by 3 to 4 basis points and boost FY30 EPS by almost 30%. Ola Electric shares fell as the brokerages remained cautious following its weaker Q1 results. Margins continued to be in the losses and cash burn remains a key concern. Kotak retains a sell rating with a target price of 20 rupees per share, while Goldman is slightly more optimistic with a target price of almost 40, maintaining a neutral view. The Nifty 50 is set for a September rejig with the official announcement expected after market hours today. BSE is seen entering the index while Wipro could exit, potentially triggering flows of $741 million into BSE and $246 million out of Wipro. Good afternoon and welcome. You're watching Markets at 12 with me, Puneet Zaveri. Before we go ahead and look at some of the key stories that we'll be covering over the next half an hour or so, a very quick check of how the markets are doing, because you are seeing a lot more high flyers today in the day that's led by earnings as well as other brokerage upgrades that we spoke about, Paytm being one of them. But when you look at the Nifty 50, we've now from the day's lows had some momentum. So when you pull up the heat map for the Nifty 50 as well, we're up almost about 20 points right now on this particular index that has led by some moves in the morning. You had that with SBI, which was the top gainer. That's been replaced by Titan, now up 2.7%. Tata Steel, Grasim, as well as Tata Consumer are some of the other movers that are doing well in trade. You also have Trent as well as Bajaj Finserv, which are up today, while SBI has actually seen some profit booking at the high. So now that counter is the biggest loser on the Nifty 50. Pull up the PSU banking index too, and hence here you are seeing that pressure, not seeing SBI contributing. That index is down, but also look at the sectoral heat map as a whole. You're seeing the auto pack that continues to be in focus. You had results just last week, but Realty today is up 1.5%. You also have the Nifty IT up 0.5% all. While apart from that, not seeing too many moves. PSU banking index actually, we were expecting some decent moves after SBI results, but that is the top loser right now, almost down 1%. Also pull up the mid cap and the small cap index too, and see if that is faring any better at this point of time, because we spoke about the gainers that are doing well today. Mid cap index up 0.5%, small cap 252. If you can pull that index up, is also up 0.2% as well. And finally, in terms of the BSE 500, I spoke about a lot of individual movers that are buzzing in trade today. Jamna Auto on the back of weaker results is down 11%. On the other side, you are seeing Hitachi Energy up 10.2%. You also had an initiating coverage by Nomura with a target price of over 40,000 rupees, and hence that is the other kicker apart from earnings. Quest Corp, Polyplex Corporations are some of the other ones. I also want to pull up Suprajit Engineering, Quality Power, Sky Gold. All of those counters also buzzing on the back of good earnings. If you can pull those up, Suprajit seeing some profit booking from the highest, and while Sky Gold as well as Quality Power, Akom's Drug are all the other makers that are doing well in trade today as well. What's not doing well is Apollo Micro. We're also seeing some pressure coming on Oswal Pumps as well as Studs. All these three had weaker set of numbers, not doing too well. But let me welcome in our guest for the day, Anil Rego, founder and fund manager at Right Horizons PMS, now joining in. Mr. Rego, very good afternoon to you, sir. Thank you so much for joining in. Let me just start off with what we've seen. We're in the last week of earnings, but what has been the standout sector or a few 2 to 3 names for you? If not for today, what we've seen in the Q1 so far, what's been on your radar that you feel has bucked the trend in this quarter?
Specifically, I think, this quarter earnings has been better than expected. In fact, if you look at 42 companies that have reported within the Nifty itself, right? And if you look at, revenue growth of 19%, and adjusted PAT of around 13%, which is ahead of street estimates. So, and mid-cap also has been very strong. Of course, one needs to see the completion of the cycle, because it's mid-cap's results come a little later there. So I think, interestingly, maybe other than OMCs, broadly, we are seeing, reasonable outlook out there. Okay. And, if you ask me across sectors, we like, the wealth management side, we also like hospitals. EMS is another one, which I think a combination of, initiatives that are, just been rolled out and, also the scale up that is happening. And certain sectors like jewelry, I think, has been a bit of a standout. Okay. And so broadly, I think it's reasonably broad based. And the interesting part is also that finally it looks like, growth in earnings is also coming back to the Nifty.
Mr. Ego, also let me pick out a couple of things you mentioned. One was on EMS, because we've seen, and I don't know if you can talk names, but you had Dixon's as well as the Sirmas of the world report strong earnings, give very strong momentum as well going forward. While you had Keynes Tech, the stock actually was down today, has recovered now, but therein lies the concerns on cash flow. So do you feel there is a clear divergence in terms of the top winners as well as losers in this particular quarter for the EMS space, and anything that you particularly like from that space?
So I don't get into stock names, but yes, it's always important, to look at, which are pulling ahead. And I am in line with, some of the things that you said. I think Sirma and all have posted good results. I would still think that it's too early to say, for one quarter, whether there's a pullback there. But I think the sector as a whole, because of the PLI scheme that is there, and also some bit of stabilization on the global side, I believe that will go along.
So Rego, you also mentioned that jewelry as well as hospitals are a couple of spaces that stand out for you. Both of those where you've seen some valuation comfort largely vanish away over the last couple of quarters, last 2 to 3 quarters. You've seen for the multiple hospital names, the bed capacity has come through, but we did see a couple of misses right in the hospital space because the depreciation was the key focal point. So when you look at jewelry, when you look at hospitals, the valuations have caught up. How are you picking your winners now? Are you looking at a little more bottom of the barrel, number 2, 3 players? And is that how you are going about this compared to the larger players?
Yes, so definitely we have been looking at the mid and small caps, and that has been a bit of a contrarian view that we took right from Feb, March, where we of the view that we would start seeing the mid cap and small caps outperform from a period where they were right at the bottom. So that is definitely the case. So that's true both for jewelry and for hospitals as well. So I think there's a lot of value beyond the top names, and they have run up definitely because of the price spike. There is a move as well. Okay, but I believe that this is a bit of a sustained move that can happen over a longer term. Of course, where there have been real crazy spikes, then there will be some consolidation. But the medium to long term view is still very positive.
And just one final question, because of paucity of time, a 30-second answer if I can from you, Mr. Rego, because you mentioned the mid and small cap space is what you're looking at. We've seen certain segments like auto ancillaries, those that have bucked the trend in this particular quarter. Apart from that, anything that you are watching out for?
Yeah, so I think within that, we're actually watching out a little bit for financials. I get to see how they pan out, because I'm saying even from the negative side, the NBFC, there's some bit of news out there. So I'm just saying from the watchful side as well. Yes, auto ancillaries, and I think will hopefully go forward and take on growth out there. Beyond that, it's I think the same names. Aviation we are watching for. If oil prices cool off a little bit, I think that is something that will benefit. But of course, there's one name there which is possibly the only one that one can invest in. Okay, and so I think that's broadly it from the sectors apart from wealth management and hospitals and EMS, jewelry.
Got it. Well, that just puts in financials as an interesting name that you put out, and thanks so much for that, Mr. Nego. Thank you for joining in, because it's a perfect segue into our next conversation, because we've seen public sector banks post a very strong quarter-one results. They are driven by healthy NII growth as well as improving asset quality trends. We've seen SBI come out with earnings on Friday as well. PNB, Union Bank, Indian Bank all reported robust results. But let me get in my colleague Piyush to round about what we've seen in the quarter one for the public sector banks. Piyush, over to you.
That's right. Top PSU banks have reported a robust set of numbers in Q1 FY27. If we look at the NII growth, it has been, after a long period, it has come in the double digit. If we see SBI's NII grew 14%, Indian Bank's NII grew at the pace of 17%, BOB's NII was up 10%, PNB 2%, and the profit after tax also across banks has grown quite sharply in the range of 10 to 213%. Now, Bank of Baroda was an outlier in Q1 because we are aware that the bank had made around 5,600 odd crore of provision for the settlement that it agreed with in the NMC case. So that is where the bank's profit has gone down quite sharply by 72 odd %. But other banks have reported strong, robust growth in the net profit in Q1. If we look at margins as well across banks, except for Bank of Baroda, the margins have grown by around by 3 to 16 basis points if we see on a quarter-on-quarter basis. So quite a sharp rise in margins as well. The net NPA across banks has been, coming down by around 1%, and BOB again in this case is an outlier. It has seen net NPA rising 5 bips Q on Q. If we look at the advances and deposit growth, after a long time, banks have touched higher teens growth. SBI, in fact, recorded 19% YOY growth in its advances and has targeted 14 to 15% sort of a loan growth for the full financial year. Now this bank, growing at the pace of 14 to 15% at a base of 60 lakh crore rupees. So we can imagine the extent of credit appetite that is there according to the bank's management. And except for BOB, top PSBs have performed extremely well in Q1, both in terms of margins, asset quality and business growth as well.
Well, thanks for that, Piyush. But let's take this conversation forward and get you some more perspective. Dhyanna Vaidya, research analyst at Axis Direct, now joining in. Ms. Vaidya, very good afternoon and thank you for joining in today. It's Puneet this side. Just before we get to some specific names, how have you seen this particular quarter gone by? You've seen almost all the public sector banks' names also come through with numbers. While the stock might not be telling the story, do you feel that they've been a better performer as a whole compared to what we've seen on the private banking side, largely apart from BOB, which my colleague Piyush also spoke about? Would that be your analysis as well?
Good afternoon. So PSBs under our coverage, SBI and Bob. So of course, Bob was a disappointment, especially the miss on the PAT front. But SBI reported a very strong set of numbers in Q1 and a beat on almost all parameters. Very strong operationally as well. No concerns on asset quality. Overall, a great set of numbers. So we continue to remain positive on SBI amongst the PSBs, and we don't see much of downside risks for the 1% of ROA delivery, at least over the medium term. Yeah.
Also, Ms. Vaidya, and let me ask you specifically on SBI as well, because a 19% growth done in quarter one, the management is guiding for a 14 to 15% kind of growth in this year, 10 to 11% on deposits. In your estimates that you're building in, do you feel that's slightly more careful, pessimistic at this point of time, because it's difficult to call in such a geopolitical uncertainty that we are? What are your numbers? Do you feel there is upside risks to these growth aspects, especially what we've seen in quarter one, as well as the commentary that the management has put through?
Right. So Q1 came off a lower base. So we are seeing the higher number in terms of credit growth. So we expect that should moderate going into the rest of FY27. And we expect it to settle somewhere between 15 to 16 odd %, largely in line with management guidance. And growth should remain broad-based. From a deposit standpoint, definitely the FCNR will help in Q2 mobilization. But SBI should be maintaining an LDR of roughly 81, 82 odd %. So deposit growth should range somewhere between 11 to 12% for FY27 and settle at 10 to 11% on a CAGR basis over the next 3 years. Yeah.
And Ms. Vaidya, is the FCNRB deposits having a play, even if in the proportion that it is currently for the stocks under your coverage, both under the private as well as the PSBs? Because we've seen names such as Kotak also get good deposit growth in this particular quarter because of FCNRB, and we've seen that list come through. So is that being a play? Management, of course, of SBI has guided for 6 billion, already mobilized, going to 10 billion in FCNRB. But how are you looking at this as a broader play between both the private as well as the public sector banks, and which could be the key winners to watch out for?
Right. So the larger private banks have definitely have taken a good chunk of the FCNR flows. Within PSBs, SBI has been the leader, no doubt. So we expect that this FCNR mobilization that we are seeing should support Q2 deposit growth. At least in the near term, we see that happening. And that should eventually also support the credit growth for these larger banks as well as SBI. To an extent, we expect that to moderate slightly from, or rather settle down from end of Q3 onwards. But overall, larger private banks still look better placed in terms of deposit as well as credit growth. Yeah.
And just in terms of your picks from the space as well, because you mentioned you have coverage on SBI and BOB on the public sector banks as well. Within the private, which ones do you have under your coverage, and what would be some of the top picks as well? Because we've also seen decent numbers come through from the second rung private banks too, the likes of RBL amongst others. So which one are you under your coverage, and which would be your top picks for now?
Right. So, and in the larger private banks, we have HDFC, ICICI and Kotak, and our preferred picks are ICICI and Kotak. So ICICI is absolute outperformer, very, very consistent performance in Q1, and we've seen that over the last few quarters, and we expect that to continue. Amongst the mid-sized banks, though we've seen outperformance versus the larger private banks, we continue to prefer Federal Bank and City Union Bank. Yeah.
Also, Ms. Vaidya, just a question, because you've been tracking the sector for long. I don't want to directly ask on this MDR part, because we're still working out how that would function. But just in terms of when a structural change like this comes, I think way back in COVID, you saw certain banks struggling on having that particular IT investment through. You had the clear winners come through as that. Whenever there's a structural change like this that comes through, generally, while it takes a few quarters, they do come out on the other side much stronger as well. Do you feel that, while not directly, there could be a big beneficiary, and I'm talking about the legacy bigger banks here, where you are talking about the Paytms as well as the newer players on MDR and the big benefit come through. But do you feel that this could be an important moment to look at, especially for the legacy banks, and how they are looking at this change, and not directly on this, but a structural change when you compare it to what we've seen over the last few years, last 7 to 8 years in terms of digital change that they've adopted? How are you looking at it structurally from that standpoint?
We've not worked on the MDR part.
No, that's why it's a more structural question, if you see of how the legacy players could fare through and how they look at this. Because right now, I think the market is looking at the newer age players.
Right. So I wouldn't have a structural idea, at least from a larger banking or a banking standpoint. So I would refrain from commenting on that.
Okay. And just one final question as well. You mentioned about the second run banks that come through as well in terms of Federal amongst others. Do you feel that the valuation currently offers some comfort, and what would be some of the target prices that you have on those?
So yes, Federal, definitely we're liking the new management strategy when it comes to how it's playing out and how they're delivering on that strategy as well. From a valuation standpoint, we believe that the run-up we've already seen in Federal, but we do see some upside there. Our target price currently for Federal is 400. Amongst the other mid-sized banks, we prefer CUB, and we see some improvement in ROA delivery. It's been 1.5% plus consistently for CUB, and we expect it to remain healthy at 1.5 to 1.6 over the medium term. Valuations for that as well, we're seeing some catch up there, but our target, we still have a buy recommendation on the stock.
Ms. Vaidya, we lead with that. Thank you so much for joining in and giving us your views across a whole bunch of stocks as well as spaces to look at in the banking space. Appreciate your time today. But Keynes Tech is the other counter in focus. Let's pull up the intraday chart, because what you saw is a 7 to 8% downtick at the start, and then that recovery come through. Now, results were decent in terms of the revenue growth potential of 40%, but the smart metering receivables continue to be a pain point. Almost at now 1,300 crores is actually inched up on a quarter-on-quarter basis. There were, of course, the other concerns that net debt has gone up, operating costs have gone up, but we spoke to the management today on what they felt about the receivables as a big concern in the smart metering space, and could hiving off that particular vertical or some part of it be on the cards as well. Listen into what the management had to say.
Keynes is going to be one of the key players who has got a distinct advantage of making the meters, installing the meters, and at the same time doing the services for about 8 years with software. So, but we understand the pressures on working capital. The management is already working on models of different models to ensure that we spin off a part of the company as an SPV so that we don't have this much of impact. We are working with bankers, we are working with some investors to make it happen, and we will come back to you soon on this.
That was the management of Keynes Tech as well. Will be something to watch over the next couple of quarters, how that cash flow concerns shape up. But let's focus on some of the earnings that I spoke about at the start of the show. Some of them had a mixed number, but let me get in Shivam to get us some perspective of the ones that are standing out for now. Shivam, over to you.
Yes, the first stock in our list is Titan. The company has posted a strong quarter-one numbers. In fact, the revenue of the company has been up around 29%. The PAT of the company has also gone up by around 63%. The mainly the strong beat in the numbers is mainly driven by the jewelry segment, which has the contribution of around 38% that has grown in this quarter. Also, the margins that has remained around guidance. Second stock is Hitachi Energy. The revenue of the company has gone up by around 75% and profit has almost more than doubled. In terms of order execution, we have seen a strong order execution this quarter, and the highest ever order backlog of the company stands at around 32,000 crores. Third stock is the Raymond Realty. The revenue of the company has gone up around 38%. However, we have seen a decline in PAT of around 19%, and that was impacted due to higher finance cost and of land, property and construction cost too. In terms of EBITDA margin, the company is on track to deliver the margin of around 17 to 19%.
Got it. Well, thanks so much for that, Shivam. But viewers, that's all the time we have on this edition of Markets at 12. Thanks so much for watching. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday.
Hello and welcome to NDTV Profit. You're watching Trending Stocks from the NDTV Profit Suzlon studio with me, Hiral Dadia. Let's quickly take a look at what's happening in the markets as we speak. If we could just pull up the Nifty 50 on the screens, and then we look at the sectoral heat map as well. A good amount of recovery that's come in from the day's lowest levels as we speak. We're above the 24,600 mark, seeing gains of nearly 0.2%. You know, it's telling you that the breath is not very strong, but the recovery seems to be pretty okay. Let's look at Bank Nifty as well, and then we look at the sectoral heat map and then the Nifty 50 heat map. In terms of Bank Nifty, there is that little bit of underperformance as compared to the benchmark indices, trading kind of flat. You can't really say with an absolute negative bias. We'll see what's actually pulling that lower as well. Let's look at the sectoral heat map, and then we will pull up the Nifty 50 heat map on the screens and then look at the broader markets. In terms of the sectoral heat map, real estate, interestingly, has bounced back in trade today, so that is pretty interesting. 1.9% is the kind of gains that you're seeing there. You have the mid-cap index, which is up 0.7%. Consumer durables, IT, defense, auto, private banks are the ones which are in the positive, along with metals as well. What's losing out? It's the PSU Bank Index, which is actually keeping Bank Nifty on the tender hooks. So on one side, you have the PSU Bank Index, which is down 1%, and it's mainly on the back of the reaction that we are seeing from SBI. That's what is the interesting factor there. Your healthcare is also seeing a correction today, 0.4% lower. Oil and gas has been on the tender hook since the time you have the West Asia crisis, and pretty much moving in tandem with what's happening with oil prices, because that is what is concerning. Let's just pull up the components of Nifty 50 in terms of contributors, and that will tell you what exactly I am talking about. That's the heat map. We'll go to the contributors as well. SBI on one side, 1.5% lower, but Titan, Grasim, Tata Steel, Trent, Tata Consumers, BEL, Bajaj Finance, few good gainers coming in there. Let's just look at the contributors of Nifty 50, because I want to establish the fact of what an SBI is doing. There you go. 15 to 16 points is the kind of contribution to the downtick by an SBI, whereas you have a HDFC Bank which is contributing equal amount, and that's the reason why you're seeing that even Stevens action on Bank Nifty as well. No major movement, because both of the heavyweights from the private banking space and from the PSU banking space are playing their roles. Titan, ICICI Bank, Infosys trying to pull Nifty 50 higher, but you have a Reliance Industries, ITC, and a Bharti Airtel who's contributing along with the SBI to the downtick in today's session. Let's just quickly pull up the broader markets as well and see what the mid-cap and the small-cap indices are doing in trade, and if there is any breadth that's building up on that front. Mid-cap 150, there you go, 0.5% up move coming in there, nearly at the day's highest levels, a mild correction from there. And likewise, the small-cap 250, which is up 0.2%, but not a major broad breadth that you're seeing in today's session. In fact, let's get in Nilesh Jain, Head AVP Technicals and Derivative Research at Centrum Broking. Nilesh, welcome to the show. Always a pleasure to speak to you. Lots that's happening in the markets right now. Before we go to our watch list and the rapid fire, let me take a quick question with you in terms of markets. What are the levels that you will be tracking, and the trend that you're seeing between the private banking space and the PSU banking space, because both of them inversely reacting today?
Very good afternoon to Hiral. As far as other indices are concerned, first of all, we look at the Nifty index. So we have seen a very good recovery from the lower levels, and due to which it managed to pass 24,600 marks. So overall, we expect Nifty to trade in a broader range of 24,500 to 24,700. So that's going to be a 200-point trading range for the Nifty. Coming to the Bank Nifty, the good is that today it has taken a very strong support at its 200-day long-term moving average. That is placed at 57,480, and from that level, we have seen some bit of rebound of close to 200 points. So we expect Bank Nifty to trade in a broader range of 57,500 to 57,900. So that can be a broader 400-point trading range for the Bank Nifty. Now today, we are witnessing some bit of selling pressure in the PSU banking space. On the other hand, if you see private sector banks, specifically HDFC Bank, which is leading from the front, that's the reason we are witnessing a strong setup in the private sector banking space. But overall, looking at the setup in the PSU banking space, these actions can be used as a buying opportunity, and we can expect going forward some bit of rebound in the PSU banking space as well. Now coming to the private sector bank, ICICI Bank and HDFC Bank, both these private sector banking counters are looking strong on the chart. So the overall broader setup looks positive as of now, but we are expecting some bit of rebound in the PSU banking space as well going forward.
Okay, so that's what the markets are looking like right now. Stay with us. In terms of the rapid fire, now Aarti Pharma, let's pull up that one on the screens. A strong Q4. They've actually had a record CDMO revenue number as well, 20% up move coming in there. I know there is no chance of a trade in this upper circuit, Nilesh, but once the circuit opens up tomorrow, would you still be a buyer with this momentum?
Well, absolutely. Very strong breakout. It looks like a breakaway gap today. We have seen the counter has surpassed all key short-term, long-term moving averages. So there are a high possibility that stock may witness further uptick towards 850 and 880 on the upside. So keeping a stop loss below 800, I think today if you get a positive start, that can be used as a buying opportunity, but keep a very tight stop loss at 800.
Okay, stop loss at 800 is what you're watching out for. Then the next one on our list is Sky Gold. Interesting counter, 7.5% up move. Revenues have grown. The profit is up 2.5 times as well. So fundamentally strong numbers. What are charts indicating?
Very strong chart pattern. I would say the counter has been trading in a high top and high bottom pattern, and it has been in a secular uptrend as well. So overall, the structure looks strong for 800, 850 in the near term. Today we have seen the cap up opening count has gone into a slightly over territory. So ideally one should wait for some meaningful decline towards 750, 730. That can be a good entry point, keeping a top below 680. I gold is a buy and decline kind of a structure for 800, 850 kind of target on the upside.
Okay, so that's with regards to where Sky Gold goes as well. Nilesh, stay with us. We'll do the second part of the rapid fire after we speak with the management of Garware Technical Fibers. Let's pull up that one on the screens because a strong set of numbers that have been reported in the first quarter, good revenue and profit growth as well. The stock though down almost 1.3% as we speak. Let's actually get in the management. We have Shashank Gupta, CFO at Garware Technical Fibers joining in. Shashank, welcome to the show and always a pleasure to speak to you. My question coming to you is overall, if I have to look at the quarter, in terms of the numbers, a 31% top line growth, margins also pretty stable. Your profit has grown 21%. So it's a strong beat across factors. What is it that's actually worked according to you? And what were the negatives that you think will improve in the remainder of the year?
So thanks a lot for having me on the show. Last quarter, large part of the growth was driven by synthetic cottage business, and in which our domestic business, geosynthetic business, and aquaculture business did well. And last year, we had some of the issues in aquaculture business as well as sports business on account of USA tariff, which got resolved. So that has helped us in quarter one. So all businesses were doing well. One part which you say negative is, the volatility in raw material prices have been a major concern in quarter one, which hopefully should get resolved in next coming months or coming quarters.
Shashank, let's assume the situation stays as the way it was in the first quarter. Then what are you baking in terms of margins? This quarter it has remained stable. Do you think you will be able to sustain at current levels with everything remaining as is without any improvement seen? Or do you think there is a possibility of a downtick coming in there?
So we have an ability to pass on all the cost increase with respect to raw material, with respect to freight, transportation cost. With that, we have a, I would say strong inclination that we will be able to have a stable margins for the entire year. And generally, we have been operating at 21% margin for a year basis. And this is where we see going forward, we will be able to maintain.
Okay. Since your aquaculture order flows have actually normalized from what I'm seeing, what is that client pipeline looking like for the rest of FY27, specifically in the European and the Chilean region?
So now European and Chilean market, both markets have been stabilized. And I think last year H1 was largely impacted because of the aquaculture prices, salmon aquaculture prices were impacted. But now the situation is stabilized. We continue to get orders, we continue to manufacture, we continue to supply. So the normal growth in aquaculture should continue. And our overall revenue share for aquaculture is also moving up in this year.
Okay. And what about US? Is the recovery that's coming in the US markets complete, or do you think there is still latent demand that can be still further unlocked?
So US market largely this issue got resolved in last year, February, early March. And we remain focused on maintaining our market share in entire last financial year. That has helped us in quarter one, and hopefully this will continue to help us in rest of the year also. So we should expect a reasonable growth in US market also.
Okay. What about your geosynthesis pipeline? Because what I'm seeing is your domestic infrastructure spends that will remain a tailwind for the company, right? So what are the major projects, government tenders that you're watching out for that will actually fuel your geosynthesis order book for the H2 of FY27?
So as you rightly mentioned, that geosynthetic business continue to get advantage of government spending on infrastructure, roads, railways, and so we are largely beneficiary of a spend done by railways, and railways is our largest client in geosynthetic. And apart from our other segment in slope protection, we work for different infrastructure project. So that momentum will continue. And geosynthetic business has been growing at a consistent rate for last 4-5 years, and that will continue hopefully for next couple of years.
Okay, so let's understand then what the margin trajectory will look like in terms of FY27, because we're talking about the raw material volatility. Your total expenses have surged about 30%. There are polymers which are causing that kind of volatility as well. Second, there is freight and supply chain pressures which are coming in. So then if you have to look at the input cost concerns, and then you have to look at the price pass through as well, because that somewhere happens at a lag to some extent. Would it be right to say that 18 to 19% will be that stable number that you will be able to manage out in FY27 as well?
So as I mentioned that we have an ability of passing on raw material cost as well as freight cost to all our customers in all our segments. Although there is some time lag, but we are able to maintain our margins which was in earlier years, close to 20% for the full year basis. We should be able to maintain.
How about exports and domestic demand as well? Because exports was roughly around 60% of your revenue. So in this quarter, has this ratio shifted because of the strong domestic cordage performance that we've seen?
So if you largely see, we have been almost 60 to 40%, 60% export, domestic 40%. Sometimes this ratio moves between 55-45, but that's how the swing is, but not much from there. So in quarter one, there you may see that it has increased. Domestic market has done well. Aquaculture has also done well. Geosynthetic has also done well. But on full year basis, we still believe that we will continue to have that ratio of 60 to 40 for coming years.
Norway and oil gas integration as well. You mentioned about aquaculture once again. So the acquisition of firms in Norway that have happened, what has been the revenue contribution and what is the kind of synergy or timeline that you're seeing from here?
So first of all, that firm which we acquired in Norway, it operates into value-added rope segment. And that is in line with our strategy of growing value-added rope segment for coming years. That's largely, I would say, mid to long-term strategy for growth. And it right now contributes almost 5% of our revenue, total revenue.
My last question is your capital allocation strategy, because you've completed 110 crore share buyback in June 2026, right? So what is the kind of cash reserves that you're now sitting on? And in terms of future allocation, will it prioritize further buybacks or organic capex?
So we do generate almost 200 to 250 crore rupees a year. Okay, after spending all our capex, and large part of that we give it back to shareholder based on our buyback policy. So buyback is a method of giving money back to shareholder. As long as buyback is tax sufficient, we'll continue to do buyback. Otherwise, we'll go back to dividend.
So it's going to be interesting to watch out for. Thank you so much for joining in. Always a pleasure, Shashank, to speak to you on NDTV Profit. Let's just quickly pull up the intraday chart of Garware High Tech as tech as well. Mild recovery there, but 1.5% downtick on that one. Nilesh, on the charts, how are you looking at a Garware?
Well, Iral, for the past two consecutive sessions, we are witnessing some bit of selling pressure. But if you look at the broader structure, in the last 6 months, the counter has formed a kind of a rounding bottom formation. So we can expect a gradual uptick, maybe towards 850 to 870 in the near term. But not advisable to buy at current level. Better strategy would be to wait for a dip towards 780, 775. That is a good entry point. Even at top below 745, one can go long for a target of 850 to 880.
Okay, so that's Garware Tech. But moving on, you have the second part of the rapid fire, which is back in action. Hitachi Energy. Now, that counter is interesting to watch out for in trade. It's bagged its first best order. The stock is up nearly 10%. In fact, brokerages are also positive. Target price of upwards of 40,000 is what you're looking at. Nilesh, on the charts.
Well, technically, the structure is also looking strong, and we can expect immediate target maybe around 38,000, 38,500 in the near term. The counter is likely to move towards a new record high from here. So, buy and decline should strategy. Counter is already witnessing a spurt of over 10%. So the risk and reward is not looking favorable at current level. So can be bought on declines, keeping a stop loss below 34,500, and near-term target could be somewhere around 38,000 plus.
Okay. Jamna Auto, your first quarter has been hit by West Asia crisis, and the stock also has been hit by the West Asia crisis, 10.5% downtick coming in on that one. Would you say this is an opportunity to buy a Jamna Auto on the charts, or are you seeing further downward pressure?
Well, Hiral, today we have seen a big cut opening, and after that sharp cut, the good part is that counter has taken support at its 200-day long-term moving average. It is placed at 123. So some bit of a pullback move can be seen maybe towards 135 to 138. But one should wait for some bit of trend reversal confirmation. If somebody is already holding the long position, can keep a trailing stop loss at 123.
Okay, 123 is what your trading stop loss should be. Ashapura Mindchem, that stock is under pressure in today's session. Higher logistic cost and input cost has hit the first quarter. 11% downtick coming in on that one. Nilesh, what's the strategy?
Well, it's an avoid. Counter is witnessing some bit of selling pressure, is given a breakdown as well. So as long as it is below 690, so that's the immediate hurdle. So till the time it doesn't cross it above the same, so it's an avoid for the time being, taking any contract.
Okay, Aditya Bitla, fashion retail. Margins have dipped, net loss has widened, stock down 3.5%.
Similar kind of a setup, slightly a weak setup, I would say, and we expect some bit of consolidation in the range of 65. So that's the range as of now. Not looking attractive as of now, so it's an avoid.
Last one, Gina Seco Life Care. I know you wouldn't have too much of data on this one, but profit booking is what is coming in post a strong quarter, and hence I wanted to talk about this one. Anything that you're picking up, a 8% downtick on Gina Seco Life Care?
Look sideways, and it is also trading below all long-term short-term moving averages. The only positive I can see on the chart is that it has a very strong support at 500. So keeping that as a stop loss, if somebody is already holding the long position, can continue to remain long. And in terms of taking a fresh entry, I think one should wait for a confirmation that will come if counter breaks above 570. So till then, we're taking any fresh entry at current level.
Okay, so that's with regards to where we're talking about Gina Seco. That stock is down almost 7.5% as we speak. But let's pull up Hitachi Energy. It was a part of our rapid fire as well. It's a very interesting counter with the way the quarter has been. And you have Nomura, which is absolutely bullish on Hitachi Energy as well. I'm very interested about the stock price, the target price that they have on the counter, and the kind of landscape they are building in for the transmission sector as a whole for Indian companies from FY26 to FY30-31. In fact, Varsha, my colleague, was standing by to talk to us about the quarter gone by, what's the outlook looking like, and what our brokerage is making out of it. Varsha, good afternoon. A very interesting note coming in from a Nomura as well. So first up, take us through your findings in terms of really a 10% up move that is warranted on the back of the earnings, and what brokerages are making out of it.
Well, absolutely. So a good set of numbers when it comes to Hitachi Energy, and hence we are seeing that spike in the stock price. Talking about the numbers, the revenue growth or the growth overall that you are seeing is of course on the strong execution across projects which drove growth. You have cost control which supported earnings, and operating leverage actually drove profit for the company. Data centers is expected to drive that incremental growth when it comes to Hitachi Energy. Overall, on the numbers, I would say revenues were up 68%, EBITDA at 364 crore, margins were almost 14% versus 10-11% last year, and net profit was at 294 crore. Onto the order book, if I were to talk about the base order inflow rose 26% year on year. There was a strong demand from data center which offset weaker transmission order. Order backlog, if you see, reset around 32,200 crore, which is 4x of FY26 revenue. Well, BESS, if you see, is the new growth leg. First BESS order has been secured by the company, and onto the export business, if I were to talk about, that will become the meaningful contributor to the overall revenue, which accounts today, if you see, 25% of the backlog. Export pipeline, if I were to talk about, is very strong. Talking about Nomura, which has initiated coverage well with a buy rating, and they see a robust outlook when it comes to the data center, the BESS opportunity, the HVDC leadership also, which is the next growth trigger for Hitachi Energy. And of course, market tailwinds, if I were to talk about, will benefit from data center expansion, grid automation, and transport infrastructure. So overall, a good set of numbers, bullish brokerages is what is the reason that you're seeing, the spike in the stock price.
Thank you so much for that. In fact, Narendra Solanki, Senior VP and Head Fundamental Research at Anand Rathi joins in. Narendra, welcome to the show. Always a pleasure to speak to you. Strong moves coming in for a Hitachi, and the sector as a whole has been buzzing as well. How are you looking at a Hitachi? Would you still recommend buying at current levels with the way valuations stack up vis-a-vis what the sector is doing? And do you like any other counters in this space?
Yeah, good afternoon. Definitely, the sector is one of the buzzing sector, and what we've seen is that the results as well as orders are very strong. Orders momentums are very strong for all the companies in transmission and distribution segment. However, Hitachi Energy, we do not have any recommendation right now, but if you see the results have been very impressive, and the order book is also at historically highs. Plus, the company has also secured BESS orders of about 165 megawatt. So this is the first order of its kind, and the kind of diversification it is doing to its order book, apart from pure play HVDC, it is also catering to different segments like BESS. So that is a good diversification. So it reduces the overall concentration risk. So everything is going good for the company. Now coming to the valuations, definitely a lot has been already priced in the valuations, and right now it is trading at a premium valuation. So things are positive. We are also positive on the sector, but valuations definitely looks rich, and one should await for the opportunity to enter in the stock whenever some knee-jerk reaction happens. Otherwise, we are very much positive on the transmission and distribution segment.
Okay, so that's with regards to where Hitachi Energy and the segment as a whole goes. The other stock which is actually in focus today is Ola Electric, down 2.5%. The company has reported numbers as well. But let's understand from my colleague Puneet, who tracks the space pretty closely. Puneet, last quarter, I remember when the numbers came in, or more than the numbers, it was in terms of the auto sales data that was coming in. It was seeming very encouraging to see the recovery that was happening with regards to where Ola goes. If you have to decode the first quarter, what are the key highlights that you've picked up, and what is that negative what the street is not really liking?
Well, thank you for that. As you mentioned, it's been a weaker quarter for the company. Revenue is down almost 45%, and EBITDA loss is also, while coming down, has impacted the company. So the EBITDA loss at 165 crores is certainly having an impact on the stock price today as well. But there are four key concerns that you've seen. The one has been on gross margins, down by 816 basis points, just on a quarter-on-quarter basis at 30%. And the management has mentioned that they feel that it could take a couple of more quarters and it would be in a similar range. So you could see another year where gross margins are impacted. The other factor that they've highlighted, that the average selling prices were down massively in this quarter at 114,000 rupees per unit versus 131,000. It's a very sharp drop just on a quarter-on-quarter basis yet again. Management has mentioned that this could come back to 130,000, but yet again, something to watch. Also on free cash flow, it's negative by 350 crores, ninth consecutive quarter where you've seen pressure on free cash flow. And finally, on the cell business as well, you might not see revenue contribution coming in by quarter 2 or quarter 3. So they've highlighted that the near-term business will heavily lean on auto. You mentioned about market share that improved from 5 to 8% in quarter 1 versus quarter 4, but has dipped again to 6.9%, and hence brokerages continue to be slightly more bearish. Kotak has a target price of 20 rupees, Citi at 26, but both mention that the business is leaning heavily on the auto side. Volume scale will be very critical in the near term, and hence there's still a lot to prove for the company in quarter 2 and quarter 3 at this point of time.
Okay, thank you so much for that. Narendra, your view when it comes to Ola and the entire two-wheeler EV space?
Yeah, on Ola, we do not have any active recommendation, but yeah, definitely we are positive on two-wheelers space, both conventional as well as electric. In terms of overall preference, we prefer the players who are offering both electric as well as conventional in the two-wheeler segment. Now, coming to the company specific performance, I think the recovery has been there for the Ola and the 40,000 volumes we have been seeing, but I think it is still very low, and the kind of momentum which the company needs should be more. Plus, on the sell front, I think it will take 2-3 more quarters to be able to show any decent kind of performance from that point of view. So in the meantime, the volume growth should also improve aggressively for the company. So right now, the headwinds which the company faces, especially in terms of the cash flows, negative cash flows, and the profitability margins would drag down the performance, especially in an environment where a lot of competition is also emerging from players like TVS and Ather.
Got it. So that's with regards to the two-wheeler space, but it's completely out of time. Thank you, Narendra, so much for joining in. Always a pleasure to speak to you. But that is a wrap on this edition of Trending Stocks from the NDTV Profit Suzlon studio. We will be right back. Lots more lined up on lunchtime trades. Up next with Shreyansi Singh. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The GIFT City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at GIFT City, and NDTV present Global Connect, only on NDTV.
on the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
Benchmarks start the week on strong footing with Nifty hovering close to 24,600. Realty, defense lead gains. PSU Bank, oil and gas meanwhile on the back foot. Titan shares surge after a strong June quarter performance. Brokerages remain positive, pointing to robust jewelry growth, healthy margins and a favorable earnings outlook. Paytm stock jumps after Bernstein raises its target price to 2,200 rupee above the company's IPO price. The brokerage has factored in the new merchant discount rate regime, expecting it to lift payment margins by 3 to 4 basis points and boost FY30 EPS by 30%. Ola Electric shares fall as brokerages remain cautious following its Q1 results. Weak margins continue, losses and cash burn really remain key concerns, while Kotak retains a sell rating. Goldman Sachs holds its neutral view. The Nifty 50 is set for a September rejig with the official announcement expected after market hours today. BSE is seen entering the index while Wipro could exit, potentially triggering flows of $741 million into BSE and $246 million out of Wipro. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And whether you talk about Nifty 50 or Sensex for that matter, some bit of gains that they're just about managing to clutch on to right now. So just about 17 odd points higher when you talk about Nifty 50, and Sensex also about 50 odd points higher. And that really compares with somewhat better momentum coming in when you talk about small caps and mid cap indices. So when you talk about small caps, that 30 odd point gain is something that you're seeing coming in. Mid caps are in fact 120 odd points higher. So some bit of momentum that you're seeing coming in, at least in the broader indices. Now, when you talk about the sectoral picture, it's actually quite interesting because it's very, very mixed right now in terms of the sectoral contribution. So you do have realty and auto that are maintaining some of those gains. IT as well on strong footing, consumption, India, defense, some of the other sectors holding on to a tinge of green. What's not doing so well right now is PSU banks, oil and gas, pharma, energy, FMCG. So all of those sectors actually a little bit on the back foot as we speak. Quickly, let's also talk about some of the Nifty 50 gainers and losers as well. So what's doing quite well after its numbers is a Titan as well, 2.9% in fact uptick coming in. And you of course do have the management that has said that they do aim to double the top line in the next 4 years. So some bit of positive commentary really helping Titan, Grasim Industries, Tata Consumer, Tata Steel, something like a Shriram Finance and Trent also in good footing. And it's yet again Bajaj Twins as well that are on strong footing. Speaking of, the counters on the flip side that are under a little bit of pressure is actually something like an SPI, where you're seeing a little bit of profit booking coming in. NTPC, Hindalco, one of the counters where the brokerages in fact are quite bullish, but nonetheless you have that 1% loss coming in for something like an Hindalco as well. And it's actually heavyweight Reliance also that's a little bit under pressure, which seems to have been why you've been seeing a little bit of a pullback also come in when you talk about the benchmarks. In fact, some of your IT names also trading with a little bit of pressure right now. So something like a TCS, a Wipro, some of those counters also a little bit on the back foot. But that said and done, let's also quickly talk about the entire complex when it comes to commodities. Now, when you talk about oil prices, they seem to be extending gains right now in terms of the Hormuz uncertainty. And that's the key talking point that we'll be talking about right now in just a bit. But right now, you do have those elevated levels of somewhere close to $84 a barrel. And since there's been a gain for much of today's session right now, you're seeing some of those elevated levels come in for both Brent and WTI. So that's something that you're looking at. Supply buffers are still dangerously thin. So when you talk about the setup, that's actually quite healthy. Bad for us as consumers. But when you talk about oil prices, some bit of momentum that you're seeing being built as well. When you talk about gold prices, that momentum seems to be missing, but don't let that distract you from the fact that gold did gain over 7% last week. So you're looking at some elevated levels here itself, and it does remain above the 50-day moving average. Let's also get chatting in terms of the way forward from here. In fact, Anuj Gupta, commodity expert, joins us on the show right now. Mr. Gupta, a very good afternoon to you, and thank you so much for taking time out and joining us this afternoon. First things first, just wanted to try and understand what you think about the price levels that you're keeping a check on when it comes to oil prices, because you've seen some of that momentum really being built, and there was a pullback, there was a de-escalation of sorts, and you were looking at, a tale of two triggers coming in right now when you talk about oil prices. So what kind of levels are you looking at, both on the downside and the upside?
Hi, good afternoon. In last week, we noticed that crude prices corrected almost 10%, but this week, we saw a de-escalation is not there, and even the escalation between US and Iran is there on some conditions and on some, the queries regarding the Strait of Hormuz. So still, Strait of Hormuz is not open and not clear, and that will impact on crude prices. So we are expecting this escalation will support the crude prices, and crude prices will remain on a bullish mode in this week also.
And it is quite interesting to say the least in terms of the setup, right? Because the supply buffers are dangerously thin, and that's something that you're looking at as a very critical factor as well. So if this just about continues, right, let's assume that there's no escalation of sorts, nothing substantially changes, but if this continues for a couple of weeks also, in the kind of flip-flops that we've been seeing, in the kind of uncertainty that we've been seeing, and some of those supply factors as well, what kind of levels are you then penciling in if, it's status quo really?
See, if there is any de-escalation between US and Iran, we can say that that will be, that will put pressure on crude prices, as Mr. Donald Trump is not looking to increase the escalation between US and Iran due to the upcoming elections. But Iran is still on that page. They are not agreed on the US conditions, but they are putting their own new conditions, which are, I think, not acceptable by the US. So that is the point where we can see some escalation. And due to this, in today we have seen some appreciation in the crude prices. So expecting that crude WTI may test $78 to $80 and Brent may test $82 to $85 in a very short run.
And just a quick word in terms of Chinese demand also remaining relatively soft. Do you think that that's going to be a substantial concern for the market, or do you think that the market is going to be focused on the supply factors and the geopolitical commentary right now?
Yeah, exactly. The Chinese demand and upcoming, winter season demand is also expected to rise from here, and that will be supportive for the crude and gas prices. In recent days, we saw that the China is going to increase their demand to hold the crude oil. So I think that will be supportive for the crude oil prices and natural gas prices.
That and the entire bit of uncertainty really coming in from the US saying that it's semi-negotiating with Iran as well. So that's something to keep an eye out on. But speaking of which, let's also talk about gold prices. A little bit of steady momentum that you've seen come in. But, that's against the backdrop of a 7% gain last week. And some of those elevated levels that, we were worried about, that entire range-bound trade. And it seems to have decisively broken above that right now. Do you see this momentum really sustaining for gold?
Yes, definitely, because the correction in dollar index and some relaxation in bond yield providing the support to the gold prices. And even we saw that many central banks, particular Bank of Korea, Bank of China, PBOC, both are accumulating gold to increase their holdings. So that will supportive to the gold prices, and we are seeing that gold trading on a 5-month high level at 1,52,000 domestic market and $40 per ounce in the international market. So these expecting further upside momentum in gold prices, and we are expecting that gold may test 4,370 to $4,400 per ounce in a very soon.
Absolutely, and your word coming in terms of China gold ETFs also extending some of that streak as well. You do have central bank really adding somewhere close to 640,000 ounces as well of gold. What do you have to say about that? Because it seems to be at a slower pace this year as compared to 2025, but it's a trend nonetheless.
Yes, definitely. This is slower pace due to this war issues, but they are saying that they are like to increase their gold holding, and even for the example, Bank of Korea is saying that they are accumulating gold after 13 years due to this in the concern of inflation and uncertainty. So every central banks increasing their holding, but this is a little bit slow down on a slower pace, but expecting to increase this pace in a coming time because they are expecting some inflation and the geopolitical concerns. So, and gold is the only currency, only the product which help to come up these inflation issues. So I think other central banks also increase their holdings in the coming time.
Absolutely, and very, very quickly, right before we let you go, just in terms of fresh buys as well, this is something that we've been talking about as we're gearing up for some of that festive demand to also come in, which also coincides with gold also breaking out of a range and some of that steady momentum that we've been seeing. So your word coming in on fresh buys.
Yeah, definitely. In India, there is a festival season, and I think this will, increase the demand of the gold. So expecting the festival demand will support the gold prices. And initially, for a shorter term, we are expecting gold may test 4,400 per ounce, and in domestic market, it may test 1,55,000 for 10 grams.
Perfect. Thank you so much for taking time out and joining us for this commentary as well coming in. When you talk about gold as well as oil, that's the entire outlook as well there. But let's also add another commodity to that list. Talk about sugar prices that are quite, high right now, jumping the most since September 2024, that too, and futures are climbing as much as 6%. So you're seeing quite the rise come in. When you talk about prices, they've hit the highest level since October as well. And sugar is rallying about 14% in just the last 6 sessions as well. When you talk about Brazil export, you've seen a decline coming in, and that's really fueled some of those supply concerns. You're looking at short covering as well, really driving some of the latest price surge. And the market does appear to be slightly overbought after this sharp rally, but it's a rally nonetheless, 14% in the last 6 days that you're looking at. When you talk about the outlook for production as well, you're looking at Europe sugar output that is seen at a decade low. And you do have heat waves that are really damaging the already weakened wheat crop as well. So that's something that you're looking at. European supplies are facing some of that mounting production pressure as well. And you do have El Nino also really threatening some of the key coffee producing regions as well. And Brazil in general, in terms of the supply flows, does remain under pressure. And India, of course, is the world's second largest sugar producer, and that's why it's very important for us to take note of the prices as well and the entire supply situation. So that's the supply picture as well when you talk about sugar prices. But let's also talk about NSE's September rejig that may see BSE enter the Nifty 50 and Wipro exit with implementation slated for 30th September. Soumit, in fact, is joining in with all of those stocks that are going to be in focus on the back of that.
Multiple stocks remain in focus given the fact that today post-market NSE will be coming out with the announcement for the index changes. Now this final adjustment for this will be done on September 38th, but today post-market is what the changes in the index announcement is expected. Firstly, on the Nifty 50 side, BSE is expected to be included in the Nifty 50 index and Wipro is expected to move out of the index. Now because of inclusion of BSE, if that happens, then analysts are seeing an inflow of close to $740 million US, while for Wipro an outflow of close to $246 million US is expected on the back of this exclusion. Apart from that, 6 key changes expected in the Nifty Next 50. Now, given the fact that Wipro is moving out of Nifty 50, it will be included in the Nifty Next 50, and because of that, there could be an inflow of close to around $95 million US. Apart from that, there is Vedanta Aluminium, BHEL, Polycab, Hitachi Energy and Vodafone Idea, which can be included in the Nifty Next 50 as per analysts, and if that happens, then inflows could be anywhere between 143 to 71 million US dollars in these counters. On the flip side, there is Mazgaon Dock, Lodha, United Spirits, REC, Indian Hotels, which could move out of the Nifty Next 50, and because of this exclusion from the Nifty Next 50, there could be outflows of anywhere between 124 to 35 million US dollars in these 6 names. So keep an eye out for these counters today post-market. The announcement is expected.
Absolutely, and thank you so much, Samat, for joining us with that entire list as well. So those are the bunch of stocks that are going to be in focus, but let's also talk about the centre looking to tighten control over mineral-related levies through proposed changes to the MMDR framework as well. In fact, Rishabh is bringing us all of those important details when it comes to this development.
Absolutely. In the Lok Sabha, you have now the government has introduced the Mines and Minerals Development and Regulation Amendment Bill of 2026. This is in the Lok Sabha right now. It will have to also go through Rajya Sabha before these amendments become law. But just a gist of the amendments that the government wants to bring in here. Of course, the main motive is to curb more and more of the state's power on tax demands that they can make via these on these mines, etc. And a reason for that that the government has given is that there are uneven tax levies across mines across various states, and that is a burden on miners. That is has actually for long been an industry concern as well. What the government is now saying is that states cannot impose mineral levies outside of a central framework. Also, unrecovered past mineral taxes, all of those will also be now invalid, and the government wants to bring more and more certainty as well as predictability to mining costs. And this is, of course, to encourage more and more mining in across various states of various minerals as well. So that's what the government is coming out with these amendments to the Mines and Minerals Bill.
Absolutely, and thank you so much, Rishabh, for joining us with all of those details as well. Let's also move on and take a look at the Delhi High Court ordering Meesho to remove alleged counterfeit Sun Pharma sunscreen listings after the drug maker flagged consumer safety and brand concerns. Nimit Dixit joining in with all of those important details as well.
Yes, so the Delhi High Court has come down with a very important order here when it talks about platform liability. Now, Sun Pharma went to the Delhi High Court to say a lot of its products under its name, Photo Stable Gold and Bello Photo Stable, were being sold on Meesho's platform. Now, the kicker here was that Sun Pharma said that actually it's not selling any of its products on Meesho. So where do these products come from? Sun Pharma said that these were counterfeit products sold with the same name on Meesho's platform. It said two things. One, that these products are counterfeit. Second, that the liability here on Meesho is more than just an intermediary platform. It should be as somebody who checks the counterfeit or the genuineness of the products, because once those products are sold and if they don't work well, then the liability of that will fall on the brand reputation and goodwill that Sun Pharma has developed over these many years. Now, the Delhi High Court agreed interimly and has issued an order asking Meesho to take down all these URLs which Sun Pharma provided about counterfeit products sold on Meesho's platform, and all those URLs have to be now taken down. This issued notice on the matter, which means that the matter will be heard. Meesho will be heard. The defendants, who are in this case the people that make these counterfeit products, will also be heard. And also the court is going to look into this further to see whether platform liability and the platform itself, which is not selling the products but on which it's being sold, should be held liable in this case. It's an important ongoing litigation, ongoing feature of litigation that will be examined in this case.
Absolutely, and thank you so much, Nimit, for joining us with all of those details. Let's also move on and look away from that and take a look at some of those stocks that are buzzing away in trade. So something like a Titan is in focus, and that's largely after reporting a strong set of numbers. There you go, that's about a 2.9% uptick really coming in. You do have the earnings beat that was led by robust jewelry growth and margin expansion. Let's also go across and listen in to the word coming in from the management, because they're actually mapping out doubling their top line in the next 4 years. Let's also listen in to some of the other estimates and growth targets that they had.
So I am quite hopeful that high teen to 20% growth rate for watch analog business is certainly possible and maintainable. Eye care had made certain changes. They have been at it for last 4 or 5 quarters, and that started showing results. We are pretty hopeful, strong high teen to 20-25% growth rate coming there also. We have also, disclosed our ambition in last annual analyst day, which we just did in June, that FY30 ambitions we shared, and they were certainly putting us on doubling the revenue in 4 years.
That's the word coming in from Titan. That stock is buzzing away in trade. Let's also quickly take a look at some of the Nifty 50 top losers as well. So something like SBI, NTPC, ITC, Wipro, as well as Hindalco really makes it to that list. So Hindalco is important because of that right now. Let's also quickly talk about the brokerage verdict coming in on this particular counter. In fact, Parth is joining in with that entire takeaway there.
Well, the brokerages are quite bullish on Hindalco after their Q1 results. Starting with JP Morgan, they have maintained an overweight rating with a target price of 1205 rupees versus 1190 rupees per share earlier. They have said that the phase 1 of aluminium smelter will commission by December 2027, with the company being able to see meaningful volumes by FY29. Also, the captive coal mines which they have will see 1.5 MT volumes by FY28, yielding cost savings for the company and directly flowing into the bottom line. Management has also guided that FY27 will be capex heavy both on the India business side as well as Novelis side. Coming to Jefferies, they have maintained a hold rating, raising their target price to 1100 versus 1075 earlier. They said that EBITDA beat estimates by 20%. This was driven by both a sharp recovery in Novelis and a strong performance by the India business as well. However, they expect profitability to moderate from the peak Q1 that we just saw. Now HSBC, which has maintained a buy rating as well, target price of 1430 rupees per share. They believe that Novelis earnings will improve more as Oswego restarts, and there are multiple other catalysts like the Bay Minette expansion and also the capacity expansions in India aluminium business. And lastly, UBS, they have maintained a buy rating as well, target price of 1325. They believe Novelis deleveraging will be a key catalyst with cost savings of up to $300 to $400 million and leverage targeted below 4x by the end of FY27.
And thank you so much, Parth, for joining us with that entire update also coming in on something like a Hindalco. Something else to really watch out for is, of course, the US saying that it's semi-negotiating with Iran as well. So that's also something definitely to watch out for. And in terms of the commentary coming in from Iran, where they're saying that reopening the strait does require the US's cooperation. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी
Brought to you by the all-new Yono, power to every Indian.
Truth Transmission Limited, one of India's leading electrical and electronics companies, delivering application-specific architectures across platforms, now makes an initial public offer of equity shares of face value of ₹2 each for cash at a premium. The 100% book-built offer being offered in a price band of ₹829 to 871 per equity share opens August 10, 2026 and closes August 12, 2026. For details and risk factors, refer to the red herring prospectus.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ
सफल बनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit. with me Soumit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either on the back of price or volume. So let's see what's on this show today. Firstly, we'll be speaking with the management of Eris Infra. Now, the stock is up nearly 25% in the last 1 month, and if you look at the Q1 net profit, that has jumped nearly 4 times on a YOY basis. So what's the way forward is something that we'll try to get the answer from the management today on the show. Apart from that, we'll be discussing stocks like Suraksha Diagnostic. The stock has snapped its 2-day losing streak. Volumes are up nearly 2 times its 20-day average. Atul Auto, now that stock is down. Its biggest intraday fall is something that we have seen for Atul Auto since April 2025. And if you look at the Q1 numbers, the profit has fallen nearly 46% on a sequential basis for the company. So what led to this is something my colleague that will decode to you today. Apart from that, there is Universal Cables. The stock has touched its intraday all-time high, and this is on the back of increased capital expenditure announcement that has come in from the company. And lastly, when it comes to Raymond Realty, that stock has seen its biggest intraday move since March 23rd. Volumes are very strong, nearly 6 times its 20-day average. And obviously, we'll have a fundamental answer to all of these stocks from our fundamental guest as well on the show. That's Tapan Doshi, research analyst with CA-Tapan.in. But before that, let's have a look at the market. The Nifty, it has been consolidating around the 24,600 level. Not much of a movement is something that we have been seeing for the last couple of trading sessions. On the other hand, the Nifty Bank Index, that's down nearly 150 points in trade, largely led by Nifty PSU Bank Index, which is the top sectoral dragger in trade. It's down nearly 1.4%, followed by Nifty Pharma, which is down nearly 0.3% in trade. But it has been a good day when it comes to the small and mid-cap stocks because there is some value buying that we are seeing. And among the other sectoral indices, it's Nifty Real Estate and the Nifty IT Index, which are up anywhere between 0.5 to 1.5% in trade. Now, if you look at the small cap stocks that have been buzzing in trade, Quality Pharma has hit an upper circuit of 20%. Universal Cables up 19%, PIX Transmission up 18%. Blue Cloud, Andhra Sugars, Esther Industries up anywhere between 12 to 15% in trade. On the flip side, Ambika Cotton down 12%, Atul Auto, as I was talking, the stock is down nearly 10% in trade. Raymond Realty down around 9%, TVS Electronic, Advanced Enzyme, Diffusion Engineers down anywhere between 8 to 9% in trade. And as promised, let's go across to Srinivasan Gopalan, the CEO of Eris Infra. So firstly, to start off with, you have maintained your guidance of 35 to 40% revenue growth, despite the fact that in the first quarter, your revenue growth stood at around 37%, and usually second half is much better compared to first half. So why have you not increased your guidance? What is that concern because of which you're maintaining your guidance here?
So I don't think there is any concern. We just want to be conservative on giving guidances to our investors. If you look at it, generally 40% of the sales happen in the first half and 60% happens in the second half. Though we have very good pipeline lined up, we would still maintain our guidance.
You're maintaining your guidance, but there's a high chance that you might exceed that as well. Is that fair to say?
It's if you look at our past also, we have tried to promise less and deliver more. We would like to keep that philosophy going ahead as well.
Now, if you look at the margins, EBITDA margins have increased to around 10.5% on the back of contract manufacturing and the DaaS service. But going forward, is there further room for margin expansion, say over the next 2 to 3 years that you could see?
So see, as of today, if you see the breakup of our revenue, around 53% is contract manufacturing, 10% is DaaS, and the balance is B2B. So, and each 3 verticals are very, very interconnected. So, though we will strive to ensure that there is a 50 to 100 basis points room there. However, we have not changed the guidance, but we can definitely look at a 50 to 100 basis points a room in that.
Your current utilization level is around 65 to 70 odd %.
Yes.
By when do you expect this number to reach 80, 85, 90 odd %? And post that, can we expect some capex announcement to come in?
No, see, we do not have any capex. So that is point number 1. We just give some vendor advances or deposits, which is like 2 months of working capital. So we do not have any kind of capex, and we have always maintained that. But then it's not that we will first exhaust this 100% and then go for new capacities. But even the current capacity, which was around 9 million metric tons, has by itself become 11 million metric tons because the vendors have put additional capacities into the kitty without any additional outflow. So definitely we will be looking for opportunities for increasing the capacities.
But nothing as of planned, you're saying, right?
So we evaluate it on a daily basis. Anything that comes, obviously, we will keep informing the investors and the exchange.
Okay. Also, if you could quantify the EBITDA margin per ton or the contribution margin when it comes to RMC and asphalt, and how these economies usually compare with the B2B supply segment as well?
So let us break this into three, right? The contract manufacturing, which is primarily into aggregates, RMC, asphalt, and bitumen. The EBITDA margin that we do is between 10 to 10.5%. And in DAS, we clock between 55 to 60%. And DAS is around 10% of the turnover. 53%, 54% is contract manufacturing. And the EBITDA on the B2B is around 2.5 to 3%. So that is the broad framework under which the company operates.
Okay. You're planning to take some debt, I believe around 75 to 80 odd crore. Definitely this is not a big amount for the company, but just wanted to understand for what purpose is this, and
everything is working capital. Everything is working capital.
And no plans for equity fundraise?
No. I mean, it's too soon and we don't see the need in the near future.
Okay. Now on the balance sheet side, if you look at your working capital has improved, I believe from 66 days, it has improved to 56 days. Where can this sustainably settle? What is the kind of number that we should expect by the end of FY27? What is your target here?
So the guidance we have always given to our investors is between 65 to 70 days. Okay. Though we have really worked hard and brought it down to 56, 57 days, but we should still keep the guidance between 65 to 70 days as the net working capital days.
Now, if you look at your asphalt segment, as I was seeing, the revenue jump here is quite significant. From 30 crore in Q4, it has increased to 53 crore in Q1, and also the number of customers have increased to 38 from 28. What is the kind of opportunity that we can expect in this financial year and in the next financial as well from this segment specifically?
So see, we are at a run rate of around 200-250 crores. This quarter for asphalt will be slow because of the monsoon, but then we will be around 250 crores by the end of this year.
And just one more thing I wanted to check. I believe the top 10 customers contribute around 45 to 50% of the top
45%.
Yeah. How are you planning to diversify this firstly, and what percentage of receivables is pending from these customers?
So I think let us understand whether there is actually a concentration, right? When we talk about top 10, one of the customers is, say, Capacity, who is a contractor. There are 12 projects in which that money goes, and we have escrows for those 12 projects. So effectively, it is not one project, one customer. So there is already a diversification there, which is currently happening. So as of now, our aim is to go deeper into the relationships that we have, because we have hardly scratched the surface. Our turnover last year was 1050 crores and so on and so forth. So we will go build more relationship with our vendors, penetrate more, and also on the sales side, we will do more business with the L&Ts and our current customer base that you are aware of.
Well, thank you, sir. Thank you for joining us and giving us the way forward for us in Prabal. That was the management. Let's also welcome in our fundamental guest, Tapan Doshi. Tapan, you heard the management, quite optimistic on the growth part. They're saying the second half will be much better compared to first half. How are you looking at this counter at the current valuations?
Well, good afternoon, Sumit. Now, see, if you see the construction demand is quite strong, and again, for them, the market space is quite scaling. There are some value-added service growth. They are actually adding it, and geographical expansion is there. The only thing is the margins are quite thin, and again, working capital pressure is that they are also creating some funds also. So I think there will be some execution risk, but looking at the valuation, I think it's not too much expensive. So currently, if someone is having this stock, please hold this stock.
Okay. The next stock that remains in focus is Suraksha Diagnostic. Strong up move that we are seeing in counter trade today. Also, if you look at the volumes, they are nearly 2 times its 20-day average. What could be the potential reason behind this up move and behind this strong volume? Let's get in Varsha to understand more.
Well, you know, overall, if I were to talk about company has came out with its, so they're gonna, you know, post their results soon, number one. And this company, if you see, offers integrated pathology, radiology and medical consultancy services. Now, talking about the business mix, pathology, if you see, contributes almost 49% to the overall revenue. You have radiology, which contributes almost 44% to the revenue. While onto the FY27 expansion plans, if I were to talk about, they are moving beyond West Bengal, which is their core geography area, they're going to expand to Bihar, Jharkhand and Tripura with one specialized hub in each of these markets. Talking about future growth engines, well, genomics, where every diagnostic company is heading into. Genomics, I would say, is the next leg of growth for every diagnostic company, and so is for Suraksha Diagnostics as well. AI diagnostics, advanced radiology and regional expansion beyond West Bengal are some of the growth drivers for this company. Talking about the guidance, they are expecting almost 15% of revenue growth when it comes to FY27, with EBITDA margin expected at around 33%, and the long-term margin aspiration remains at 38 to 39%. Now, why margins won't expand immediately? That's one of the key concerns that every investor has. So one is the new centers, if you see, carry pre-operative costs and rentals and employee costs are being included before revenue ramps up. So this is one of the reasons why you may not see 38 to 39% of EBITDA margin immediately, but 33% is what management is targeting for FY27. So overall, results and of course the growth drivers that the company has are some of the reasons why you're seeing stock in bust today.
Right, thank you Varsha for that. Let's get in view from Tapan. Tapan, ahead of the result, we are seeing this kind of a move coming in. What are you catching up on this counter? Anything to do with the other new kid on the block, Mobilo Diagnostic? Anything in common with that you can see?
See, if you see the last 1 year, it's not been so great on the profitability front for Suraksha, but I think the expectation is quite good for this quarter. And I think that for next quarter, next year, I think things will be much, much better. If you see the B2C diagnostic is quite strong. They are doing network expansion. Currently, they are not geographical at one place, but I think they should overall spread across the country. Operating leverage potential is already there. Again, you see that it is an asset-light diagnostic model. So looking at 93% is B2C model, I think margin will be a little bit pressure, but overall execution also we have to see. See, valuation is okay, but I think looking at the uptick, I think I'll wait for the result.
Right, we can get, I guess, Tapan Doshi back in line in some time. But let's move across to Puneet to understand, despite the increase in revenue that we have seen for Atul Auto, why the stock is down? Is it because of the margin pressure, higher raw material cost that has weighed on the profitability? Let's get in Puneet with more details.
Well, thank you for that. It's definitely a weaker show by the company, especially on the EBITDA margin side. Now, in terms of revenues, they are actually up 44% on a standalone basis. The EBITDA is up only 11%, and hence the margins have come in actually at 4.9% versus 6.3%. So you've seen pressure come through because of the raw material cost impact. Net profit hence is down almost 34% in Q1. Now, when you look at the three-wheeler sales has actually gone very strongly on a YY basis. So it's actually up by 42% on a YY basis, but you've seen pressure come through because of a higher raw material price impact, and hence the RM to sales has also inched up materially. The other factor that the July EV sales were down by 16% on a YY basis, another key factor to watch out for, because while the three-wheeler ICE sales have continued to grow momentum, the EV sale has started to lag off in that, and hence when you also look at the market share for the company, last year was just about 2% versus the larger players that continue to dominate in terms of market share. So you have Bajaj Auto, which are at 34% market share, followed by Mahindra and Mahindra at 8% and Piaggio at 6.6%. But Atul Auto comes the way back down in the EV sales mix essentially with just a 2.3% market share, and hence could be a business that had a lot of strong growth prospects, but haven't been reflected at least in the numbers for now, and hence stocks continue to be under pressure. The raw material price impact, if that continues in Q2, will be something to watch.
Right. Tapan, how are you looking at this counter Atul Auto? Despite the fact that EV penetration has been increasing, their revenues have been increasing, but on the cost front, they have not been able to manage it well.
Yeah, I do agree with you. If you say look, it looks like margin pressure is already there. Again, competition is quite intense in this counter. See, commodity cost volatility is hitting the margin overall. And if you see there for them, customer financing risk is also there. But hopefully in future, the EV penetration is rising, so they will be benefited and three-wheeler demand is also improving. But because it's a debt profile, we have to see for this company, quite intensely. Again, regular demand beneficiary is there. So, but if you can see at current scenario, the stock is only, I will wait for a little bit correction more and then only enter. Maybe 10-15% more, then only enter.
Moving on to Universal Cables. Strong Q1 numbers, but the important part here was, I believe, the increase in the capital expenditure that the company has announced, which shows the kind of outlook that the management has. Let's get in Parth with more details on what is this capital expenditure, where it will be done for, and what's the outlook for Universal Cables.
Absolutely, and not just the capital expenditure, but also the rise in profits because of the higher share of JV earnings has led to a very strong set of numbers reported by Universal Cables in the first quarter. They reported a strong set with EBITDA growing at a similar pace to the revenues of 57% year-on-year, while margins were flat year-on-year. However, PAT saw a growth of 109% year-on-year, outpacing the both revenue and EBITDA growth. This was mainly thanks to the profit share from joint ventures, which came in at 38.94 crores, lifting PAT very sharply for the quarter. If we talk about the exports as well, that has been a very big growth driver for the company, growing in at 187% year-on-year and now making up to 12.7% of the overall revenue for Universal Cables. Also, the capacitor division has seen a growth of 63.1%, clearly the main driver that has led to this strong set of earnings. If we also talk about the order book and joint venture momentum, then order book stands at 2,860 crores, but that is slightly on the lower side because it provides a very low visibility for just 3 quarters. Also, the current export orders which the company has in its hand are 485 crores, with another pipeline of 390 crores worth of export orders coming in soon. Also, their joint venture had achieved the highest ever quarterly profit since inception during this first quarter, and this was mainly led by the high fiber demand that we are seeing because of the growth in AI and hyperscaler data center industries. And lastly, on the outlook and guidance, FY27 growth by the management, they have guided at 25%, which is quite surprising because it is below the pace of Q1 growth, and it kinds of gives a hint that management themselves are not even sure about the sustainability of earnings in the second half. Also, the company is doing a capex of 550 crores, that is for the medium and high voltage, that has been raised to 617 crores. Also, another capex they are doing with a joint venture of optical fibers, that stands at 4,800 crores, which is targeting 3 times the current capacity and completion by December 2028. So the key things to watch going forward in terms of Universal Cables will be this capex and also the growth they are able to achieve in the upcoming quarters.
Tapan, what is your view when it comes to Universal Cables, and if not Universal Cables, then any other stock in the similar sector that you find quite interesting? Because I believe a lot of them have run up a lot. Sterlite Tech is up over 100% in the last few months. Universal Cable also similar kind of move.
100%. No, this actually whole sector is buzzing, and you see this result is also very good. If you say that PAT improved, again EBITDA margin has improved, or their order book is quite healthy. Again, the cash flow also is quite comfortable. The profitability, I think, will be strengthening over the time. See, now T&D capex is rising and getting stronger and stronger. Cable demand is rising and grid expansion is supportive to this sector. And over all the stocks, mostly you can see they are performing well. Again, renewable demand will be there. See, the main thing is how they are going to bring a higher value cables, which will bring them more margins. So long term, of course, it is a positive. The only few things one has to keep in mind is that how is the working capital management? No, because that they need it, because they are having a capacity expansion also, and order execution risk is there. But raw material volatility will have an impact, but they know how to deal with that. competition from many of the players are there. But I think this Universal Cable is an established player and strong HV and EHV cables they have. I think attractive power theme is currently going on, which is helping this company. So, but of course, the stock has gone up a lot. But if I see the valuation is okay. So my take is, if anyone is holding this stock, no, please hold on currently.
Right. Well, moving on to Raymond Realty, that stock has been down in trade despite the fact that it posted a strong Q1 numbers. Let's try and decode this with Shivam here.
Yes, so Raymond Realty has posted a good set of numbers, and despite the good numbers, the stock has been seeing a significant downside. In fact, this has been a biggest intraday fall since March 2026, and volumes has also gone up by around 6 times. If we talk about the financials, the revenue growth has seen a good momentum, and that was due to a sustained demand. In terms of EBITDA too, we have seen a growth which was mainly driven by better product mix. Also, if we talk about the booking value, that has been remained strong on trajectory with 700 crores, which is up around 129% on YY basis, which has taken the portfolio to total 52,000 crores of a gross development value. But when it comes to profitability, we have seen the decline of around 18.6% in net profit, and this decline was mainly due to the higher finance cost and the cost related to land, property and other expenses too. In terms of margins, we have also seen a slight marginal pressure, and that was due to seasonality impact, and that has played out here, and also the management believes that will normalize in coming quarters. Apart from that, if you look at the EBITDA, that has come in at 61.2 crores versus 30 crores on a YY basis. In terms of guidance, the company has been targeting around 20% growth in both pre-sales and revenue, and in fact the return on capital employed, that is targeted at 20%, and the company believes that it is on track to achieve its EBITDA margin guidance of around 17 to 19%. So overall the picture looks well balanced, but when it comes to profitability, the issue in the finance cost and the land, property and construction higher cost, those expenses have weighed on the profitability, and that adds on to the negative sentiment of the stock, and that's why we are seeing the downside on the stock.
Okay, Tapan, what could be the potential reason behind this fall in Raymond Realty today?
It's all about, if you see the interest cost is almost 47 crores, that is what bringing down. Otherwise, if you see all the other metrics are quite good. And from here also, many of their developing side, their launch timing is very, very critical. Almost 4,000 crore of already they have a booking target. Thane, Mumbai demand is quite strong, and they have a new launches ahead. But see, if you see their profitability, it's quite lumpy quarter to quarter. Sometimes they are posting a very good profit, sometimes very less. Again, the finance cost is a major problem. Plus, project concentration is also there. And if you see, if there is an approval delay, then there is a risk to the profitability also. Of course, Raymond brand is quite strong, and the healthy development potential is also there for this company. But looking at all the things and current valuation, currently I'll wait for one more quarter and then only go, not be getting into at this level.
Right. Thank you, Tapan. Thank you for joining us and giving us your perspectives on the stocks that we discussed today on the show. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our Editor's Cut
and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. But before we start taking your stock-related queries, a quick check of the results that are flashing on the bottom of your screen. ITDC, the numbers have just come in. We will be speaking to the management at 3 p.m. today, but they seem to be a weaker set than the numbers that we are working with in terms of estimates as well. So as we go across and look at the revenue as well as the EBITDA in this particular quarter, we were expecting a bigger jump, a mid-teens number that we were first looking at, and hence slightly more disappointing in that sense. What also we have to look at is the reason for the particular net income that has come through as well. So in terms of what the revenue we were working with on a consolidated basis was 4659 crores. It's largely come in exactly very close to that number as visible. But the EBITDA, we were expecting a jump of almost 20% at 809 crores, and that has been a miss in that sense. Now this quarter, you do have to realize there have been raw material price impact, cost escalations, and if the company has been able to pass on the price hikes, will also be something to watch. But at this point of time, there seems to be a clear miss on the EBITDA front, and hence the stock currently showing some kind of weakness in its stock price performance as well. The standalone numbers are the other factor. Now, India has largely been resilient at this particular point of time, and hence when you look at those numbers, we'll also flash the standalone numbers for you on the bottom of your screen as well. That continues to be the other positive factor that we were working with. On consolidated, we were expecting the geopolitical impact coming through, but this is much more steeper than we were working with at this point of time also. The other factor that we will be waiting on for the presentation to come through, because that has the commentary. You have to remember that in the last quarter, the commentary is what drove the companies and the stock up almost 6% on the day the results came through as well. So they had mentioned a good set of numbers, a 20% growth that they were expecting for the year of FY27, and hence this will be something to watch in terms of what comes through for the commentary at this point of time. Now, I'm also trying to look at what was the particular reason why there has been that impact come through, because you are seeing a one-time impact on exceptional items of 24 crores that the company has mentioned. But overall, for the profit for the period, also trying to ascertain what could have been the reason for the loss, and we'll probably start and probably update you on that. But definitely these numbers, at least at the start of it, look weaker. To get more detail into this will be something to watch from the company. But overall, you are looking at these numbers at this point of time, and hence that one-time exceptional impact of 358 crores that you've seen on a consolidated basis, and hence the stock down. So trying to ascertain the particular reason for that. They have mentioned about a German subsidiary which was facing market challenges as well as associated cost disadvantages. That was the 23 crore impact that I was talking about. But overall as well, they're seeing a 330 crore restructuring provision that they mentioned at this point of time in their statement. So that is the key detail, and hence that is the big impact on the consolidated numbers. They will be raising 2,500 crores via equity or debt. But this 358 crore loss, one-time impact, has impacted the net income on a consolidated basis. So that is the breaking on ITDC. We will be, of course, getting you more on the outlook, because we are awaiting the company to report and go across the presentation. But definitely, this number is a miss on the standalone as well as on the consolidated EBITDA margins, but also on the net income because of that 358 crore impact. It has a dual impact, two particular reasons. One of them has been the restructuring, and hence 330 crores. That is the impact that the company is seeing as part of the one-time loss as well. But let me welcome in our guest now, Vishnukant Upadhyay. He is the AVP at research at Master Capital Services, as well as Rajesh Agarwal, head of research at Om Capital, joining in. Rajesh, very good afternoon. Thank you for joining in today. Just a quick, as we are digesting the numbers for ITDC coming in, seem to be that one-time loss has really impacted the profitability of the company in this quarter. Do you think it's something that having a bigger impact on the stock, now down almost 4%?
Good afternoon, Puneet. Good afternoon, Vishnukant. You said it right. The numbers were prima facie looking very bad, but when the one-time loss of 358 crores came into light, I don't think that's much of a concern, because it's a one-time loss. Adjusted to that, the numbers come to around 268 odd crores versus 284 crores. Yes, it's a slight miss on estimates too. But we should not forget the kind of geopolitical situations going on the numbers. They cater to class 4 trucks, which again has an impact on US. The raw material prices were high. So we have to wait for the presentation or the management commentary to come on. And these kind of companies, Bharat Force kind of companies, which one should have a long-term vision rather than going for quarter-on-quarter numbers. I think if by any chance it cracks to 2150 or 2100, that would be a good accumulation point.
Good accumulation point. Got that view as well coming in from Rajesh. But yeah, the presentation not yet uploaded yet, so we'll get you more and start flashing those lines once that comes through as well. But viewers, you can start sending in your stock related queries now. The numbers flashing on the top of your screen after the Bharat Forge update. But we will start taking your stock related queries now. The first one that's coming through is on HBL Engineering. Suman from Kolkata, holding shares at 723 odd. Asking if it's a good time to buy more at this point of time. What would you recommend here, Vishnu? Very good afternoon. Is it a good time to buy into HBL Engineering now?
Hi, Puneet. Very good afternoon. Good afternoon, Raj sir. In fact, stock is down around 3.5% in today's trading session, and the stock is trading below the all key moving averages. So I believe this is not a good time because I am seeing more pain in the counter towards 644. So that could be a good entry point. So not here. Let the stock come down towards 644. One can build a long position there.
Build a long position. Got it. The next one coming through, and this one's on Infosys. Deepak from Kerala actually is holding shares at 1156, but Vishnu, yet again, he wants a short-term target on this particular counter. What are you picking up?
Infosys, right?
Yes, that's right.
We have seen a very good rally in the large cap IT stocks, and in fact, on chart, I can see that the stock is now moving towards a 200 exponential moving average that aligns somewhere around 1273. There has also been a very good bullish crossover between 21 and 55 exponential moving average. So considering all these technical tailwinds, I believe one can go long. Stop loss should be placed below 1130.
130, got it. The next counter coming through, and this one, it's on Tribhuvandas Bhimjira Zaveri, the jewelry company. Our viewer is holding shares at 274 odd. Wants to know, and he's been holding for the last 2 years actually, Rajesh. It's, I think, gone down, come back up to that price yet again, and asking what he should do with this counter now. What's your opinion here, Rajesh? Should he still continue to hold? Because we've seen amongst the jewelry names, of course, Titan go through, an absolute storm in terms of results as well as the stock price. Kalyan, not so much after reporting the results, but within that pack, is it good to hold?
I don't think so. It's just a luck. I would say that you have come back to profits. So try to get out of it. If you want to be in jewelry stock, Titan would be the best choice in the entire space where one can have a look at.
Even at the current valuations, Rajesh, it's a good time to enter, according to you?
See, if you are having a time horizon of 2 years down the line, I think Titan is a good choice at these levels too, because not only with the jewelry business, even the watches or the eyewear business has done well, and the kind of stores they are trying to expand. I think going forward with festival season and marriage season in the next 3 or 6 months, I think Titan would be a good buy.
A good buy, got it. The next one coming through, this one's on PFC. Our viewer Radhakrishna is holding shares at 450 odd. Asking if it's still a good time to continue holding this counter. We of course have the big impending merger, Rajesh, with REC as well. But how are you looking at PFC? Also, would you advise him to average down at this point of time?
See, averaging at this point of time won't be suggested. One can average at around 350 odd rupees. Good company, the kind of power scenario which we are witnessing in our country, in the way government's focus on increasing that. Companies like PFC, REC, Power Grid, they are going to do well. And the best part is the dividend yield is around 6 to 7%, trading at a price to earnings of 5-6. I think these are good long-term hold for a safe kind of investment. Somebody looking for good dividend yield.
Got that view. But the next question coming through, and viewers, you can also call us for your stock-related queries on the landline number flashing on the top of the screen as well. It's on BEL, and Jerry Lobo from Pune is asking if it's a good time to enter. Rajesh, let me stick with you. because we've seen weaker numbers from the company. Stock, I think, went down all the way till 385 and now has seen a pullback. At the current price, would you venture into the stock now?
For a long-term horizon, yes. By long-term, I mean at least 12 to 18 months time horizon. Being a high momentum counter, it's always a trader's favorite, and it moves that way. But for a long-term investment, it's a good buy. This correction has given a good opportunity, strong order book. Not only domestic market they are exporting to. So not only BEL, the likes of BEML or HAL, BDL, these are long-term picks in the defense sector.
Got that view. But the next one's from Murthy from Vizag. He has a question on Pine Labs. Now, I know Vishnu, there's not too much historical evidence, but he wants to enter into this counter now. Anything that you like, stocks up almost 5%. So Pine Labs, would you venture into it right now?
So definitely the stock has been in a very good consolidation band of 163 on the higher side, 140 on the lower side, and it is giving a early indication of breakout of the higher trajectory. So I believe one can go long if prices closes the day above 162, 163 odd levels, right? Stop loss should be placed below 152, while on the higher side I'm expecting 185, 190 kind of levels can't be ruled out in a very short term.
190, got it. So can't be ruled out at this point of time as well. So got your question. But the next one is coming in from on HCL Tech. Varun, who's from Coimbatore, wants to know about at 1376 at the price that he's bought at, if he should continue to hold this counter. Rajesh, we've seen that volatility come through. He's mentioning that you're seeing EU, US AI related projects coming up in the next few months, but will HCL Tech be a beneficiary? How are you looking at this, Rajesh, right now?
See, the entire IT pack is looking good for a time horizon of 12 to 18 months because of kind of the cut they have witnessed on AI concerns. And now with we have witnessed AI-led selling in Taiwan and other countries. I think the money is going to move in. And the plus, the biggest positive is all these companies, be it Infosys, TCS or HCL Tech, they have come out and given commentaries that they're investing in AI. So valuations are very favorable, I would say, for all these top-rank companies. One can go long on this. So keep a time horizon of 9 to 12 months, keep holding. And by any chance it falls to around 1300, one can even add.
Got that view. But the next one, and this is not as simple as a query as HCL Tech. This one's on Ola Electric. Arjit, who's from Tamil Nadu, actually is holding shares at 41. But Rajesh, he's holding almost 54,000 shares. So he's holding a massive quantity here. He's mentioning he can hold for 10 months, but would you recommend him to have such a huge quantity on Ola Electric because the earnings haven't come through as the street had expected? Stocks down 3.5%. So firstly, your view on the counter, and secondly, would you recommend him to downsize his position a little bit as well?
See, it's a tough call, I would say. The numbers have been pretty bad, and not only this quarter, it has been bad from so many quarters, I would say. Quality concerns were always there. But the only positive which I saw in this week's number that came out was their mention of Ola batteries moving into other spaces rather than only vehicles to aerospace and all those things. If those things materializes, I think this stock can go up. But that's a big if those things materializes. So it's a high risk kind of play. The gentleman is sitting on a huge quantity. I don't know what percentage of his portfolio is into Ola. If it's the maximum is into Ola, then one should try to reduce its quantity once it moves to 41 odd levels. Or if it's a very small percentage of their own portfolio, then one can continue. So depending on your portfolio, you can continue, but the risks are very high. For a short term to medium term trade, I would say keep a stop loss of 37 odd rupees.
Let's actually quickly pull up Bharat Forge as well, because you were discussing about the stock. The presentation has just come through now. They're saying about the India order wins at almost 1,300 crores, and they are maintaining that growth outlook of 20 to 25% for the India manufacturing business, and it will be more pronounced in the second half of this fiscal. So the management has taken cognizance of weakness in this particular quarter, but second half is what they are mentioning as well. They've also mentioned that the recent restructuring action on the EV business as well as on the German forging business, we will continue to reevaluate the current global manufacturing footprint for the other parts of the business. So you have to realize that the international subsidiaries for the company have been loss-making. The company has now taken cognizance of this factor, but despite this clarification, despite this presentation coming through, you're not seeing too much respite on the stock. So that continues to be down almost 5% at this point of time, but most certainly something to watch out for. They have affirmed the 2,500 crore issuance via equity shares, convertible securities, or via QIP. That will be something to watch when the management speaks to us as well as to analysts today. But certainly, while we were waiting for the growth outlook, this 20-25% that they mentioned, defense, of course, continues to be a good vertical for the company, almost over 11,100 crores in terms of order book that they maintain. This particular growth outlook is what rose and what led to the stock climbing from that Q4 to where it's trading today. But certainly something to watch going forward as to what led to that restructuring. I think we'll need more clarification as well. But that's on Bharat Forge. Stocks definitely continuing to be under pressure as of now. But let's now start with the rapid fire round in this edition of the show. Vishnu as well as Rajesh, you both know the drill. First question, it's on Wari Energies. Our viewer Jay Krishnan holding shares at 3260 Vishnu, and he wants to know if he should still continue to hold for the next 6 months. What would be your opinion?
Try to get exit from the higher levels, 2800 out of levels.
Next one on, we spoke to actually Rajesh on TVZ, but also Vishnu, between PN Gadgil and TBZ, Raj wants to buy into this counter, either of those for the next few weeks. Anything that you like, do you concur with Rajesh ji on TBZ?
Well, so the stock has formed a double top in daily chart. It is gradually coming down towards 55-day exponential moving average. So maintain the stop loss below 609 and hold the position.
Hold the position, correct. The next one's on Greenwell Norton. Our viewer Mandeep, who's from Jaipur, holding shares at 2,200 rupees per share. So just slightly elevated from the current market price. He wants to hold the stock, Rajesh, for the next 3 years. Would you recommend that?
Yes, continue to hold. Strong company.
Next one's on Sirma SGS. A viewer asking if it's still continuing to hold. Is it a good one to hold at this point of time? Stocks up 6%. Rajesh, should he continue to hold?
Keep a target of 1800. Continue to hold.
Saraswati from Chennai wants to know about AU or Chola Mandalam. Either of those counters for the short term, Vishnu. Would you recommend entering any target prices?
Yes, definitely. One can get enter in the AU small finance. On the higher side, I'm expecting 1250 sort of levels can't be ruled out. One can maintain stop loss below 1030.
Correct. Avdesh Oja from Delhi wants to enter the defense as well as the data center space, most certainly. And Rajesh's question being between Kirloskar Brothers, KSB, or Schneider Electric. Either of those for the long term he wants to enter. Anything that you like?
All three are good companies. If I give a pecking order, Schneider, Kirloskar, and then KSB.
Got it. A smaller counter, Vishnu, Bharat Bijli. Our viewer has been sending us this query on. He holds shares at 2560. The code is BBL. And he wants to know about this counter, if he should still continue to hold. Stocks down 18% in the past year, Vishnu. But any indication of what he should do?
See, the ongoing pain is likely to remain intact with a potential downward towards 2120. So if any rise comes close to 2400, one should get exit from the counter.
Got it. The next one, Devi is actually writing into us on Naveen Fluorine. We saw good response, Rajesh, after the Q1 results. Should she enter the stock now?
Wait for 8,000 levels for a long-term horizon.
Anil wants to know if it's a good time to buy ITC for the next 2 to 3 years. Rajesh, would you recommend that?
Always a buy. It's a good buy. Okay. These levels are good buy.
Got it. Well, that was the last question on the rapid fire as well as this edition of the show. Rajesh as well as Vishnu, always a pleasure. Thanks so much for helping us solve all these queries. We've taken the grand total to 83 for both the morning as well as the afternoon edition, but appreciate your inputs today. But viewers, out of time, this edition of the show. Thank you so much for watching. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you
Hi, thanks so much for joining in. You're watching India Market Close. We're coming to you live from the NDTV Profit Suzlon studio here in Mumbai. My name is Alex Matthew. With me is Mahima Vachhrajani. Let's take a look at where the markets are. It's not as excited as I am, actually. It's a pretty narrow range. It's a range that is just over 110 points, actually, from the low point to the high point of the day. And we've pretty much shuttled between a very, very narrow range for the most part of today. Forget about this, right? If you discount this and you just talk about this portion, then we've been very, very range bound through the session today. The broader markets once again are outperforming, but even there, you're seeing a tad bit of fatigue creeping in, just about 0.5% for the mid-cap index, about 0.1% for the small cap index.
Yeah, the small cap 250 just does not want to touch its life, it seems. I mean, it's just crawling since Friday is what we've seen, unfortunately.
Thursday, in fact,
yeah. But let's also try to pull up the Nifty 50 heat map and see as to what are the counters that are doing well and which are the ones that are not doing well. You have something like a Titan now lately doing well, up 2.5%, and this was pretty much required with the way they've posted their numbers, right? Tata Consumer has been the one slow mover on the Nifty 50 but has done very well. There's Bajaj Finance back in action today, at least not recovered though. The way it saw the downtick of 6% on Friday, but up 1.8%. But on the flip side, you have SPI not reacting very well today, profit taking coming in. You have ITC, which is taking a knock of 1%. Even Eternal is where we're seeing profit booking coming in. Some names like Wipro also seeing profit booking. So that's the Nifty heat map for you guys.
Yeah, let's take a look at the sectoral heat map as well, just to drive home this point. And you will see on the top of the charts, you have Realty, actually a fair bit of green on the screen, but no big winners. In fact, apart from Realty, which is up about 1.7%, all of the other indices are 0.5% or less. You have PSU banks largely on account of State Bank of India and certain other banks that are taking that are seeing a little bit of profit taking coming through. India Defence losing about 1% or so, and then everything else is just about 0.5% or less. So all told, it's not really big movers at the index level. The action is in the smaller counters and at the broader end of the spectrum.
That's correct. And advanced decline ratio will tell you exactly that, right? Let's try to pull that up. But it's narrowed, unfortunately. You have around 1,372 odd advances versus that of 1,279 declines. But the BSE 500 will be an interesting one to watch out for yet again, because earnings season is underway and we're seeing a lot of earnings specific action. You have Hitachi Energy topping that chart. We're going to do a spotlight on this one. So wait and watch out for that. You have Sumitomo Chemical, which is also doing very well. Paytm is zooming in trade today. There's something like a Brigade Enterprise, which is also doing very well. On the back of that, the Nifty Realty is seeing good gains coming in. But on the flip side, you have Bharat Forge that's just posted earnings and now down 7.5%. In fact, we'll try to speak to management and try to decode the earnings as well. You also have the twins, PFC and REC also taking a knock in trade today. But you also have something like an Amber, which is down 4%. Lupin also down 4.2%.
Yeah, absolutely. Let's bring in Rahul Sharma, Director and Head Equity Research, Equity 99 Investment Advisors, as well as Lancelot Dikuna. Thanks so much, gentlemen, for taking the time, and good afternoon to you. Rahul, I'll come to you first. We're meandering at this point and you're seeing consolidation, perhaps a little bit of fatigue at the broader end. How would you play the indices right now?
Good afternoon, Alex, and thank you for having me on the show. Yes, definitely the move which we are seeing in the market, especially for the indices, it's very much, we can see the consolidation happening currently. And this has been seen in yesterday's session. And I think little consolidation is required for the market for next jump up. So currently, as Nifty is taking support by its 200 demand on daily charts, which is placed around 24,400 levels. So I think this should act as a good support line here at Nifty 50. And as Bank Nifty is concerned, I think it is currently at 100 points down. But same structure with this, we have got juncture of moving averages, especially the 200 days moving average is placed at 56,605, which should act as a good support for Bank Nifty. On the upside, definitely resistance is placed at 58,400 levels. Till the time we are hovering under this umbrella, I think consolidation will might continue, and in the market, stock specific action will continue.
So that stock specific action, then Rahul, what stocks are you liking right now?
See, Alex, some of the stocks which are doing good have done a good like buying interest in market. First of all, from IT Pack, Infosys, which has been under my radar. Last week also, one of your show, I recommended this at near around 1100 levels with the 1200 rupees target. Now it has come very near to that. I think this particular closing is to be watched because if at all we get closing above 1185 on Infosys, it might take jump towards 1270. So this will be my first selection, keeping a strict stop loss at around 1150. For Infosys. Next selection is BEML, which is currently up by 5% today. Similar kind of chart structure, which we are seeing a neckline breakout above 1890 levels. So if at all we get closing or good market support for this counter, the next target or the next support zone is coming, sorry, the resistance zone is coming near 2000 levels. So BEML will be my selection, keeping a strict stop loss at 200 DEMA, which is placed at 1800.
Okay, all right. So that's those are the picks that Rahul has on his radar. But Lancelot, a very good afternoon to you as well. Nifty Realty is something that's doing very well today, and we've seen a large part of the earnings that have come in, which have been largely in line with what the street was expecting, even in terms of where collections go, pre-sales go, etc. Anything in that space particularly that you like, where because we've seen run up already in a lot of counters, and considering that valuations did come off and the rally was stopped, but do you think any of these counters where you're kind of liking valuations?
So not really at the moment, because when you, like you said, they had run up quite a bit and valuations then went up, and from whatever little bit of the con calls that have come in terms of the managements that have already disclosed their results and their outlook, it looks like that they are anticipating that there may be a problem due to the geopolitical system. There could be a slowdown, or there could be some kind of impact on the real estate market going ahead. So one needs to be a little cautious in the light of their, most of the management's commentary, that many of them have decided on their own to stop new launches for this quarter, and they're re-looking at their strategies. So I think to some extent, this little bit of caution that needs to be exercised, and given the valuations at this point in time, I think it's better to stay away for a while.
From the Realty Index, I will come back to you on your opinion on real estate investment trusts and whether you would buy into them if you want to take exposure to the realty space. But before we do, let's get to the stock of the day, and it is in the in the pharmaceutical space. This is Aarti Pharma Labs, and this is a stock that is at upper circuit. So if you thought that you would be able to get a slice of this, it's too late today. We'll find out whether or not you should try and do that tomorrow. But why is the stock at the high point of the day and at upper circuit? Let's bring in Varsha to tell you just that. Varsha, interesting numbers, top line growth of over 40%. What stands out about this company?
So overall, good numbers, of course, but I'll also talk about what actually did not work for this company, and numbers would have been even better. Talking about the growth, revenue was up almost 42%, despite there was a six-week shutdown at their API block. Number one, EBITDA, if you see, grew 40% year on year, a huge growth over here. PAT also grew 49% year on year. Now, Forex did help Aarti Pharma Lab when it comes to their Q1. Q1 saw Forex gain versus Forex losses in Q4 FY26, which also supported profit. Now, talking about what drove the strong performance, one is xanthine. Now, the xanthine business, if you see, remained the star performer for the company. Now, Aarti makes, what does xanthine mean? So, Aarti makes caffeine and related molecules called xanthine derivatives, which are used in various industries. Now, this contributed almost 57% of their Q1 revenue, and the capacity expansion, if you see over here, is 9,600 tons per annum, which started contributing in this quarter. They are also benefiting when it comes to global China +1 sourcing shift. Now, talking about the CDMO business, CDMO has actually worked for every majority pharmaceutical company, I would say. Company now has 57 active CDMO projects. 37 projects are already commissioned when it comes to this quarter, and the global client engagement in US and Europe has been improving for the company. Talking about what did not go well. Well, their API block remained shut for 6 weeks. Production was impacted during the quarter, and hence, we did not see a sharp uptick in margin. Why? Because raw material inflation and product mix remain headwinds for the company. What lies ahead? Well, xanthine, if you see, the growth story is just beginning for the company. CDMO will become bigger, and of course they are targeting 15 to 18% of revenue growth over next 3 to 4 years, with almost 15 to 18% growth when it comes to EBITDA for next 3 to 4 years. So a lot of key triggers working for this company, and hence we are seeing the stock is almost up 20% in trade. So good Q1, but yes, few things did not work well for the company.
Varsha, just a question on that, because you study this so closely. The steroid API block that was shut for 6 weeks, any measure of how much that would ordinarily have contributed to the revenue?
We did not have exact number, but overall, I don't see much impact from this, because if you see, xanthine is contributing almost 57% to the overall revenue. So, and CDMO is also the growth trigger for the company. So this might have impact on the overall numbers, but not much impact. But of course, the margin impact that you're seeing is of course on the back of increase in the raw material cost. If that would have not been there, we might have seen a good uptick in margin.
Interesting. All right. Thanks so much, Varsha, for getting us those details. Very clear picture there that you have with regard to Aarti Pharma Labs and the reason why it is at upper circuit right now. Lancelot, you heard that presentation from my colleague Varsha, and she's laid it out pretty clearly. Would you say that at a 20% upside right now and an inability to get in, it's something that you should keep on your radar, perhaps something that you should look at when the chance presents itself? And if you've looked at this company, what is your opinion?
I think the results were very good, and I did hear about the improved margin. I know that Aarti Organics, Aarti Pharma Labs, had a project which was being commissioned, and probably the full operating benefit of that project in the the greenfield project, where they were looking to increase the capacity of 450 kiloliters of this anthinin. So I think that has resulted in an opportunity to grow revenue and sales as well, and profitability has shown increment. So it is definitely something which one can look at. But given that we are at 20% circuit, the stock is trading at about 34 times its trailing EPS. Maybe if the forward estimate is stacked, it might still at this price become still be around 18 to 20 times EPS, which is relatively fair value. So it's definitely something that one can wait for it to open up, and when there is some amount of stabilization of the price, one can look at adding it.
Would this be your top pick though in the CDMO space based on fundamentals?
I don't think it'll be the top pick in this space, because there are companies, this has a very relatively a narrower, let's say a narrower focus, because it's mostly focused on the nutraceutical as well as the steroid part of the business, whereas the other CDMOs are more related to larger drug, manufacturing and larger molecules discovery. So those could be bigger in terms of size, whereas this particular xanthine derivatives could be limited to a little bit of restricted, application. So I wouldn't say it's the top pick in that sense.
Okay, all right. So that's the view coming in on a lot of these pharma names. But let's try to look at the retail space as well, because Aditya Birla Fashion has been in focus after its Q1 numbers, and overall it's continued to be under pressure, and we'll try to decode as to what's gone wrong this quarter. So to start with, both EBITDA and gross margins were impacted, and overall if we take a look at why this has happened, EBITDA came in much below the street estimates, and the margins fell to around 5.8% versus that of 6.1%, largely impacted by higher rental expenses as well as the employee cost going up, and gross margins also contributed around 74 basis points. This was largely on account of raw material inflation. Now, if we talk about Pantaloons, that still remains a drag on the business of ABFRL, and this was one of the reasons why they've gone ahead and separated ABFRL as well as Aditya Birla Lifestyle. So if you take a look at the Pantaloons numbers, the growth came in at 7% versus that of 17% in Q4. So sequentially it has come down quite significantly. Also there was a festive season factor as well, but despite of this quarter having slight wedding season days also, it's not seen a good growth. Margins also fell down to 15.9% versus that of 17.1%, largely on account of inflationary pressure. Ethnic business is something that's struggling. Now, this is not not just the case for ABFRL, but a lot of other brands have also seen this pressure because of wedding days being much lower as compared to where they were last year. Plus, EBITDA margins also remained near just the break-even point of 0.2%. So we'll have to see whether this business picks up for Aditya Birla Fashion or not. Lastly, the two new brands, that is Owned and Tomorrow, is weighing on profitability. If you take a look at Owned, it's scaling up. They're scaling up the stores in terms of this one, and that's why it's weighing up in terms of profitability, dragging down the profitability. And Tomorrow is still loss-making, and the losses in this quarter stood at around 42 odd crores. Plus, on an overall business also, competition is playing its part. We've seen a lot of new emerging players in this clothing space that ABFRL caters to, and that's why there's competitive intensity also playing its part and impacting probably the operational metrics like revenue per square feet or volumes, etc. So that's the whole and soul of what's not worked for ABFRL. Rahul, I'll quickly come to you on the charts for this one. What do you make of the charts? Whether it's found its bottom, or do you think that this will continue to be under pressure going forward as well?
See, Mahima, I think as far as charts are concerned, we can see a downward sloping channel formation. So the stock has been under pressure, and at this current level, it is just trading above its 100 DEMA. So till the time 62 or 61 level is maintained, then it's okay. Otherwise, the pressure will continue. And I think the bottom or the good support line is placed around 56, 57 levels. So till the time it has been maintained, I think the stock might consolidate going further.
Okay, got it. All right, very interesting. Let's get your view, Rahul. I want to get your view on a couple of the large cap counters, right? And specifically Titan. It's started off the day with a little bit of a wobble, but it's gained quite considerably since then, up about 2.6%. And you knew, I'll get Lancelot's view on this as well, but you knew based on the quarterly update that the numbers would tend to be good. It's outperformed on the margin front as well. So that's certainly a positive. And the outlook going forward is good. I spoke to the management earlier today and they were quite sanguine about that. But Rahul, on the charts, what's the view on Titan?
It's a very positive view. We can see a continuous higher highs on the chart. And the upside resistance is quite like having a margin of around 300 points, 400 points. Currently, if we see RSI on daily charts, it is not gone above the overbought zone. So I think if at all someone is trying to make fresh entry also, it's a good scope over here, because I think the chart structure is very much strong and has been maintaining its volumes also. So going further also, I think Titan, we can see around 5,400 to 5,500 levels.
4 to 5,500 levels, all right. Citi just upgraded its target price to 5,700. That's the most robust or optimistic type, target price that I've seen today. But Lancelot, a quick view on Titan, because I was speaking to the management, in fact, the CFO, Mr. Sonthalia, and he was saying that the growth rate that you saw for the revenue in the first quarter, 30% plus, is not necessarily replicable in the rest of the financial year because of the way that gold prices have gone. But he seemed fairly confident that around that 20% mark is something that is possible. And if they manage the margins at very close to the level that they saw in the first quarter, it's going to be a pretty good performance in the rest of FY27. What's the view on the Sorry, apologies, on the valuations though.
So, Alex, if you look at valuations, it is looking a little expensive. But sometimes, the high valuations also indicate that there is high growth and consistency in profitability. Now, if you look at Titan over the years, this company has a very, very innovative management team. They've been working out solutions for various problems that have come their way. Whether it has been, at one time there was a import ban on gold. Then at some point in time, there was various, the lockdowns, and there were so many other issues that have come up in the past. But this team has always managed to find out ways and means of enhancing its value proposition to the customers. And we are seeing that now, the eyewear business has started to contribute. On the watches segment, they have come out with the latest, type of watches, which is also adding, some value as well as helping them maintain profitability. So I think from a long-term perspective, Titan is a must-have in everybody's portfolio. The question is whether one should acquire it, at this valuation, or wait and watch it. And if there's any kind of dip, then one should definitely look at acquiring Titan, because over the next 3 to 5 years, you will see they will double both their revenues and profits.
And I'd agree with that, because there has been continuously strong execution from their side.
Yeah, they reiterated, by the way, today, 2030 they will double.
Correct. And stability in terms of margins as well, especially jewelry margins. And overall, their studded mix is also improving, which is a sign of positivity in terms of, getting margins for the jewelry business also even higher. So definitely a positive.
Actually, very interesting, because the trends have shifted, right? So more people going to studded. It's not just that. It's also when you're going towards studded, you're going for low caratage in gold.
Yeah.
And so from the perspective of the company, it's good because your raw material cost is lower, your making charges are higher, and so therefore you're making more money.
Yeah, absolutely. And we're seeing that impact on stock as well. And that is what Morgan Stanley also did mention, that's why, the outperformance in terms of the stock also continues. But, it's time for our Heard on the Street segment, and we have Soumit Sarkar joining by to tell us everything that he's been hearing from the chatter that he's been hearing in the dealing room. Soumit, what did you find today?
A host of stocks that remain in focus. Firstly, it's India's shelter. Now, the buzz on the street is that a big block deal is expected by Nexus Partners. Now, this could well be a clean-out trade, is what dealing rooms are indicating. Apart from that, there is Metropolis and Thyrocare. There's a buzz of a promoter block deal that could happen very soon in both the counters. For Eternal and Swiggy, there are buy flows on institutional desk, and delivery volumes are expected to be on the higher side. When it comes to Amber and Page Industries, there are sell flows on the large HNI and the PMS desk. Leaders are expecting a weak Q1 earnings to come in from both the names. For Capillary Tech, there was a big block deal that took place in trade today. But what dealing rooms are indicating is that this was a clean-out trade. Due to some leakage issues, we are seeing this kind of a downtick in the share prices. But there were few funds as well, which were among the big buyers in this block deal. When it comes to Hindustan Zinc, there are some sell flows on the PMS desk. Dealers are expecting a potential OFS announcement that could come in here. And lastly, when it comes to Simplex Infra, dealers are indicating that prominent large HNIs have been accumulating this counter in trade today, and they are expecting a potential turnaround and some positive news flow that could come in from Simplex Infra. So keep an eye out for this counter as well.
Okay, Soumit, thank you so much for getting us those details. Viewers, you can keep them on your watch list. But, it's time to take a look at Kaynes Tech as well. It's been a strong quarter, but margins are still a concern for this one. To understand as to what the bull versus bear case scenario is for Kaynes Tech, we're now joined by Puneet. Puneet, tell us as to what really is the bear case scenario here and also the bull case.
Well, it's been quarterly results that were largely in line with the numbers, but only in the terms of the profitability is where it got impacted. So when you look at the first case, revenues up 40%, margins held at 15% in terms of EBITDA margins, but the gross margin continued to see an impact of 680 basis points, and the management feels it will take another quarter or two to go back to the historical levels, and hence employee cost is up 44% in this particular quarter. Net debt is up to 800 crores versus 200 crores. So there were some nitty-gritties essentially in the balance sheet that has had an impact on the stock today as well. When you look at the second bull and bear case, the management has indicated a look at the decisive measure for the smart metering space. They spoke to us today this morning, highlighting that. Now, this could be via divestiture, via disposing of the smart metering phase, or within the smart metering business also removing the maintenance part, because that is where the cash flow is getting stuck at this point of time. Smart metering on a quarter-on-quarter basis also in terms of the receivables have actually inched up, something that the management has spoken about post quarter 4, that they will look to reduce over the next 3 quarters, not to be at least in this one, and that was the big issue in this particular quarter. The third aspect is prioritizing cash flow over revenue growth at this point of time, but what this does is the overall revenue growth also gets impacted. So 200 crore run rate is what they mentioned for the smart metering business going forward. For FY27, the management feels will be challenging, and hence you could see cost risk escalation having an impact on the overall margins of the company. Finally, in terms of valuations, you've seen a 40-time price to earnings. It used to be one of the most expensive EMS stocks. Now in the bottom of the barrel, the third or the fourth one in that sense. But you're seeing good cash flows from the EMS business, the standalone entity which is doing well. But the smart metering side of things continue to have a bigger impact on the stock, and hence you could see the valuations in a similar range. That's what brokerages have cut target prices to and come in at the current market price. But not too much upside visible at this point of time. Cash flow remains a crucial one over the next 2 quarters.
All right, thanks so much, Puneet, for that. Lancelot, if I were to throw in this company, if I were to throw in Dixon and Syrma, what would your pick be and why?
So I think, all 3 are expensive if you look at valuations, but maybe Dixon would be probably a better option at this point in time, because there is significant visibility in terms of they recently acquired, the additional business, and that will get integrated into their, existing business and start adding to the profitability. There have been, discussions that the number of mobile phones and the type of mobile phones which are being sold are now moved into a higher bracket, and so they should generate a slightly higher revenue or a margin per phone. And the volume of phones being sold is still expected to be good. There may be some profit, some export potential as well, which should see some traction going forward. So out of the 3, I think Dixon would be the better option to look at this point in time.
And also, if you manage to get it at very close to the 10,000 level, then kudos to you. All right. On that note, Lancelot and Rahul, thanks so much for taking the time. Pleasure speaking with you as always.
Sure. Thank you.
Thank you so much.
We have to slip into a very quick break, but before we do, pull up Bharat Forge. The stock is down as much as 8% for a couple of reasons, actually 9% now, because it's had a one-time loss that has pushed it into a net loss for the quarter gone by. The outlook has been brought down, the top line growth, and there's a contraction in the margins that has taken place, the margins coming in lower than the consensus estimates. Why has all of this happened? We'll talk about that with the management on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
The GIFT City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at GIFT City, and NDTV present Global Connect, only on NDTV.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away Is P okay?
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts
Welcome back. You're watching India Market Close here at NDTV Profit. Let's try to take a look at what Bharat Forge is doing. It's certainly under pressure post its Q1 numbers, and let's try to get in Puneet to understand as to what is causing that kind of pressure on the stock today. Puneet?
Well, the one-time impact of almost 358 crores, that has, essentially put the company in a net loss of almost 90 crores in this quarter on a consolidated basis. So that has been led because of the restructuring of the German entity for the company and hence the impact. Now, they've also said that they'll continue to reevaluate current global manufacturing footprint for Bharat Forge, as well as the medium-term focus on achieving profitability may continue, while to be challenging in the other businesses, and they will be reviewed. So there is a focus on the profitability of the international business over the last few quarters, continues in this one as well. But the other factor that they have introduced a lower end of the guidance now. So last quarter, FY27 growth was 25%. Now it's 20 to 25%. with a lot more promised in the second half and a lot more pronounced in the second half in terms of growth. And for the other factor, that 2,500 crores of fundraise has also been approved. The purpose of that will be something to watch, but lower end of the guidance being approved is probably one of the key reasons, apart from the one-off, that's having an impact on the stock today.
All right. Puneet, thanks so much for laying that out for us. Amit Kalyani, Vice Chairman and Joint Managing Director of Bharat Forge, joining us right now. Mr. Kalyani, thanks so much for taking the time. Good afternoon to you. Let me address the first thing, which is the one-time loss that you've incurred. Why was it necessary to do this? And any further losses that you anticipate from your international businesses in the rest of the year?
Hi, good afternoon. This one-time loss of 350 odd crores is on account of the steps taken for the closure of CDP. And we have entered into an agreement, the process of entering into the final agreements with the unions to, for the layoff of the people. And this has, as per plan, this is within our budget. And once an agreement like this is signed, and it needs to get recognized, and it needs to be taken through our consolidated P&L. And that's why this has happened. This is not cash out yet. This will happen over the next, between 6 to 12 months. But the number has now been crystallized.
Mr. Kalyani, hi. Mahima also joining the side. Just want to get more sense on the margin part, right? You've done around 15.3% this quarter, and this is much lower as compared to what the street was expecting. So just want to get a sense as to what has happened there. Secondly, in how many quarters do you think this will recover, and what do you think is the right level to watch out for in terms of margins for FY27?
Yeah, this quarter, a little bit of last quarter and this quarter, we had a major breakdown in one of our plants in the US. And that actually caused us to have to produce here and ship to the US at our cost. Secondly, we have a 130 basis points or so impact of energy prices, which have not yet get compensated. So that will that will happen, and then that will get corrected. So these are the two major factors. Going forward, once we get our price increases for the energy cost impact, and by next quarter the US situation will come back to normalcy. So you will have a reverse swing of a substantial amount in the P&L for the quarter. And for the whole year, especially for the second half, I would say that we're aiming for a margin of close to 20%.
Okay, Mr. Kalyani, just want to understand. So therefore, in the second quarter also, you expect some impact on the margins, right? Because
the second quarter, I think we should see a significantly better margin than this quarter and keep moving up.
Okay, but can you give me a sense of this project you mentioned, which you had to produce in India and ship? What was the impact of that to the margins in the first quarter?
Look, bottom line is that if you look at our normalized EBITDA for our India operations without the energy impact, it would have been 28%. Okay, versus 26.1 or so. So the cost increases, which are both on freight as well as energy, have led to about 190 basis points of cost, which will get recovered.
Which will get, because you have those agreements with your with your buyers.
Yes.
Right. I do want to ask about the guidance on the revenue though. You've brought it lower from 25% to a range of 20 to 25%. This is based on the external environment, the expectation that it's going to be a challenging scenario to operate in.
Look, you have two wars ongoing right now. One which by all means was thought to be concluded and agreed upon to end several times now in the last few months, but it just seems to get longer and longer. So that creates inflation, and inflation has an impact on demand at outside of India. So that's really what's happening. I mean, if you look at the passenger car market in Europe, you'll see that it is quite severely impacted on in many of the countries. And this is the first signs of stress in the economies because of high price of energy.
So, Mr. Kalyani, then is this the right understanding that largely the reason for this guidance, being brought down to that 20% mark should be on account of your international business disruption that you've seen? Is that understanding correct?
It's because of overall demand, but I think 20% to 25% is still a very strong growth number, which we will aim to deliver on. And I think that that's a very healthy number, and while maintaining decent margins, it will produce very good results and will set a good base for us to perform even better next year with a lot of new capacities coming online. And we have a very large new, let's say, opportunity coming in some of our high value sectors such as defense, aerospace, castings, and we are planning a capex of close to about 1,800 crores in the sectors of aerospace, defense, semiconductor components, data center, power application systems, which will give us a lot of growth opportunities going forward.
So this 2,500 crore fundraise that you're planning should be largely used for this capex that you're planning. Is that understanding correct?
Yes, that is correct. That is the reason for that is to fund the growth that we have in that we see coming to us in the next between 12 to 24 to 36 months, and this is only for growth capex.
So, Mr. Kalyani, I just want to ask about the defense EBIT as well. And there's pretty strong growth there, right? Is that something that is going to be realizable in the rest of the financial year as well?
Yes, I think so. And, as the ATAX program will kick in, as the carbines program kicks in, this will only increase.
So let me ask you about this then. 2,500 crore of money that you're spending on creating capacity, and you said this is going to pan out over the course of the next 12 to 18 months. So if I push forward to FY29, and if I look at FY25 overall revenue at over 15,000 crore rupees, what is the assessment on the revenue that can be unlocked on account of these new lines that are being opened up? If we're talking about aerospace, these are pretty large revenue lines that can eventually be opened up. Data centers, huge opportunity. So what is the blue sky scenario here?
So let me tell you, people who've been tracking our company will know that we are in very high value aerospace components. And we are aiming, the first step was to get to a number of 40-50 million a year. Then is to get to about 100 million a year, and then to get to about 200 odd million or more a year. And now that we are in three sectors in the aerospace market, that is the jet engine components, the structural components, and landing gears, each of these three have the potential to grow to 100 million plus. Okay, so I think the capex that we are going to do will have a capital output ratio which is extremely good, because it will use a combination of brownfield and some greenfield facilities. And in some cases, the facilities will be incremental to what we already do and value adding, so that the overall mix of EBITDA and margins and productivity will be better than what it otherwise is.
So, what in your opinion is an ROCE that you would think is palatable from your perspective that investors should look forward to?
If you look at our India operations, I think our goal for EBITDA, goal for ROCE is 25%.
Okay. And finally, with regard to and just to close out this margin conversation, right, Amit, which is excluding your foreign subsidiaries and the external business where the environment is obviously challenging. You've highlighted that. What is the margin outlook, and specifically for the India business?
See, if you look at the India manufacturing business, our margins hover in the 22 to 23% range. If you include the subsidiaries such as K-Drive and JSA. If you look at only Bharat Forge and the growing Bharat Forge, which is the forging and machining business, that will be upwards of 27, 28, even upwards of that.
All right. Okay, Mr. Kalyani, thank you so much for taking out the time and, of course, being so candid with the answers that you just gave us. Thank you so much once again for taking out the time. The stock, by the way, recovering as we speak. Let's try to pull up the stock and see. Of course, off from the day's low point, still trading around with cuts of about 6.8%. But let me also welcome in Osho Krishnan from Angel One and Siddharth Khemka, Head of Research at Motilal Oswal, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. Siddharth, I'll first quickly come to you. You probably heard the management of Bharat Forge. Any quick take on the numbers?
Hi, good afternoon, Mahima. So I think we heard the management. There was a big runoff which kind of derailed the Q1 numbers. But more importantly, as Alex was trying to question and ponder on the margins front, I think that will be a key monitorable Q2, Q3 onwards. What we believe is that Bharat Forge's long-term story is anchored on its transformation from being an auto forging company into a diversified industrial platform, be it defense, aerospace, some of the other structural growth engines beyond the core auto sector. And that is where we see that the defense aerospace order book, that remains strong. So I think while we will definitely need to see improvement in EBITDA margins in Q2 numbers, but I would still have a positive view on Radico and on Bharat Forge, and use some of these dips to buy into a quality long-term structural story.
So would you at all, and I'm pretty sure, Siddharth, that you might have to go back to the drawing board to take a look at how this affects the full year picture. But what is do you have a target price right now on the stock?
So I think, Alex, the target price of stock has seen a sharp rally in the last few days, and valuations at this current level, I think, closer to our target price. But as you rightly said, now we'll have to rework FY27 numbers, which will also change and reflect in FY28 numbers. So definitely there could be some estimates cut. And as I said, one of the key factor which you were trying to extract from the management about the margins front. So while it is while they are sounding strong in terms of the margins recovering back to normal Q2, Q3, I think Q3, Q4 generally is the stronger quarters for the defense industrial companies. So I think till that time, given the current valuation, stock could remain sideways to marginally under pressure.
It's a good point. Osho, quickly, a view, and good afternoon to the both of you. I didn't wish you, but Osho, your view on Bharat Forge, 7% down now. It's recovered from a low point of 9.5% lower. What are the levels that you would look at that make it start looking attractive?
Very good afternoon, Alex. Firstly, thank you for having me at the show. Yes, no doubt, today we have seen very strong correction, but overall the traction is quite positive in the counter. So any kind of further correction towards the zone of 1970 to 1950 will be lucrative zone to start accumulating the counter. Again, the counter have seen these kind of correction backed by the quarterly earnings. So some stability or some stability in the coming future should be there in the counter. So I'm expecting any consolidation within the range of 1980, 1970 can be seen as opportunity to accumulate positions from medium-term perspective.
Okay, all right. So that's the view coming in on Bharat Forge. Just about a minute away from the 315 close price, of course, for the Nifty 50. Let's try to pull those indexes up and see as to where they're trading at right now. The Nifty 50 Absolutely flat, 24,500 levels is what we're tracking there. The Sensex as well, if we can try to pull that up and see as to where it is trading at 78,400 levels is Sensex. Again, yet another flat day for both of them, right? The Bank Nifty also, if we can try to pull that up, because these will be the levels that we'll be tracking from here on till 3:30, and that's when we'll come to know as to how the closing price is being entered at. There you go. Now we have the final closing prices. Let's try to pull them up. Not the final, not the final, not the final, but for
not yet. Don't close the market yet, Mahima.
For the cash segment of FNO, 24,560 is where we're seeing Nifty 50 at. Let's also see the Bank Nifty and the Sensex as well. The Sensex at 78,478 and the Bank Nifty at 57,606. Osho, so these are the levels, of course, at 315, and we'll wait for 330 also to see as to how these levels pan out. But from what I've been hearing from traders is that now that it's been a week of cash, people have understood as to what's happening and what should be the course of action. Do you think that now the difference between this closing price versus the 330 closing price will be really narrowed? Is that understanding correct? Which I think you're
definitely.
Go ahead.
I was saying that the differentiation will definitely diminish in the coming period, and in the past 3 days also we have seen that the closing has been not very much differential from the 315 closing period. So I expect that now market has sensed the stability, sensed the cash auction segment, and now we can expect some kind of similar kind of a closer that we used to have because of VWAP. So accordingly, I am expecting that now approximately 20 to 30 points of upside or downside can be seen in the index. But overall, 315 closing will be giving us a sense that where the market is going to close. And in the last 2 trading sessions, it has been very flat. So definitely there has been no major traction in the benchmark indices. But I expect now the volatility has definitely vanished, and now people have even also adopted the cash auction session closing as well.
Okay. All right. So if you're tuning in for the first time after having gone to some other place, taken a break over the last 1 week, you don't know what cash is all about, quick primer for you. This is what we're witnessing right now. You have F&O stocks that stop trading in the cash market at 315. There is a volume weighted average price that determines the reference price for these stocks at 315. On the basis of that, they start trading in a separate window. That is because we've moved to the cash settlement. That is the closing auction session. And this is where bids are made, asks are put in. And so you eventually have an order matching that takes place. The price then that is determined at the end of that window, which you'll come to know anywhere between 328 and 330, is what determines the final closing levels for the index as well. So just a quick 1 minute primer for you in case you were wondering. At this juncture, what you're seeing on the screen is the fact that the spot market has stopped trading because Nifty 50 is broadly comprised of your F&O stocks. 24,560 is that last tick. In the future market as well, it's barely changed, right? It's 24,665, not too much action there. Let's head across now to Varsha, because Hitachi Energy was my pick for stock of the day this morning. It's done incredibly well for itself, and it's not the cheapest stock. So what is it that pushed it 10% higher today, Varsha?
Well, overall a strong set of numbers which we have seen in Hitachi, and hence we are seeing that move in stock price. Let's see what are the key highlights when it comes to Q1 FY27 numbers. There was a strong execution across projects which actually drove growth for the company. Cost control supported earnings when it comes to profitability and the margins. If I were to talk about operating leverage, if you see, drove profits for the company, and hence that margin uptick also. Data centers is expected to drive incremental growth going ahead. Now talking about the 4 numbers, well, revenue, if you see, was up almost 68%. Net profit was at 294 crore. A good spike when it comes to EBITDA as well, at 364 crore versus 155 crore. EBITDA margin at 14.6% versus 10.5%. So good spike over here, which was led by operating leverage and the cost control. If you see the base, talking about the order book, base order inflow rose almost 26% year on year. This is excluding HVDC, though strong demand was seen from data centers, which offset weaker transmission orders. Well, order backlog, if you see, reached at around 32,200 crore, which provides a good visibility. If you see, nearly 4x of FY26 revenue. Now, talking about BESS, this is again the next growth leg for the company, battery energy storage system. They've also secured first BESS order. Even so, this is going for every, I would say, power company or capital good company. I would say, battery energy storage system is the current hot topic when it comes to overall power segment. Talking about exports, where export will become a meaningful contributor, going ahead for the company, which accounts for almost 25% of the backlog. Export pipeline overall remains strong for the company. Talking about lastly, let's see what brokerages are saying. So Nomura has initiated coverage with buy call with target price of around 40,030 rupees. Well, what they say is that export and cost optimization to support profit expansion going forward. They are estimating 38%, 48% and 45% when it comes to revenue, EBITDA and PAT CAGR from FY26 to FY29, and they expect Hitachi to win 2 domestic HVDC projects over FY26-29. So good set of numbers. Brokerages are bullish on the company, data center, and I would say HVDC and BESS are the next growth leg for Hitachi Energy.
Right, Varsha, thank you so much for getting us those details on Hitachi Energy. The stock, of course, trading at 11% higher in trade today. Osho, any view on the charts? Do you think that this rally could continue from here on as well?
Firstly, the counter is already an outperformer. It has already been nearly 100% in the current calendar year. So I'm expecting the overall momentum is still there. And with the kind of breakout that we are witnessing in today's trading session, there has been a sloping trend line breakout. So overall, the trend is very bullish. I'm expecting that there might be some kind of headwinds on the higher zone of nearly 38,000, 38,500 kind of a zone. But once we reach those levels, then from there onwards, again, the momentum should be persisting in the counter. So overall, the trend is quite positive and one should stay bullish in that.
Okay, all right. So that's the view coming in on the charts for Hitachi Energy. But let's also try to pull up SBI and see as to where it's trading at and see as to, because the stock has been seeing profit taking. And let's try to understand from Shivam as well as to why the stock is under pressure. Do you think, Shivam, it's just profit taking coming in because Q1 was healthy for SBI?
Yes, despite good set of numbers for quarter one for SBI, the stock is seeing a little bit downfall. And let's look at the key reasons. What has been the factors that are factoring in this. So first one is the sharp rise in slippages. That the slippages has risen around 27% on quarter basis. Although the management has stated that this rise in slippages is mainly on a seasonal basis, despite this has mainly pressure forward onto the stocks sentiment. Also this has impacted the provisions. The provisions has also risen by around 75% on quarter basis, and this is the total provisions. In terms of yield advances, that has been on the lowest levels in last 5 quarters. In terms of CASA ratio, that too has declined around to 20 basis point on quarter basis, and currently it stands at 39.2%. In terms of deposit growth, that has been seeing a competitive intensity across the industry, and it has been pretty bit facing issues while to garner deposits. In terms of corporate loan growth, that too has remained flat, and that was due to the deposit loan repricing as the lenders, as the customers are seeking alternative lenders and are moving forward to the other banks. In terms of ECL implementation, that has also remained a key concern, where the ECL impact on credit cost is still uncertain, and the management has stated that the impact of the ECL implementation, quantifiable impact, will be shared after Q2. Also, in terms of valuations, the 1-year forward price to book ratio currently stands at 1.54 times, and the 5-year average price to book ratio is at 1.5x times. So this, on the valuations basis, to the stock seems pretty well above valuations.
Got it. All right. Thanks so much for that, Shivam. Siddharth, what's the view on State Bank of India? Of course, the margin performance was way ahead of expectations. Domestic net interest margin was in line at 3%, but the global NIM was higher than expected. If I remember correctly, it was expected to come in at 2.77, and it came in at above 2.8%, which was positive. What do you make of what my colleague just pointed out, though?
Yeah, Alex. I think SBI delivered another steady quarter, early NII growth, and more importantly, NIMs now expanded, seen a sharp improvement. Q4 is where we had seen some decline, and now the domestic NIM guidance of 3%. I think that is expected to sustain for FY27, supported by improving yield and a healthier credit growth outlook. I think for today, two, three things factor. A, definitely some profit booking has happened. B, the loan to deposit growth divergence. If you see, loan book growth has been pretty steady at about 19%, but deposits grew at just about 9.7, 10%. And I think that kind of little bit impacted the sentiment. The other was fresh slippages that increased to 2 on a sequential basis. Obviously, there is some seasonality in Q1. I think that led to some profit booking. Overall, what we believe is that it remains the best in class in terms of the large banks among ICICI and SBI. I think these two are our top preferred picks within the banking space. We continue to have a ROA estimate of about 1% and ROE of about 16%. So we have a buy rating, target price of 1370. So about 25% upside.
Okay, all right. So that's the view coming in on SBI and ICICI as well. But let's try to take a look at what's going to happen next, because NSE's September rejig may see BSE enter the Nifty 50 and Wipro could see an exit with implementation, kind of slated for 30th September. Soumit is here to give us what other stocks are also in focus on the back of this rejig. Soumit?
Multiple stocks remain in focus given the fact that today post-market NSE will be coming out with the announcement for the index changes. Now this final adjustment for this will be done on September 38th, but today post-market is what the changes in the index announcement is expected. Firstly, on the Nifty 50 side, BSE is expected to be included in the Nifty 50 index and Wipro is expected to move out of the index. Now because of inclusion of BSE, if that happens, then analysts are seeing an inflow of close to $740 million US, while for Wipro an outflow of close to $246 million US is expected on the back of this exclusion. Apart from that, 6 key changes expected in the Nifty Next 50. Now, given the fact that Wipro is moving out of Nifty 50, it will be included in the Nifty Next 50, and because of that, there could be an inflow of close to around $95 million US. Apart from that, there is Vedanta Aluminium, BHEL, Polycab, Hitachi Energy and Vodafone Idea, which can be included in the Nifty Next 50 as per analysts, and if that happens, then inflows could be anywhere between 143 to 71 million US dollars in these counters. On the flip side, there is Mazgaon Dock, Lodha, United Spirits, REC, Indian Hotels, which could move out of the Nifty Next 50, and because of this exclusion from the Nifty Next 50, there could be outflows of anywhere between 124 to 35 million US dollars in these 6 names. So keep an eye out for these counters today post-market. The announcement is expected.
Okay, all right. And in the run-up itself, BSE is doing particularly well, or has done particularly well. The stock is up as much as 4% in trade, 4.2% in the futures. Siddharth, for a stock that has already gained 37% year to date, how much of an upside is there based on valuations, based on fundamentals?
I think while the BSE continues to gain its market position in the derivatives segment, plus the MF Star business, I think the recent, after this sharp outperformance, what has also happened is that in the recent monthly updates, the transaction volumes or the trading volumes, that has kind of seen some decline, which is impacting some of the other broking stocks as well, plus higher operating cost trajectory that is like to limit. But nonetheless, what we see is that from an exchange perspective, BSE continues to gain market share, which is very important. And we see, so our target price is about 4,250. So we see another, I think, 10-12% kind of upside room for BSE from current levels.
Okay, and Osho, what about the charts?
The charts are also looking quite positive. The past four trading sessions, there has been huge volumes that has been turning up in the counter, which is giving us kind of a consolidation at these levels. So I'm expecting that if there will be any kind of continuation above the zone of 3600, that means a follow-up buying should be there in the counter, then we might witness a kind of a strong breakout above the 20-day EMA, and that will be very positive on the technical side. So the intermediate target is approximately around the zone of 3820, 3850, and if it breaches those levels, then again we can see some kind of further upside in the coming future.
Rates, you were going to talk about it.
No,
go ahead.
So, yeah, like we said, the gap at least is kind of narrowing now is what we're seeing. But 24,583 is what we're seeing. We closed at 24,564.
So 23 points.
So 23 points. So not as volatile.
But we've nudged into the green.
In the green, exactly. Let's also try to see what Sensex is doing and the Bank Nifty as well, because the Sensex closed at 78,478. Let's see as to where that is also closing, and then also see as to where Bank Nifty is closing at. Let's try to pull that up, guys, if we can.
78,542 is where the close is.
And it was 478.
478, so not too much. Bank Nifty is at 57,687.
Yes.
And the close was 57,606.
So around 80 odd.
Yeah, 80 odd points. I just want to pull up the components of the Nifty 50 if we can, and just take a look at where the last tick at 315 was, and so this is the heat map. If you have the data, that will show you what the last tick at 315 was and where the close right now is, then we can probably look at that. Okay, so there you go. Remember that the 24,560 level that you see is not the volume weighted average price. It is simply the last tick that was recorded for the index at 315, and the gap between the two is 23 points for the Nifty 50, about 80 points or thereabouts for the Nifty Bank. Do we have the components? If we can pull up the components and the difference between the 315 price, there we go. All right, so top gainers is what you're seeing on the screen after the cash session, right? So these are all F&O stocks. Max Financial, you have Nuvama, that's gained about 0.7%, Birla Soft, Piramal Pharma, Alchem. Let's take a look at the top losers after the cash session if we can. And so on that list you have Coromandel, you have MCX. Not too much of a big move, right? So Hind Copper, in fact, you have a couple of stocks where result reactions might have also come through in the interim.
And interestingly, in terms of percentage, none of these are more than 1%. So that's what we've been talking about, that the volatility is kind of lowering as and when the traders are gaining experience. Any quick thoughts on this, Osho?
As we have mentioned earlier also, that now the deviation is definitely seen getting settled off in the last 3 or 4 couple of days, but overall I'm expecting the kind of a closing
as
that
for the
we are
Nifty
witnessing
50
by
components, Q. All right, let's head across to Puneet just to get a check of what he's seeing in the F&O space as well, and also some of the aspects that we just touched upon. The gap, Puneet, continues to remain more or less what it was at last week.
Well, certainly, and as you guys mentioned, it keeps reducing as well. So here's the difference between the August futures that we have trading at 24,662 versus the spot rate as well. Let's look at the similar one for the Bank Nifty too. Almost a percentage increase in terms of open interest for the Bank Nifty. The open interest is much lower today compared to what we have seen in the last week. So that'll be something to monitor. This is the difference between what we have seen on the spot as well as the futures for the Bank Nifty. I also want to talk about this, the change in what we have seen in the top F&O gainers and losers for CAS. Open interest distribution, of course, at 24,600. We've seen some reduction actually today happen on the 25,000 call index. So something that we discussed in the morning. The call is actually at 25,000, seen some reduction in open interest, and will be interesting of what happens tomorrow, because we know only 24,500 has seen some increase in the put open interest for now compared to this morning. This is a change, of course, for the Nifty as well as for the Bank Nifty, something that you guys spoke about. And finally, I just want to talk about the top F&O gainers and losers for the Nifty 50 as well as for the Nifty Bank as well. So that is Petronet LNG up 1.39%. SAIL is the other one, and so is Bosch. These were the most material moves that you saw today. In terms of what we have seen for the Nifty Bank as well, For Nestle, Grasim and Cipla are the top Nifty 50 gainers for there, and this is the change that we've been highlighting for cash. So as we hammer down the details going into this week yet again, this is the change that we are seeing across the indices. Nestle, Grasim and Cipla are the three other ones, Alex, that we want to point out.
Absolutely. So this is exactly what I wanted to actually look at, the Nifty 50 movers post the cash session. And the reason why you actually saw on Monday last week the 200-point up move in the benchmark Nifty 50 is that you had some of these components that rose quite dramatically, and heavyweights at that, right? You had HDFC Bank, you had Reliance Industries, a couple of other heavyweights that moved quite substantially. Osho, just derivative strategy if you can, and heading into tomorrow. Tomorrow, of course, is the expiry as well. How would you position yourself?
See, again, for Nifty, it will be very difficult because the range is getting very narrow down. On the higher end, call writers are approximately around the zone of 24,600, 700, while on the lower end, 24,500 has very strong put writing. So I expect that any kind of correction, any kind of dip towards 24,500 should be auguring well for the buyers, and one should look for buying opportunity. But until we witness a kind of a range breakout in Nifty, till that time one should maintain a conservative approach with buy on dips. But if there will be any kind of breakout above the zone of 24,600, then we may witness another set of rally towards 24,800 in the coming period. So one should look for buying opportunity either on the dips or on the breakout shoots.
For the Nifty 50 specifically, Osho, just because there has been a narrow range, but there are stocks like Nestle, Cipla, Grasim that have seen a slight spike, right, in the last 15 odd minutes. And Grasim is the one which has stood out in the last week as well in terms of its performance. Any particular strategy in these names?
See, strategy-wise, I will be focusing more on the metal space. Jindal Steel is looking quite positive to me. So one may look for opportunities. Jindal Steel 1140 call option approximately hovering around or closed around the zone of 14.5, 15 odd levels. So one may look for opportunity in Jindal Steel. It has given a very strong breakout above the 200-day simple moving average. Plus there has been long build-up in the counter. So I'm expecting that this counter can see some kind of a strong follow-up buying traction. So one can look for opportunity of 1140 call strike. 8 rupees will be the advisable stop loss, and on the higher end 26 will be the potential target that one can expect in Jindal Steel. Now coming to Grasim, comparatively this counter is looking quite positive to me, but already there has been very strong movement in past 2 trading sessions. So the possibility of some cool off or some breather might be there in the counter. Technical structure is definitely very positive, but again in this counter dip should be utilized to take a long position. So any dip or any correction towards 3,300, 3,320 odd levels can be seen as a buying opportunity in Grasim.
Last thoughts, Siddharth, as we close out. Short answer, necessarily because we're winding down to the end of the show as well. Based on what you've seen and most of the earnings season is done, what's stood out to you as the biggest winners, biggest losers?
I think if I were to just sum up, I think the mid and small cap segment, there we are seeing a very strong earnings growth. While Nifty earnings is around 6-7%, the aggregate for mid and small cap is about 20 to 25%. I think that is a big takeaway from the last 2 quarters, Q4 and Q1. So I would be selectively positive in some of these spaces. Metals as a sector has seen strong earnings growth. Some of the NBFCs, I think these are the 2 segments where earnings growth has been pretty strong, and selectively some of the smaller private sector banks. I think these are some of the spaces with strong results and should do well.
Yeah, absolutely. On that note, Siddharth, Osho, thanks so much for taking the time today. Pleasure speaking to the both of you. All right, it's been a pretty lackluster day of trade, very boring sort of a session where the range has been pretty narrow for the benchmark Nifty 50. Just about 100 points or thereabouts from the lowest point to the highest point, and that's not very much with the Nifty 50 at 24,600 or just sub that level. The Nifty Bank also underperforming, losing about 1/10% or so. The broader markets, actually, mid-cap index is where you saw a flurry of excitement, right?
Yeah.
With gains of about 0.5%, but the small cap index also looked pretty lackluster in trade.
I think that 24,600 is the resistance level that unfortunately we've not been able to cross, and that will be the level that we'll be watching out for this week. But the Nifty 50 heat map as well, because there are some stocks that have seen slight uptick because of that trading window that we have. Let's try to see if that's changed. But no, Titan still now trading a percent higher since we last spoke, 3.2%. Bajaj Finance also seeing good gains of around 2%. Grasim has been the outperformer last week. We'll have to see as to whether that carries forward in this week or not. But SPI continues to be under pressure. You have ITC, Eternal that also continue to be under pressure. And like Alex said, the small cap 250 is where the pressure has been. But the BSE 500 last week, if we can, and see as to what stock specific action that we've seen today in trade. And let's try to pull up the BSE 500. There you go. Hitachi Energy still topping that chart. Paytm probably locked in upper circuit. And you have something like Sumitomo Chemical, Quest Corp, which have done well. But Jamna Auto, Bharat Forge, NLC, REC, TFC are the names.
All for good reason.
All for good reason.
All for good reason. So therefore, and that brings us to the end of this particular edition of India Market Close. It's been an interesting session with a few key talking points and a few stock-specific news points in particular. So the PFC REC pair, Bharat Forge, where they've brought lower their guidance for the full year and their margins were under pressure, but they're expecting it to improve in the second half this year. All interesting talking points. But then from Mahima, myself, and the team that put the show together, thank you so much for watching. Do stay tuned. Lots more coming up in just a bit. This is NDTV Profit.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Good evening, you're watching Crypto Minutes powered by Coin Switch for your daily dose of news and updates from the crypto world with me, Shreyansi Singh. But first up, let's take a look at the top headlines. Bitcoin above $65,000 on regulatory optimism. India's crypto market could nearly quadruple, report says. France pushes bill to share crypto tax data. And Japan creates dedicated crypto and stablecoin division. Those were the top headlines when it comes to the crypto universe, but let's get into a few things that beginners should keep in mind before starting their crypto investment journey. Now, starting with crypto in India requires the same discipline, mind you, that you would bring to any financial decision, with a greater focus on understanding volatility, regulation, and taxation as well. So start with a compliant platform, choose an exchange registered with the Financial Intelligence Unit or FIU, complete your KYC, and that's using your PAN as well as Aadhaar details, all of those relevant details. Then link your bank account through UPI or net banking, and FIU registration. In fact, it's important because it brings crypto platforms within India's anti-money laundering and reporting framework. So that's something to keep in mind. But do remember that you must know what you're buying, and crypto is a diverse asset class, right? So Bitcoin has the largest market value and a more established network, while smaller tokens can really carry significantly higher volatility and project-specific risks that you have to be aware of as well. So before investing, have a clear view of why you're buying an asset, what gives you conviction in it as well, and what developments could really be changing that view over time as well. So look beyond the price and understand the asset's use case, adoption, liquidity, and what could really drive demand as well. So those are a few things to keep in mind. But also remember that you have to be investing with a strategy. So crypto can experience significant price volatility. So your approach should actually be decided before you invest rather than in response to every market move as well. So assess your risk appetite and have a very clear investment horizon as well. In fact, crypto is generally viewed as an alpha-seeking allocation within a diversified portfolio. So do remember that. That means that its role is to complement your overall investment strategy, not define it at all. So keep track of your entry price, holdings, and also your overall exposure. In fact, you can start with any amount that you're comfortable with if you're talking about that as well. So even just 100 rupees, 500 rupees, those are all fine. If you want to build exposure consistently over time, an SIP is one option where a fixed amount is invested at regular weekly or monthly intervals. So that's something to look at. And do understand the tax framework as well. That's another important bit to talk about. India currently taxes income from virtual digital assets at 30%. And it's also subject to applicable provisions, while 1% TDS also applies on qualifying BDA transfers. So since crypto taxation is transaction-based, maintaining records of those purchases, sales and transfers is quite important, and that's throughout the course of the year as well. So the goal is to make each investment decision with a clear rationale though, rather than reacting to the market around you. Start with an amount that you're comfortable with. Give yourself time to really build conviction, but always do your own research. And as we wrap, remember that you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole as well. The team is available to provide guidance and help users make informed decisions. And with that, that's all that we have on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना. ऐसे आप कहाँ से हैं? हरियाणा. कब गए थे लास्ट वहाँ पे? 1.5 महीने पे. आपकी फैमिली है और बच्चे हैं? 3 साल. मिस करते होंगे आपने ना बहुत फैमिली विजिट करने अलाउड है श्रीनगर तक अलाउड एक हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है सी द सैक्रिफाइस इज अनबिलीवेबल यू नो
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that's going to get you a roundup in terms of everything that has happened in today's trading session, and of course a check going in terms of news and updates from within the country and across the globe. But first things first, let's take a very quick look at the markets then, and in terms of caution that really dominated Monday's trade, that's actually what you were looking at, because the Nifty did slip below 24,600 and closed very close to those levels as well. So just about a 13-odd point uptick coming in for the Nifty. When you talk about Sensex as well, about 40-odd points higher, just about, higher as well. So that's something that you're looking at. It was previously in the red, and that's the picture that you're seeing coming in. Mid-caps, however, bucked the trend and outperformed the benchmark indices. So that's something that you're looking at as well. Quickly moving on and talking about the sectoral performance as well. That was mixed at close, with strong buying seen in some of the realty and IT stocks. So that's where the buying was at. But what was on the back foot was public sector banks or oil and gas stocks that really lagged in terms of the broader market as well. So you do have 1.6% downtick coming in for Nifty PSU Bank. Let's also move on and talk about sugar, that is suddenly giving markets a sweeter story as well. So sugar stocks are really riding that wave, and global sugar prices have in fact surged 14% in just the last 6 sessions. As you can see on your screens, very strong uptick coming in for some of your sugar counters, something like a Balrampur Chini, something like a Triveni, or even some of your stocks like Dhampur, or a bunch of these counters were really buzzing away in trade, with the futures price also jumping as much as 6%. So that's really the key trigger here, hitting their highest level since October. That's what sugar prices were up to. But the trigger, when you talk about it, it's largely supply concerns, with Brazil seeing weaker exports and production. That's putting stocks like Balrampur Chini, Triveni Engineering, Sri Renuka Sugar and Dalmia Bharat in focus, like I mentioned. Let's move on to talk about something like a BharatForge that has reported a mixed set of numbers, 7.6% downtick also coming in on the back of that. And when you talk about the revenue, it's grown nearly 19% on a year-on-year basis to somewhere close to 4,600 crore rupees, but the bottom line actually took a major hit. The company has posted 90 crore net loss against expectations of a 363 crore profit as well. So EBITDA's missed estimates. You do have a 358 crore one-time loss as well that weighed very heavily on the quarter. Let's move on and talk about Astra Microwave, that is facing a tough day when it comes to the Wall Street after a weak first quarter performance, putting the stock under pressure. So 5.5% downtick thereabout. And net profit, when you talk about that, it fell about 24.3%. On a year-on-year basis, you're looking at the revenue declining 11.7%. And pointing to that little bit of a slower quarter for the business. In fact, when you talk about where the pressure was, it was quite visible at the operating level. So EBITDA margins contracted about 190 basis points on a year-on-year basis, and the stock has actually touched its lowest level in 20 sessions as well. It's seeing its biggest intraday fall since June 2024 for investors. The key question, in fact, is whether this is a temporary Q1 setback or a signal of a more prolonged slowdown. Let's move on and talk about InfoEdge, that is making a strong move as well on the Wall Street. In fact, posting its biggest intraday gain in 25 quarters, touching its highest level since February as well. So that's one counter that you're looking at. InfoEdge up about 4.6% on the day as well. In the quarter itself, when you talk about it, the revenue was something that grew about 2.4%. It was largely a mixed quarter. Net profits, the one that's fallen about 20.4% sequentially, impacted by a 72 crore rupee one-time loss as well. And EBIT margins, when you talk about them, they improved to 40.5%. Naukri revenue up about 5%, while 99 acres has actually seen a 10% decline. Let's also move on and talk about another stock that's in focus. It's actually Amara Raja that was under pressure despite posting a strong 20.6% jump in the revenue. So somewhere close to 4,000 crores when you talk about the revenue. Net profits grown about just 4.6%. EBITDA is the one that's risen about 5.4%. When you talk about the stock as well, About a 4% loss is what you had coming in at close as well, highlighting the pressure on profitability, and that was something that was in focus as well, along with the EBITDA margins, of course, that have fallen to 10.1% from 11.5% a year ago as well. So that margin compression appears to be the key overhang for the counter, which is now seeing its biggest intraday fall in 62 sessions. Let's also move on and talk about Assam's flood death toll that has also climbed to 100, with fresh inundations still affecting 10 districts across the state. Around 1.38 lakh people have been impacted, while more than 11,900 hectares of crop area in fact remains submerged as well. So that's something that you're looking at. You do have Golaghat, that is the worst hit, with over 68,000 people affected. 3 rivers are also flowing above danger levels, including the Dhansiri and Kushiara River, keeping the flood situation critical. Let's also move on and talk about the government offering to debate the students' issue in the parliament as well. And you do have Home Minister Amit Shah set to also respond. The offer came at the Business Advisory Committee meeting as the government looks to break a 2-week-long logjam that has really disrupted proceedings in both houses. The opposition has been demanding a statement from Shah over police action against students protesting the NEET paper leak as well, with the government now agreeing to a debate and a Home Minister's response as well. The move could offer a way forward, in fact, on the stalled parliamentary business. Let's also move on and talk about police using lathis and water cannons to really disperse student protesters in Ranchi after they breached barricades while marching towards the Jharkhand assembly as well. The protesters are demanding reforms in recruitment tests, with thousands also joining the march. The state CID has also arrested former JPSC chairperson L. Kyangte as well over alleged recruitment irregularities. When you talk about security, that has actually been tightened, and that's across Ranchi, with schools mostly shut and police deployed at key locations. Let's move on and talk about West Bengal, that has announced a fresh investigation into the 2024 rape and murder of the doctor at RG Kar Medical College as well, and a case that has really triggered nationwide outrage. The government says the decision follows a request from the victim's mother. A separate probe has also been ordered into alleged lapses during the cremation, with action directed against those found responsible. Let's move on and talk about the DGCA launching a preliminary investigation into a runway excursion involving a Cessna C-172 aircraft at Maharashtra's Baramati airfield. The aircraft, operated by DGCA-approved Academy of Carver Aviation, was being used for a circuit and landing emergencies training exercise. A flight instructor and a trainee were on board as the air safety team now looks to determine the circumstances and contributing factors behind the incident. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best election coverage of the year, West Bengal election coverage. Best podcast show of the year, NDTV Control All Defense. Best primetime anchor of the year, Syed Suhail. Best female anchor of the year, Vasudha Venugopal. Best on-ground coverage of the year, Operation Sindoor coverage. NDTV, the network of impact. The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC.
Market ends on a tepid note in the first session of the week. Nifty remains below the 24,600 mark. Titan ends as the top gainer after Q1 results, with SBI ending as the top loser after opening as the top gainer. The Nifty 50 is set for a September rejig. BSE is seen entering the index while Wipro could exit, potentially triggering flows of $741 million into BSE and $246 million out of Wipro. Oil gains for a third straight day as Hormuz uncertainty lingers. Brent nears the $85 mark. Iran denies direct US talks while Trump says that Washington is only semi-negotiating with Tehran. Bharat Forge posts a tepid Q1 show. Profit falls 5% YOY to Rs 3,214 crores. Margins contract and EBITDA declines. Mines and Minerals Development and Regulation Amendment Bill introduced in Lok Sabha. The centre moves to curb states' power to tax minerals and expand control over mineral-bearing land. Amid opposition sloganeering, the government agrees to discuss the student protest issue in Parliament, including police action, as confirmed by Parliamentary Affairs Minister Kiran Rijiju. Protesting Jharkhand students breach barricades, marching towards assembly to press their demands for reforms in recruitment tests. Water cannons were fired and security has been beefed up. From the track to the podium, India's Commonwealth Games champions get a special shout-out from Prime Minister Modi. PM meets the medalists, praises their performances and celebrates the grit behind their success. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Gargi Shetty. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's first begin with how the markets ended. Markets ended on a subdued note in the first trading session of the week, with the Nifty closing below the 24,600 mark amid cautious investor sentiment. Titan emerged as the top gainer on the index, extending gains after its strong first quarter earnings announced on Friday. On the other hand, SBI turned out to be the biggest loser, reversing sharply after opening the session as the top gainer. Puneet is now here for a complete roundup of how the market ended.
Well, it was a day where there was some surprises to come through for the Nifty 50, largely a flattish kind of a move that we've seen. Because of the cash session, the Nifty has come into the green, but you had high flyers like SBI, which was one of the key counters, good set of numbers, but was the top loser for the Nifty 50 today. On the other hand, Titan was one big gainer today on the back of good results, good updates coming through from brokerages as well. Citi has a target price of 5,700 on the counter now, and just shows you the premium that counter now derives compared to the other jewelry stocks. What you have also seen is that Bajaj Finance was another counter which was up 2.2%. You saw that 5% downtick on both Bajaj Finserv and Finance on Friday on the back of their NBFC regulation that came through. Today, some recovery seen through on these particular counters. The Nifty Midcap also closed up in the green, up by 0.5%. You have seen within them Hitachi Energy as being one of the biggest gainers for today. It also is the biggest gainer for the BSE 500 on the back of good results. And Nomura initiating a coverage with a target price of over 40,000 rupees for Hitachi Energies. You've also seen that Paytm was another big gainer today, another big update coming in from a brokerage on the MDR side of things, where it is estimating a 30% kind of a revenue from MDR itself by FY30 for Paytm, and hence that counter was also up almost 10%. Hitachi Energy also up 10% today as well. Within the small cap though, that closed in the red because it was trading at about 0.2 to 0.3%, but closed in the red today. You had GSPL as well as Inox Wind as the top losers for the small cap 250, but within sectors there were a mixed note. Realty was clearly a big winner today, while PSU banking index led by SBI was the biggest loser for today. But overall, as we go through, you had individual movers like Jamna Auto as well as PFC and Rain Industries. Those were the top losers for the BSE 500, and overall we continue to monitor with the CAS as well as the closing price at 350 and 330. That continues to be lower as well, so settling in for now. But individual last week of the earnings essentially, so individual movers continue to dominate the news flow. Today was led of course by Hitachi Energies in the broader markets.
Right, thanks for that, Puneet. And viewers, NSE's September rejig may see BSE enter the Nifty 50 and Wipro exit, with implementation slated for the 30th of September. And I have Somit here with other stocks in focus on the back of this rejig.
Multiple stocks remain in focus given the fact that today post-market NSE will be coming out with the announcement for the index changes. Now this final adjustment for this will be done on September 38th, but today post-market is what the changes in the index announcement is expected. Firstly, on the Nifty 50 side, BSE is expected to be included in the Nifty 50 index and Wipro is expected to move out of the index. Now because of inclusion of BSE, if that happens, then analysts are seeing an inflow of close to $740 million US, while for Wipro an outflow of close to $246 million US is expected on the back of this exclusion. Apart from that, 6 key changes expected in the Nifty Next 50. Now, given the fact that Wipro is moving out of Nifty 50, it will be included in the Nifty Next 50, and because of that, there could be an inflow of close to around $95 million US. Apart from that, there is Vedanta Aluminium, BHEL, Polycab, Hitachi Energy and Vodafone Idea, which can be included in the Nifty Next 50 as per analysts, and if that happens, then inflows could be anywhere between 143 to 71 million US in these counters. On the flip side, there is Mazgaon Dock, Lodha, United Spirits, REC, Indian Hotels, which could move out of the Nifty Next 50, and because of this exclusion from the Nifty Next 50, there could be outflows of anywhere between 124 to 35 million US in these 6 names. So keep an eye out for these counters today post-market. The announcement is expected.
Right, and staying with that market momentum, sugar stocks are in focus after sugar prices surged sharply, with futures climbing as much as 6% and prices hitting their highest level since October. Now, the rally has been supported by various reasons like supply concerns and weather-related crop damage in Europe. Let's go over to Shreyansi for more. Shreyansi, I just want to know what's really causing this surge.
Right, absolutely, some sweet gains coming in for some of those sugar counters as well. So something like a Balrampur Chini or Sri Renuka sugar for that matter. Those were some of the counters that were buzzing away, to name a few. When you talk about the factors, you're looking at the prices moving on the back of a very big surge that you've seen coming in terms of sugar prices. So you're looking at sugar jumping the most in September 2024, and it's close to a 6% jump coming in futures, which is prices also hitting the highest level since October as well. So that's something that you're looking at. You're looking at a 14% jump in just the last 6 sessions, just to tell you how much it's really risen as well. So you do have Brazil export. That's something that's a very important factor to talk about as well, and short covering seems to be driving the latest price surge as well. Along with that, the market does appear to be overbought. But when you just talk about the factors as well, 3 things that are happening here. Number one is that you have supply concerns on the Brazilian side. Number one, of course, is number two is the Europe output as well that you're seeing changing as well. So you do have that at a decade's low as well. So that's something to keep an eye on. And along with that, when you talk about dry conditions, they're going to be lingering when it comes to India over the next 3 weeks. And that's also something that you're watching out for in terms of factors.
Right, thanks so much for breaking that down for us, Shreyansi. But viewers, moving on, all markets remain on edge as uncertainty over the Strait of Hormuz keeps traders cautious. Now, US President Donald Trump says Washington is only semi-negotiating with Tehran and is willing to let economic pressure build on Iran, and Tehran has denied any direct talks. Now, Iran insists that the strait will not reopen unless its demands, including lifting the naval blockade, are met. With Houthi threats persisting and no breakthrough in sight, geopolitical risks remain elevated. Brent crude continues to hover near the $85 per barrel mark, extending gains as investors weigh the prospects of a prolonged disruption to global energy supplies. And AideaForge has reported a weak set of Q1 numbers, with the company slipping into a net loss of rupees 90 crores against a 363 crore rupee profit estimate. Now, revenue came in broadly in line with expectations at 4,640 crore rupees, while EBITDA stood at 710 crore rupees, below the 809 crore rupee estimate. Now, the key drag was a one-time loss during the quarter. Let's listen into Amit Kalyani, Vice Chairman and Joint Managing Director, on the two major reasons that impacted margins this quarter.
Last quarter and this quarter, we had a major breakdown in one of our plants in the US. And that actually caused us to have to produce here and ship to the US at our cost. Secondly, we have a 130 basis points or so impact of energy prices, which have not yet get compensated. So that will that will happen, and then that will get corrected. So these are the two major factors.
Right, and staying with that earnings momentum, Titan is in focus after reporting a strong Q1 with an earnings beat led by robust jewelry growth and margin expansion. Listen into the word coming in from the management on the growth targets.
So I am quite hopeful that high teen to 20% growth rate for watch analog business is certainly possible and maintainable. Eye care had made certain changes. They have been at it for last 4 or 5 quarters, and that started showing results. We are pretty hopeful, strong high teen to 20-25% growth rate coming there also. We have also, disclosed our ambition in last annual analyst day, which we just did in June, that FY30 ambitions we shared, and they were certainly putting us on doubling the revenue in 4 years.
US PSBs posted a strong Q1 driven by healthy NII growth and improving asset quality. SBI, PNB, Union Bank and Indian Bank reported robust earnings, while Bank of Baroda's profit was hit by NMC-related provisions. Piyush is now here with more details on this.
That's right. Top PSU banks have reported a robust set of numbers in Q1 FY27. If we look at the NII growth, it has been, after a long period, it has come in the double digit. If we see SBI's NII grew 14%, Indian Bank's NII grew at the pace of 17%, BOB's NII was up 10%, PNB 2%, and the profit after tax also across banks has grown quite sharply in the range of 10 to 213%. Now, Bank of Baroda was an outlier in Q1 because we are aware that the bank had made around 5,600 odd crore of provision for the settlement that it agreed with in the NMC case. So that is where the bank's profit has gone down quite sharply by 72 odd %. But other banks have reported strong, robust growth in the net profit in Q1. If we look at margins as well across banks, except for Bank of Baroda, the margins have grown by around by 3 to 16 basis points if we see on a quarter-on-quarter basis. So quite a sharp rise in margins as well. The net NPA across banks has been, coming down by around 1%, and BOB again in this case is an outlier. It has seen net NPA rising 5 bips Q on Q. If we look at the advances and deposit growth, after a long time, banks have touched higher teens growth. SBI, in fact, recorded 19% YOY growth in its advances and has targeted 14 to 15% sort of a loan growth for the full financial year. Now this bank, growing at the pace of 14 to 15% at a base of 60 lakh crore rupees. So we can imagine the extent of credit appetite that is there according to the bank's management. And except for BOB, top PSBs have performed extremely well in Q1, both in terms of margins, asset quality and business growth as well.
Here's the RBI has eased PSL norms for banks, giving banks more exemptions in regards to the FCNR-B deposits. Piyush now brings us this report on what exactly this means.
Absolutely. So RBI has been consistently trying to, give as much comfort, regulatory comfort to banks when it comes to FCNRB deposits. As we are aware, when it announced the FCNRB deposit scheme, first it removed the SLR and CRR requirements that banks are, asked to keep for deposits. So FCNRB deposits were exempt from that. Then after that, RBI gave further relief, saying that banks can issue SLBC, essentially bank guarantees against FCNRB deposits. So for that, further gave clarity to banks that yes, we can lend against such deposits as well. Now on Friday, the RBI has given the third and final, regulatory comfort. It has essentially said that banks need not make, these FCNRB deposits will be exempt from PSL targets. Essentially, they will be exempt from ANBC, which is adjusted net bank credit facility. Banks have to keep a certain portion of these deposits into ANBC, which is essentially priority sector lending. So FCNRB deposits will not be required to have PSL targets. This move will boost USD inflows and all. And fresh FCNRB deposits and NRE term deposits, which are raised between June to September, will be exempted from this ANBC and PSL requirement. So this is a third major relief that the RBI has given on the FCNRB front.
Let's move on to some corporate news now. There is a legal dispute brewing around Cult Fitness. Bengaluru police have registered an FIR against Cult Fitness and co-founder Rishabh Telang following a complaint by former co-founder Deepak Poduval. Now, Poduval alleges that forged documents were used to erase his 50% stake and divert the company's business to another entity. Telang, however, has denied the allegations. Let's go across to Nimit for more details on this dispute.
An FIR has been registered in Bangalore against Cult Fitness and its co-founder Rishabh Telang. It has been filed by former co-founder Deepak Poduval, who alleges that there were forged documents behind the sale of his 50% stake in Cult Fitness originally in 2015-2016 towards the company when he did not actually sell that stake, and now IPO bound Cult Fit is dealing with this FIR where 50% of the stake originally in Cult Fitness, a company that's now been wound down and its brand has been sold to the new company Cult Fit, is in question. Now let's break all this down. Now what the FIR suggests is that Deepak Poduval says that forged documents were used to remove Poduval from the management. It alleges that the Cult business diverted to another group entity. Now we spoke to Cult Fit as well as to Rishabh Telang, and Rishabh Telang says that firstly there was no forgery involved here. Now what happened is the original company Cult Fitness, in which both Rishabh and Deepak were co-founders, was wound down. Now once it was wound down, the new company Cult Fit was brought out and the brand rights over all of their properties, including Cult, the workout station, were transferred with full knowledge of Deepak Poduval to the new company Cult Fit. Now what Rishabh Telang says that in 2020 there's an MCA document highlighting this transfer which was sent to Deepak Poduval as well as the company, and there were no complaints raised, and he says that this is unrelated to the company and it's actually related to a personal property dispute that's ongoing. Now what the company Cult Fit said is that it is not named here. The earlier company Cult Fitness, which no longer exists, has been named, and also none of its subsidiaries have been named. So IPO bound Cult Fit has distanced itself from the dispute, although Rishabh Telang says that he is going to take whatever action legally that needs to be taken in this dispute and he's cooperating with the authorities. But again, they deny all allegations here that this 50% stake involved any kind of forgery.
Delhi High Court orders Meesho to remove alleged counterfeit Sun Pharma sunscreen listings after the drug maker flagged consumer safety and brand concerns. Nimit brings us this report.
Yes, so the Delhi High Court has come down with a very important order here when it talks about platform liability. Now, Sun Pharma went to the Delhi High Court to say a lot of its products under its name, Photo Stable Gold and Bello Photo Stable, were being sold on Meesho's platform. Now, the kicker here was that Sun Pharma said that actually it's not selling any of its products on Meesho. So where do these products come from? Sun Pharma said that these were counterfeit products sold with the same name on Meesho's platform. It said two things. One, that these products are counterfeit. Second, that the liability here on Meesho is more than just an intermediary platform. It should be as somebody who checks the counterfeit or the genuineness of the products, because once those products are sold and if they don't work well, then the liability of that will fall on the brand reputation and goodwill that Sun Pharma has developed over these many years. Now, the Delhi High Court agreed interimly and has issued an order asking Meesho to take down all these URLs which Sun Pharma provided about counterfeit products sold on Meesho's platform, and all those URLs have to be now taken down. There's issued notice on the matter, which means that the matter will be heard. Meesho will be heard. The defendants, who are in this case the people that make these counterfeit products, will also be heard. And also the court is going to look into this further to see whether platform liability and the platform itself, which is not selling the products but on which it's being sold, should be held liable in this case. It's an important ongoing litigation, ongoing feature of litigation that will be examined in this case.
Moving on to some national news now, the centre is looking to tighten control over mineral-related levies through proposed changes to the MMDR framework. Rishabh brings us more details on this development.
Absolutely. In the Lok Sabha, you have now the government has introduced the Mines and Minerals Development and Regulation Amendment Bill of 2026. This is in the Lok Sabha right now. It will have to also go through Rajya Sabha before these amendments become law. But just a gist of the amendments that the government wants to bring in here. Of course, the main motive is to curb more and more of the state's power on tax demands that they can make via these on these mines, etc. And a reason for that that the government has given is that there are uneven tax levies across mines across various states, and that is a burden on miners. That is has actually for long been an industry concern as well. What the government is now saying is that states cannot impose mineral levies outside of a central framework. Also, unrecovered past mineral taxes, all of those will also be now invalid, and the government wants to bring more and more certainty as well as predictability to mining costs. And this is, of course, to encourage more and more mining across various states of various minerals as well. So that's what the government is coming out with these amendments to the Mines and Minerals Bill.
The government has agreed to a full discussion in Parliament on the student protests and the police action linked to them. Parliamentary Affairs Minister Kiren Rijiju said that all concerns raised by the opposition will be addressed, with Union Home Minister Amit Shah set to reply to the debate. Now, the move comes amid demands for clarity over the reported use of pellet guns in Delhi and AK-47s in Bihar during protests over the alleged exam irregularities. Kiren Rijiju urged the opposition parties to ensure a smooth proceeding. Listen in.
विस्तार से जवाब देने का तैयार है। मैं अनुरोध करता हूं कांग्रेस पार्टी और इनको कि गृह मंत्री जी का जवाब के समय डरना नहीं है, भागना नहीं है, पूरा सुनना पड़ेगा। मैंने बिजनेस एडवाइजरी में भी सार्वजनिक वहां सबके सामने में कह दिया है कि सरकार छात्र को लेकर के पूर्ण रूप से विस्तार से चर्चा के लिए तैयार है और पूरा जवाब देने के लिए तैयार है।
The Ministry of Civil Aviation has clarified in the Rajya Sabha that there is no government policy preventing major airport operators from owning substantial equity in or operating scheduled airlines. The ministry said that certain restrictions that do exist stem from concession agreements governing some airports developed under the public-private partnership model. Now, these provisions limit scheduled airlines and their group entities or associates from holding equity in the airport concessionary. The government's clarification comes amid discussions on cross-ownership norms between airports and airlines and the evolving structure of India's aviation sector. The Airlines Pilots Association of India has issued an advisory to pilots following the recent Air India Phuket-Delhi flight incident. The association has urged pilots not to self-medicate and to exercise caution, noting that some over-the-counter medicines in India may contain ingredients that can trigger a non-negative drug screening result. The ALPA has also advised pilots to avoid poppy seed-based foods and festival drinks such as bhang or thandai before flying duties. It has appealed to the DGCA to ensure confidentiality, independent oversight and proper review processes. And moving on, Jharkhand students' protest turned violent today as police used lathi charge on the protesters. They were protesting over the alleged irregularities in the Jharkhand Public Service Commission examination. While thousands of students gathered outside the Jharkhand assembly, police used force to disperse the crowd. Several protesters and cops have been injured in the clash. The students breached barricades outside the assembly and managed to reach the assembly gates. Meanwhile, former JPSC chairman L. Khyagam has been arrested by Jharkhand CID amid the probe into alleged exam irregularities. Let's take a look at NDTV's managing editor Padmaja Joshi's ground report from Ranchi.
We are continuously reporting from Ranchi, where today the students have decided it's a now or never moment for them, because this is years and years of frustration and anger that has built up. Right there where you see is that point where there is a face-off right now between the students on one side and the police, which is on the other. A while ago, there was a lathi charge, the water cannon was used. Remember, what had happened this morning was that the organizers of this protest had said that you have to march from the old Vidhan Sabha towards the new Vidhan Sabha, but it should be done in a peaceful fashion. Somewhere along the way, the story changed. The police says that there was aggression on part of the protesters. The marching students say that they were subjected to a lathi charge. One such person is here with me. आप वहाँ से मार्च करते हुए आ रहे थे, फिर क्या हुआ?
हम लोग पीसफुल तरीके से मार्च करते आ रहे थे मैम। हम लोग का जो पीएससी जेएसएससी रिफॉर्म मंच है, उस मंच से भी अनाउंसमेंट किया गया था कि हम लोग पीसफुल तरीके से आंदोलन करेंगे। हम लोग शांति मार्च लेकर आ रहे थे और जो एसपी सर से बात हुई थी कि जो आप लोग का जो एरिया है जहाँ पे हम लोग डिसाइड किए बैठने के लिए, वहाँ पे बैठ जाइएगा। हम लोग बैठने के लिए हम बच्चे को समझा रहे थे, उसी बीच में इधर से पुलिस की तरफ से पूरा लाठीचार्ज करके जिस तरह से हमको समझाने के दर में हमको भी चोट लगी है। 2-3 जगह इधर भी, पैर में भी मारा है, पीठ में भी देखिए, यहाँ भी चोट लगा है, यहाँ भी चोट लगा है, देखिए कट भी गया है। मैम हम बताना चाहते हैं कि हम लोग किसी भी तरह से, हम लोग छात्र हैं और किसी भी
आपको पैर में लाठी मारी है?
हाँ, ये देखिए पूरा लाल है। ये आपका सरकार के द्वारा से हम लोग का जो आंदोलन है उसको दबाने का प्रयास किया जा रहा है।
Prime Minister Narendra Modi met India's Commonwealth Games medalists in New Delhi and congratulated them on their impressive performance in Glasgow. During the interaction, PM Modi praised the athletes for their hard work, dedication and commitment to representing India. He also encouraged greater participation in sports and urged Indians to continue supporting the country's athletes. India returned from Glasgow with a strong haul of 39 medals, including 13 golds. Let's listen in to a snippet of PM Modi's interaction with the medalists. That's all the time we've had on this edition of Profit 360, but stay tuned to NDTV Profit for more news and updates.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC, a show where we decode the most interesting companies. And let's see if you can guess which company is on our radar. Good morning, I'm Hiral Dadia. First up, to understand this one, it was incorporated in the year 1904 and it was actually that time known as the Kumbakonam Bank Limited. Any guesses on that one? I'll give you more cues. The stock itself is up 21% from March lows, okay? That's the second one that you have. And third, this is a bank which is based out of Tamil Nadu. Again, a South India based bank. The company has actually delivered a steady Q1 set of numbers as well. So, and that's been the trend that we've seen with regards to where the BFSI space goes this time around. And it is beneficiary of the textile boom from Tripur as well, which is in Tamil Nadu. Now, you know, this sector has been like a lackluster one, but it has seen, you know, an uptrend because of this. So that's the cues that you have to guess which the company is. And I'm going to take you through what we are actually talking about. In terms of the bank that we're talking about today, overall, we're talking of a bank which is City Union Bank. That's what we're looking at. Now, if you see in terms of City Union Bank as well, that's the company we are looking at. Apart from this, if you see in terms of other aspects in terms of what this bank is actually all about, if you have to talk about City Union Bank, we'll quickly take you through the graphics as we speak. First up, if you see in terms of the net interest margin outcome, the key question is it actually bottoming out? And what is the trend likely looking like? Is that going to continue? Secondly, we've seen lower fee income in the first quarter. So what's the outlook ahead with regards to where the lower fee income goes? The slippages and the ECL impact. And we're talking about the ECL impact is mainly on the back of the credit cost ahead and the guidance in terms of FY27. So these are the key questions that we have as well. Secondly, the benefit in business from the FTAs and especially the Tripur region and the textile sector is what benefits, and hence this bank benefits. And you're talking about the FCNR deposit mobilization as well. What is that going to look like in the second quarter? Because that's where the bunch will come in. September is the deadline that the RBI has given. Apart from that, what are their views in terms of the high risk exposure that they have with regards to loans to MSMEs and gold loans? The reason we're talking about gold loans over here is because the kind of fluctuations that have happened in terms of gold prices in the recent past on the back of the West Asia crisis, and the MSME growth guidance and the branch expansion plans, because that will tell you how deep are they able to actually come in as well. So these are the key questions what we are talking about in terms of where City Union Bank goes. But moving on, if you have to look at the other angles in terms of City Union Bank, and overall if you have to look at you know, what are the key factors and parameters that we're looking at, incorporated in the year, we've already spoken about this. It's called the Kumbakonam Bank in the past. Now the names have changed. It opened its first branch in Madras in November 1965. Apart from this, if you have to look at this, about this, it's a scheduled commercial bank regulated by the Reserve Bank of India. Let's move on to the next slide. 1,000 branches across 71 states and 3 union territories is what you're seeing. And they've mobilized close to 150 crore worth of deposits under RBI's FCNRB. Now, this is as per the latest data that has come in. If you talk about the gross net performing assets, it's lower and it is better as well. So that is the abbreviation, but let's see where it stands. If you talk about net NII, that's the net interest income. To give you context, higher the NII, better is the performance of the bank. If you talk about the ROE and ROA, these are the return ratios. So the return on equity and return on asset, again, higher both of these metrics, it is better in terms of performance to gauge, what investors are getting. And again, higher the better in terms of net interest margin. So if you see a number which is higher on your screens, understand that the bank has been performing well because your net interest margins are improving. Likewise for CASA as well. That's your current accounts savings account ratio, and that's the reason why it's called CASA. Moving on in terms of the other things that we're watching out for. The core, pre-operating profit has been a beat, and this is only on the back of a better NII as well as lower operating cost. Secondly, there has been no material change in the core profitability, and they're seeing the core ROA at around 1.5%. So that's what you're talking of. In the first quarter, the guidance is of growing 2 to 3% above the system. That is what they have maintained, and this is what the guidance has been given in the first quarter. The fee miss amid lower processing fees is what actually was the key negative, and that was actually driven by the loan offtake, which was very slow. Secondly, the management has maintained FY27 ROA guidance of 1.55% plus. So 1.5 was the current, 1.55 or above that is what they're indicating. They're actually targeting an exit ROA of 1.6 to 1.65 by FY28. What this means is that at the end of the fourth quarter, this is what they're looking at, but not for FY27 as a whole. Now, let's quickly look at their advances as well. Now, in terms of advances, almost 40% is to MSMEs, which is then followed by close to commercial real estate, which is at around 16, agriculture, I beg your pardon, which is close to around 16%. Then your non-agri gold loans holds around 14% in terms of your advances, and the remainder follows, but maximum goes to MSMEs. That's what your Q1 FY27 looks like. Now, what may work? Now, analysts are absolutely bullish when it comes to City Union Bank. What they have indicated also in terms of what may work for a City Union Bank, let's look at the other aspects in terms of the graphics. Now, asset quality has been improving, so that could be one of the factors to consider. The EU agreement, that will benefit the businesses from Tripur, because Tripur is concentrating on textiles and they do get majority of their business from the textile sector. Net interest margin guidance at 3.65 to 3.7. This is what they're looking at over the next few quarters, and it's the gold loan business that will aid that kind of a net interest margin as well. MSME growth is projected to exceed the system growth by almost 2 to 3%, and that is a chunk of their advances. So that is a key. And they are seeing a one-time ECL impact this time around. We already spoke about how this will look like. But let's understand, what may not work. This is exactly one of the points that may not work on this. In terms of other aspects, valuations are slightly expensive. So that is something that we will have to take with a pinch of salt in terms of where the bank goes. So we're talking about ECL, we're talking about valuations. The exposure to MSME and gold loans, though, if there is any default happening on the MSME front, you see a direct impact here, and hence there is a negative side to it as well. Likewise, with regards to gold because of the fluctuation in terms of pricing. Any economic downturn risk, because this is what will affect gold prices as well and the propensity as well. So these are the factors that you should be considering. But let's actually understand what are the other factors that you're looking at in terms of City Union Bank. Because a lot of positives that we've already seen, and the rating is going to be interesting. Income statement, balance sheet, operational parameters and return ratios is what you're looking at. Shareholding patterns, street credentials, valuations and the analyst take. This is what we'll be talking about as well. Let's look at the income statement first. There you go. Net interest income, good growth from 752 crores. It's actually managed to go to what, 820 there. But if you see in terms of profitability, it's 315. It's see the growth, but it's not that substantial. 315 going up to around 343 odd crores in the first quarter of FY27. But it's a thumbs up on this one. If you see in terms of the balance sheet as well, your deposits, again, from 0.7 lakh crores, it's improved to 0.8. Likewise, your advances have also improved to an extent from 0.76 lakh crores to almost a 0.7 lakh crores. So, a thumbs up in terms of the stability that they will have seen. Let's look at the operational parameters. Let's see what, after this, we'll be looking at the operational parameters as well. In terms of the operational parameters, what we're actually watching out for is the net interest margins and the asset quality. Now, your net interest margins from a 3.5% have actually come down to 3.4%. So, that's a little bit iffy. Asset quality has improved quite a bit. Your gross has gone down from 2.2 to 1.7. Net NPS from 0.8 to 0.6. So, asset quality improving, net interest margins a mild deterioration, though there is stability in Q4 and Q1, and hence we've given it a neutral rating as well. So that's with regards to where the operational parameters go. But let's look at the next matrix and see, what are the factors that we're looking at. Return ratios, a thumbs up. The reason being is, has been able to maintain an ROA of 1.5%, and the commentary with regards to the exit number is very strong. Likewise, in terms of ROE, in fact, that has improved substantially from a 12.6% in FY25 to a 14.2% in FY27. That's what the estimate is looking like. But even FY26 has seen a good amount of improvement. So the return ratios have been very strong. Let's look at the shareholding now. FIs, you can see a 19% from a 28%. And I think that's the negative here. If you look at the DIIs, they've actually improved. In March 2025, the DIIs were actually sitting at 33%. They've actually now gone up to 45%. And your public shareholding has also gone down from a 39% to a 36%. These two factors are concerning. This is a positive, and hence a neutral rating is what we're looking at. But now look at the street credentials. What is the street actually giving it? What are the kind of returns that we've seen from a City Union Bank? If you see in terms of the street credentials, from March lows, that's what we've been talking about since the beginning, it's a 21% uptick that has come in there. But from 2026 highs, the stock is corrected 12%. In the last 1 year, you've seen returns of 40%. 5 years, 80%. I mean, not spectacular returns, but not given negative returns as well to an extent, and hence we've given it a neutral rating. Let's look at the valuations here. Now, in terms of valuations, the 5-year peak has been 1.96 times, and we're talking about the price to book. If you talk about the 5-year average, 1.4 times. Current, 1.7 times, which is telling you it is expensive as compared to your 5-year average, but very close to your 5-year peak as well, and hence a neutral rating in terms of where the price to book value goes, and the valuation comes in a neutral. Let's look at the analyst take on this one, because you have 34 analysts who are tracking a City Union Bank. 82% have a buy rating, 9% have a sell, 9% have a hold. So your sell and a hold is very equal. Your 12-month target is a 264 rupees per share. The 12-month target and the 82% buy actually warranted for a thumbs up, and hence we've given it a thumbs up as well in terms of the analyst view. But moving on, let's quickly look at the final rating that we have from the 8 parameters that we've been tracking as well. If you have to look at the 8 parameters, income statement, balance sheet, return ratios is a thumbs up. Operational parameters is a neutral rating, as we mentioned as well. Let's look at the others. The other 4, if you have to look at them, shareholding, street credentials, valuations, neutral. Your analyst take is a thumbs up. You know what is interesting is there is no thumbs down in any of the parameters, which is also a positive. Your final rating, let's pull up that one on the screens. Your KYC rating stands at 6 on 8. That's what we're talking about in terms of where, the overall rating goes. But I think it's now time to actually discuss how the quarter has been, what is in store going ahead. We have the management, Vijay Anand Ramamurthy, MD and CEO at City Union Bank, joins in. Mr. Ramamurthy, welcome to the show, and always a pleasure to speak to you as well. Help us understand the net interest margins. Is their outlook looking like going ahead? Because it seems that it's bottoming out now. So is the trend likely to continue?
Yeah, the numbers were quite good. We have been growing year on year at 25% on loans and 21-22% on advances. Looks like we did NIM of 3.78 to be precise last quarter. While we will slightly come down, but overall for the year we are looking somewhere between 3.7 to 3.75. That's a number which we are looking out for the year. We don't see a big drop in NIM for sure. We should be around 3.7 to 3.75.
Okay. So that's with regards to where the net interest margins go. What do you make of the lower fee income in the first quarter? Just help us understand what was the reason for this underperformance and what's the outlook looking like going ahead?
We had suit recovery slightly drop for Q1, but nevertheless, I think Q2, Q3, Q4, we will achieve the numbers of whatever the other income which we have planned internally. Normally Q1 income is always slightly lesser in terms of suit recovery and other incomes, which we should stabilize it in Q2, Q3. Should not be an issue for us.
Okay. Mr. Ramamurthy, talk to us about the slippages in this quarter and the ECL impact that has had on the credit costs, and what is the outlook looking like going ahead?
Yeah, I think slippages has been quite good. If you see our recovery continues to outlast the slippages. We have been doing more recovery than the slippages. Looks like we will continue for this quarter as well. I think we have been doing this for the last 10 quarters. Even for this quarter, we will continue to do that. And continuously for the second quarter, our SMA2 numbers have been less than 1%. And our overall SMA 012 is hovering between 3.6 to 3.8. That's been a very, very positive sign for us. I think looks like the portfolio quality is well holding, and we will continue to get the result out of this. That's one piece. And as far as slippages for the year is concerned, I think we should be somewhere between 700 to 750 crores, and there are no changes in the numbers what we have been getting.
Okay. The question, Mr. Ramamurthy, then what investors want to watch out for is what happens to the return ratios, right? They have remained stable. In fact, some of them have improved as well in the first quarter. So do you think you will be able to maintain that in FY27, or will it be better? What's the guidance looking like?
So we should have exit ROA of 1.65%. That's the number which you are looking at for the year. Exit ROA for the year is 1.65. Our cost to income will come down. If you see the last quarter, we closed around 45. Even after the hike which we have given on July 31st, and with the considerable amount of IT spending which we are doing it for AI and Center of Excellence which we have created, I think we should exit cost to income at 47%. And our ROE should be somewhere between 15 to 15.5. That's the number we are looking at. So ROA of 1.65, ROE of 15 to 15.5, and cost to income of 47. I think our growth should be 2-3% more than the credit growth. And our deposits, have been quite granular. Our 50% of the deposits are retail deposits. We continue to get the benefit out of this. Deposit growth will also be quite stable.
Strong return ratios as well. The other thing I want to talk to you about is with the kind of dependence that you have on the textile sector. Now, all of the FTAs that are being signed will somewhere benefit indirectly, I would say, because of Tirupur. What are the business benefits that you're looking at on the back of the FTAs that the bank would actually see?
I think I did mention this in the call. Tirupur has been quite fabulous. We have been to Tirupur, and the FTA agreement which we have signed with Europe, I think it should create a lot of demands. We could see that demand as well coming up. We did meet some of the big textile CEOs. I think they are very, very positive, and this is also visible in the requirement what they have asked for. I think it's going to be a good season for us.
Okay, good season for you. So when you expect the benefits to start coming in from Tirupur then?
I think growth has been quite stable. If you see last 2 quarters, including Q1, last Q4, we have been growing around 25%. I think 2-3% above the industry growth. I think that growth should continue. And if any other businesses comes, we should surpass the 3% as well, additional business, which we have been doing it for the last 2 quarters.
Okay. Mr. Ramamurthy, the other question I have apart from businesses in terms of the FCNR deposit mobilization, because that is something which has been spoken about quite a lot. We've already, as a nation, hit the mark that we had to. But if you have to look at it from a CUB perspective, what is that mobilization looking like ahead for in terms of the second quarter? Because we know September is the deadline.
Yeah, we did give a pretty decent interest rate as well. We are around 7.1% as we speak on FCNR. We had a pretty good Q1. We expect the same performance to happen in Q2. Even this is without the leverage, by the way. So without the leverage, we are doing this. I hope the same trend will continue in Q2 as well. That's a number which we have got from the team.
Okay. The other question I have for you is in terms of the MSME portfolio, the gold portfolio, all of these are high risk and the exposure that you have is also pretty strong, right? What's the outlook looking like and are you seeing any slippages or any concerns on that front? Because gold price is absolutely fluctuating and inflation, if that persists or inches higher, it becomes a problem when you talk about the repayment cycles of MSMEs.
I think gold loan is something which we are around 31% as we speak. We expect it to be stabilized around 32% of our overall book. And as we speak today, the average LTV on gold loans is around 62-63%. I think we are pretty decent in what we are. And predominantly, this is a branch distribution. And hence, we don't see much. Our operational risk has been quite managed well. We don't pretty see much in this gold loans. As far as MSME is concerned, we have an industry-wise exposure and we continue to maintain the industry-wise exposure. As we speak, I think our portfolio quality speaks all about it. As of now, the data is very, very positive. And when we meet the customers, I think that's also a very good sign. Overall, we don't see as of today much worry about these two sectors, what we are into, MSME as well as gold loans. And our retail is also picked up well. We have been doing good on retail secured. Our loan against property and home loans has been doing pretty decently and most of it through the branch distribution, as you know, because our overall third-party business is not more than 1 to 2% of our bank's book. So considering that we have 1,000 distribution centers, which are 1,000 branches predominantly, I think with branches meeting the customer, understanding the business and taking it forward, we are quite confident of the book what we are creating.
So then that takes me to my next question. What are your branch expansion plans? Because that's what everything relies on.
We did take these branches in the first month of this year. So we have already touched 1,000. I think we will open another 5-6 branches maximum this year, not more than that. We wanted to stabilize these branches, ensure that we start serving the customer properly and get a maximum out of it before we really do the expansion. Hopefully, we will do the expansion only next year. So as of now, we might exit this year at 1,005 branches, not more than that.
Okay, so 1,005 branches is what you're looking at. What's the industry guidance, Mr. Ramamurthy, for the banking industry, and which are the sectors which are probably doing well that are aiding the sector as a whole?
I think 2-3% more. I think textiles is something which we are very, very positive. We are also quite positive on paper, where predominantly it's in Kange, Belt and Palladam near Coimbatore. We are also quite positive on automobile, which is happening in Sriperumbudur, which is a border of Chennai. So automobile is good, textiles are good, paper is good, cotton is doing very well. Cotton is one thing which we are, and I think the same trend looks continuing. Pharma is something which we have quite a decent exposure in other than Tamil Nadu. That's also pretty decent. And in terms of Balotra, we are quite doing pretty decently in other businesses as well where we are present. So I think predominantly these industries continue to do very well for us. And we have the cap for whatever the industries which we are operating, as I said before. So we would like to cap at the risk level, concentration risk on each space.
Got it. I think everything looks pretty strong from here on. But thank you so much, Mr. Ramamurthy, for joining in. Always a pleasure to speak to you as well. In fact, that's all, folks, on this edition of Know Your Company. Lots more lined up on NDTV Profit. Please stay tuned.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you.
Presented by Canara Bank. Together we can.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you've been wondering about how to judge your mutual fund schemes, or in fact schemes that you want to invest in, and what are the metrics that you should judge them by, there are so many. Let's narrow them down and talk about a few that you should absolutely look at. Udayan Adhe, who is managing partner at Money IQ Investment Services, joining me now to talk about them. Udayan, thanks so much for taking the time, and good evening to you. If I were to ask you to narrow down on three parameters by which to judge a mutual fund scheme, what would they be?
Good evening, Alex, and a pleasure as always to see you and talk to you. When it comes to analyzing a mutual fund, right, I think instead of looking at one scheme in particular in isolation, look at it how different mutual fund schemes are a part of your entire portfolio. And that will sort of tweak the answer a bit, right? Because if you think about it from a purely metrics standpoint, there are so many out there. One of the ones that I rely on a lot is rolling returns. So we'll get into what rolling returns are as well. But when you say look at any of these mutual fund analysis information websites, a lot of people will just filter returns, which are the best performing schemes in the past 1 year, and then pick the first 2 or 3, right? We know that past performance obviously does not mean that those schemes will continue performing well in the future. In fact, only 25% of winners continue to be winners, and that they keep rotating. So that's not the best way to judge performance. Rolling returns helps you look at not just how it has done in the past 1 or 2 years, but it helps you gauge the consistency and how consistently well or not well a scheme has performed, which is, I think, very helpful because markets go through different cycles. And if your scheme is doing well consistently throughout those different cycles, you know that a good fund manager, a good fund house is behind it. So that's, I think, the first one. The second one would be the fund manager, the fund house itself, right? You want a fund house of integrity, of credibility, of pedigree. So there are a lot of AI tools out there. What I would recommend is just go to any one of them, type in the fund house, the AMC that you're investing with, and ask it to do a due diligence entirely of if there are any adverse reports against that AMC. If there are, stay away from it. There are so many fund houses that you can invest with. And the third would be how the different funds fit in your portfolio, right? Because you may find 3 of the best funds out there, but if they're all, let's say, only investing in one area of the market, let's say mid caps, then are you really going to have 100% of your money in just one category, whether it be mid cap, whether it be bonds, large caps, whatever it is, right? You always want a mix of different asset classes. So I think that's how you would select a portfolio.
Very interesting. So one is consistency of returns, second is integrity, third is suitability. Very important parameters. Well, then people look at alpha. Alpha is nothing but, in an actively managed scheme, the ability to outperform the benchmark of that scheme, right? So people look at alpha, but they don't necessarily pay enough attention to the experience that they have when they invest in something, which is defined by the volatility, right? Which is standard deviation. How do you look at those two when you are looking at fitment and feasibility?
Absolutely. I think very essential. Again, fits into the suitability aspect of it, which I'll just get into. But with regards to the various risk factors, right? There is a Sharpe ratio, Sortino, Trainer ratio. SEBI has now mandated information ratio to also be a part of the data that is shared. The thing is, all these risk parameters, right? They're inherently called risk parameters for a reason, because they look at how your fund has done vis-a-vis different aspects of the market. So for example, in the Sharpe ratio, you're looking at the total standard deviation of the particular fund, right? And how your fund has done with respect to that. Then in the Sortino ratio, you're looking at just the standard deviation on the downside. Because like the past couple of years, we have known that while the markets haven't done as well as people were used to, when the markets go down, that hurts you more, that makes you more anxious. So looking at something like Sortino ratio becomes essential then, because it analyzes your fund's return with respect to the downside deviation of that particular fund. Then comes Trainer ratio, which would look at the fund performance with respect to the beta. But honestly, you know what, Alex, I have a slightly controversial take here, which is backed in science, so maybe not as controversial, is that all of these risk parameters, they look at past performance, right? They look at past returns. So there's a lot of analysis that happens with all these risk ratios. But if you're looking at them in isolation to select a fund, then that becomes very tricky, right? Because again, we know past performance doesn't necessarily carry on into future outperformance.
Yeah.
Secondly, like I shared earlier, only 25% of winners continue to be winners. And even that keeps changing, right? Yeah. So fund ranked first would have ranked 150th, essentially, if you look at 3 different time periods. So anything that looks at past performance, not really the best analysis. So I would potentially give all these risk metrics, even volatility for that matter, I would give it maybe a 15% weightage, 20% at the higher end.
But having said that, Udayan, you're absolutely right in that it judges the past performance or a period that has already occurred. But if you look at the portfolio construct of some of these schemes, you can generally say that it's likely that they will have either a low beta or a high beta, right? Or you going forward, I'm saying. Or you can say that it's possible that they will have a low standard deviation or high standard deviation, particularly when you have a portfolio or fund manager that has been very clear in the stance that they have taken. Take the most common and the largest equity scheme, which is Parag Parikh Flexi Cap Fund. You have the fund manager that has actually recently responded to unit holder questions about the fact that it's done practically nothing over the last 2 years, and he speaks about why, right? So. Is it more directional than anything else?
So I would look at all of these risk ratios, right? I would just essentially look at them from an elimination perspective, not a selection perspective. So if something has extremely high standard deviation, and we won't get into the technical aspect of standard deviation, but just think of it as how much your fund moves with respect to the overall movement. Right? So if it moves wildly, whether it's up or down, your blood pressure is also going to move up wildly. When the fund doesn't do well and it moves down wildly and it moves up, you'll feel good, but then you will remember the time it hasn't done well. So you'll again not feel as great even during that time, right? So what I would typically do is, even when looking at these risk ratios, I would look at the extremes, right? So if something has very high standard deviation, then I eliminate it entirely. If that's not the sort of investor I am. Then you look at Sharpe, Sortino, Trainer. I would not consider funds that have a very low risk ratio in these 3 aspects because that's again an extreme, right? But again, I necessarily wouldn't select funds that have the highest, say, Sharpe ratio or Sortino ratio because again, very heavily dependent on the past and that may not necessarily continue in the future. I'll give you an example, right? I'm not nitpicking any particular AMCs or anything like that. If you remember, Alex, from 2018 to 2020, so right before COVID, there was one particular fund house that was killing it in the large cap space. They had a focus fund, they had a large cap fund. If audience can tell, it was the Access AMC, right? These two schemes were essentially outperforming everything out there. While everything else was falling, these two schemes were rising. At that stage, if you looked at the Sharpe ratio, Sortino ratio of these two schemes, they would have blown through the roof just because of the performance. But immediately after COVID, you saw that a different style of investing gathered steam, right? Sure. Because Access was more focused on growth style of investing, a value style of investing that ICICI Prudential, for example, right, is known for, the ICICI AMC. That started doing well because of the prevalent macro conditions. So I think just from this perspective, classic example of what happened then. And in fact, I would encourage viewers to today go to, let's say, their favorite large, mid and small cap categories. Figure out which are the top highest rated as per Sortino, Sharpe, trainer ratio. Just look at the ones that are highest rated there and set an alarm for 1 year later and then see how they would have done. Right?
That's a good point. That's a good point. And what you're saying is absolutely right, which is why, Udayan, on this program, on these chats itself, we talk about diversification, not just across market capitalizations, but also in terms of style. Because quite often you have 3-year periods in which one particular style underperforms. As you've just described, a growth can go through its phase, whereas a value can go through its own phase and a quality can go through its own phase. All of these things have phases, right, in market cycles. But I think it's been a fascinating conversation, Udayan. Thank you so much for taking the time.
Thank you, Alex.
All right, let us know what you think and how you look at the parameters that are important to you and how you decide how to invest. But we slip into a very quick break. We've got more on the other side. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Welcome back. The debate about the implications of using petrol has maybe dissipated somewhat. But I'm sure that if you're in the market for a new car, you have a few questions. And I'm hoping that over the course of this conversation, you will get answers to all of those questions. Joining me is Hormuz Sorabji, editor at Autocar India. Hormuz, always a pleasure speaking with you. And thanks so much for taking the time. Let me start by asking about this, right? This whole conversation about E20, and I know there's anecdotal evidence of people in my office itself that have decided to go EV because they don't want to worry about it. Or maybe even people who've gone to diesel saying, okay, there's no blending of ethanol in diesel. Is this the right choice to make?
Well, I think, a lot of the fears are overblown. There are some concerns for sure. Let's talk about ethanol. I think one concern that there is contamination, because ethanol attracts contamination more than regular petrol does. And I think that has been one issue, and especially contamination with chlorine. So that is more a contamination issue, and it affects all cars, whether they're E10 or E20. But I think there are going to be standards in place now on the chlorine limits in the petrol. So I think there are isolated cases where that has been there, but I think generally, I think people running E20 cars have genuinely not had any serious problems. So I think, since a lot of the cars are now E20 compliant, there's no problem in buying a car which is now let's say, designed, calibrated, and compatible to meet this new blend of fuel. So really, new car is really not an issue. It's always with the older cars that there was a worry. So, in fact, it makes more sense to buy a new car now rather than hang on to your old car, which is not compatible with E20. And, there's always that worry that a car which is not compatible may not work. Also, I think what I think is quite clear is that the government is not going to go beyond E20 as a base fuel in the foreseeable future. I think, obviously, this backlash has made them put a pause on going to a higher blend. People are talking E20 will become E25 in no time at all. But I think clearly that is not happening. So I think there is now, a little bit of, that kind of concern has been taken away. So an E20 car designed for E20, I think, is no problem at all.
Okay. From a technical standpoint, Hormuz, and I know that you study this very closely, you write about it extensively, you do shows about it, conversations about it. What is different between an E20 car and an E10 car, functionally?
Well, I think functionally there are two things. One is there's the engine calibration, and then there's the material compatibility. So ethanol is, as we know, is more corrosive. It's hygroscopic. So it kind of impacts, the fuel. It's limited. Firstly, it's limited to the fuel delivery system. No other part of the car. And within that, you've got, the fuel tank, you've got the injection system, you've got hoses, you've got O-rings, you've got seals, all of it which comes into contact with E20. So clearly, there's a worry that, how will this degrade? Now, we've seen that the jump from E10 to E20, manufacturers have generally put a fair bit of buffers in there. And even if there is to be degradation, it starts really with the rubber hoses, which, to be honest, I've heard feedback from certain garages where there are rubber hoses in the fuel filler cap, which are showing some kind of swelling. But honestly, this costs about 200 rupees to replace. So it's really not, as I keep saying, not really catastrophic, because these parts are not expensive. The most expensive part is a fuel pump. Which, typically people are worried that would fail. And there have been some fuel pump players, but it's more to do with contamination, which, to be honest, has been a decades-old issue, adulteration and contamination. And that really can play havoc with your engine, because obviously you're putting in fuel that is not to the spec. But fuel to the spec, I think really the kind of wear and tear, it might be accelerated. Clearly, we are not yet in that window of, let's say, 2 years where we will see certain damage happening. But clearly, looking at early signs is really not too much, and it's limited to the few components in the fuel delivery system. So I think my advice always is, the number one is fill up at a reliable pump. Because clearly contamination happens at multiple levels, especially of chlorine, if groundwater gets in. So fill up at a reliable pump. I think also the oil ministry has really put a crackdown on dealers after, hearing these kind of social media reports on all these contamination issues. So I think fill up at a reliable pump, and really you shouldn't have much issue. I think the biggest kicker really is the fuel efficiency. There's a significant drop in fuel efficiency, and that is something, unfortunately, consumers have to feel that pain. The petrol price hadn't come down. So that, in fact, is, to me, the biggest cost is really the fuel efficiency and not so much the long-term, let's say, replacement of parts.
Okay, final question on E20 or ethanol, essentially, before I move to other stuff, which is that I was incidentally speaking to a metallurgical engineer who said that perhaps it might make sense because it's hygroscopic, as you mentioned, and in a city like Mumbai, for your fuel tank, it might make sense to keep it more full than not. Don't leave it empty is the advice. Does that make sense?
Yeah, it does. It does make sense. I think that's a lot of things you can do. More than that, hygroscopic is I think fuel separation takes time to happen. It doesn't happen immediately. But I think the more you use your car, the more you run it. That's really what you need to do as well. And keep your tank above half full. So there's limited amount of, because the moisture in the air or in the air pocket above that, that's where the moisture can be absorbed. And obviously you reduce that volume the more you fill up your tank.
Makes sense. Okay, so therefore, on balance, Hormuz, coming to the first question, which is if you were in the market for a car right now, and forget about just ethanol, right? Put all of the factors together between EV, hybrid, petrol and diesel. How do you make your choice?
Well, it really depends on your usage and what you're having to do. I think diesel doesn't make too much sense as a city car anymore because the efficiency of diesel has also gone down. People don't realize that. And the shift from BS4 to BS6 and then 6.2, clearly all the cleanup technologies have had an impact on fuel consumption. So diesel also isn't great from a efficiency perspective as it was earlier. Of course, it's a lot cheaper to run. But then if your running is low, you really don't get that benefit because the purchase price is higher. And then you've got these new cars have these diesel particulate filters which need to be regenerated. So it doesn't make too much sense as a city car. I think EVs make a lot of sense as a city car. Clearly, you may not get the benefit if you're looking at total cost of ownership, because if you take the price of the EV, which is significantly higher than the petrol, it may not weigh up. But I personally feel an EV in the city is a no-brainer. Forget about the economics of it. It's almost free to run if you have home charging. If you have a home charger, it makes a lot of sense. Public charging isn't that convenient anymore. And, it's the nicest car to drive. One, it's the best automatic. It's very refined. It's very smooth. It's very quiet. But just the whole experience of driving an EV is sometimes reason enough to kind of put the economic equation on the side, So because clearly for low running costs, the initial purchase price of an EV and finally the resale value, which isn't very good, will offset any running costs you have. So it may not even stack up in terms of, let's say, any economic benefit. But I think that's not really a reason to look at one. Frankly, there's no tailpipe emission, and you feel good about driving it. I think anyone who's driven an EV gets addicted. They find it very hard to go back to. But again, the good old petrol, small capacity petrol sometimes is really the lowest, let's say, common denominator in this. Is very accessible, it's a no-brainer, quite a safe play. But also CNG is also now becoming a good option with some more. You don't get the same performance as a petrol, and the CNG refilling, can be take a little bit more time depending on the queues and things like that when you go to fill up. So obviously with petrol, that's a known devil to us. And that I think is why a lot of people very often default to that.
Yeah, the Hormuz that I knew 10 years back, I'm struck by the fact that a motorhead like you is saying EV is the way to go. And of course, you're saying it for good reason. So I take that completely. But just to draw to a close, right, Hormuz, a lot of people tend to push the envelope when they want a car, and ultimately you spend a lot of time in your car, and so therefore it's a precious commodity that you want to buy. But they make the mistake of maybe buying something that does not fit the envelope, and it's not just the ticket price, right? How much attention do you need to pay to after sales? Because that can end up being very, very costly.
Well, yeah, I think after sales, frankly, is more brand specific than technology specific. And I think, if you want, let's say, after sales, it's fundamentally, I think, mostly the Japanese and the Koreans, which are the most, have the best reputation in terms of after sales. I mean, you've got Maruti, Honda, Toyota, really unbeatable when it comes to after sales reputation and total cost of ownership. Even Hyundai and Kia are pretty good, but I wouldn't say at the same level. But, a lot of people buy the car for emotions. That's why you've got, cars like Volkswagen and Skoda really selling. They're great to drive, strong turbo petrol engines. The handling is great. Obviously, not in the long term, more expensive to maintain than a Maruti. But then, today cars are very emotional. So people generally also go in with their eyes open in this, kind of scenario. And clearly, I think what everyone's looking for right now is a basic level of reliability. You don't want your car breaking down or things going wrong with it. That is what is, looking at. And I think over there, some companies like the Indian OEMs don't have as good a reputation as the global manufacturers in terms of, that long-term reliability and lack of nickel. So, but again, then they compensate by giving fantastic value, stunning features, good performance, good space, all the other factors that really kind of, tug at the heartstrings of a car buyer. So it's not a one size fits all. It really depends on what you're looking for, what you're willing to compromise for. And, the kind of, and in turn, what do you get for making those compromises?
Okay. A 30-second answer, Hormuz, but I'm not asking you for a recommendation. In your opinion, what are your favorite vehicles in each of the categories that I mentioned? One would be your budget car, two would be your mid-range car, and three would be under luxury, but something that people would pay a little money for.
So I think, budget cars, I would look at, if you're really on a budget, I would look at, Maruti Suzuki's. I think WagonR is really something that I know it's, not very aspirational in that sense, but it's so functional, such a proven car, got the space, gives you the efficiency and just does, everything you want it for that price. I think, moving up one notch, I would look at, let's say, to be honest, a car that I like, which is a bit underrated, and I don't know why it's not doing well, is the Hyundai Extra. People don't like the look so much. And I think, that again, as a petrol car is, pretty it really gives you a certain level of quality and feel. Even that AMT is very good. If you're looking at an EV in that segment, it's got to be the Tata Punch. I think the Punch EV really is now fantastic value for what they're offering, and no surprise that it is doing extremely well over there. I think moving up to the mid-size SUV segment, to me, I think the Seltos today is the best all-rounder over there. Really doing quite well. I think it's, just ticks the good boxes. Even that 1.5 naturally aspirated engine paired to a really good CVT, very, very good. And I think then moving up, I would say the Mahindra 7XO, the good old diesel 7XO. Really, to me, one of the best vehicles in that segment. Yeah, so I think that's just basically, these are my picks.
Fantastic. I love the picks. Almost, as always, absolute pleasure. Next time I'll ask you about if money were no bar, which would your pick be? But next time. Thanks so much for taking the time.
Thanks. Okay. Thank you. Bye.
Well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
It was expected to be a strong set of numbers from Titan based on the quarterly update that was shared not too long back. And the thing is, it's come in slightly better than expected in certain metrics. And let's talk about some of that with Ashok Sonthalia, who's the Chief Financial Officer of Titan Company, joining in right now. Ashok, thanks so much for taking the time and for speaking to us. Good morning to you. Let me start with that margin performance. Because it was better than everybody had penciled in. There was an element of mark-to-market and inventory gain. So how much of that, in your opinion, was on account of that? And does that get reversed in the second quarter itself?
So thank you very much, Alex. Good morning to you and all of your viewers. We had in the month of May custom duty increase from 6% to 15%. So that always have an impact on the existing inventory, which have been paid at the earlier custom duty rate. So that has a significant upside in the books of accounts, and that's not reversing. That has been, the inventory has been sold, and it is likely to come in quarter two as well. The other one was, of course, because we were procuring, and when custom duty changed, there was differences between international and Indian market. So some accounting MTM gains happened on the inventory valuation. They are likely to reverse. So roughly 230 basis point margin benefit from custom duty and roughly 75-80 basis point from the MTM. That 75-80 basis point is likely to reverse over the next 2 quarters.
Interesting. Some aspect of the margin performance in the jewelry business, which adjusted, I think, stands at about 10.9%, was on account of the improvement in the studded mix, Mr. Sonthalia. So therefore, heading forward, if we're looking at this kind of a mix going forward as well, what is the expectation on margin? One. two, does the company internally expect that the studded mix will go up in this year itself?
So 2-3 things on this. When you look at YOY basis, the product mix actually did not improve. On quarter basis, yes, it did improve. Some of the things which are happening, like lower caratage jewelry of gold, particularly in diamond 14 carat and 18 carat, are being very well accepted, and they are now becoming a sizable part of the jewelry sale, and that has a positive impact on the margin. So studded natural diamond, sales with our exciting launches at a very, very attractive price points all across are doing very well. The buyer growth in studded jewelry have been pretty encouraging. And this was the quarter where gold jewelry and diamond jewelry almost grew in tandem, 34-35%. Earlier, always in some of the previous quarters, you would see while studded jewelry is growing, but they were lagging behind compared to gold jewelry growth rate. So all this put together gives or paints a very attractive or encouraging picture for coming quarters. Quarter 2 is particularly when we celebrate a festival of diamond every year, and that's going on, and we find customers are kind of liking that very much and coming and buying it.
Very interesting. I do want to ask about whether or not more exchange of gold is taking place, Mr. Sonthalia, because during the quarter itself, you had the Prime Minister's exhortation to say, hey, you know what, don't go out and buy gold. But I think evident from your numbers, people have gone out and done that. I guess they are exchanging old gold. Is that taking place?
Yes, we have been promoting in a big way exchange while we have been doing it all along, but we have been promoting it in a big way from quarter 3 of the last year, and particularly in the month of May when the Prime Minister request came in. Of course, there was a little bit hesitancy observed in the customer, and then they were kind of gravitating towards exchanging more gold. But it has not significantly moved up. Our effort has been there because that's in the interest of everyone, the consumer, country, current account deficit. So if we can reduce imported gold through exchange program, that would be good for everyone. But it has come up, it is inching up, but not substantially different from, say, quarter 4 or quarter 3.
And what does that number stand at, Mr. Sonthalia?
So, if the sales side we see, roughly, I think 45-50% of our sales have element of some kind of exchange.
Understood. One of the kickers going forward on that profitability metric or fulcrum is going to be the international and specifically the mass. So when does that materially start contributing? Does that happen in this financial year itself? And what is the kind of trajectory that you expect there?
So the mass has been going through, since our acquisition, some sort of restructuring. They had a very vast retail network, but part of it was focused on some of the Southeast Asian catchment, and those are getting converted into Tanishq format, and they are doing well because Tanishq is certainly a stronger brand as far as Southeast Asians are concerned. And the mass is now focusing on Arab population, Arab customer, and some of the expat customers. Current situation of GCC at this point of time is very, very difficult, where footfalls are low, the investment, so ticket sizes are kind of dropped a bit. I'm very hopeful, and we think that war situation will very soon resolved, and after that the mass should kind of start doing well. But I would still say this full year almost, because a lot of tourist population also contribute. I'm not sure that tourists are going to return so soon, but 2027 should be a brighter year for them.
Okay, that's an interesting. What are the internal expectations on gold, Mr. Sonthalia? Because last week itself, we've seen a 5-7% rise in the international markets, yields coming off to a certain extent. Do you have something in mind for the end of the year?
No, we refrain from, projecting gold. We are largely hedged company on the gold prices. So we focus on what we do nicely. We convert gold jewelry and kind
No,
of.
no, I was just curious. I was curious about whether you had an opinion. But having said that, what is your understanding of the outside of jewelry businesses? Because these businesses are growing, eye care, your watches business, around that 20% mark. Is that the steady state for this full year and in the foreseeable future?
You see, I believe watches, analog watches are doing extremely well on product innovation, very, very exciting products coming out of Titan Stable. And people are, earlier, say our core was up to 25,000, but now 25,000 to 1 lakh rupees, lot more Titan watches are there. They are above 1 lakh also, but 25 to 1 lakh, many products, and people are actually appreciating that. A lot of international brand, our Helios channel, which does the license international brand, that channel is doing extremely well. So I am quite hopeful that high teen to 20% growth rate for watch analog business is certainly possible and maintainable. Eye care had made certain changes. They have been at it for last 4-5 quarters, and that started showing results. We are pretty hopeful, strong high teen to 20-25% growth rate coming there also.
Okay. And overall, Mr. Sontalia, I know that the expectation is very comfortably for a double-digit growth, but that's a pretty wide range. Is it likely to be the level of growth that we saw in the first quarter maintainable across the financial year?
No. I think we would be pitching it not that high, because if you think quarter 3, quarter 4 was a very, very strong base last year. Gold prices till quarter 1 were still 59% higher than quarter 1 last year. But as we are moving ahead, now that differential is going to come down very, very significantly. And gold prices do impact the growth rate, because the ticket size goes up a little. So we don't know exact how the gold prices would behave, but certainly quarter 1 should not be extrapolated for the full year.
Okay, so low, but how much lower, Mr. Sontalia? High teen, 20% possible?
Should be possible. We have always been saying, Alex, that if you think about where our guidance is more clearer, that in 3 to 4 years time horizon, if you see 15 to 18%, even can go up to 20%, that's the range. 15 to 20% is the range where we should be comfortably placed. We have also, disclosed our ambition in last annual analyst day, which we just did in June, that FY30 ambitions we shared, and they were certainly putting us on doubling the revenue in 4 years.
Yeah, absolutely. Mr. Sontalia, absolute pleasure as always speaking with you. Thank you so much for speaking to NDTV Profit.
Thank you, Alex. Take care.
Let's talk about Raymond. In focus after its Q1 results, company is aiming at a big capacity push of over 1,000 crores. But to understand the roadmap going forward and the company's action plan post Q1, we're joined by Gautam Maini. He's a managing director of the engineering business of Raymond. Mr. Maini, thank you for speaking with us. Take us through the Q1. You've had a top line of about 605 crores, an expansion in your EBITDA margins and your profitability. Is this coming from aerospace and defense or precision tech? Which has been the bigger contributor, and what is the sort of revenue split there?
Well, I think it's come from both. I think both have made substantial strides. The revenue has really, the strong increase in revenue has come from the aerospace and defense sector, where revenue grew by 40.4% to 123 crores, while EBITDA increased to 26 crores. On the automotive side, which is the precision technology side, the revenue grew by 11.5% to 444 crores, but the EBITDA grew sharply by 45.5% to 61 crores. So while one of the businesses made a huge stride in revenue, the other balanced it out with EBITDA. So overall, both revenue and EBITDA grew substantially in both of the subsidiaries of the Raymond Limited.
What are the consolidated margin, figures that you're seeing continuing through the rest of the financial year with both pieces? Do you see them performing as they are?
Yes, I think there is a strong momentum. there would be some slight, headwinds in terms of the costs of tooling costs and some labor costs. But I think the operational leverages that are coming due to increase in revenue should hopefully over the period sort them out. So yes, both our estimates are ahead of what we had said earlier, and we hope that we can keep the same momentum for the next quarter as well.
So many, Alex here. I'm wondering about this capex push that is underway. 1,000 crore rupees split between the two business lines, 510 crore in aerospace and defense and 430 crore in the rest. You're targeting production start by the end of 2027. Can you give us a sense of the ramp up of production from that point on?
Well, we've started leveling the land, and we've started work on about 77 acres of land that we have, an hour and a half from the Bangalore airport, which is really strategic for all aerospace companies. We are working with several of our customers. We have a very large customer base, both in the precision technology as well as the aerospace. We're talking about concepts like factory in factory with them to see how we can scale. So there's a lot happening at this point in time. And I think over the next quarter and 2 quarters, a lot of the plans will start to get finalized. So as we are looking at a huge pipeline in both of the businesses, we're trying our best to make sure that we can align with a high growth rate once we are there. Obviously, in the beginning, it will take time because you have customer approvals, you have, a lot of work to be done. But then I would say from about March of 2028, we would start to ramp up. So I would say in FY29, you will start to see higher numbers coming in because of the Andhra facility being scaled up.
So just trying to get a sense of how much higher, right? Because as things stand right now, you have an aerospace order book that stands at close to 6,000 crore rupees. And I'm guessing the trajectory for the automotive businesses and precision is also something that will ramp up quite dramatically. So when you say that FY29, you will see a meaningful increase based on that increased capacity, what is the blue sky scenario here?
Well, I don't want to give you numbers out there.
No, just so that I can envision what the company is building towards.
Well, definitely higher than where we are today. So
that's a given, Mr. Mani.
Yeah, so it has to be higher than where we are today. But I think over the coming quarters, we will really start to fructify as the contracts start to get finalized. We are increasing business on a daily basis right now in terms of order book. We are also making over 1 new part a day. So I think things are going in the right direction. And I think we need to build it, step by step. However, when we move there, we're going to go significantly up the value chain because we're going to integrate a lot of things that we haven't done so far. So, for instance, heat treatment, surface treatments, value stream map, bring efficiencies, cut throughput time. So there's a lot of AI, digitization, robotics, automation, autonomous, lot of things to build a real world-class facility. I mean, that's our goal, is to have a benchmark ultimately, and therefore, grow with that as well. So we're not just going to look at, only growing on the sales numbers, but we're also going to set up benchmarks in the industry on various areas, which will then be a solid footing for us in the future. So we're going to create the next 5 years out there and not just a revenue or a quarter-on-quarter EBITDA.
Gautam, Neeraj here. Almost all of your peer sets that we talk to, whether in the aerospace or the precision manufacturing space, are talking the same language, but are giving some targets around where they want their ROCs to be like from where they are right now over a 3-5 year period, where the gross block could be like, and in your case, it'll be impressive because you are on 1,000 crore expansion plan, if I'm not wrong, and where the EBITDA margins could scale up, because I heard you say in your previous answer that your high value orders will come into play, and I presume that would mean that margins will go up. Can you lay out any such groundwork? I know you'll do well quarter on quarter. I know your sights are set higher. Some guidance, some idea about where will you be on these parameters, whether 2 years out, 3 years out, or 5 years out?
Good. Okay. So if I look at it, our wish is that we continue to have a balanced ROC. So if you look at our businesses, we try our best to make sure that our ROCs will settle down in the range of 25%. When you invest on very heavy things like on engines, we are particularly on engines, right? There, the cost of machines is extremely high. So your ROCs tend to go down, but then we also balance it out with less critical products or products from aerostructures or products from, let's say, fuel and oil and hydraulics. So when you balance that out, you can achieve this. And I think that's a goal, is to look at a 25% ROC long term. In terms of an EBITDA, in terms of aerospace, long term should be in the 25% range. We are a couple of percentage short right now because we're doing a lot of new product development. And since we write off all our R&D expenses, it doesn't reflect accurately, but the long term should settle at 25% EBITDA on the aerospace side. On the automotive side, I would say a long-term EBITDA of 15% and an ROC of 20% would be a very good benchmark for us to do. But more importantly is to make sure that we can utilize and grow at a faster pace once we have all the new facilities in place. So yes, like everybody else, I think the atmosphere is positive. The China Plus One is playing in our favor. The demand is huge. The aerospace is an execution game, not a marketing game. The markets are practically there and available. The number of suppliers are fewer. So I think the biggest challenge is to make sure that your basics are right, your execution is in place, your quality, your delivery across the world happens just in time. Because today we find that we have certain backlogs, and even if we exceed our revenue targets, we still find ourselves in backlogs. That's because if the rest of the supply chain doesn't come up in line with your deliveries, the customers divert those deliveries to you. So that's your opportunity, which you have to go out there and grab.
Yeah. Fascinating insights there, Gautam, many. Hope to speak with you again soon, but we will leave it at it for now.
Well, let's get in Mr. N. Muthukumar, who is the Managing Director of Keynes Technology, on the conversation. Thanks so much, Mr. Muthukumar, for joining in. We want to talk to you about so much around the smart metering business, receivables, etc. But have to start with the fact that the EMS business has delivered growth. You've done what, if I'm not wrong, core EMS at 66% and overall revenue at 40%. Are these numbers, Mr. Muthukumar, that you believe can sustain for the rest of the year?
If you ask us whether the core EMS business is sustainable, we have took a very conscious decision of degrowing in the metering business where our receivables is at a risk, and we have grown EMS business to the core. During the last earnings call, I have clearly told that we missed some revenues of the last quarter, and that has really come in handy for this quarter to grow up. So I would still say doubling the market growth. I think the last quarter, the market seems to be grown about 15 to 16%. We should have been at 30%, but the other growth has come from the backlog that we could not do it in the quarter one. So I am pretty confident about doubling the market growth. We'll continue to grow, and Keynes will continue to deliver to his strategic customers.
40-50% revenue growth entirely possible. Would you be able to do that? I'm presuming that's what you mean.